Hello, my dear students. Welcome to Costing Question Paper Marathon. Sir, what is this new name? Costing Question Paper Marathon. Yes, guys. In this marathon video, I would be covering the past 5 exams costing question paper, in which I would be discussing both the multiple choice portion as well as descriptive portion. And I have also given the list of question paper which I would be discussing starting with May 2026 exam, guys. For each of this question paper, I would be discussing both MCQ portion as well as descriptive portion. First, I would be discussing MCQ and then descriptive portion of the respective question paper. And along with discussing the question paper, I would also be giving few tips for you, like how to read the questions, whether it is multiple choice question or descriptive question, especially case scenario. Sir, how to read the case scenario question, how to start with it. And also, ICA would have already given the suggested answers. But if there is any better way of presentation of such answer, or if there is any easier way or alternate way to present such answer, I would also be discussing that. And here and there might be a mistake in the suggested answer given by ICI. I would be highlighting it to the students. Yes. And if you guys have not yet watched my costing concept marathon, in which I have revised each and every chapter, that is, I have discussed all 15 chapters, do watch it. The link for the same will be provided in the description. And we will start this question paper discussion. Before that, we will discuss the question paper pattern, guys, so that it will be good for you guys to know the pattern before we start discussing the question paper. Yes. So the question paper would be divided into two parts, part 1 and part 2. Part 1 would contain multiple choice questions for 30 marks and part 2 is descriptive question. You need to answer for 70 marks, but the question paper would be for 88 marks including choices. First, let me explain the multiple choice portion. So totally it will be for 30 marks, guys. It will not have any choice. It will not have any choice. Totally there will be 15 questions of 2 marks each and student need to answer all the questions. So please make sure that you guys are not skipping any topic. I know here and there in few topics you might find it difficult, but still guys, you make sure that you are covering each and every topic. Yes. So totally there will be 15 questions of 2 marks each. Under that, guys, there will be 2 case scenario questions. And each case scenario will have 5 questions of 2 marks each. So that means for each case scenario, there will be 10 marks allotted. So totally it comes to 20 marks. And then there will be 5 independent questions of 2 marks each. And this independent questions will not have any connection to case scenario questions. And if you ask me, sir, which one to answer first? Is it case scenario or independent? I would suggest you to take up 5 independent questions first and then come to case scenario, guys. Because normally case scenario will consume more time. But anyway, for each case scenario, there will be 10 marks allotted. Yes. And for multiple choice question, there is no negative marking. Please make sure that you are marking answer for each and every questions, guys. At the end, even if by chance, if you don't know the answer for any question, please mark something and come. Like luck might favor you. Yes. Then coming to descriptive type, totally the descriptive questions will be for 88 marks, but you need to answer for 70 marks. So under descriptive type, there will be 6 questions of 14 marks each, but student need to answer only 5 questions. That means there will be one choice. And first question would be a compulsory question. Student cannot take first question as a choice, guys. So first question will have 3 sub questions, 2 questions of 5 marks each, and 1 question for 4 marks. Okay, and you need to answer this without fail. And out of the remaining question, 1 question can be taken as choice. And the last, and each of this question will be for 14 marks, and there will be sub questions, guys. For example, 8 marks, 6 marks, or 7 marks, 7 marks, like that, or else 5, 5, 4, like that. Sub questions would be there. There won't be one single question for 14 marks. Got it? Yes. And in the last question, which is actually a dedicated theory question, last question, only theory questions would be asked. I know costing is a numerical paper. The people will think, or even students will think, sir, we will not get any theory questions. No, guys. Last descriptive question is dedicated theory question. Please be careful with it. Yes. And here there will be 3 sub questions A, B, C, that is 5, 5 and 4 marks. What? But for the last sub question, there will be internal choice. They would have given 2 questions there. You need to choose any one. Yes, sir. Fine. And if you ask me, sir, should I answer multiple choice question first or descriptive question? Guys, see both the papers. Now, before actually, ICA used to give separately, that is MCQ questions separately and descriptive questions separately. But now from May 2026 exam, they are giving single question paper including both multiple choice question as well as descriptive questions. Yes, but at 1:45 when you get the question paper, I would suggest you to read descriptive question and decide which question will you start with. Okay, there is no mandate that you have to start with first question, guys. I would tell you guys, I would suggest you guys, I would recommend you guys to start with whichever question you know the best answer. Clear? So in that 15 minutes, try to read all the descriptive question, select which one will you start answering with and which question will you take it as a choice. Make that decision. And from 2 o'clock, when you start writing, from 2 to 4, I would suggest you to write descriptive type and take up MCQ only at around 4 o'clock. Plus or minus few minutes is okay, but I would suggest you to take MCQ only at 4 o'clock. And don't consume entire 1 hour for MCQ. Try to finish it as early as possible. And even under MCQ, try to finish first independent question, then come to case scenario. And you will be left with some time, come back to descriptive and complete it. And last like 3 to 5 minutes, you keep it just to cross check the MCQ part, whether you have answered all the questions. If in case, if you don't know the answer for any question, please mark something and come, guys. For MCQ, I'm telling. Okay, because there is no negative marking. Yes. So this is all about the question paper pattern. And if in case, guys, if you're lacking in concepts or if you're finding it difficult to like solve the questions, or if you are not able to understand, sir, for this particular question, which formula should I apply or which concept should be applied, how to write the answer or how to start the answer, how to go ahead, then kindly look into our recorded classes. We have regular costing recorded classes available in which I have covered in detail each and every concept for every chapter, and I have also solved question on every concept from the simplest question to complex question. And I have also discussed the questions, all the questions, that is illustration as well as textual knowledge from ICI material, along with discussing all the past examination questions, guys. Yes, fine. So we are set to go. And guys, costing is like a power play for you in group 2. Make the best use of it, and it is high chance, there is a high chances that you can score exemption in costing. So please make the best use of these resources, whatever I'm trying to provide to you, and also practice it well. Try to download few question papers, try to take a printout of it and answer yourself, guys. Clear? Yes. And if you score really well in costing paper, it will give a boost for you for the remaining 2 papers in group 2. So with this, we will start discussing the question paper, guys. Yes, we'll start discussing May 2026 costing question paper. But before we start, guys, in my opinion, this paper was very easy and scoring. Most of our students have scored exemption in costing, and some of them have gone ahead and scored even 70 plus and 80 plus in May 2026 exam, which has helped them to score that aggregate marks in group 2. And as and when we discuss this question paper, even you will feel the same. Sir, if I get this question paper, then even I will score high in the exam. Yes, guys. So we'll start the discussion with multiple choice questions first. I will take first the independent multiple choice question, guys, which we also call it as standalone MCQs, which will be from 11th. Sir, why are you doing it? Guys, in this paper, the case-based MCQ questions, that is case scenario questions, are little time-taking. It is manageable, but it is time-taking. So what I would suggest is, for this kind of paper, better start with independent questions. So you will consume less time there. Then you can start with case-based MCQ. Got it? Yes. So we'll begin with question number 11. And after this, I will come back to case scenario. I'm not skipping case scenario. First, I will cover 11 to 15. Then we will come back to case scenario next. Got it? Yes. Fine. Question number 11. The management of Gamma Limited has provided the following information for product X. So what they have given in the question, we will see one by one. Maximum stock level 1125 units, reorder level 750 units, minimum rate of consumption per day, which is nothing but minimum consumption 25 units, minimum lead time is 5 units they have given, but it should be 5 days. Okay, so what are we supposed to calculate? Reorder quantity. Okay, guys, reorder quantity, or we can also use the formula of UOQ, because normally whenever they ask you to calculate ROQ, we will use the formula of UOQ. But here, can we use it? No, sir. Because annual demand, then carrying cost per unit per annum, or even ordering cost per order and all is not given. So we need to look for the alternate formula. So just see in the question what they are given. Maximum stock level and reorder level is already given. So we will try to figure out what is the formula for to calculate maximum stock level and reorder level. One of that formula we need to apply it. Okay. Sir, how to identify it? We will see it. Guys, we know that the formula to calculate reorder level, we have two formulas. That is maximum consumption into maximum reorder period. But in the question, what they have given is minimum consumption and minimum reorder period or lead time. Yes, sir. Then another formula is average consumption into average lead time plus minimum stock level. Even this formula we cannot use. Yes, sir. So ruled out. Then coming to the maximum stock level. Have they given maximum stock level in the question? Yes, they have given. So let us try to figure out what is the formula for it. Come on, tell me what is the formula to calculate maximum stock level? It is reorder level plus reorder quantity minus minimum consumption into minimum lead time, guys. So in the question, they have given reorder level. They have given minimum consumption. Minimum lead time is given. So we need to figure out reorder quantity, guys. Got it? So that means we need to apply maximum stock level formula. Yes. So whenever the question is like this, first try to figure out or try to identify what is given in the question. And for calculating that, which formula will be applied. And accordingly, we can decide it, guys. Yes. So the formula for maximum stock level is reorder level plus reorder quantity minus minimum consumption into minimum lead time. Okay. I have just written in short form. So maximum stock level is already given as 1125 units. Okay. Then reorder level is 750 units. Then ROQ I am keeping it as it is minus 25 into 5. 25 into 5. Yes, sir. Then once we get the figure here, then you can take this to the opposite side. So it will be 1125 minus 750 plus whatever we get here. Whatever we get here. That is 25 into 5 means 125, guys. Got it? Yes, sir. Please be careful. When minus moves to the other side, it will become plus, guys. And at the same time, if plus moves to the other side, it becomes the minus. Yes. So reorder quantity is 500 units. So what is our answer here? 500 units. C. Option C. Okay. We'll move to question number 12. The following information pertains to a worker G. So this is on employee cost. Basic pay 25,000 per month. Dearness allowance 5,000 per month. Other allowances 2,000 per month. Everything is given per month. So if I just add up all this, we will get 32,000 per month. And if I do into 12, we will get per annum 3,84,000, guys. Yes, sir. The number of working days in a year is 325 of 8 hours each. That is working time per day is 8 hours, guys. Okay. G has availed 25 days of holidays on full pay in a year. Okay. So this is like he's taking leave, but he will be paid for it. Okay. But if I ask you what is the working days in a year by G, how many days he has worked? It is 325 minus 25, guys. That is 300 days. So G has worked for 300 days in a year. What is the wage rate per hour of worker G? Okay. Guys, as this data is given for a year, let us convert even our wage part for a year. So if I take all this and add up, we will get per month 32,000, then do into 12. So this is the wage cost per annum. Okay. So hours worked, as I already told you, 325 days minus 25 days. So number of working days is 300 into for each day. They will work for how many hours? 8 hours. So even G will work for 8 hours. So how many working hours in a year, guys? 2,400. So per hour, what is the wage rate? 3,84,000 wage cost per annum divided by working hours, guys. So you will get rupees 160 per hour. Rupees 160 per hour. So the answer is A. Okay. Let us move to the next question. Yeah. The following information pertains to a job number 501 undertaken by PCM Limited. So this is on job costing. Direct material 60,000, direct wages 50,000. So if you add up both of this, you will get prime cost, which is 1,10,000. Factory overheads is 60% of direct wages. Okay, so 60% we should apply it on 50,000. Then administrative overhead is 25% of factory cost. So if I add up all this, we will get factory cost. On that, we need to apply 25%. Okay. Profit percentage on total cost. It is not given on selling price and all. So please be careful. Straight away it is given. Profit percentage on total cost is 25%. Sir, how do we derive total cost first of all? Guys, if I add up both of this, we will get prime cost. For prime cost, if I add factory overheads, we will get factory cost. For factory cost, if I add administrative overhead, then we will get total cost plus 25% profit. That's all. So what is the selling price of job number 501? Simplest question, guys. Yes. So I will just show the calculation here. So prime cost is 60 plus 50, 1,10,000. Then factory overhead is 60% of direct wages, which comes to 30,000. So we'll get a factory cost of 1,40,000. For that, we need to add administrative overhead. Administrative overhead is 25% of factory cost. So factory cost is 1,40,000 into 25% you will get 35,000. Then the total cost is 1,75,000 here. For that, add 25% profit. That's all. So on this, we need to add 25%. You will get selling price. And this kind of question and all, you can calculate in calculator itself, guys. You need not even write like this. Yeah, but anyway, I have written here for your better understanding. But in the exam and also, should we do this calculation and all? See, wherever required, you have to do it, like to get the answer. But here, I think in this kind of question, you can get it in calculator itself. Yes, guys. So selling price is 2,18,750. So our answer is option C. Option C, guys. Okay. Let us move to the next question. Question number 14. AMC Travels is running 4 luxury buses between 2 cities which are 60 kilometers apart. Okay, means each way 60 kilometers, guys. So totally for going and returning back, how many kilometers? 120 kilometers. That is 60 into 2. Okay. The seating capacity of each bus is 50 passengers. The actual passengers carried were 70% of the seating capacity. That is, on an average, the capacity is 50, but on an average, how much will be occupied always? 70% of 50 seats. All the 4 buses run for 30 days for the month. Each bus made 1 round trip per day. Okay. So the bus will operate for all 30 days and each day it will make 1 round trip. 1 round trip means, guys, going and coming back. So what is the total kilometers for it? 60 plus 60, 120. Okay. During the month of April 2026, AMC incurred a total cost of 25 lakh 5,000. Guys, please be careful. This is the total cost for a month what they are given. Okay, let me underline in this color. Yes. So we need to find out what is the cost per passenger kilometer for the month of April 2026. So we need two things for calculating this, guys. Cost per passenger kilometer. Total cost divided by passenger kilometers. That is total passenger kilometers. So as they have asked it for month, that is April 2026, cost is already ready. Numerator is already ready for us. We need to first figure out the denominator. Then divide each other. Okay. Sir, what is the total passenger kilometer? This is a question on service costing. Yeah. Passenger kilometers or total passenger kilometer in a month, guys. So totally how many buses are operating? 4 buses. And what is the distance of journey? 60 kilometer each way. So 60 kilometer into 2 because we have to go and come back, right? Yes. Then what is the capacity of the bus? 50 passenger. But how much is occupied on an average? 70%. So 50 passenger into 70%. This is per day. This is per day. How many days the bus would be operating in a month? 30 days. So multiply with that. So we'll get 5,04,000 as total passenger kilometer for April, guys. Yes, now divide it. So 25 lakh 5,000 is the total cost per a month. Divided by total passenger kilometer, you will get cost per passenger kilometer, which is 4.97. 4.97. Hope you got it. Yes, sir. Simple question, sir. Or 15th one. The following information has been extracted from the records of XYZ Limited for 2 consecutive years. So the data is given for 2 consecutive years, guys. Year 1, year 2. Sales and profit is given. What is the break-even sales in value? That is in rupees. Guys, what is the formula to calculate break-even sales in rupees? Fixed cost divided by PV ratio. Fixed cost divided by PV ratio. Yes, sir. Both of them is not directly given in the question. But can we figure out? Yes. First, let us try to figure out PV ratio. PV ratio, what is one of the formula to calculate? It is nothing but contribution by sales, but here we cannot apply that formula as 2 period data is given. Let us apply the formula, that is change in profit divided by change in sales into 100. So find out change in profit divided by change in sales, guys. So I have shown it here. 42 lakh minus 24 lakh, that is change in profit, divided by change in sales, that is 2 lakh 40 2 crore 40 lakh, 2 crore 40 lakh minus 1 crore 80 lakh. Yes, so into 100, because we are finding it out in percentage. So we'll get PV ratio 30%. Now let us try to figure out fixed cost. You can take any 1 year as a base and try to figure out fixed cost. I'm taking year 1. So for year 1, what would be the contribution, guys? Sales into PV ratio. Sales into PV ratio, because PV ratio is nothing but contribution margin ratio, guys. How much is my contribution when compared to sales? Yeah, so we will get 54 lakh. Yes, 54 lakh we will get. Then from that, reduce profit of year 1. You will get fixed cost, because you know the order, no, of calculating. Sales minus variable cost will give us contribution minus fixed cost will give us profit. I've just interchanged this position, that's all. Okay, or else if you want, you can apply like this also. For example, so first find out the contribution minus fixed cost. You will get profit. We will know contribution and profit, then the fixed cost would be the balancing figure. You can do like this way also. In my calculation, I have just interchanged these positions, that's all. Got it, people? Yes. Sir, why did you take year 1? Why not year 2? Even if you take year 2 also, you will get same amount of fixed cost, guys. First, you need to calculate contribution. How much is that? 2 crore 40 lakh into 30%. From that, reduce profit. You will get same amount of fixed cost. Okay. Yes. Sure. So now coming to actual requirement. Break-even sales in rupees is equal to fixed cost divided by PV ratio. So 30 lakh divided by 30% will give us 100 lakh. 100 lakh. Yes. B. Option B. Fine, guys. So we are done with the independent questions. Now let us move to the case scenario question. Yes. So only thing which I felt is little challenging in this question paper was the case scenario MCQ, but it is not tough, but it will take time for the students to get the answers. Anyway, fine. So for case scenario questions, guys, I have already told you number of times how to read it. So we'll see that. Go first, read the requirement of the question, then come and read the case. Just don't read the option, just read the requirement. What is the profit of core manufacturing process? Okay. Next, second one, what is the prime cost including inter-process profit of casing and shaping process? What is the amount of profit included in the closing stock of casing and shaping process? Okay. Next, what is the transfer price of pencils including inter-process profit transferred to finished stock account from casing and shaping process? Last one. What is the amount of total profit realized by Graphite Core Industries on sale of finished stock of pencils, which is transferred to costing profit and loss account? So the total amount of profit realized by the company they are asking. Okay, guys. So by reading this, we can understand that the question is on process costing, and also it includes the element of inter-process profit. Yes. Sure. Now we will read the case. Graphite Core Industries, established in the year 1995, is globally recognized for producing reliable and high-quality wooden pencils. It begins its production process by sourcing raw graphite, clay, and cedar wood slats, holding them as raw materials. So, these are the raw materials for the company. Okay. The following are the details about the manufacturing process of the company. So, maybe they have two processes. They have also given the name of it and other details. Core manufacturing process. In this process, the graphite and clay are mixed, extruded into rods and fired to create ardent pencil cores known as lead. Simultaneously, the cedar wood is cut into grooved slates. The output of this process, that is lead and grooved slat, is transferred to casing and shaping process. Okay. So the first process, let me just name it. This is like first process, this is second process. The output of first process obviously will be transferred to next process, but not at cost. But not at cost, guys. At how much profit? 30% profit on transfer price. And how do we find out the transfer price? It is cost plus profit is equal to transfer price. So we will not know transfer price until we know profit. And profit is given as on transfer price as a percentage of transfer price. So we need to reconvert it. Got it? Yes. So for example, if I have to tell, so if I assume transfer price as 100, okay, let me write like this. If I assume the transfer price as 100, how much would be profit? 30% of it, which is 30. And how much would be the cost? Balancing figure, which is 70. Which is 70. Just a minute. I will just segregate this part. Yeah. Fine, sir. We'll move forward. Second process. Casing and shaping process. In this process, the leads are glued between the grooved slats shaped into individual pencils and painted. The output of this process, that is pencils. Pencil is an output of casing and shaping process, are then transferred to finished stock at 10% profit on transfer price. Okay, here also it is transferred at a profit, guys. 10% profit on the transfer price. Okay. So here if I have to work out, sir, I will assume transfer price as 100. So how much would be the profit, people? 10. That is 100 into 10%. And how much would be the cost? Balancing figure, which is 90. Which is 90. Yes. So if I ask you what is the profit percentage on cost, it would be 10 by 90. And if I ask you here in the process 1, what is the profit percentage on cost? It would be 30 by 70. 30 by 70. Yes. Then they have given one more statement here. Stock in process is valued at prime cost. Okay, sir. Stock in process is nothing but the closing stock, guys. Don't get confused. Stock in process is nothing but closing stock. The production manager has provided the following information for the month of April 2026. So the data is given for a month. So for both the processes, they have given direct materials, direct wages, direct expenses. So all this put together, what do we call it as, people? Come on. What do we call it as? Prime cost, sir. Okay. Then factory overheads also is given. Fine. This cost data. Then coming to stock data, additional information. They have given opening stock and closing stock for core manufacturing process, casing and shaping process, and the last one is finished stock of pencils. Okay, that means from here I can understand that we are supposed to prepare 3 accounts, guys, including finished stock of pencils. So they have given opening stock and closing stock, but one thing we have to note here is, guys, as this question is on inter-process profits, the closing stock and opening stock of the casing and shaping process and finished stock pencil will include profit. Will include profit. That is unrealized profit. Sir, what about the opening stock and closing stock of first process? Guys, there is no one before them to add profit to them. So in the opening stock and closing stock of core manufacturing process, there will not be any unrealized profit. Whereas in these two figures, it will have unrealized profit. Correct? Yes. Finished stock is valued at the price at which it is received from casing and shaping process. Okay. So whatever is the output of casing and shaping process, it is transferred to finished stock, right? Yes. And in finished stock account, everything is not sold. Whatever is closing stock, it is valued at the price at which it is received from casing and shaping process. Okay, sir. During the month of April 20, and please be careful, guys, above here, they gave a statement telling stock in process, that is nothing but closing stock, is valued at prime cost. Whereas only for finished stock account, they are giving something else here. Okay, it is valued at the price at which it is received from casing and shaping process, it seems. Okay. During the month of April 2026, the company sold pencils worth 75 lakh sale value, people. Inter-process profits included in the opening stock. Okay, only opening stock they have given. For casing and shaping process and finished stock are 75,000 and 3,20,000. Okay. Guys, the profit element, I will just write it here. In the opening stock, they have given only. Okay, let me use different color. In the opening stock, in this, there will not be any unrealized profit. Why? Because I have already told you. Because core manufacturing process is the first process. Before them, there is no one to add profit, guys. Clear. And you already know, we have discussed in the class, why do we follow this inter-process profits, or why will one process add profit to their cost and send it to the next process? Because the company as a whole want to evaluate the performance of each and every process. Got it? Core manufacturing process will add profit to their cost and send it to casing and shaping process. So the opening stock of casing and shaping process as well as the opening stock of finished stock will have unrealized profits, but not in the opening stock of core manufacturing process, guys, because there is no one who is adding profit for them. Okay, sir. And they have given how much is the opening stock unrealized profit? 75,000 and I will just write it 75,000 and here it is 3 lakh 20. So if I just deduct this profit element from this values given, we will get the cost of opening stock, guys. Cost of opening stock. That is 7 lakh 75,000 minus 75,000, which is nothing but 7 lakh, is the cost of opening stock in casing and shaping process. Fine. On the basis of the above case scenario for the month of April 2026, you are required to answer the following MCQs. That is from 1 to 5. Totally 5 MCQs of 2 marks each. 10 marks, guys. So 10 marks question. And if you remember, in process costing, we have done a similar question, guys. Similar question, but obviously we have done it as a descriptive type. You can just see here. If you want, you guys also can refer back. You can just pause this video, go to your process costing notebook and open question number 5 for that whatever solution we have solved. Similar question here also you can see the dialogues are also copy pasted. Obviously figures and all is different. Stock in processes are valued at prime cost. Finished stock is valued at the price at which it is received from the process to. Everything same to same, guys. And this is how we have solved it in the class. I will just show you for your reference. You can just refer to it. And if you want to refer back this question once, you can just pause this video, go back, refer, and then come here, guys. Yes, this is like workings, and this is finished stock account. Yes, sir. Fine. We'll go back. And what are we supposed to do for this? We need to draw 3 process accounts, guys. I have just done the working for this. You also need to do this in the exam, guys, by yourself. So much working, yes. See, 3 accounts we need to draw, and it is a 10 marks question, guys. Considering all 5 MCQs, 10 marks question, and you can do it. I understand it will take time, but we have to. Chalo, we'll start one by one. First, core manufacturing process. Opening stock is there, people. How much is that? Just a minute. 5 lakh 10,000. We will take it. And that is cost. That is cost. There is no profit in that. Yes, sir. 5 lakh 10,000. Then they have given direct material, direct wages, and direct expenses. Just take it. It is already given in the question in this table. Yeah. Take these 3 figures. Don't include factory overheads because first we need to derive the prime cost. Okay. So direct material, direct wages, direct expenses, we will take it. Then add up all this, we will get prime cost because closing stock has to be valued at prime cost. That statement is given in the question. So we are finding out the prime cost first, then deduct closing stock. See, closing stock, you can also show it on the credit side. But as we have to do the calculation here and we need to continue with it, better to show it on the debit side only, but as a negative figure, guys, in the bracket. Yes. So they have given the closing stock value for this 2 lakh 50, and even that will not include any profit, guys. Straight away take it 2 lakh 50,000. Just deduct it. And here we will have 3 columns: cost, profit, and total. Correct? Yes, sir. So cost is like for the company as a whole, what is the cost? Whereas total stands for that particular process. As per their view, what is the cost? Because even the processors might not know what is the profit which is added by previous process. Clear? Because all this are handled by the company as a whole, guys. Got it? Yes. So this will stand for the company, whereas this will stand for the respective process, guys. Okay, means as a cost figure I am telling. Yeah. Chalo. So we got prime cost of the goods transferred. Once we deduct the closing stock, you can give name for this, or else you can just leave it empty here and write the figures. Figures you write. Okay. So this is nothing but I am calling it as prime cost of goods transferred. Yes, sir. For that, we will add factory overhead, which is given here. 3 lakh. Yes, just add it. 3 lakh under both the columns. Wherever cost is there, you need to take it under both the columns, guys. That is cost as well as total. Till now, there is no profit. Okay. So factory cost we got 17 lakh 50,000. So this is the ultimate cost of whom, guys? Core manufacturing process. And they're adding 30% profit on their transfer price before it is transferred to next process. So what is their cost? 17 lakh 50,000. So on that they will add profit. But profit percentage is given as we already discussed it on the transfer price. So let us assume the transfer price is 100. So the profit would be 100 into 30%, which comes to 30 rupees. So the cost would be the balancing figure, 100 minus 30. So what is the profit on cost? 30 by 70. So do the calculation now. 17 lakh 50,000 into 30 by 70. We will get profit. Now take profit. Till now there was no profit, but now the first process is adding profit before they send their output to the next process, guys. So 7 lakh 50, we need to take it under profit also and total also. Guys, I am not explaining now in detail because we have discussed very similar question in the class also. Because there I have explained each and every step in detail. Okay, sir. So now 17 lakh 50,000 worth of goods is sent to next process at 25 lakh. How did you get 25 lakh, sir? 17 lakh 50,000 plus 7 lakh 50. So if you just add debit side 750 plus 17 lakh 50,000, 7 lakh 50 plus if you add up both of this, you will get 25 lakh. Yes, sir. So I repeat again, 17 lakh 50,000 worth of goods is sent to casing and shaping process, that is next process, at 25 lakh by adding a profit of 7 lakh 50,000, guys. So this will be the input for next process. Got it? Yes, sir. Fine. We'll move to the next process. So first year we will record the opening stock. Opening stock is given as 7,75,000. We already discussed, which includes the profit. How much profit, sir? 75,000. 75,000. It was given here. Okay, this figure. Okay. So if I remove the profit, we will get the cost of opening stock, which is 7 lakh. Then whatever we have received from first process, core manufacturing process, this figures, you just take it on the opposite side. Here it was credited, there the receiver. For the receiver, it should be debited. Yes, sir. So this one is nothing but input. Then record all the direct expenses, whatever is given in the first table here, guys. For the second process, record all the direct expenses. Okay. Record it under both the column, cost and total. You will get prime cost. Once we get prime cost, then we need to deduct closing stock from it. Sir, why are you taking closing stock after prime cost? Why not after factory cost? Guys, it is clearly given in the question that the closing stock or stock in the process, I will just, yeah, this one. Stock in the process is valued at prime cost. So that is why we are taking immediately after the prime cost. Yes, this step is important. So be attentive. Closing stock year value is given how much? 6 lakh. But it includes profit, guys. It includes profit. Am I right? Yes. So we need to identify how much profit is included in this 6 lakh. That is unrealized profit. Yes, sir. Sir, how will you tell that this 6 lakh includes the unrealized profit? Because, guys, whatever closing stock casing and shaping process is having it, obviously they would have received it from whom? From the first process, which is nothing but core manufacturing process. So when they are sending it, they would have added profit. Yes. Have we sold these goods in the market? No. And when we have not sold the goods in the market, can we recognize any profit on it? No, sir. For whatever goods which are lying with us, we cannot recognize revenue on it, or we cannot recognize profit on it. The accounting standards will not allow us to recognize profit on the stock which is with us. Yes. So we will try to figure out what is the profit element in this. So simple, guys, 6 lakh. And we know that closing stock is valued at what? Prime cost. So 6 lakh is the part of 55 lakh. And in that, how much is the profit element? 8 lakh 25,000. So we'll do the calculation. 6 lakh by 55 lakh into 8 lakh 25,000. So we'll get the profit element. How much is that? 90,000. How much is that? 90,000, guys. So you take 90,000. So what is the cost portion? 6 lakh minus 90,000. The cost portion would be 5 lakh 10,000. Clear? Yes. So as per casing and shaping process, the cost of closing stock as per their knowledge is 6 lakh. But companies know that we have an unrealized profit of 90,000 on this. So as per company, in their books of accounts, in the balance sheet, they have to show the cost of closing stock as how much? 5 lakh 10,000 guys. Okay, sure. Next, sir, can we find out this in a different way also? Yes. So first you can find out cost, then the balancing figure would be profit. Sir, how can we calculate this cost? I will tell you. You can just observe here. Please observe. Please observe. 6 lakh divided by 55 lakh into 46 lakh 75,000. If you do this, you will get 5 lakh 10,000, which is nothing but cost element. Clear? Yes. If I am multiplying with this, we will get cost figure, guys. Or if you are multiplying with this, then we will get profit figure. Anyway, denominator will be 55 lakh. Correct? Because 6 lakh is out of what? 55 lakh only. Yes. And if you calculate cost first, then the profit would be the balancing figure. That is 6 lakh minus 5 lakh 10,000. Got it? Yes. Yes. So next we got prime cost of goods transfer. For that we need to add factory overheads, which is given in the question. You will get factory cost. So as per casing and shaping process, what is their total cost? 54 lakh. On that they will add profit and send it to next process. What is the profit percentage? 10% on transfer price. We need to convert it again. Let us assume transfer price is 100. So profit would be 10. So cost would be how much? 100 minus 10, which is 90. So profit percentage on cost would be 10 by 90, guys. 10 by 90. Yes. And please be careful. As per casing and shaping process knowledge, what is their cost? 54 lakh and not 46 lakh 65,000. No doubt. For the company, the cost is 46 lakh 65,000. But will casing and shaping process know this? No, no. They will only know that our cost is 54 lakh. So they are adding profit on their cost, guys. So please be careful. Don't consider this figure to calculate the profit amount. You need to take this. So on 54 lakh, 10 by 90, we will get 6 lakh. We will get 6 lakh. So just consider this figure. So it is 46 lakh 65,000 cost. Profit is 735 plus 6 lakh, it is 1335, and 54 plus 6, 60 lakh. So we are transferring it to finished stock account. Finished stock account. So 46 lakh 65,000 worth of goods is transferred to finished stock account for a value of how much? 60 lakh after adding a profit of 13 lakh 35,000. Yes. Next, we'll move to the last account, finished stock account. Opening stock we will record first. Opening stock value is given 14 lakh, guys. 14 lakh. In that, how much is the profit? 3 lakh 20, which is already given in the question. How much profit is there in opening stock is already given in the question. But in closing stock, we need to figure out. Yes, sir. So 14 lakh, in that profit, unrealized profit is 320. So if I deduct 320 from 14 lakh, we will get 10 lakh 80. Then whatever we are receiving from casing and shaping process, take it as input. Whatever is credited here will be debited here. Okay. Then closing stock. This step is important. This step is important. They clearly gave one more sentence now. What is it? At the end. Yeah, this one. Finished stock is valued at the price at which it is received from casing and shaping process. Okay. So that means this is a part of 60 lakh, not 74 lakh, because 74 lakh includes opening stock also. Yes. So 10 lakh is a part of 60 lakh. How much is the profit element in that? Simple. 10 lakh by 60 lakh into 13 lakh 35,000. I have done the calculation here. You can see. Profit included in closing stock. 10 lakh divided by 60 lakh into 13 lakh 35,000. You will get 2 lakh 22,500. Take it here. Then our cost would be the balancing figure. 10 lakh minus 2 lakh 22,500 will be our cost of closing stock. 7 lakh 77,500. Got it, people? Please be careful. We didn't consider this total figure because they clearly told it is valued at the price at which it is received from casing and shaping process. Clear? Means indirectly they are following which method here? FIFO method. FIFO method. Whereas for the first two process, we followed which method, sir? We followed, especially for this way to find out, we followed weighted average method. Weighted average method. They clearly told closing stock is valued at prime cost. So we considered opening stock along with what we have received as well as other cost incurred. Clear? So if you ask me indirectly which method did we follow? Weighted average. But here, they clearly told we need to value the closing stock at the price at which we have received the goods from casing and shaping process. So it is like FIFO, means they're considering that whatever was the opening stock, we already sold it. We have already sold it. So what is lying in the closing stock is out of what we have received from casing and shaping process. So what we can understand from that is they're asking us to follow FIFO method for finished stock account. Clear? This statement is not directly given in the question, but this is what I am decoding it for you people. Clear? Because when they ask us to ignore opening stock, that means it is understood that whatever opening stock was lying with us, we have already sold it. So what is there in our closing stock is out of what we have received during the current period. It is nothing but FIFO method, guys. Got it? Yes. So we'll move forward. So we got cost of goods sold. Cost of goods sold, and they have given the sale value in the question, guys. How much is that? 75 lakh. So we know what is the total cost of the goods, which is nothing but 49 lakh 67,500 for the company. They have sold it for 75 lakh. So what is the total profit, guys? Deduct each other. 75 lakh minus 49 lakh 67,500. We will get 25 lakh 32,500 total profit made by the company. Correct? Yes. So credit side we will close first. Then we know that total profit here is 25 lakh 32,500. We already have 14 lakh 32,500. So what is the balancing figure? 9 lakh. So this is the profit added by finished stock account. This is not directly given. We cannot calculate by applying any percentage also. Please be careful. First figure out on the credit side what is the total profit, which is nothing but sales minus total cost. Sir, how did you get total cost? This figure, straight away take it here. That is the total cost for the company. First find out the total profit. From total profit reduce the profit which is already there. You will get what is the profit added by finished stock account, guys. Got it? Yes. Fine. So we are done with all the workings. Now we will answer one by one, guys, the questions. What is the profit of core manufacturing process? Core manufacturing process, the first one. Profit. How much profit they are making? 7,50,000. So that is the answer for Q1. 7,50,000. 7,50,000. Option A. Let me make it as blue color. Yeah. Option A. Next, second one. What is the prime cost including the inter-process profit of casing and shaping process? Prime cost including inter-process profit means they're asking the total figure. Okay, which one? Casing and shaping, which is second process. Yes, this figure, guys. They're asking this figure. That is the answer for Q2, which is 55 lakh. 55 lakh. Option D. Next, third one. What is the amount of profit included in the closing stock of casing and shaping process? Again, second process. They're asking amount of profit in closing stock. Yes. So the answer is 90,000. This one. Q3. Answer for question 3, guys. Yes. Or else we have found out here also. Okay. Yes. Option B. Fourth one. What is the transfer price of pencils including inter-process profit transferred to finished stock account from the casing and shaping process? Including inter-process profit means the total figure. Okay, it is nothing but the value of goods transferred from casing and shaping process to finished stock account. Okay. Yes, this figure 60 lakh. Including inter-process profits, no, it is 60 lakh. If they ask what is the cost of the goods which is transferred from casing and shaping process to finished stock, then you will answer this. But here what they have asked is including inter-process profit. So our answer should be 60 lakh. 60 lakh. Option C. Yes, the last one. What is the amount of total profit realized by Graphite Core Industry? Total profit. Graphite Core Industries means as a company as a whole, guys. On sale of finished stock of pencils, which is transferred to costing profit and loss account. Yes. So the answer for this would be total profit, right? Yes, this one. 25 lakh 32,500 total profit realized, guys, by the company, not by any process. They are asking by the company. 25 32 500. 25 32 500. Option D. Okay. Yes. And please be careful, guys. Here they have asked what is the total profit realized by the company, but there can be a chances that they may also ask what is the profit realized by the respective process, like process 1, process 2, like that, for which I have explained in the class. In this question, they are not asked, no worries. But if it is asked, what to do? I have shown the calculation actually in question number 5 in our process costing. I have done this. Even in this question, actually, it was not asked to reconcile the profit and all. But still, I just went ahead and I did it so that if it is asked in the exam, then you guys should be able to manage it. So I will just show that. Yeah. So you can see you have to take inter-process profit added by each process. Okay, before they send the goods to the next process. For that, inter-process profit is nothing but these figures. In our case, yeah, here 6 lakh and here 9 lakh, and in first process it would be 7 lakh 50. These figures, inter-process profit added. Yes. So for that, we need to add unrealized profit in the opening stock and deduct unrealized profit in closing stock, because whatever was there in the opening stock, we believe that it would have already been sold during the period. Whereas whatever is there in the closing stock is still lying with us. We cannot recognize any profit on it, guys. Yes, so that is why we need to deduct unrealized profit in closing stock. And we'll get, this is what the realized profit from each process. Clear? This is just for a value addition for you. And what is the value of closing stock which we need to show in the balance sheet of the company is always the cost figures. This figures, guys. Closing stock, if I ask you, this one. Here also, this figure. And even here, it will be this figure, the cost figure. Because the closing stock can never include unrealized profit. Because we cannot make any profit by keeping the goods with us, guys. Got it? So when balance sheet of a company is prepared, they should always show the closing stock at cost and not at total value. Got it? Yes. Sure. We'll march ahead. Case scenario 2. So as usual, before reading the case, we'll just go and underline the requirements and come. Then read the case scenario. Question number 6. What is the requirement? What is the amount of overheads per month? Amount of overheads per month for using the special machine without the aid of artificial intelligence. Okay, that is only machine. Next, what is the amount of overheads per month for using the special machine with the aid of artificial intelligence? Okay, so first sixth one was without the aid of artificial intelligence, and seventh one is with. Okay, sir. There is a difference between both. Please be careful. With, without. Yeah. What is the machine hour rate for the company as a whole for a month when the artificial intelligence system was used? Okay, when it is used. Okay. What is the machine hour rate for a company as a whole for the month when the artificial intelligence was not used? Again, when used, when not used, they have asked. But please be careful. Sir, all questions look same. No, no, no. Sixth and seventh what? Amount of overheads per month. Whereas 8th and ninth, what they are asking is machine hour rate with and without using artificial intelligence. Okay. 10th one. What is the machine hour rate for the month in respect of individual jobs, belting, extrusion, and vulcanizing, respectively? So now they are asking the machine hour rate for each of the job individually. Okay, sir. Fine. Now let us go back and read the case. Safety First Tire Company is the manufacturer of puncture resistant motorcycle tires. In the manufacturing process, it undertakes three different jobs, namely belting, extrusion, and vulcanizing. Okay, these are the three jobs which they are performing. All the three jobs require the use of special machine and also the use of artificial intelligence system when necessary. Guys, machine is anywhere required, must. We cannot work without that. But artificial intelligence, that is AI, will be used only when it is necessary. It is like optional. Okay. The AI system is hired from outside, and the higher charges paid for every quarter. Please be careful. What they have given here is for quarter is 4,08,000. An estimate of overhead expenses relating to a special machine is given below. Okay. For AI, cost is 4,08,000 per quarter, guys. For machine, the cost of special machine is 66 lakh and depreciation is charged at 10% per annum on straight line basis. So depreciation would be how much, people? 66 lakh into 10%, 6 lakh 60,000. 6 lakh 60,000. Correct? Yes. Rent paid for every 6 months is 1 lakh 38,000 for every 6 months. Please be careful. Other indirect expenses per annum is 4,92,000. Costs are given for a different time period, guys. During the first month of the operation, the following details are available from the job book of the company. Yes, for a month. What data is given here is for a month. Please be careful. Number of hours the special machine was used without the use of artificial intelligence. Without the use of artificial intelligence means, can I tell only machine? Only machine is working? Yes, sir. For how many hours? In each of the job 600 and 900, and here is 0. So total comes to 1500. Okay, so let me minimize this. Okay. Then number of hours the special machine was used with the use of artificial intelligence. That is, machine along with artificial intelligence is worked for how many hours? 450, 550 and 1000 hours in each of the job. So total is 2000, guys. So if I ask you, what is the total hours for which machine is worked? Is it only 1500 or 1500 along with 2000? 1500 along with 2000, guys. Why? Because here also AI is used, but AI is used along with machine. So with or without AI, machine has to operate. So if I ask you how many hours the totally machine has worked is 1500 plus 2000, that is 3500 hours, guys. Got it? Yes, sir. Any fractions in calculation may be rounded off up to 2 decimal places. On the basis of the above case scenario, you are required to answer the following MCQ 6 to 10. This question is on overheads. Yes, simple, very simple question. But you have to be very careful with few things. Guys, here the calculations are also asked per month. So whatever cost data they have given, we need to convert it into per month. Per month, very important. Here it is given per quarter, no? So how many months in a quarter? 3 months. So 4,08,000 divided by 3 months you have to do. And here what depreciation I calculated is per annum. So you need to divide it by 12 months. And here it is for 6 months. So divide it by 6 months. And here it is per annum divided by 12 months. Got it? Yes. So I have just done a working for this similar to first case scenario. Yes. Yeah. First cost data. Well, let us try to fetch it out. For machine, what is the cost, guys? Depreciation. So 66 lakh into 10% we will get, but that is per annum. Let us calculate it for per month, guys. So divide it by 12 months, 55,000. Rent is given for 6 months. So 1,38,000 divided by 6 months, we will get 23,000. Other indirect expenses, 4,92,000 per annum. So divided by 12 months, 41,000. So what is the overheads per month for using the machine? 1,19,000. This is machine related cost. Sir, what about AI? For AI per quarter we are paying 4,08,000. So divided by 3 months. Because in a quarter there will be 3 months, guys. In a year there will be 4 quarters, and each quarter will have 3 months. So 1,36,000. Correct now? Yes. So this is cost per month, whatever we have calculated. Please be careful. Per month. Per month. Yeah, I have given the heading also. So now let us come to the hours calculation. Number of hours a machine is working. Without using AI, it is 600 and 900, whereas in vulcanizing it is not working. So 1500. Whereas with the use of AI, it is 450, 550,000, so 2000. So total hours the machine has operated is 3,500, whereas AI only 2000. AI has worked only for 2000, guys. Hope you understood how we get 3500, because machine has to operate with or without AI. It has to operate. Without AI, it has operated for 1500 hours. And with AI, how many hours? 2000. So if I ask you how many hours totally the machine has worked, it is 3500 in a month. Got it? Yes. So let us try to calculate machine hour rate here. Machine hour rate, which we also call it as absorption rate in overheads topic. Okay. For AI system, what is the cost, guys? We found out here per month 1,36,000. And with AI, how many hours it is working? 2000. So 1,36,000 divided by 2000, we will get machine hour rate per hour is 68 rupees. Okay. Now for a machine, what is the cost, people? 1,19,000. How many hours the machine has worked? You tell me, 1500 or is it 3500? 3500. Please be careful. Be careful with this denominator, guys. Chances of going wrong here, it might be there. Yes. So 1,19,000 is the machine related cost divided by total hours the machine has worked with or without AI. which is 3500. So machine hour rate is 34. Yes, sir. So for both, if I consider both, it will be 102. 102. That is, if machine is operating with AI, should we consider both? Yes, it will be 102. 102. Okay. Chalo. So these are some basic calculations. Now let us see what they have actually asked one by one. What is the amount of overheads per month for using the special machine without AI? Okay, per month. Overhead cost per month, guys. So we already have absorption rates. We need to just multiply with the hours. So first calculation. Amount of overheads per month for using the special machine without the aid of artificial intelligence is. So what is that? Without AI, it will be only machine. No, without AI means what is the machine hour as? Only machine. So what is the rate per hour? 34. 34. And without AI means machine will operate for how many hours, guys? 1500 only, because this will not be there. This will not be there. Got it? Yes. So 34 into 1500, which gives us 51,000. 51,000. Yes. Let us mark it. Option C. Next, seventh one. What is the amount of overheads per month for using the special machine with the aid of artificial intelligence? That is AI system. Okay. With the aid of AI. Okay. So fine. So here you can see same calculation, whatever they have asked, I just mentioned the heading. So with AI, what would be the machine hour rate? We need to consider both. So it would be 102. Yes, sir. So with AI, how many hours the machine will work? 2000. 2000. Please be careful. Now don't take 3500 because we already taken 102. The total part for both. Correct? Huh? Yes. So that is 102 into with AI, the machine will operate for 2000 hours. So 2000 hours into 102, guys. Is that clear? Yes. And please be careful. Here you don't take 3500 because very simple. We have already taken the total year machine hour rate, which is 102 by adding 68 and 34. Yes, sir. So we'll get 2 lakh 4,000. This is the answer. 2 lakh 4,000. Option B. Eighth one. What is the machine hour rate for the company as a whole for the month when the artificial intelligence system was used? Machine hour rate they are asking when AI was used. How much is that? 102. We just now saw. 102. Yes, sir. We already done this. Yes, this one. Okay, sir. Next question. Ninth one. What is the machine hour rate for the company as a whole for the month when the artificial intelligence was not used? So that is 34. 34 without AI, guys. This one. Only for machine. Only for machine. This calculation we already done. Yes. Last one. This is individual job wise. What is the machine hour rate for the month in respect of each individual jobs? Or this we need to do it separately. Yes. So for each of the job, we are finding out machine hour rate. Without the use of AI, what is the total cost, guys? Without the use of AI means only machine. What is the machine hour rate? 34. So for each and every hour machine works, we will observe or we will recover how much? 34 into 600 for belting, 34 into 900 for extrusion. For vulcanizing, it is not there. Correct, people? Yes. So 600 into 34 and here 900 into 34. Whereas here it will not be there. Yes. Next, with the use of AI, with the use of AI. So what is the amount? 102 total amount. 102 per hour. Per hour. Yes. Multiply with the respective hours. That is 102 into 450, 102 into 550, 102 into 1000. Yes. So with the use of AI, for each and every hour, the machine will work with AI. We will observe how much? 102 rupees. So 450 into 102 here and 550 into 102 here. And here I have not taken it, but we can also alternately do in another way. I will tell you that. So what is the total overheads in belting and extrusion? 66,300 and 86,700. And what is the total hours? Job wise you calculate. Job wise, job wise. So add up. It is 1050 hours here and 1450 hours here and vulcanizing 1000. Yes, sir. So we have total overheads, total hours, divide each other, guys. Divide each other. You will get machine hour rate. Sir, what about vulcanizing? Guys, vulcanizing, anyway, machine is working only with AI. Correct? Ah? Yes. So you can straight away take 1000 into 102. Or else straight away 102. Correct? Ah? Yes. So here you can do 1000 into 102. Okay, you will get total overheads. Then divide it by 1000. Or else not required. So much calculation, why it is required? Because into 1000 divided by 1000, it will give a same answer. So straight away you can take 102. Because in vulcanizing, machine will operate only with AI. Without AI, machine will not operate in vulcanizing job. Got it? Yes. So this is our answer. 63.14, 59.79 and 102. Yes. 102. Option B. Option B, guys. I'll just cross check once again. 59.79 and 102. Yeah, correct. Yes, guys. So this is all about the MCQ portion of May 2026 costing question paper. So how did you guys feel it? Very easy, but I agree. For case scenario, it was time taking, but nothing difficult. It was easy. Got it? Yes, sir. Yeah, now we will get into part 2, which is descriptive questions. Under descriptive type, question number 1 would be compulsory, and out of the remaining 5 questions, student need to answer only 4, which means there will be a choice of 1 question. If student answer all the questions under the descriptive type, then the last answer would be ignored, guys. And one thing to take care is working notes should form part of your answer, because most of the students will ignore the notes or working notes part. But please be careful, guys. Working notes or notes should be a part of your answer and it will carry marks. Yes. And before I start discussing the question paper, I will just tell you 2 approaches to read the questions. That is descriptive questions. The first approach is top to bottom approach. Top to bottom approach means you will read the information or data given in the question and then read the requirement. As it is, you will read it and then start solving it. This is top to bottom approach. The other one is the second one, bottom up approach. That is, first you will read the requirement of the question. For example, here you will read you are required to calculate so and so. Then you will go and read the information given in the question, guys. Is that clear? And if you ask me, sir, which is better? The second approach is better. That is the bottom up approach, especially for lengthy question, guys. When the question is too lengthy, first I would suggest you go read the requirement and you will understand what you are supposed to calculate. Now come and read the information, so that when you are reading the information, you already know what you are supposed to do in your answer. And as and when you read each and every information, you will already start connecting to what am I supposed to do with this in my answer, or how I am supposed to adjust it in my answer. Got it? Yes. And in this question paper, I will follow the bottom up approach for all the questions, so that students also will get to know how to read or how to follow this. Got it? Yes. We will begin, guys. So question number 1, under that sub question A, you are required to calculate what? Total cost of the batch and selling price per chair. So maybe this question is on batch costing. Okay. A XYZ Limited specializes in the manufacture of high-end office furniture. They use a batch costing system to track production cost. The company received an order for a special production run batch A01. This is the number or the batch name, guys, consisting of 20 ergonomic executive chair. Okay. So what is the batch size? 20 chairs, guys. The estimated cost for this specific batch are as follows. So they have given the cost data. We will see that. Direct material 55,500. Direct labor cutting and shaping 300 hours in at rupees 50 per hour. So we need to just multiply both. Polishing and finishing 200 hours at 40 rupees per hour. Here also we need to multiply. Factory overheads cutting and shaping 300 hours at 8 rupees per hour, and polishing and shaping 200 hours at 8 rupees per hour. We need to just multiply, guys, hours with the rate. Administrative and selling expenses is 20% of the works cost. Profit is 25% on selling price. Please be careful. Only thing we need to take here is this. Rest all is very easy, guys. So profit is given 25% on selling price, and selling price is not given in the question. We are supposed to calculate it. So what are we supposed to do with this? This profit percentage, we need to convert it on the cost. So we know that no, cost plus profit is equal to selling price. We did it even for MCQ question like this. Okay, now yes. So now profit percentage is given on selling price. We need to convert it on cost, guys. That's all. So what are we supposed to find out? Cost of the batch, total cost of the batch, and selling price. Okay, we will see the solution. Yes, statement showing the total cost of the batch and batch name also. Whenever they have given batch name, try to write it in the heading, guys. Yeah. And please don't forget to give the headings and all, because some students straight away start with the calculations. Please give the heading what you are calculating, guys. Yeah. So direct material cost 55,500. Direct labor, as I already told you, we need to just multiply the hours with the rate. We will get 15,000 and 8,000. So if I add up all this, we will get prime cost. There is no other direct expenses, so straight away we got prime cost. So now we are adding factory overheads for the prime cost. So that is also like hours into rate per hour. We will get the amount 2400 and 1600. So factory cost or works cost comes out to 82,500, guys. Okay. And administrative and selling expenses, they have told it is 20% of works cost. So works cost is 82,500 into 20%, which gives us 16,500. So what is the total cost of the batch? 99,000. Okay. Then they have also asked selling price per chair. Let us work out that. For that, first we should know the profit percentage on cost. What is given in the question is profit percentage on selling price. Yeah, let us try to convert. So the equation is cost plus profit is equal to selling price. So I am assuming selling price as 100, as profit percentage is given on selling price. We are assuming selling price as 100. So profit would be 25% of it, which is 25 rupees. So cost would be balancing figure, that is 100 minus 25. Yes, sir. So what is the profit on total cost? It would be 25 divided by 75, or we can also call it as like 1/3. And whenever you are getting it in decimal, better keep like this only. Instead of taking 33.33, I would suggest you to take 25 by 75, or you can also make it as 1 by 3, so that you will get the exact number. Yes, guys. Sure. So units produced and sold, there are totally 20 chairs in a batch. So 20 chairs. Sales is equal to total cost plus profit. So total cost, we already got it in the previous calculation, that is 99,000. Yes, sir. For that, we need to add profit. Profit is 1/3 of cost. So 99,000 into 1/3, or 25 by 75. Yes. So we will get total sale value 1,32,000. But what they have asked is not per batch. They have asked per chair. Please be careful, guys. Students will normally stop here only. They didn't ask you the total sales value of the batch. They asked per chair. So how many chairs are there per batch? 20. So 1,32,000 divided by 20. We will get selling price as 6,600 per chair. Per chair. So please be careful. Understand the requirement of the question and give that in your answer, guys. Because I feel some students might stop it at this point, thinking that, oh, they have asked sales, I have calculated sales. No, what they have asked is selling price per chair, guys. Okay, fine. We'll move forward. Next, coming to B. For B also, I will go and read the requirement first. You are required to calculate actual price per kg of raw material, material usage variance, material cost variance, material rate variance, labor efficiency variance. So the question is on standard costing. Indicate the nature of variance, favorable or adverse. Guys, whether they have given this statement or not, always at the end, once you derive the variance, please write whether it is favorable or adverse. Just in the bracket, you can use short forms. You need not write in full. You can use short forms there. Got it? Because here they are given that you have to indicate the nature of the variance. But even if it is not given, please write it in the exam. Okay, so let us read the information now. Exa Limited operates a standard costing system for controlling its material cost and has furnished the following information for the month of April 2026. So the data is given for a month. Standard price of the raw material 30 rupees per kg. Standard quantity of material required per unit of output. Per unit. Please be careful. Per unit it is. Standard is given per unit. 5 kgs. Standard labor rate 50 rupees per hour. Standard labor requirement 2.5 hours again per unit. Actual output is 2000. So here, once we get to know actual output, can we convert the standard data for actual output? Yes. Standard data should always be for actual output, guys. So what would be the standard quantity for actual output? 5 kgs into 2000 units. That is standard quantity. Sir, what about standard hours? So standard hours is 2.5 per unit, right? So multiply it with 2000. You will get standard hours for actual output. That is the first step which you need to take care in your answer, guys. Converting the standard quantity and standard hours for actual output. Okay. Then material price variance is given 1,75,000, which is adverse. Actual quantity of raw material purchased and consumed, both are same, 14,000 kgs. So that means there is no opening or closing stock. Whatever is purchased is consumed. Actual wages paid for 6,000 hours, 3,24,000. Guys, here we can find out something. What is it? Total actual wages is 3,24,000. Actual hours worked is 6,000. If I divide it, will I get actual rate per hour? Actual wage rate per hour? Yes. So 3,24,000 divided by 6,000 will give us actual wage rate per hour. Got it? Yes, sir. So you are required to calculate actual price per kg of raw material. Guys, see, normally when they give something special in your question, that should be your starting point. See, all the data is given in the question, but this one, it is like answer given in the question. Price variance, normally they should ask us to calculate, right? Yes, but they are only given. So there should be a hint for you to start your answer. So what is the formula to calculate material price variance? Standard price minus actual price into actual quantity. Correct? Yes, sir. And here they are asking you actual price. So actual price of the raw material is not given in the question. Using the material price variance formula, can we derive it? Yes, we can derive it. Then usage variance, cost variance, rate variance, efficiency variance. Fine, we will do it. First working, as I already told you, standard quantity and standard hours you find out first. Standard quantity for actual output. Per unit it is 5 kg. So actual output is 2000. So you will get 10,000 kgs. Standard labor hours per unit how much? 2.5 hours. And what is the actual output? 2000. So you will get 5,000 hours. Actual labor rate. Actual wages is given 3,24,000 for 6,000 hours. So per hour how much? It will be 54 rupees. Okay, sir. So this is the data or the answers for whatever we are supposed to derive. We have just kept this ready. Okay, sir. Fine. So now actual price per kg. So what is the material price variance formula? Standard price minus actual price into actual quantity. So price variance, we already know it. We will take it. Adverse means please write it in minus, that is negative. Or you can also like show it in bracket. So standard price is 30 rupees. Actual price we don't know. So we will keep it as it is into actual quantity 14,000. Okay, sir. So actual price would be, I have shown the calculation here. They have directly done after this. Okay, so directly after this, they have gone to the final answer, but I will just show the steps here. Yes, sir. So now 14,000, as it is a multiplier, if it goes to the other side, it will become a denominator, guys. Division. Yes, sir. So 30 minus AP, that is actual price, is equal to 1,75,000 negative divided by 14,000, which will give us 12.5 negative. Okay, sir. So if I take this to the other side, it becomes plus. Even minus AP, if I bring to the other side, it becomes plus. So it would be 30 plus 12.5 is equal to AP, which gives us 42.5, guys. Yes, sir. Then material usage variance. The formula would be standard quantity for actual output minus actual quantity into standard price. Standard quantity we found out at the beginning here 10,000 units or kgs. Yes, and actual quantity is given in the question 14,000 into 30 rupees standard price. Yes, sir. So we are getting adverse 1,20,000 rupees. Then coming to material cost variance, the formula would be standard material cost minus actual material cost. Standard material cost minus actual material cost. Yes, sir. I will just write it here. Standard material cost minus actual material cost. Sir, how do we get standard material cost? Simple. Standard quantity into standard price. How do we get actual material cost? Actual quantity into actual price. Okay. So the standard material cost would be 10,000 into 30, whereas actual material cost would be 14,000 into 42.5. So we are getting 2,95,000 adverse. Okay, sir. Then just cross check your material cost variance should be equal to material usage plus price variance. So material price variance is 1,75,000 adverse and usage variance is 1,20,000 adverse. So if you add up both 170, both are adverse, no, just add it up. 175 plus 120, it is equal to 2,95,000 adverse. Is it matching? Yes. I repeat. We know that material cost variance is equal to material price variance plus material cost variance is equal to material price variance plus material usage variance. Is it reconciling? Yes. So we'll move forward. Labor rate variance, the formula would be standard rate minus actual rate into actual hours. Actual hours. Sir, here, is there any difference between actual hours spent and work? No, guys. When they are not given anything about abnormal ideal time, always consider that actual hours spent is equal to actual hours worked. So there is no confusion here. So it is one and the same. Oh, so standard rate is 50. Actual rate we found out at the beginning of this answer 54 into actual hours is 6,000. So we are getting 24,000 adverse. Then labor efficiency variance. The formula would be standard hours for actual output minus actual hours worked into the standard rate. Yes. So standard hours we already found out 5,000 minus actual hours given in the question 6,000 into standard rate is 50. So we are getting 50,000 adverse. 50,000 adverse, guys. Only these two variants have been asked. Labor cost variance and all is not asked. So we'll stop it here. Okay, so we're done with the B. Then coming to C, let me read the requirement. You are required to prepare a reconciliation statement, ascertain the net profit or loss as per financial accounts. Okay, so 4 marks question. The manufacturing concern reported a net loss. Please be careful, guys. Our starting point here to reconcile is loss. As per the cost accounts, so it is a cost loss for the year ended 31st March 2026. Upon scrutiny of both sets of accounts, the following differences were identified. Okay. So the following are the differences. So we are supposed to prepare a reconciliation statement to find out the profit or loss as per the financial records. Okay. So our starting point is the cost profit, guys. Here it is loss actually, but whenever you are analyzing the items, sir, should I add it or deduct it? Please analyze from profit point of view, guys. Because if you start analyzing from loss point of view, which will have a reverse effect actually, you will start getting confused. So even though the starting point is loss, we will assume it is a profit and start analyzing the items. Okay, analyzing the items in the sense whatever is given in the question, no, should we add it or deduct it? So we know our starting point is the loss, guys, 4,20,000. So what should we do is we need to put it in bracket. That's all. We need to put it in bracket. Then whatever I am supposed to add, I will add it. Whatever I am supposed to deduct, I will deduct it as if it is a profit. As if it is a profit. So let us analyze it. So for us, for our analysis, we will assume that it is a costing profit, guys. Not loss, it is a profit. Got it? Yes, sir. Fine. One by one. First one, profit on sale of investment, financial accounts only. Guys, if it is a profit which is recorded only in the financial records, what happens? It is credited here, because of which my financial profit will go up. Financial profit will go up. Whereas I am not recorded it in my cost records. So as my starting point is costing profit, what should I do with it now? Any adjustments, guys, as my starting point is costing profit, any adjustments I need to make it for what? Costing profit. So now my financial profit has already gone up. Whereas my costing profit, as I have not recorded this item in cost records, it has not changed. So what should I do with it, people? I need to add it. I need to add it. Yes, sir. So I need to add this item. Fine. Next, factory overheads under observed in cost accounts. Factory overheads under observed in cost accounts means there is a less debit. Less debit given here. So when there is a less debit given here, profit will go up or will come down, guys? Will go up. Correct, no? So less amount has been debited. So cost profit will go up. Whereas let us assume that the amount is properly recorded in financial accounts. Got it? Yes. So as costing profit has already gone up due to understatement of expenses, what should we do now? Deduct it. Deduct this under observed item. So how much is that? 70,000. So we need to deduct it. Next, discount allowed to a customers, pure financial item. So recorded only in financial books. Guys, it is a discount allowed, so it will be a loss or expenses. So 30,000. So this 30,000 is recorded only in the financial records. So when it is debited in the financial records, our financial profit has gone down. Yes. But have we recorded this in the cost books? No, we have not recorded. That means there is no impact on costing profit. But now I need to reconcile my costing profit with financial profit, and my starting point is costing profit. What should I do? As my financial profit has already gone down, So try to bring even costing profit down. So what should I do, guys? Deduct it. What should I do? Deduct it. Yes, sir. And one thing you remember, whenever we are starting with any profit, guys, any adjustment we are making, that is plus or minus, is for that base. For this question, we are taking the costing profit as a base. So any adjustments, we can make it only for costing profit. Okay, sir. Next, depreciation overcharged in cost accounts. Overcharged means, sir, more debit is given. More debit is given. So when there is a more debit given here, that is overstatement of an expenses. So automatically costing profit will come down. Correct, because of excess debit. Whereas in financial records, we believe that it is recorded properly. Yes, sir. So as costing profit has already come down by excess due to excess debit, what should we do now? Add that excess part. Add that excess part to bring at par. That is the costing profit. Yes, sir. So we need to add it. Next, selling overheads over observed in cost accounts. Over observed, overcharged is one and the same, guys. Again, it is recorded more. How much? 65,000. Yes, sir. Overstated. So expenses is overstated in cost records. When expenses is overstated means, guys, it is more debit. So automatically costing profit would have come down. Whereas this expenses is properly recorded in financial books. So now my starting point is costing profit, which has already gone down. What should I do now? Add it. Add this item. Whatever is the amount which is already overcharged or over absorbed, add it. Yes, sir. So we need to add it. Next, bad debts written off in financial books only. So it is a pure financial expenses or loss, 1,10,000. So it is recorded only here, guys. So because of this, my financial profit has come down. Yes. But this transaction is not recorded in my costing records. Yes. Now my starting point is costing profit, which has not been impacted due to this item. But if I have to match it with my financial profit, what should I do? Even I need to bring it down. Bring it down means what should I do? Deduct it. Got it? Yes, sir. So I need to deduct this item. Next, overvaluation of closing stock in cost accounts. Closing stock obviously would be credited. So it is overvalued, guys. Yes, in cost accounts. So closing stock overvalued means we have given excess credit. Excess credit. And if excess credit is given, profit will go up or come down? Go up. So my costing profit has gone up. Whereas in my financial records, I have recorded the closing stock properly, accurately. Yes, sir. As my costing profit has gone up, if I have to match it with financial profit and my starting point is costing profit, what should I do now? I have to bring it down. I have to bring it down. So if I have to bring it down, what should I do, people? Deduct it. Yes. And I suggest students not to mug up people. Okay, because some of the students might try to mug up what to add, what to deduct and all. Please don't do it. I would suggest you to analyze, like however I analyzed here, no. Okay, sir, in costing records, what is the effect? In financial records, what is the effect of it? And because of this, what is the impact on profit? Just try to analyze like that and accordingly decide whether to add it or deduct it. Is that clear? And I, at the starting itself, I told you, even though it is a loss here, we are analyzing it from profit point of view. See, we can also analyze it from loss point of view because of these items. Sir, whether my loss has gone up or come down and all we can analyze. But unnecessarily students will get confused there. So whenever there is a loss, which is a starting point, what I would suggest the student is just put it in bracket. Put the starting point in bracket. Rest all to add and deduct. Analyze it from profit point of view. Got it? Yes, sir. Sure. We'll go to the solution. Yes. So net loss as per cost accounts. I am putting it in bracket 4,20,000. Better to put it in bracket, guys. If it is a loss, if it is a profit, don't put it in bracket. Yes. Add. You can see profit on sale of investment, depreciation overcharged in cost accounts, and selling overheads over observed in cost accounts. So these three items we need to add it. The total comes to 2,10,000. Total comes to 2,10,000. Yes, sir. So if I add 2,10,000 for negative 420, we are getting still minus 210. Minus 210. Hope you understood. I repeat, I repeat. This is minus. For that, we need to add 2,10,000. So what is the difference? Minus 2,10,000. Minus 2,10,000. Hope you understood. 420 minus 210. It is like that. but it is negative. Please be careful because this is negative, no? So it is like minus 4,20,000 plus 2,10,000. What is the remaining? Minus 2,10,000, guys. Okay, so then we need to deduct the following items. I already explained this, why we need to deduct and all. Yeah, totally 4 items are there. Deductions, I will just cross check once. 1, 2, 3, 4. Yeah, addition 3 items, deduction 4 items. Yes. Okay. And what is the advantage for this kind of questions is like at the end, if by chance, if this is given in the question, you can cross check or you can cross verify what you have done is correct or wrong, but may not be given always. This figure may not be given in the question always, guys. In this question, actually, it was not given. 4,60,000, I think they asked us to find out. Yeah, they asked us to find out, but sometimes they will give it in the question. If they give both the profit or loss in the question, then it will be easy for the student to cross verify what they have done is correct or wrong. Yes, people. Yes. Just a minute. Yeah. So minus 2,10,000 minus 2,50,000 will give us negative 4,60,000. Negative 4,60,000. Please be careful with the calculation because you might misapply the plus and minus part. Clear? So it is like already 2,10,000 negative. For that we need to deduct 2,50,000. So we will get negative 4,60,000. So there is a loss as per financial records, guys. As per financial records of how much? 4,60,000. Okay, let us move forward. Question number 2. Under that A, which is a 7 marks question, you are required to prepare a cost statement for the month of April 2026 showing. So it is a question on cost sheet. Prime cost, net works cost, cost of production, cost of sales, total profit and sales. Okay, so we will do it. The cost particulars of cotton and manufactured by a textile mill in April 2026 are as follows. Direct material, cotton bales, 2000 kgs at rupees 120 per kg. Other materials, 600 kgs at 85 rupees per kg. Then direct wages, 75 skilled men at 60 per day for 25 days. Okay, totally there are 75 skilled men and the pay is 60 rupees per day and they will work for 25 days. That means we need to multiply 75 with 60 into 25. Same way for material, you need to just multiply the kgs with rupees, guys. Rupees per kg. Okay. Then unskilled, 40 unskilled men at rupees 30 per day for 25 days. So you need to just multiply 40 into 30 into 25 to get direct wages. Then direct expenses, higher charges for a special equipment 9,000, power and fuel 3,000. And see, sometimes we will have a confusion, sir, should we take this under direct expenses or should we put it under factory overheads and all? But here there is a clear cut clarity given. It will fall under direct expenses. So very easy. Work overhead or factory overheads, 160% of direct wages. Please be careful, direct wages will have two elements. You need to take 160% of it. Then administrative overhead related to production, which will form part of cost of production, 45,000. Selling and distribution expenses, 37,500. Selling price per kg of cotton and 600. Okay. Additional information, 1,500 kgs of cotton and was produced. Okay, so this is what was produced. Waste cotton and chemical scrap realized during the manufacturing process amounted to 23,500. So before calculating the cost of production, we need to deduct it, guys. This is a scrap value realized, which will reduce our cost of production. There were no opening or closing stock of raw material and finished stock. That means whatever is produced is sold. Whatever is produced is sold. That means 1,500 into 600 is the sales value. 1,500 kgs into 600 is the sale value, guys. Very easy question, straightforward question, guys. All the data is straight away given in the question. We need to just to present it in the format of cost sheet. That's all. Yeah, you are required to prepare cost sheet showing all this information. Yeah, cost sheet of cotton and manufacturing for the month of April 2026. Direct material. So just multiply the kgs with rupees, guys. So 2000 kgs into 120 will give us 2,40,000. 600 kgs into 85 will give us 51,000. So total material cost is 2,91,000. Then wages, direct wages. So it would be 75 into 60 into 20 for skilled men. It is 1,12,500. And for unskilled, 40 into 30 into 25, 30,000. So total is 142,500. And direct expenses is already given in the question. Direct higher charges and power and fuel. So that comes to total 12,000. So prime cost is 4,45,500. Then works or factory overhead is 160% of direct wages. So take 1,42,500 into 160%. You can also show it here in the bracket. Okay. So works cost or factory cost is 6,73,500. And they have reduced the sale of scrap here itself. That is sale of waste cotton and cotton scrap 23,500. But what I would suggest is you can also take it before cost of production. That is after works cost, but before cost of production. Means at this stage. Actually, as per the format what we have learned, it has to be reduced here, guys. Clear? But anyway, it is not like, sir, what they have done is completely wrong. No, no, no. Only that works cost figure will change because they have reduced it here only. No, so the works cost figure will be different, whereas cost of production will be same only. Okay, yeah. Administrative overhead related to production, we are just adding it here only 45,000. Please be careful. They have only given it as related to production, so no headache for us to assume anything. So cost of production is 6,95,000. Selling and distribution expenses is 37,500. So we are getting cost of sales 7,32,500. One more advantage is there is no opening stock, closing stock of raw material, WIP and finished goods. So straight away cost of sales is 7,32,500. Yes, and sales, I told you how to calculate it. 1,500 kgs which is produced and sold into 600, 9 lakh. So the profit is like balancing figure. Sales minus cost of sales will give us profit, guys. Clear? Or else you can show like this also. Cost of sales plus profit, which you can keep it as balancing figure, will give us sales. Yeah, you can present like this also. Yes, sir. So guys, one thing you have to be careful with the treatment of this one, which I am kind of different with this. Better to show this at this stage, that is before cost of production. So if you want me to show also, as we already discussed in the class, I will just show you. You can, if you also have this concept book, you can come to the cost sheet chapter. Yeah, you can see, oh, if there is any miscellaneous or scrap values, we normally reduce it before calculating the cost of production. And this is the format given even in the ICS study material. Same format I have also taken it in the my concepts book. Okay, so normally scrap value we need to reduce it before calculating the cost of production. But in this suggested answers, they have reduced it here before the works cost. Yeah, fine guys. A is done. Let us move to B1. B is again a 7 marks question. What is the requirement? We'll understand. You are required to ascertain break-even point in units at current capacity utilization, then total sales value and cash break-even sales quantity at current capacity utilization. Please be careful. What is asked here is cash break-even sales. Okay. The third one, capacity utilization and margin of safety sales if the company wants to earn a profit of 9,37,500. This is desired profit, guys. Desired profit. Assuming selling price per unit and variable cost per unit remains unchanged. Okay. So the question is on marginal costing. PQR Limited is the manufacturing company that operates at 80% capacity. So the presently they are operating at 80% capacity, generating a profit of 7,50,000 by selling 36,000 units. Means currently they are operating at 80% capacity and selling 36,000 units and earning a profit of 7,50,000, guys. The cost details are as follows. Material cost per unit 25 rupees, labor cost per unit 15 rupees, semi-variable cost is total is 8,20,000, but in that variable component is 10 itself. So variable component is 10 means can we calculate variable total cost in this, guys? Yes. So it is nothing but 10 into 36. Correct. That is the total variable portion in semi-variable cost. So 10 is per unit into number of units is 36,000. So it will be 3,60,000. So if I reduce 3,60,000 from 8,20,000, then I will get the fixed portion in semi-variable cost. Hope you guys got it. Yes. Contribution per unit is 50 rupees. Okay. Actual variable cost is how much? 25 plus 15 plus 10. Okay. So 25 plus 15 plus 10 is 50. So contribution also is 50. Variable cost per unit is 50. Contribution is also 50. That means selling price also will be 50 because we know that selling price minus variable cost will be contribution. We know that contribution is 50. Variable cost per unit is 50. So that means selling price will be how much, people? Balancing figure 100. Got it? Yes. Margin of safety sales at current level of sales 15 lakh. Okay, fixed cost up to 80% capacity, including depreciation of 1,90,000, 5,90,000. Okay, so fixed cost at 80% capacity is 590, including depreciation of 190. Guys, depreciation is a non-cash expenditure. If I want to calculate cash fixed cost, how much is that? 5,90,000 minus 190. So it comes to 4 lakh. Cash fixed cost. Cash fixed cost is 4 lakh. Clear? Because they have asked us to calculate cash break-even point. No. So for cash break-even point, we should know cash fixed cost. Okay. And please be careful. This is not the only fixed cost. Even in this, there is a fixed portion. We need to consider that also. That is how much is that? 8 lakh 20 is the total semi-variable expenses. From that, if I remove variable portion of 3 lakh 60, remaining is the fixed portion. Remaining is the fixed portion. So we need to consider both while calculating fixed cost. Then additional fixed cost beyond 80% capacity means currently companies operating at 80% capacity. If they work beyond 80%, then the fixed cost will increase by 1 lakh 50. Whatever is the present at 80%, it will increase by 1 lakh 50. Okay, sure. So you're required to find out so and so, which we already read. Yeah, some workings they are done. Right. Number of units at 80% level is 36,000. So if you operate at 100%, what should be the production? So 36,000 is at 80%. So divided by 80%, you will get at 100%. The output should be 45,000 units. Okay. So contribution per unit is 50 rupees. So let us find out variable cost per unit. It is already given 25, 15 plus in that semi-variable portion, how much is variable? 10 rupees per unit. So 50 rupees per unit. So if I add up both, we will get selling price per unit, which is 100. Which is 100, guys. Okay, now coming to fixed cost. Fixed cost part of semi-variable cost plus we also have fixed overheads. Okay, sir. So the total semi-variable expense is 8,20,000. From that, I am removing variable portion. How much is that? 10 rupees per unit into 36,000 units. So 3,60,000. So we'll get 4,60,000. 4,60,000 is a fixed portion in the semi-variable expenses. Plus, we have one exclusive fixed cost also, no? 5,90,000. We will take it fully, including depreciation, we will take it. So what is the total fixed cost at 80% capacity? 10,50,000. 10,50,000. Got it? Please be careful. They have given one more additional fixed cost. That is only if you go beyond 80%. So please don't add it here. Okay. Calculation of break-even point at 80% capacity. Total fixed cost, which is 10,50,000 divided by contribution per unit, 50 rupees. So it is 21,000 units. 21,000 units. Have they asked in units or rupees or anything like that? Yeah, units they have asked. So we have done it. Yes. Then second one, total sale value and cash break-even point at 80% capacity. So total sales value, guys, we already know that 36,000 is the units sold, which is given in the question, into the selling price. Selling price also is, we have calculated, no, 100 rupees. 100 rupees, just multiply, you will get total sales value. Yes, sir. And cash fixed cost. So I guess in that 5,90,000, 1,90,000 was a depreciation, correct? Yes, sir. So from 5,90,000, we will reduce 190, we will get 4 lakh. And for that, we need to add whatever is the fixed portion in this. That is 460, I guess. Yes, sir. Yeah. So from the total fixed cost, which we already derived, just remove that fixed depreciation part, which is 1,90,000. 1,90,000. So we will get 8,60,000 cash fixed cost. So what is the formula for cash break-even point, guys? Cash fixed cost divided by contribution per unit. We are getting 17,200 units. 17,200 units. Then the last one. Capacity utilization and margin of safety, MOS, sales to earn a profit of 9,37,500. So this is a desired profit. So for this, we need to use the formula of required sales. Required sales. Yes, sir. And to earn a profit of 9,37,500, should we go beyond 80%? Yes. Because currently companies working at 80% capacity and they are earning a profit of how much? Only 7,50,000. So if they want to earn a profit of more than this, should they go beyond 80%? Of course. And please be careful. They clearly told there is no change in selling price and variable cost per unit. Okay, sir. Fine. So new fixed cost would be, as they are going beyond 80%, so the fixed cost will increase by 1,50,000. So whatever is the present fixed cost, including the depreciation, 10,50,000 plus additional fixed cost 1 lakh 50. So if we go beyond 80%, what will be the new fixed cost? 12 lakh. So required units or required sales is equal to fixed cost divided by, plus targeted profit or desired profit whole divided by contribution per unit. It is nothing but total contribution divided by contribution per unit, guys. Correct? Yes. Total contribution. Obviously, no, fixed cost plus profit is equal to what? Contribution. Yes. So 12 lakh plus 9 lakh 37,500 divided by 50 will give us 42,750. 42,750. So in order to earn a profit of 9,37,500, company has to sell 42,750 units. So what is the capacity utilization? And 100% we need to produce 45,000 units. And now to earn so much of profit, we are producing how many units? 42,750. So what is the capacity utilization? Find out. 42,750 divided by 45,000 into 100. So capacity utilization to earn a profit of 9,37,500 is 95%. Sir, how did you get this? This is we found out. No? If you are operating at 100%, then what will be the sales? This one. Okay. Yes. So new break-even point would be the total fixed cost divided by contribution per unit, 24,000 units. And the margin of safety is nothing but the sales minus break-even sales. Sales minus break-even sales, because margin of safety means the sales beyond break-even sales. Got it? So 42,750 minus 24,000 will give us margin of safety. And if in case if they are asking us to calculate in value, just multiply both with selling price. That's all. We will get break-even sales and margin of safety in rupees. Got it? Yes. Now let us move to question number 3. Sub question A. Requirement. Required. Prepare a joint cost apportionment statement for products A and B on the basis of sale value at split off point. Okay, sale value at split off point. That is important. Okay. That is the basis to apportion the joint cost. Advise whether product A should be sold at split off point or processed into A prime, showing incremental revenue or incremental cost and profit. Guys, this second part is like, should we sell a product at split off point or should we further process and sell it? Got it? Yeah. Chalo, we will see. What is the information given? Apex Chemicals Limited processes a basic chemical raw material in Department 1, which yields two joint products A and B. At the split off point, the ratio of 60 is to 40. So this is the ratio of output at split off point between whom? A and B. Okay. The input output ratio of Department 1 is 100 is to 90. That means there is a loss of how much people? 10%. In Department 1, there is a loss of 10%. Means if they put the 100 units of raw material into the manufacturing process, they will get an output of 90. That means obviously there is a loss of 10%. Okay. Product A can either be sold at split off or further processed in Department 2 to produce A prime. Department 2 is used exclusively for product A. So product B has to be sold at split off point, guys. Whereas for product A, we have two options. Either we can sell it at split off point or we can further process and sell it. And its input output ratio is 100 is to 80. That means in Department 2, loss percentage is how much? 20%. In Department 2. In Department 2, the loss percentage is 20%, guys. That means if we give an input of 100, it will give an output of 80. Means in between, in the process, we have lost how many units? 20. Okay, sir. Production and cost data. Raw material input in Department 1, 1,20,000 kgs at rupees 7 per kg. And conversion cost, they have given 4,50,000 here. That is actually by mistake, printing error. Other direct material, 4,50,000 in Department 1 and Department 2, 1 lakh. Direct labor, 4,00,000, 140. Variable overhead, 6 lakh and 260. Fixed overhead, 550, 40. Okay. So conversion cost here is 20 lakh and here it is 5,40,000, guys, which includes labor and overhead cost. Conversion cost is nothing but labor and overhead. It will not include raw material cost. Okay. Other data, selling price and selling expense is given. If A is sold at split off point, selling price is 45. If it is sold as A prime, that is after further processing, selling price is 75. Whereas B has to be sold at split off point, selling price is 45. And selling expenses is 30, 26 and 22. Okay. And here, one thing to note here, guys, one important thing. See, if A is sold at split off point, selling expenses is 30,000. If it is further processed into A prime and sold it, selling expenses 22. Now assume we are further processing A into A prime and we sell it. How much is the selling expenses? Is it only 22,000 or is it 22,000 plus 30,000? It is only 22,000. Why? Because guys, if I am further processing A into A prime, that means I am not selling A at split off point. When I am not selling A at split off point, there is no question of incurring these expenses. Only to sell A prime, we will be incurring 22,000. At the same time, if I am selling A at split off point, obviously I will be incurring only this cost. This cost will not. Got it? Yes. So you can observe one thing here. If you sell A at split off point, I need to incur selling expenses of 30,000. But if I further process and sell it, I need to incur only 22,000. That means if I further process and sell, there will be a saving in selling expenses of 8,000. Saving in selling expense of how much? 8,000. Hope you got it. Because if I sell it at split off point, I have to spend 30,000 for selling. Whereas if I sell after further processing, only 22,000. That means there is a saving of how much? 8,000 if I further process and sell it. Hope you got it. Yes. So we need to do joint cost apportionment and also make a decision whether we need to sell product A at split off point or further process it. Okay. Calculation of total joint cost first. In department 1, raw material cost 1,20,000 into 7. Then you take all the conversion cost which is already given total. Better to take it as total. Okay, which is like 20 lakh, I guess. Yeah, 20 lakh. Or as the question, how many marks for this question? 30, yeah, 8 marks. Okay, so as it is a 8 marks question, see, if it is like marks allotted for this question is less, then I would suggest you to take material cost right away, add conversion cost. It is directly given now. Why to individually present it? But here, as it is a 8 marks question, I would suggest you better write individually and just add it up. Okay. Chalo. So the total joint cost is 28 lakh 40,000, guys. So we will calculate the sale value of each of this joint product at split off point because that should be the ratio to apportion the joint cost. So output is how much? 1,20,000 is the total input, but we will get only the output at 90% because there is a loss of 10%. So what is the actual total output at split off point? 1,08,000. And we need to split it between A and B in what ratio? 60 and 40. So 1,80,000 into 60% product A 64,800 into 40% will be for product B 43,200. And selling price is given at split off point. Please take it at split off point into 45 into 45. So we will get sale value at split off point. This should be the ratio. This should be the ratio to apportion joint cost, guys. And total also you write it. Okay, because we should have a total ratio, total of the ratios. Better what I would suggest is you can ignore these 3 zeros, guys, while taking the ratios. They have taken it actual numbers here, but while calculating it will normally take time when you're considering zeros and all. So I would suggest you to ignore 3 zeros. So you can take the ratio as 2916 is to 1944. Okay, yeah. So just divide the total joint cost of 28 lakh 40,000 in this ratio, people. So we'll get for product A 17 lakh 4,000 and for product B 11 lakh 36,000. Okay, sir. Part A, first part done. Second part. If product A is processed further into A prime, then what is the incremental revenue, incremental cost, and incremental profit? So output would be how much? Guys, if A is sold at split off point, what is the output? 64,800. If I further process it to A prime, in department 2, there is 20% loss. Because if I give 100 units as input, it will give only 80 as output. So 20% loss. Yes. So out A prime, even though A is 64,800, if I put it in production department 2 to produce A prime, will I get the same units of output? No, no, no. 80% of this. 80% of this. So what is the output of A prime? 51,840. And what is the selling price of it? 75. So if I further process and sell, What is the sale value of A prime? 75 into 51,840. Hope you understood how we got 51,840. Output at split off point for product A is 64,800. If I put this as a raw material in department 2, it will give me 80% output at the end, which is 51,840. And if I further process and sell, the selling price is 75. So this is the sale value after further processing. From that, straight away you can deduct this one, guys. You can straight away deduct 29 lakh 16,000, which we already calculated. They have again shown it here, 45 into 64 800, or else as we already calculated, you can take here. So what they have done here is simple. Sale value after further processing minus sale value at split off point in order to find out incremental revenue, which gives us 9,72,000. And what is the incremental cost in department 2? If at all, if I process A into A prime, then department 2 cost also will come into picture. How much is that? 5,40,000. Take that because it is an incremental cost which will be incurred only if I further process product A. Yes, 5,40,000. And there is a savings in selling expenses, I told you. If A is sold at split off point, 30,000. But if I further process and sell, what is the selling expenses? 22,000. So if I further process A into A prime, there is a saving in selling expenses of 8,000. So deduct that. Deduct that. Yes, sir. So incremental cost is how much? 5,32,000. So if I further process A into A prime, there is an incremental cost of 5,32,000. So what would be the incremental profit? 9,72,000. Better just, yeah. 9,72,000 minus 5,32,000, which will give us 4,40,000. So is it good to, or is it beneficial to sell A at split off point, or should we further process it? We should further process it because it will give us an incremental profit of 4,40,000, guys. Got it? Yes, sir. Hope you're clear with this. Fine. We will move to sub question B now. Requirement. First, we'll read the requirement. 6 marks question. You are required to ascertain the following: fixed overhead expenditure variance, volume variance, calendar variance, cost variance. Okay. Question is on standard costing. Under that, the fixed overhead calculation. Indicate the nature of variance, that is F or adverse. Okay. Second question actually on standard costing. We already solved one. This is the second one. Alpha Limited uses standard costing system for manufacturing its single product Star. The following data has been gathered from the cost records of the company to compute various fixed overheads variances for a specific period. Number of budgeted working days 25. Budgeted man hour per day 12,000 per day. Please be careful. Okay. So can we calculate budgeted hours? Yes. 12,000 into 25 will give us budgeted hours. Output budgeted per man hour in units is 1. So can we calculate budgeted output, guys? Yes. Once we get budgeted hours, just multiply 1 with that. We will get budgeted out. So budgeted hours and budgeted output will be actually same here. Okay, I repeat, budgeted hours is nothing but 12,000 into 25. Yes. And budgeted output would be nothing but budgeted hours into 1. That's all. All. Fixed overhead cost as budgeted 6 lakh. Actual number of working days is 28. Actual man hours per day is 12,500. So can we calculate actual hours worked? Yes, 12,500 into 28 will give us actual hours worked. Actual output per man hour in units is 0.9. So once we get actual hours by multiplying both of this, if I multiply that with the actual output, that is 0.9, we will get actual output. This is given per man hour. So if I just multiply this with actual hours worked, we get actual output. Actual fixed overhead incurred 6,24,000. You are required to ascertain the following: fixed overhead expenditure variance, fixed overhead volume. Okay, this we already seen. And please be careful. What I would suggest is, see, cost is given at the end. Better start with cost, then expenditure, then volume, then go to calendar. Okay, that means we are calculating in the order. Yeah, sir, can we calculate in the same order also? Nothing wrong. But just to make sure that we are following the order what we have learned in the class, because we know that cost variance will be there. The subdivision of cost variance is expenditure and volume variance. Okay, so it would be easy for the student. Yes. So we'll go to the solution. Yeah. So first they have done some basic calculations. Only then they have gone ahead to do the variance calculation. Budgeted days is 25, actual days is 28. Okay, first let me talk about budgeted, then I will come for actual. Budgeted days is 25. Man hours per day is 12,000. So budgeted hours will be 12,000 into 25, which will give us 3 lakh. And units per man hour is 1. So what is the budgeted output? 3 lakh into 1, which is 3 lakh. Fixed overheads is 6 lakh. Fixed overheads, that is budgeted fixed overhead, okay, is 6 lakh. Can we calculate the standard fixed overhead rate per unit? Yes, 6 lakh divided by 3 lakh, 2 rupees. Can we calculate standard fixed overhead rate per hour? Yes, 6 lakh divided by 3 lakh, 2. Same. Can we calculate per day also? Yes, standard fixed overhead rate per day, 6 lakh divided by 25. 6 lakh divided by 25, guys, because all this we need for calculations of variance. Okay, now coming to actual data. Actual days is 28. Actual man hours per day is 12,500. If I just multiply both, we will get actual hours worked. Then units per man hour is 0.9. So if you just multiply 0.9 with 3,50,000, we will get actual output 3,15,000. And actual fixed overhead is 6,24,000. Okay, sir. Guys, can we calculate standard hours? Yes, that is also better to do it. Standard hours. Standard hours will always be for actual output. Actual output is 3,15,000. And how many hours for each unit is required? Units per man hour is 1. So if you just multiply both of this, we will get standard hours for actual output. Standard hours for actual output, which is 3,15,000 hours. Got it? Yes. Okay. So we'll start with the calculation. Better to start with cost variance, as I already told you. Fixed overhead cost variance, the formula would be absorbed fixed overhead minus actual fixed overhead. So absorbed we can calculate in two ways, guys. You can either calculate in the terms of hours or quantity. Okay. Yeah. Quantity is nothing but output. So standard hours for actual output is 3,15,000, and for each and every hour, the rate I guess they have given it. Yeah. Standard fixed overhead rate per unit is 6 lakh divided by 3,000 units. Sorry, 3 lakh units, 2 rupees. Even if you're calculating per hour also, it will be 6 lakh divided by 3 lakh hours. You will get 2 rupees per hour. Okay, because hours and units is same for budgeted part. You can see here. Yeah. So standard hours is 3,15,000 hours, guys. For each and every hours, we will observe how much? 2 rupees. Even per hour, it will be same. So 3,15,000 into 2, we will get same. Even if you are observing based on output, for each and every unit produced, we will observe how much rupees? 2 rupees. 2 rupees. So if you take, you can calculate in this in two ways. Standard hours. Okay, just a minute. I will show you. Standard hours into standard fixed overhead rate per hour. Okay, which is nothing but 2 rupees. Or else actual output into standard fixed overhead rate per unit, which is again 2 rupees. So actually in this question, actual output and standard hours is one and the same. And standard fixed overhead rate per hour and per unit is one and the same. Got it? Yes. But even if it is different, you will get the same amount, guys. Observed overhead. I repeat. Fixed overhead observed can be calculated in two ways. How is it? Standard hours for actual output into standard fixed overhead rate per hour. Second way, actual output into standard fixed overhead rate per unit. Got it? Yes. Minus actual fixed overhead, which is already given. So we are getting 6,000 favorable. Okay. Now come to expenditure variance. Budgeted fixed overhead minus actual fixed overhead. Both the figures are already given in the question. Just deduct each other. So adverse 24,000. Okay, sir. Then volume variance is equal to observed fixed overhead minus budgeted fixed overhead. So observed we already got here, no? Same thing you can take here. So 2 lakh into 3 lakh, sorry, 2 into 3 lakh 15,000 minus 6 lakh. We are getting 30,000 favorable. Just cross check, guys. Fixed overhead cost variance is equal to expenditure plus volume variance. Is it matching? So 6,000 favorable here. So if you just intra-adjust this, one is favorable, one is adverse. So you will get net 6,000 favorable, which is equal to cost variance. Matching? Yes, sir. So calendar variance. So the formula will slightly change for calendar variance, guys. First we need to take actual, because Higher the number of actual working days, it is always better here. So actual working days is 28 minus budgeted days is 25 into budgeted or else standard fixed overhead rate per day we need to take per day, which is nothing but 6 lakh divided by 25. I think they have shown the calculation here. Yeah, 24,000 per day. This is. Please be careful, per unit, per day, per hour, and all will be different, guys. Yes. And here, why are we taking per day, sir? Very simple, guys. We are finding out the difference in days, not in hours. So whatever we get here, 28 minus 25, it is not hours, it is days. So obviously, rate also should be per day. Yes. So we are getting 72,000 favorable, guys. 72,000 favorable. Yes, sir. Yes. Let us move to question number 4. 4A. 9 marks question. You are required to prepare sales budget for 26-27 after incorporating the above estimates. Okay, we are supposed to prepare sales budget. Statement showing budgeted and actual sales for 25-26. Okay, question is on budget topic. Z Limited manufactured two categories of products, Omega and Theta. These products are sold through two primary distribution channels, online portals and retail stores. In the current financial year, Omega performed exceptionally well online due to a viral trend, while Theta saw a surge in retail stores. The following information is available for the year 25-26. Yes. Products Omega online retail budgeted sales actual sales is given and also selling price per unit budgeted and actuals are same selling price budgeted as well as actual is same guys 15,000 and 18,000. Coming to Theta also they have given the sales that is budgeted sales and actual sales through both the channels that is online and retail and selling price is 40 and 45,000. Okay. Market research indicates that Omega series is facing a stiff competition offline. Therefore, management has decided to reduce the price by 10% across both the channels. Okay, for Omega, they're trying to reduce. One second, let us write it here. So they're trying to bring down this by 10% in both the channels. In both the channels. Okay, sir. Tata series has gained luxury status, so the management has decided to increase the price by 5,000 per unit for both online and retail sales. Okay, so that means this has good demand. They are increasing the price by 5,000. They are increasing the price by 5,000 per unit. Okay, so the increased price will become here now already 40 is there present 45 and here 45 whatever is already there will become 50,000 per unit. Based on this price changes, the sales manager has submitted the following estimates of increase in sales for the year 26-27 over the original budgeted sales. Okay. So whatever already budgeted sales are there, over and above that, the sales will increase by this much it seems due to this price changes. For Omega, in online plus 15% and retail plus 5%, Theta in online plus 10% and retail plus 20%. Okay, so please be careful guys, this percentages has to be applied on this because they clearly told the increase will be on the in the original budgeted sales. So whatever plus is given you is on budgeted sales. Okay, sir. Furthermore, the company has signed a contract for an influencer marketing campaign. It is estimated that for the year 26-27, this campaign will generate the following additional sales. What is it? Okay, number of due to this marketing, Omega sales will increase by 200 in online channel and nil in retail channel, whereas Theta 100 units in online channel and 50 units in retail channel. You are required to prepare so and so. Guys, see, please be careful. So budgeted sales for 26-27 would be like this. Whatever is the current budgeted sales for the year 25-26, okay? We need to take that plus so much percentage. Then we should also add this many units. Please be careful. This is like additional sales due to marketing. That would be the budgeted sales for how much? For the year 26-27. Okay. So they have asked sales budget for 26-27 and also statement showing budgeted and actual sales for 25-26. It would be better to do this first because this is for the present figures. And after considering the increase and all, then we need to prepare a sales budget for next year. Okay, fine. In the exam, however you guys are comfortable, you can do it. Sir, I want to do this only first. Yes, you can do it. Nothing wrong. But I would suggest leave space for one and go with second one. Okay, because this is anyway with respect to the present one. No? Yeah. So I am doing the first one. Second one first. Statement showing budgeted sales for 25-26. Oh, budgeted sales. Actual we will do later. They have asked both, but we will do it separately. Because if you try to do both in single table, then it will take lot of space, guys. And if you can present it, great. You can do it by turning your page or using both the sides of the answer sheet, guys. Yeah. Budgeted sales, as it is, you take quantity, that is online retail for Omega, then the rate, whatever is given. No, don't consider the changes, guys. Whatever is given, just right away take it. Okay, this figures as it is we need to present, because what they asked in the second requirement is for the year 25-26. So please don't consider any changes. So budgeted sales, then selling price as it is we need to take. Okay, sir. So multiply both 1000 into 15,000, 800 into 18,000, you will get the amount, that is sales value of Omega. Coming to theta, quantity budgeted sales you take into the selling price, you will get sale value. Then you can also add up both, that will give us total sales from both the products from both the channels. So the total sales in online channels for both the products is 3 crore 50 lakh, and for retail it is 3 crore 24 lakh. Totally all put together 6 crore 74 lakh, guys. This is budgeted sales. Coming to actual sales, okay, selling price would remain same only. There is no change in the selling price. Budgeted selling price and actual selling price is same, but only quantity, please be careful. You need to take the actual quantity now. So 1200 and 700 here, and 450 and 500 here, actual quantity. So multiply quantity with rate, guys. You will get the sale value. Under the end, add up both. Clear? It is very simple actually. It is just multiplication and adding here. Everything is given in the question. You need to just present it, add and multiply. That's all. Yes, but obviously it will take time, because the figures and all is in lakhs, crores. Actually, it is in crores only, the amounts. Yeah. Now coming to budgeted period, that is 26-27. Yeah, be careful here. First, let us calculate the quantities, sale quantity. So present online sales of Omega is 1000. It is expected to increase by 15%. So you can do plus 15% or else into 115%. So 1000 into 115%, or you can also just take plus 15%. Plus, we should also consider this 200. Okay, fine. So then coming to retail for Omega, 800. 800 plus 5% or into 105% plus 0. Okay. Then coming to theta, budgeted sales present is 500. 500 into 110% plus 100 units. Same way for retail, 400 units into 120% plus 50 units. Hope you understood. Okay, so they have done the working here. This you can take into the respective percentages, or else you can just take plus 15%, plus 5%, plus 10%, plus 20% like that. And after that, you add these figures due to marketing. Okay. So once we calculate the quantity, we will take it here. 1350, we will take it here. 840 here. Then 650 for theta online and 530 for theta offline. That is retail. Okay. And please be careful with selling prices also, guys. So selling price, this will be reduced by 10%. So 15,000 minus 10%, 18,000 by 10%. Whereas for this two, that is for theta, the price will increase by 5,000. So 40 will become 45, 45 will become 50. Okay. Yes. So 45 and 50. And here also 15 minus 10%, 13,500, 18,000 minus 10%, 16,200. Yes. Now multiply quantity with the rate. You will get sale value. Here also quantity with rate, amount, then add up both. I just give the notations here, P, Q. So if you add up P plus Q, you will get the figures. Actually very easy and simple question, but time taking. The calculation and presentation will take the time, guys. Okay. Now coming to B, you are required to ascertain average number of workers on roll for the quarter, number of workers recruited and joined. Okay, recruited and joined means, guys, it is including replacement. Including replacement means total number of new employees. We also call them as accessions. Okay, so I will just write it here. Accessions. It is nothing but accessions. Yeah, number of workers left and discharged. Okay, that is separated. So what is the data given in the question? The labor turnover rates for the quarter ended 31st March 2026. Quarter data. Data is given for a quarter. Are computed as 12%, 6% and 4% under flux method, replacement method and separation method. Guys, when they are given like this, please follow the order. Under flux method, it's 12%. Replacement method, 6%. And separation method, 4%. The number of workers replaced during the quarter is 54. Same to same question we have solved in the class. Same to same. Only the numbers are different, but same to same as it is. Okay. So they have given the number of workers replaced. So it is better to start with replacement method. That is how we will get average number of workers. So we are supposed to calculate average number of workers recruited and joined. That is nothing but new employees, number of workers left and discharged. Yes. First, we are supposed to find out average number of workers on roll, for which we will use the replacement method formula. So, as per replacement method formula, how do we calculate the labor turnover? Number of replacement divided by average number of employees into 100. It is given as 6%. Number of employees replaced is 54. So take it and try to take 100% on one side, guys. See, for example, here also if you do 6 by 100 and here also if you do into 100, then you will not get the answer. Take it on one side. Okay. So here you can like take 6. So this into 100, if you take it to the other side, it will become divided by 100. Or else, sir, as 6% is there, can I straight away take 6 by 100 also? Yes. Anyhow. Okay. So cross multiply. 54 54 into this, you take it to the other side. 54 into 100 divided by 6 will give us average number of workers 900. So next they have asked number of workers recruited and joined, but before that we will calculate number of employees separated. So we'll use the separation method formula. Number of employees separated divided by average number of workers will give us the labor turnover as per separation method. So it is given as 4%. So can we use this formula and calculate number of employees separated? Yes. So how is it, sir? 4 into 900 divided by 4. Sorry, divided by 100. I repeat. 4 into 900 divided by 100. We will get 36. So number of employees left and discharged is 36. Yes, sir. So number of workers recruited and joined as per flux method. And please be careful, here we are supposed to use number of accessions, not replacement. Because they have asked number of employees recruited and joined, which includes total number of employees, guys, new employees. That is due to expansion plan as well as due to replacement. Got it? Yes, I will just show you. You can just come to the employee or labor chapter, third chapter, where we have this topic. Yes. Yes, flux method you can see. So normally this is what the formula we use, number of employees replaced and separated, whole divided by average number of employees. But here they have asked us to calculate number of employees joined, just a minute. Yeah, recruited and joined. So for that we are supposed to use which formula? Number of accessions. And sir, what is number of accessions? Number of accession is nothing but number of employees newly joining, that is due to expansion plan, plus number of employees replaced. It includes both. In simple, total number of new employees. Got it? Yes, sir. Chalo. So number of separations plus number of accessions whole divided by average number of employees. So separations, we already know that we have calculated this. So for calculating 2, first you should do 3. Only then you will be able to do second one, guys. Yeah. Yes. So 36 plus accessions, we will keep it as A whole divided by 900 is equal to 12%, 12 by 100. Yes. So just cross multiply, you will get A as 72. That is total number of new employees. Got it? Yes, sir. Yes. So let us move to question number 5, guys. XYZ. Okay. Requirement first. 10 marks question. You are required to calculate total sales and total profit earned for each product as per absorption costing system. Second one, total sales and total profit earned for each product as per activity based costing system. So question is on overheads, that is both the traditional and the traditional and the modern technique. Yes, absorption costing system and the activity based costing system is also known as modern technique, guys. Sure, we'll read the requirement. Sorry, requirement is done. Information. XYZ Private Limited manufactured two products, Mini and Maxi, utilizing the same production methods. The company operates under the absorption costing system. So presently they are following the absorption costing system. The details of the products for the financial year 25-26 are provided below. Products Mini Maxi, number of units produced 8,000 and 10,000. Number of units sold 6,400 and 8,000. That means there is a closing stock. Just a minute, I will write it here. Closing stock of 8,000 minus 6,400, 1,600, and 10,000 minus 8,000, 2,000. Closing stock. Direct material cost per unit 250, 400. Direct labor hours it is, not cost. Please be careful. 4 hours and 5 hours. Selling price per unit sold during the year 950 and 1,080. So we can actually easily calculate sales if I just multiply this two. Using the traditional method, all the production overheads were of 54 lakh, which were directly distributed on the basis of units produced. Units produced. So 54 lakh, we need to calculate absorption rate. What is the total number of units produced? 18,000. So 54 lakh, please be careful. It is both the products put together, not for individual products. Yes. So it is based, it is observed based on units produced. So total units produced is 18,000 guys. So if you just divide 54 lakh by 18,000, you will get absorption rate. Direct labor hour rate is 50 rupees per hour. So if I just multiply 50 with the hours, we will get labor cost per unit. Further, the board of directors is considering the transitioning to an activity based costing system to determine the production overheads. Okay, they were presently following the traditional, but they want to switch for modern technique. The total production overheads are analyzed into the following: setup cost, machine running cost, inspection cost. Guys, whatever total overhead cost is there, no? Now they are giving it activity wise. There are totally 3 activity and they are given activity wise. What is the activity cost? Total is 54 lakh. Okay. The following data on cost drivers was provided by the production manager relating to the bifurcation of production overheads. Okay, this is nothing but activity cost drivers. Number of setups 100, 200, number of machine runs 750, 1050, number of inspections 60 and 210. They are given individually. It is good to do the total also, because if we have to calculate the activity cost driver rate, okay, or the cost driver rate, we should know the total. So here it would be total. I will just write it here, 300, and here it is 1,800, 60 plus 210, 270. Right? Yes. You're required to calculate both, so and so. So both under both the systems. So it is for 10 marks, maybe like 5 marks each. Yeah. Total sales and total profit for each product under absorption costing system. So overhead absorption rate would be 54 lakh divided by total output. Both the products put together, 300 rupees per unit. Yes, sir. So first we'll do it under traditional absorption costing system. Number of units produced 8,000, 10,000. Number of units sold 6,400 and 8,000. There itself you can show the closing stock units. Okay, which is actually 1,600 here and 2,000 here. Direct material cost per unit 250, 400 given in the question. Direct labor hours is given. Multiply with labor hour rate, which is given below that table. 4 hours into 50, 200. Then 5 hours into 50, 250. Then factory overhead is 300 rupees per unit, guys. We have found out here. Just take it. 300. Yes. So cost per unit 750 and 950. So the total cost of production you calculate 750 into 8,000, 950 into 10,000. We will get 6 lakh, 60 lakh and 95 lakh. Okay. This is for how many units, people? Total cost of production is for this many units. But we have a closing stock. As we have not sold entirely, we have a closing stock. So we need to deduct it. Closing stock of finished goods. Cost per unit, which is 750 into closing stock. I told you, no? How much is the closing stock units? 1,600 here and 2,000 here. Okay, just multiply. 750 into 1,600, we will get 12 lakh, and here 2,000 into 950. Okay, that is closing stock units into the cost per unit, 19 lakh. So we'll get cost of goods sold. Then find out sales. Profit is not given. That will be like balancing figure. Sales you find out. How, sir? Simple. Units is given. Selling price also is given in the question. Selling price, yeah, is given here. 950 and 1180. Just multiply. Yeah. So multiply the units sold with selling price. You will get sales. So sales minus cost of goods sold. Profit will be the balancing figure, guys. Got it? Yes. And overhead rate, here also they are shown. Actually, it is already shown here. Again, repeated. Okay. So that is budgeted overhead, total budgeted overhead 54 lakh divided by units produced. And units produced is both the products put together, guys. Yeah. Now coming to activity cost driver rates. So first they have calculated cost driver rate. Simple activity cost is given. 3 activities are there. Cost is already given. And cost driver individually is given. You just do the total and take it here. So activity cost divided by total of cost driver for each activity will give us cost driver rate. Got it? I have just given the notation here A, B. So cost driver rate would be A by B. Yes. So if I just multiply this with the respective cost driver for each product, we will get the activity cost apportioned to each product. For example, 3000 has to be multiplied with the number of setup for each product. Same way, 1000 rupees has to be multiplied with number of machine runs for each product. We will get what is the activity cost apportioned to each of the product. Yes. Yeah. Now, total sales and total profit for each product as per activity based costing method. Number of units produced, number of units sold. So closing stock also we already know it. Material cost per unit, labor cost per unit, we already explained it, guys. So prime cost we will get it here. Then coming to activity cost. So total prime cost also they have shown. How is it? Simple. 450 into number of units produced, 650 into number of units produced. That will give us total prime cost. Then coming to activity cost, whatever we have got here, just multiply with the cost driver for each product. Cost driver for each product is nothing but this one, guys. Yeah, this one. Just multiply with the respective numbers. You will get it. That's all. Yeah. So cost driver rate is 3000 here. 3000 into 100 setups. Here 3000 into 200 setups. You will get 3 lakh, 6 lakh. Same way. Machine running cost is 1000 rupees per machine run. Multiply with the number of machine runs. 750 and 1050. You will get 7 lakh 50, 10 lakh 50. Inspection cost is 1000 rupees per inspection. Multiply with number of inspections. 60 and 210. You will get 6 lakh and 21 lakh. So total overhead cost would be 16 lakh 50 and 37 lakh 50,000. So overhead cost per unit is nothing but again 16 lakh 50,000 divided by number of units 8,000. Same way here 37 lakh 50,000 divided by 10,000. So we'll get overhead cost per unit. Okay, now add up. Prime cost per unit which we got here plus overhead cost per unit, you will get total cost per unit. Now again multiply with number of units. Again multiply with number of units. That is this cost per unit has to be multiplied with number of units produced. Total cost of production you will get 52 lakh 50,000 and 1 crore 2 lakh 50,000. Then closing stock of finished goods. So we have closing stock here 1600 and here 2000. No, just multiply with the cost per unit. So here it would be 1600 into 656.25. Same way 1025 into 2000 will give us 20 lakh 50,000. Yes, sir. So cost of goods sold. Then find out sales. Sales will be same only under traditional as well as that is activity based costing. Sales will remain same. You can just copy paste the same figure. You will get profit. You will get the profit as balancing figure. Got it? Yes. See here they have done little more calculations. So what I would suggest is you already have total prime cost. So you will get here total overhead cost. No, just add up both. You will get total cost of production. I think this is not required. I feel this is not required. Simply like unnecessary time waste. So once you get total prime cost here, you get total overhead cost. Just add up both. You will get total cost of production. Got it? Yes. And even closing stock alternatively you can calculate like this. we have total cost of production, right? 52 lakh 50,000. So 52 lakh 50,000 is for 8,000 units. So divided by 8,000 into closing stock units, that is 1,600. So simple. How do we derive this closing stock? Simple. 52 lakh 50,000 divided by 8,000 into 1,600. Same way for another product. 1 crore 2 lakh 50,000 total cost of production for how many units? Divided by 10,000 into closing stock how much? 2,000 units. You will get the same. This is just an alternative way. Okay. Yes. Done with A. Let us move to B. B is just a 4 marks question. And if it is a small question, sir, can I read from the top only? Yes. Okay, see, especially for a lengthy question, I would suggest you to read requirement first and then go and read the information. Or else for all the question, you can follow one single strategy. However, it is convenient for you. Yeah, you are required to calculate profit, PV ratio, break-even sales in value, and fixed cost. So, what is the information? The following information has been furnished by the management accountant of CMC Limited. Margin of safety fixed 5,600 units, break-even sales 2,400 units, margin of safety 9 lakh 80,000. Total cost is 11 lakh 94,200. Okay. Actually, if I just add up both of this, I will get total sales. Margin of safety plus break-even sales is equal to total sales. Because what is that? Total sales minus break-even sales. Sorry, one second. Total sales minus break-even sales will give us margin of safety, right? Yes, sir. And here both of them is given. If I just add up both, we will get total sales. Yes, sir. And can we find out selling price here? Actually, yes. Margin of safety is given in rupees and it is given in units also. If you just divide this 9 lakh 80,000 by 5,600, you will get selling price per unit. You will get selling price per unit. Simplest question, guys. Yeah. Total sales units, just add up both, you will get 8,000 units. Selling price per unit, simple margin of safety in rupees, margin of safety in units. Divide each other, you will get 175 rupees per unit. So total sales value would be 8,000 into 175, 14 lakh. Okay, so one by one. Profit, total sales minus total cost. Total cost is given in the question only. So profit is 2 lakh 5,800. PV ratio. PV ratio. Actually, see the formula to calculate profit is simple. I will calculate profit like this. Margin of safety into PV ratio. Margin of safety into PV ratio actually will give us contribution. But for margin of safety, contribution is equal to profit. Why, sir? Because for margin of safety, there won't be any fixed cost, guys. Fixed cost would have been recovered fully as and when we reach break-even sales. So any sales beyond break-even sales will not include fixed cost. It will have only variable cost. So for margin of safety, if I multiply with PV ratio, actually I will get contribution, which is equal to profit as there is no fixed cost. Got it? Say same formula, they have just cross multiplied. Okay. So they have asked us to calculate PV ratio. So we have margin of safety, we have profit. We need to calculate PV ratio. So PV ratio is equal to profit by margin of safety. And if you want to convert it into percentage, into 100, 21 percentage. Okay, sir. Then break-even sales in value. They have given break-even sales in units and selling price we know, we already found out. So multiply that with selling price, you will get the break-even sales in rupees. Alternatively, we can also calculate like this. Total sales minus margin of safety. Total sales minus margin of safety. So total sales, we got it here, no? Yeah, 14 lakh. Minus margin of safety, 9 lakh 80. So 14 lakh minus 9 lakh 80 will give us break-even sales, 4 lakh 20. Either of the way you can do. But in the exam, sir, should I show both alternates? No, no. You will not have so much tough time. You follow either way. Any one working you do. That's all. Then coming to fixed cost. Fixed cost, you just see in which formula do we use it. In the PV ratio, in break-even sales calculation. Yes, sir. So what is the formula to calculate break-even sales, guys? Let us go with rupees as we already know PV ratio. So fixed cost divided by PV ratio is what we use. So do we know break-even sales in rupees? Yes. Do we know PV ratio? Yes. So you can use this formula. So if I take it to the other side, denominator will become multiplier. Break-even sales in rupees into PV ratio will give us fixed cost, which is 88,200. Got it? Yes. So done with all the numerical part. The last question will be the exclusive theory question, guys. We will see this. Please don't ignore theory in costing because there will be one exclusive question on theory. That is the last question. Yeah, question number, totally four question will be there because there will be one internal choice for the last sub question. Let me read one by one. First one. Which system of inventory management is known as demand pull or pull through system of production? Explain also specify the two principles on which this system is based. This is just in system, guys. Okay, which is a part of material cost chapter. I will just show you. Nothing more to explain all this, guys. We already covered it in the class. Okay, but still I will just show you. Just in system. Just a minute. Yeah, this one. Yes, JIT is a system of inventory management with an approach to have zero inventories in store. This is the keyword. According to this approach, material should only be purchased when it is actually required for the production. Guys, simple. This kind of approach is followed by an entity who will not maintain any inventory, either of raw material or of or of output, either of raw material or of output. What they do is only once they receive the order from the customer, they start manufacturing. And only when they're supposed to start the manufacturing or when they're about to start manufacturing, they will ask the purchase department to purchase the raw material. Will they purchase the raw material and keep it in the inventory? No. Will they produce the output and keep it in the inventory and wait for the customers? No. Only when they receive the order, they start manufacturing. And when they're about to start manufacturing, they will purchase the raw material. That means they will have zero inventories. Okay. So it is based on two principles, that is produce goods only when it is required and the products should be delivered to the customer at that time only when they want it. So it is simple. It is based on demand pull. That is only when there is a demand, we will manufacture it. And only when there is a demand for my raw material, that is when I require it for the production today or maybe tomorrow, only then I will purchase it. Clear? Yes. So this is the answer, guys. You can just see that is what they are given. As it is, I have given in my concept book, you can write it. Text. Distinguish between cost control and cost reduction. So this is a part of first chapter, theory chapter, completely theory chapter. Cost control and cost reduction. Just a minute, I will just open it. Yeah. Yes. So we have learned what is cost control, what is cost reduction. Okay, sir. In simple, what is it? Control means maintaining the discipline in the expenditure. We should ensure that our actual cost will match with the standard cost. Standard cost is like a target for us, given to us. Our actual cost should not go beyond it. So as and when we do the production or we engage in the production, we should always keep comparing the actual cost with the standard cost. And if there is any difference, immediately we need to find out the reason for it and report it to the top level management. Analyze the variance. It is nothing but like what we calculate in standard costing, the difference between the standard and actual, if at all, if there is any difference. Yes. So in simple, we need to make sure that our actual cost will not go beyond the standard cost. Yes, sir. Whereas coming to cost reduction is like achieving the real and permanent reduction in the per unit cost without compromising with the quality. Without compromising with the quality. That is very important. Sir, can I reduce the quality of the product by purchasing cheap quality raw material or by using only semi-skilled workers or unskilled workers? No, no, no. So we need to achieve the real and permanent reduction in the cost without compromising with the quality. Okay, actually, if you know what is cost control and cost reduction, you yourself can develop the points also. So this is the actual difference between, I have given it in my concept book. This is the difference between the cost control and cost reduction. And in the class, I have explained each of this point, guys. Now I will not go in detail about this. Yeah. So this is what they have explained. You can see same to same points. Same to same points. Yes, sir. Going to see. A factory employing 3,000 workers faces issues of proxy attendance. And like how students will mark proxy in their colleges. And payroll errors under the manual system. The plant aid as recommended using an automated method, the biometric attendance system. Okay, they're planning to introduce this. Discuss briefly the features of biometric attendance system, part of labor costing chapter, guys. Labor cost or employee cost, third chapter. Just a minute. Yeah. So this is the topic which comes under timekeeping. So first of all, see if you know all these concepts, no, for this question you can build your own points or features. Yeah. So what is timekeeping? It refers to the maintenance and recording of attendance of employee. That is the total time spent by the employees in a factory. And in the given question, they are told that they are facing some proxy problem and all if they are following manual system. So they want to introduce something called as biometric attendance system. So biometric attendance system is like one of the mechanical methods you can see under that I have given. Yes. So by following this, can they avoid the proxy system? Yes, because under biometric system what happens, no, they can introduce like thumb impression or face recognition or retina recognition. Only when the person is personally present there they can mark their attendance. So through this they can avoid the proxy by the employees. Yes, and they can also control their labor cost. Yes, so these are the points you can normally generate or write here. And also you can just write like this can be followed only by the like large scale organization, because there will be a lot of cost involved in this. If they want to introduce the biometric attendance system, obviously it will come with a cost, guys. Yes, so that is what is given for the C. Yeah. Okay, that is what like a thumb impression or fingerprint, face recognition or retina, that is eyes. Okay, so this will help to reduce the time manipulation and proxy by the employees. Yes. Last one, there is the alternate for C. Explain the meaning of spoiled work and defective work. Discuss the treatment of defective work under the following circumstances. So spoiled work and defective work, it actually comes under the material cost chapter, guys. Material costing. Again, going back to material. At the end of material chapter, we have discussed the material losses. Right now, I will just open it. Just a minute. Give me a minute. Yes. Treatment of normal and abnormal losses. They're asking spoilage and defective, right? Yes. So what is it? In simple, spoilage is something which cannot be rectified. It is lost in the process, that is manufacturing process, but it cannot be rectified. So I need to just put it for scrap, or I need to just throw it. Yes, I cannot rectify it, or I cannot sell it in the market. Coming to defective. Defective is like it is lost in the process, but can I rectify it? Yes, it can be rectified. It can be rectified. But for that rectification, we need to incur some additional cost. So by incurring some additional cost, this defectives can be rectified and made as a good units and sold in the market. This is the difference between the spoilage and defective, guys. Okay. Then they have also asked under the following circumstances, what is the treatment? Okay. Treatment is simple. See, any kind of loss, guys, any kind of loss, first try to identify whether it's normal or abnormal. Normally, something is like unavoidable. Okay, whatever I do, it will happen. Yeah. So if it is a due to normal reason, if there is a defective due to normal reason, what we will do? We will not include it in the cost of production. Sorry, we will include it in the cost of production. It will be absorbed by good units. It will be absorbed by good units. Whereas if it is due to abnormal reasons, because it has happened due to our negligence, poor planning, like that, in that case, it is called as abnormal defective or abnormal loss. In that situation, we need to value it separately and debit it to costing P&L account. Costing P&L account. I repeat, not only defective, any kind of loss, guys. First we need to identify whether it is due to avoidable reason or unavoidable. If it is due to unavoidable reason, it is out of my hand, we call it as normal. And any loss due to normal defective, we need to make sure that it will be absorbed by remaining good units. We will not treat this loss separately. Okay, so accordingly the cost of production or cost per unit will go up. Whereas coming to abnormal, which is avoidable due to negligence or the poor planning of the company or the entity, it has happened. So this has to be valued separately and debited to costing P&L account, guys. Got it? Yes. Sure. So what they have given, we will see. Where a percentage of defective work is allowed in a particular batch, as it cannot be avoided. As it cannot be avoided, can I treat it as normal? Yes. So it should be absorbed by good units. Next, where the defect is due to bad workmanship. So this is like avoidable, but still it has happened. So can I consider it as abnormal? Yes. So value it separately and debit it to costing P&L account. Last one, where the defect is due to the inspection department wrongly accepting the incoming material of poor quality. Okay, so it is like due to poor inspection. Okay, so inspection department has not inspected it properly. Again, avoidable. So can I consider it as abnormal? Yes. Debit it separately to costing profit and loss account. And also we can make this particular department responsible for this loss. Got it, guys? Yes. So this is all about May 2026 question paper, guys. So we have discussed each and every question. I felt it really easy. I know you guys also would have felt it, or else you will feel like, sir, you are a teacher, you are a faculty, you will feel it easy. No, guys, you just see all these things. If you actually learned the concepts well, you have practiced good number of questions, then definitely this kind of paper will become an advantage for you to score good marks, so that you will get overall aggregate also. So please make sure that you guys are conceptually strong. That is what is important. Even in the class, I have tried to solve different kind of question, and whatever is given in this question paper, nothing is from outside. Everything is what we have discussed in the class. And some questions are like same to same or similar questions. Got it? Yes. So that is the advantage of solving maximum number of questions in the class. So please make sure that you guys also, whatever we have discussed in the class, you also solve it, you also practice it. Even though I have given the solution, I want you guys to try to get it by yourself. So try to pick some questions, even this question papers and all. Okay, once you watch this part, what I would suggest is you try to take a printout of only question paper, only the question part, and try to answer it. Then try to cross check with the suggested answers. Is it matching or not? Maybe at the beginning itself, you will not be perfect, guys. Okay, when you are writing the first test or second test, you will not be perfect. But as and when you write more and more, definitely you will improve it. And that is what is required for you to get passing marks in the exam. Yes, students, in this video, let us discuss January 2026 costing question paper. I have gone through the complete question paper and I felt it was quite easy, and we need to give full marks for ICAI for drafting the questions really well. And MCQ part especially were very easy, but coming to the descriptive type, 2 to 3 questions are really challenging. And if you are a student who has written January 2026 exams, just let me know how did you feel about the question paper. Let us begin the discussion with multiple choice questions first, guys. Yes. First 2 questions would be the case scenario questions, which will have 5 multiple choice questions of 2 marks each. So totally 10 marks for each case scenario, guys. Yes. But what I would suggest you is, when you're reading the case scenario question, first go read the requirements and quickly come back to the case. Yes. What is the combined contribution to sales ratio at the existing sales level? Okay. Don't read the option, just read the questions. What is the total profit at the existing sales level? Okay. What is the new contribution to sales ratio in the proposed situation with product W? What is the break-even sales at the level of proposed sales mix with product W? What is the total profit at the level of proposed sales mix with product W? Okay. Guys, don't waste your time reading the options because we don't know the data given in the question. Yes, I just want you guys to read the requirements and then come and read the case, so that when you're reading the case, you will already know what you're supposed to calculate. From the given questions, I can understand that there are two sales level. One is the existing one, the other one is the proposed one. Okay, fine. Let us decode the information given in the case. Z Manufacturing Limited produces 3 different types of specialized products, namely X, Y, and Z. The following information has been collected from their books of accounts for the year ended March 2025. Okay. So for all the 3 products, sales in rupees is given, selling price per unit is given, variable cost per unit, guys. So from this information, can we calculate the contribution per unit? Yes. If you just deduct variable cost per unit from selling price per unit, you will get contribution per unit. Yes. And we can also calculate sales in units. If you just multiply sales in rupees by selling price, you will get the sales in units, guys. Okay. Then the total fixed cost of all the 3 products put together, we can call it as common fixed cost, which is 18 lakh. Okay. Next, Z Manufacturing Limited is currently discussing the proposals to maintain a sales mix ratio to discontinue the manufacturing of product Z and replace it with a new product W. Okay. In anticipation of the following results. So this is the proposed. Okay, guys. Proposed sales level. So instead of product Z, they are introducing product W. So if they introduce product W, then product Z will not be produced, guys, or it will not be sold. Okay. Sales mix ratio is given in percentage. Selling price per unit in rupees. Variable cost per unit in rupees is given. Here also we can determine contribution per unit. Then total fixed cost 18 lakh 80,000. Then total sales 85 lakh is given. Guys, you can see here total sales is given in rupees here, whereas percentage sales mix is given here. Can we apply this percentage and calculate the sales of each product? Yes. So what is the sales of product X? It will be 85 lakh into 55%. For product Y, 85 lakh into 30%. Same way for product W, it would be 15%. Okay. Based on the above, you are required to calculate the following MCQ 1 to 5. Okay. First, for existing level, what are we supposed to calculate, guys? Combined contribution to sales ratio, which is nothing but PV ratio, contribution by sales. Okay, as it is combined, so we need to know that the formula would be total contribution divided by total sales into 100, guys, for all three products put together. Okay, sir. Next, what is the total profit of the existing sales level? So what I can understand, guys, for the first two questions, you will get the answer from this information. For the first two questions. Whereas for the remaining three questions, the data is here. Easy, yes. So I have done a working for this so that it would be helpful for you guys to better understand how to solve. Yeah. So this is the income statement for X, Y, and Z, which is existing. And guys, in the exam, sir, should we present it so well? No, no, no. For multiple choice question, you need not prove your answers. You can just try to get the answer as early as possible. So you can also do the rough working, but for better understanding of the students, I've just done it here. And if you guys want, once I am done with the explanation, you can just pause the video and take down this. If at all, if you want to make a note of it. Got it? Yes. So chalo. For all the products at existing level, guys, that is X, Y, and Z, selling price and variable cost per unit is given. So let us calculate contribution per unit. Okay, done, sir. Then sales in rupees is given. Can we calculate the sales in units? Yes. Sales in rupees divided by selling price per unit. You can see here, I have done A by B. A by B. We will get number of units sold. Hope you understood. Sales in rupees divided by selling price. We will get how many units of X, Y, and Z is sold. Okay, sir. Okay. Once we get the units, just multiply that with contribution per unit. You'll get total contribution. I repeat, once you get sales in units, multiply that with contribution per unit. You'll get total contribution. For X, it is 20 lakh. For Y, it is 9 lakh 52,000. And for Z, it is 6 lakh 48,000. So the total contribution is 36 lakh. From that, deduct the total fixed cost, you will get profit. One of the requirement in the question is to calculate the profit at the existing sales level. We have got it. Then they have also asked combined contribution to sales ratio. Let us do it. Contribution by sales into 100. Please take the total figures. They didn't ask it individually for each product. They asked only total. That is combined. Okay. So contribution is 36 lakh divided by sales 80 lakh into 100, guys. So we derive 45%. 45%. Is that clear? If you want, you guys also can work it out. I already worked it out and I have presented you. So I'm just explaining it. Okay. So these are the two information which is asked in the question. 18 lakh and 45%. Yes, guys. So we have got it. I will just mark it in blue. What is the combined contribution to sales is 45%. So that is option D. Next, what is the total profit at existing sales level? It was 18 lakh, right? Yes, 18 lakh. 18 lakh. That is A. Got it? Yes, sir. Now coming to 3, 4, and 5. What is the new contribution to sales ratio in the proposed situation? That is with product W. They didn't ask, please be careful. They didn't ask only for product W. They asked for entire company with product W. Means this is also total, guys, combined. Got it? Yes. Then break even sales at the proposed level and total profit they have asked. Okay. Let us do the similar calculation even for proposed level, guys. Income statement. X, Y will be common, whereas W is the new product. Please be careful. The selling price and variable cost is given, you take accordingly. Okay, so So selling price minus variable cost will give us contribution per unit. Then sales in rupees, total is given guys, 85 lakh. Divided between X, Y and W in what ratio? 55 is to 30 is to 15 ratio. It is given in the question, sales mix. Sales mix is given. Okay. So just divide this 85 lakh in this ratio between X, Y and W. Okay. So we'll get individually the sales of X, Y and W. 46 lakh 75,000, 25 lakh 50,000, 12 lakh 75,000. Yes, sir. Then sales in units, just divide the sales in rupees by selling price per unit. You will get sales in units. You will get sales in units, guys. Okay, sir. Now, once we have got sales in units, multiply that with contribution per unit. You will get total contribution, similar to what we did already for the existing sales level, guys. Got it? Yes. Only one thing you have to take care here is sales calculation. Individually, it is not given, but total is given. Sales mix is given. Just multiply both. You will get the sales of each product. Rest all similar calculation. Okay, once we get total contribution for all the three products, 39 lakh 95,000, reduce the fixed cost. Please be careful. The proposed fixed cost is different, 18 lakh 80,000 after introduction of product W. Okay, reduce that. You will get the profit. Then they have asked PV ratio, total contribution divided by total sales into 100 lakhs. PV ratio. Yes, they have also asked for the proposed level break-even sales. What is the formula to calculate break-even sales? Fixed cost divided by PV ratio. Divided by PV ratio. Fixed cost is 18 lakh 80,000 divided by PV ratio 47%. Guys, do it. You will get 40 lakh. I repeat, fixed cost is 18 lakh 80,000 divided by 47%. You will get 40 lakh. 40 lakh. Yes, sir. Sure. We'll just mark the answers. What is the new contribution to sales ratio, which is nothing but PV ratio, people? We got 47%, right? Yes. Then what is the break-even sales? 40 lakh. Then profit was 21 lakh 15,000. 21 lakh 15,000. Got it? Yes, sir. 10 marks is in our pocket now. Yeah. Case scenario 2. See guys, there are two ways to read the case. I have already told this number of times, but I'm just repeating once again. See, you can read the case, then read the requirements or the questions, then accordingly start answering one by one. Or the other one is which we followed for case scenario 1. First you will go read only the question part. Don't read the option. Just read the question. You will understand, oh, what am I supposed to calculate? Then go and read the case. So that when you're reading the case, you will know what you are supposed to calculate. You just try it out in both the ways, whichever you feel more comfortable. You please follow that in the exams, guys. Is that clear? Yes, sir. First, okay, I will just go read the requirement. What is the annual demand for raw material OC and OE? So what I can understand is these two are raw materials. Okay. What is the economic order quantity in kgs for raw material OE required by Spice God Limited? What is the formula to calculate EOQ? Square root of 2 into annual demand into ordering cost per order, the whole divided by carrying cost per unit per annum. Yes, sir. EOQ. Next, what is the economic order quantity in kgs for raw material OC required by Spice Guard Limited and number of orders to be placed in a year? Okay. EOQ. Here they have asked only EOQ for this raw material, whereas here they are asking EOQ along with number of orders. Number of orders. So simple. Annual demand divided by EOQ, which is nothing but the lot size, will give us number of orders. Okay, sir. Ninth one. What is the total annual cost of raw material OC at economic order quantity level? So total annual cost is asked, guys, which should include even purchase price. Purchase price, total carrying cost, total ordering cost. Okay. Last one. What is the total amount? Total annual cost of OC if the company proposes to keep an order size of 200 kgs of OC per order. Okay, lot size. If lot size is EOQ, then what is the cost? They have asked here. If lot size is 200, then what is the total cost? They have asked the last case. Got it? Yes. So why I will tell the students to read the requirement first and then go and read the case. See, sometimes it may happen like that. For example, sir, after reading the question, I understood this topic I don't know only, or these questions I don't know. Then you need not waste the time reading the question. Okay, this is very rare case. I don't want any student to miss out on any questions, but I'm just telling you because some topics student might not know or some questions student might not know. So if that is the case, then what you do? Once reading the questions, if you understand, oh, this question is little tough for me, I cannot easily manage it, better go to the next questions. Maybe you can come and attend this question at the end. Got it? That is one way or reason. The other one is when you have read the question already, and after that, if you are reading the case, you already know what you are supposed to calculate. And as and when you read the data, already your mind will be thinking about the answer. What am I supposed to do with this? What am I supposed to do with that? All this you will already be start thinking about it, guys. Okay, chalo, we'll move forward. Case 2. And if you ask me, sir, should I answer first case scenario question in the exam or the independent multiple choice questions? Guys, I would suggest you because case scenario questions might take little more time. So if possible, you can start with the independent questions. There will be independent questions also under multiple choice. You can start with that and then you finish it, then come back to case scenario. You can do that. No, sir, I would be more comfortable in case scenario only means that is your choice. Okay, let us continue. Spice Guard Limited manufactures pepper spray that is used by women for their self-defense. Boys, be careful. Ah, yes, we know that our boys will not do anything which will make the girls to use this pepper spray. Yeah, but anyway, as per the estimate, there will be an average quarterly total market demand of 3,125 units of pepper spray. Guys, please be careful. This is the total market size of what? Pepper spray. But they are given quarterly. So what should I do to calculate annually? 3,125 into 4. That will give us annual total market for what? Pepper spray. Spice Guard Limited is expected to have 8% market share of that total market demand of pepper spray. Okay, for the company, what is the market size? So total market size is, or total market is 3,125 into 4. In that company has how much share? 8%. Got it? Yes, sir. The company produces the pepper spray using two raw materials, OC and OE. Each unit of pepper spray requires 4 kgs of OC and 1.6 kgs of OE. Okay, sir. Fine. So this is the raw material requirement. Okay. See, one thing you have to first understand that pepper spray is an output. For that, we require two raw material, OC and OE. And whatever EOQ or total annual cost and all we have to calculate is for what? Raw materials, guys. Okay. Ordering cost per order is given for both the raw materials. Then storage rate, interest rate, obsolescence rate. Guys, all this is carrying cost per unit per annum. When it is given in percentage, what should we do? Multiply with raw material price. Multiply with raw material price. So here it would be 5 plus 13, 18, 20. So 20% into 2000 per kg will give you carrying cost per unit per annum. Okay. Coming to this product. So one is in rupees, one is in percentage. So please be careful. 2.5 per kg per month means we need to multiply this with 12. Whereas here 1.25% per quarter. Okay, first multiply this with 4. Then apply this on the purchase price. So please be careful. We need to add both of them at the end. One is in rupees, one is in percentage. Should we add both? Yes, which will give carrying cost per unit per annum. This has to be multiplied with 12. This has to be multiplied with 4. And this percentage, whatever we get, we need to multiply with the price. That is the purchase price of raw material, guys. Okay, sir. Okay. Then on the basis of above case scenario, you are required to answer the following one by one. Annual demand, EOQ for both OE. No, only OE year. Okay. Then here EOQ and number of orders for OC. Then total annual cost for OC at EOQ level and total annual cost of OC if the lot size is 200. Fine, sir. We will try to work it out. Even for this, I have done some working. Total market demand for the product is 3,125 per quarter into 4 quarters. So for a year, 12,500. In that, the market share of the company is 8%, which comes to 1,000, guys. 1,000. Yes, sir. So 1,000 is the annual demand of the output, not input, of output for the company. For that, how much raw material we require, people? For each kg of, sorry, for each unit of pepper spray, we require where is the annual requirement? Here. Okay, we require 4 kg of OC, correct? And 1.6 kg of OE. Multiply. 1000 into 4 will give us 4000. Then 1000 into 1.6 will give us 1600. Where is it given so? Here, guys, just a minute. I will show you. Yeah. Each unit of output requires 4 kgs of OC and 1.6 kgs of OE. So if you just multiply 1000 with 4, we will get annual requirement of OC, and 1000 into 1.6, we will get annual requirement of OE. So 4000 and 1600, guys. 4000 and 1600. So the answer is B. Okay. Next, we are supposed to calculate EOQ. Let us do that. But for calculating EOQ, we need some information, especially carrying cost per unit per annum. Okay. So first, raw material purchase price 2200 is given in the question. Okay. Then carrying cost per unit per annum, guys, 20%. If I just add up all these three, I already mentioned about it. If I just add up all these three, we will get 20%. So 20% apply it on 2000, you will get 400. You will get 400. I have denoted by CC. That is nothing but carrying cost. Okay, sir. Here, OE, it is 5%. How did we get 5%, sir? 1.25% is per quarter. So into 4 you do. Into 4 you do. You will get 5%. So 5% has to be taken on 200 plus 2.5 into 12. 2.5 into 12, guys. Is that clear? I repeat, 5% into 200 plus 2.5 is per month. So 2.5 into 12. So you add up both, you will get 40 rupees. So 40 rupees is the carrying cost per unit per annum for OE, guys. Please be careful. There are two components. One is given in percentage, one is given in rupees. You need to add up both. Take the aggregate of both. Oh. Then ordering cost per order is given in the question itself. I am denoting it by O. Annual requirement, I already explained how to determine it. Okay. Now let us calculate EOQ. What is the formula to calculate EOQ, guys? I already told you. Square root of 2 into annual demand into ordering cost per order whole divided by carrying cost per unit per annum. And if carrying cost is not given per annum, please convert it. That is what we have done here, especially you. Okay. Yes, sir. So you calculate, you will get for OC 250 kgs, whereas for OE 200 kgs. OC and OE 250 and 200. For one of the raw material, they have asked even for OC. Okay, for OC, let us just mark first 250 kgs. Okay, sir. 250 kgs. Sorry, OE. First, they have asked for OE. OE, it is 200 kgs. Yes, sir. 200 kgs. Please be careful with the names, guys. Here it is OE. Then for OC, they have asked EOQ as well as number of orders. Okay. OC, EOQ as well as number of orders. How did we get number of orders? Simple. Annual demand divided by EOQ, which is nothing but lot size. So 4000 divided by 250, you will get 16. And for OE, they have not asked, but I have just shown it. If they have not asked, then you need not calculate it. Okay. So 250 and 16, guys. 250 and 16 is the answer. Yes, B. Hope you guys got it. Got it? Yes, sir. Next, total annual cost. At two levels they have asked. Total annual cost of OC itself, they have not asked for OE. But for OC, first they have asked at EOQ level. So what would be the lot size at EOQ level? EOQ itself, that is 250. What is the total purchase cost, guys? Please be careful. Annual cost includes purchase cost, carrying cost, plus ordering cost. All three you have to take aggregate. Yes. So what should we do? Annual demand into material purchase price. So 4000 into 2000, you will get 80 lakh. Take it. Then total carrying cost of into lot size. Lot size is 250 into carrying cost per unit per annum, which we got it here 400. So you will get 50,000. And you already know that at EOQ, total carrying cost equal to total ordering cost. So you need not even calculate this. Just keep 50,000. or if you want to ensure that whatever you are calculating is correct, you can do it. Clear? You can save time here without calculating this. You can straight away write 50,000 because at EOQ, total ordering cost and total carrying cost will be equal, guys. So, okay, sir. So, if I'm calculating it by formula, what is the formula? Annual demand, which is 4,000, divided by lot size, which is 250. You will get number of orders, which is 16, into ordering cost per order, 3125. Or else, as we already have number of orders, you can straight away multiply with ordering cost per order, 3125. That is 16 into 3125. You will get 50,000. Okay, sir. So at TOQ, the total cost is 81 lakh. 81 lakh. 81 lakh. Please be careful here. They have just interchanged the position here. A is there, after that C is there, then B, then D. But anyway, you go with amount. You go with whatever amount we have got, just mark it. Oh. Next, they have asked, what is the total annual cost of OC only again? But if the company proposes to keep the order size as 200, and they have given only this much, sir, is there any change in the price and all? No, guys. When question is silent, you don't assume that there is a change in price, because normally when company is offered to buy larger quantity, they will be given a discount for the purchase price. But here actually EOQ is 250, whereas they're trying to keep the order size as 200, so less than EOQ actually. So obviously they will not get any discount, but still, as question is silent, don't consider any change in the price, guys. Go with the same. Only the lot size will change. That's all. Oh, so the lot size here with the proposed plan is 200, guys. So the purchase price will remain same, 80 lakh. Whereas total carrying cost of into lot size 200 into carrying cost per unit per annum 400. You will get 40,000. Then ordering cost will definitely increase because the number of orders will be more, no? Because you are ordering only 200 quantities at a time now. Okay. So what will be the ordering cost, sir? A, that is annual demand, which is 4,000. 4,000 divided by lot size 200 into ordering cost per order 3125. 3125. Yes, sir. We will get 62,500. So the total annual cost is 81 lakh 2,500, guys. 81 lakh 2,500. Got it? And please be careful, guys. Students here might commit a mistake with respect to, sir, here they have asked OC. So they will understand that, oh, the next one is for OE. No, both are asked for OC. Please be careful. But the quantities are different. Here it is at EOQ level, which is, I guess, 250, whereas here it is at a different lot size. And obviously, if company is following any quantity other than EOQ, you should know that your total cost will increase. So there itself, you should understand what you are doing is correct. Got it? Yes. If company is purchasing at any level other than EOQ, whether it is less quantity or more quantity, if there is no change in the purchase price, then obviously the total cost will increase, guys. Total cost will increase. But we would have also done the questions in the class telling if company is purchasing 1000 units at a time, 500 units at a time, then the supplier will give a discount. Guys, this question is not on such discount calculations. Please be careful. For 200 lot size, there is no change in the price. Please be careful with that. Okay. And if at all, if there is any change, obviously they have to mention it in the question, guys. Okay, chalo. We are done with 10 questions. Next, let us continue with the 11th one. From 11th, it is independent questions, guys. A company's wage budget for the last month was based on the standard production time of 30 minutes per unit. 30 minutes per unit means in an hour, you can produce 2 units. And a standard wage rate of 50 rupees per hour. Okay. During the last month, it produced 30,000 units, actual output, guys. The labor rate variance was 7,500 adverse. Okay, negative. And labor efficiency variance was nil. Guys, here itself you should get a clue. First take, listen here. Sir, actual output is 30,000 units. So to produce this 30,000 units, what is the hours I was supposed to take? Standard hours for actual output. 30 minutes for each unit. Yes, sir. So 30 minutes, can I take it as 0.5 hour? Half hour, means half an hour? Yes, sir. So 30,000 into 0.5 to produce actual output of 30,000 units. Standard hours which was supposed to be taken was 15,000 hours. And here you observe they're telling efficiency variance is nil. Guys, what is the formula to calculate efficiency variance? Standard hours for actual output minus actual hours worked into standard rate. If it is nil, we know that the actual hours worked and standard hours are equal, guys. Because when we are finding out the difference, if the variance is nil, obviously we should understand that the standard hours and actual hours will be equal, guys. Is that clear? Common sense. Even without calculating, we can understand that. Yes. Whereas labor rate variance, they have given some adverbs. We will see. What is the actual wage rate per, hello, per unit? What we use in the variance calculation is per hour. But what they have asked in this question is per unit during the last month. Okay, guys. First, we'll go one by one. Labor efficiency variance. Even without calculating this, we can straight away tell 15,000 hours. But still, some of the students might not think in that way. It might not strike to them immediately. That is why I'm just explaining. Using the formula, how can you calculate it? Standard hours minus actual hours worked into standard rate is the formula for efficiency variance. Okay. Standard hours, I already shown you. 30,000 units into 30 minutes or 0.5 hours, you'll get 15,000 hours. Or else if you want to calculate in minutes, simple. 30,000 into 30 minutes divided by 60 minutes you will get in hours. Okay, sir, fine. Let us continue. Okay, so standard hours is 15,000. Actual hours we don't know. We will keep it as it is. Into standard rate 50. Standard rate is given here per hour 50, which is equal to variance is how much? Nil. So you calculate, you will get actual hours worked 15,000 hours, guys. Actual hours worked, we will get 15,000 hours. Is that clear? Yes, sir. And please be careful, guys. See, listen here. Even without, means obviously multiple choice questions means you should try to get the answer as early as possible. I will explain what I already told you once. Listen here. Sir, labor efficiency variance means formula standard hours minus actual hours into standard rate. So if there is any difference, then obviously we need to get a variance which is either favorable or adverse. But when we are getting the variance as nil, it is very clearly understood that standard hours and actual hours are equal, guys. Is that clear? Yes. As soon as we get standard hours, we can decide that even actual hours is 15,000 hours. Okay. Now let us move to labor rate variance. So what is the formula for calculating labor rate variance? Standard rate minus actual rate into actual hours and here rate is per unit or per hour? Per hour. Please be careful. It is per hour. Actual rate as well as standard rate both are per hour. Okay, sir. Fine. Standard rate is already given 50. Actual rate we don't know. Let us keep it as AR into 15,000. That is actual hours which we just now got is equal to 7,500 negative. As it is adverse, I am writing it as negative, guys. Okay, sir. Fine. So take this to the other side. 7,500 divided by 15,000. You will get minus 0.5. Minus 0.5, guys. Now let us interchange the position. Let us take this to the other side. So it will become plus. Even this, we will take it to the other side. It will become plus. So that means actual rate per hour is equal to 50.5. 50.5, guys. Please be careful. When it goes to the other side, the sign will become opposite. Minus will become plus. Got it? Yes, sir. So I have given the remaining calculations here. You can see actual rate per hour is 50.5. But what they have asked, see, most of the students would have stopped here. And for the beauty, for the most like confusing thing, they have given that in the options, guys. I feel somewhere most of the students would have stopped the calculation here and they would have marked this. Look here, they have given that answer in the option. And once students see whatever answer they are getting in the option, and they will feel more confident that whatever I am doing is correct or whatever I have done is correct. Guys, please be very careful. What they have asked is not per hour but per unit. So what should we do? In an hour, how many units can we produce? We are supposed to take 30 minutes to produce each and every unit. That means in an hour we can produce 2 units. Yes, sir. So this is per hour means divided by 2. Because in an hour we can produce 2 minutes. So what is the actual rate per unit, guys? 25.25. 25.25. 25.50 also is there in the option. Guys, I felt this was the trickiest question in MCQ. In MCQ, let us agree that yes, this was the trickiest question. Got it. See, most of the students who know this topic would have done till here and would have selected this as an option. Yeah, sure. We'll move forward, because in any labor rate variance calculation or variance calculation, we would have calculated or we would have used rate per hour, whether it is standard rate or actual rate. So student will be in a notion that, oh, what they have asked is per hour. But actually, that is where the twist is. That is where the twist is. They have asked per unit, guys. And when you solve this kind of questions, no, you will be ultra careful or pro careful in the exams. Yes. So please be very careful when you're reading the requirement of the question, guys. Let us move to question number 12. T Limited, a textile manufacturing company, recovers factory overheads on a fixed percentage basis on direct wages. How much is that percentage? They have not given. Okay. And administrative overhead is 25% of factory cost. That is prime cost plus factory overheads will get factory cost, guys. The company has furnished the following data for job 201. Direct materials are 56,350, direct wages are 45,000, sales are 1,90,000, and profit is 25% on total cost. Okay. Whereas factory overhead and administrative overhead, they have not given the amount. We need to calculate it from the given information. Okay, sir. What is the percentage recovery rate for factory overheads for job 10201? Okay, they are asking the percentage. Okay, from the given information, what all we can derive, we will just see it. Can we calculate profit? Guys, profit is 25% of total cost. So can I tell it as 20% on sales? Yes. Correct. 25 by 125. If I just write the equation C plus P, that is cost plus profit is equal to sales, then they have given profit percentage on cost. So let us assume cost as 100, profit is 25, sales would be how much? 125. So what is the profit percentage on sales? 25 by 125, guys. 25 by 125. Okay, sir. So sales is 1,90,000 into 25 by 125, we will get profit. Reduce that profit from sales, you will get total cost. Sales minus profit will give us total cost. Okay. Let us put the cost sheet format here. Not the entire format, but whatever is required for the given information. Direct material, direct wages will give us prime cost 1,01,350. Factory overheads, we don't know. We know that it is recovered as a percentage of wages, but how much percentage we don't know. So I'm just writing it as F, which will keep it as balancing figure. Okay, sir. I'm just writing it as F. Then we will get factory cost. How much? Prime cost plus factory overhead, which is 1,01,350 plus F. Okay, sir. Then administrative overhead is 25% of factory cost. 25% of factory cost. So 1,01,350 into 25% will give us 25,337.5. Same way, F into 25% will give us 0.25 F. 0.25 F. Correct now, people? Because in the question they have clearly given administrative overhead is 25% of factory cost. I mentioned here in the bracket. Okay. So what is our total cost? Add up now. Add up both. So 1,01,350 plus 25,337.5 will give us 1,26,687.5. And here F plus 0.25 F will give us 1.25 F, which is equal to total cost I have derived here. Total cost is nothing but 1,52,000. So this is equal to 1,52,000, guys. 1,52,000. Now calculate F. So 1,52,000 minus, if you take this to the other side, it will become minus divided by 1.25. Divided by 1.25. So factory overhead in rupees is 20,250. But they have asked in percentage. Percentage of factory overheads on direct wages is how much, guys? 20,250 is the factory overhead divided by direct wages. Direct wages is 45,000 into 100 will give us 45%. 45%. So the option is C. 45%, guys. Okay. Next, question number 13. A garment factory stitches each shirt through a single and sewing machine operator. Okay, so there is one operator for each machine. The time required to stitch each shirt is 15 minutes. Operator is paid at 65 rupees per hour. The factory works for 40 hours per week and production target is 480 dozens of shirts per week. 480 dozen. Guys, in one dozen, how many shirts would be there? 12 shirts. So total shirts would be how much? 480 into 12. It is 5760. 480 into 12, it will give us 5760 shirts. Please be careful. What is given here is in dozens. So in a dozen, there will be 12 shirts. Okay, sir. What are we supposed to calculate? What is the number of hours and number of operators required to meet the shirt's target? Okay. So time required to stitch each and every shirt is 15 minutes, guys. Okay. So target is to stitch how many shirts? 5760. So 5760 into 15 minutes if you do, you'll get what is the total minutes required. But what they have asked is hours. So divided by 60 minutes because in an hour there will be 60 minutes. Is that clear? 1440 hours. Or else you can also do like this. 15 minutes means 0.25 hour. 0.25. Correct? No. Yes. 15 by 60 you do. 15 minutes divided by 60 minutes. Yes, sir. 0.25 into 5760 you do. Straight away you will get 1440 hours. Okay. And each operator can work for 40 hours in a week. So if I am supposed to stitch so many shirts, we need to totally work for how many hours? 1440 hours. And each worker can work only for 40 hours per week. So totally how many workers we require? 1440 hours of labor is required divided by 40 hours per week. So how many operators or workers we require totally? 36 guys. 36. Yes, sir. So 1440 and 36. Yes, sir. 36 operators. Next, going to question number 40. In a factory during the month of October, the following transactions have occurred in respect of purchase and issue of material A. Material A, stock as on 1st October 2025, 100 units at 50 rupees per unit. This is opening stock, people. Then purchases 5th October 2500 units at 55 rupees per unit and 8th October 600 units at 56 per unit. Okay, these are purchases. Issue is on 15th October. One thing you have to note that issue is after all the purchases. So on the date of issue, totally we have 3 lots. Opening stock plus 2 purchases. Totally we have 3 lots. Okay, how many lots, how many units have been issued? 1500. What is the value of material A consumed? Consumed is nothing but issued. Okay. During the period using LIFO, last in, first out. Method of pricing issues. Okay, last in, first out people. So when we are issuing 1500, first we will issue from year, then year. Okay, I will just give the number. First, second, and last is this one. Got it? Yes, sir. Last in, first out. Whatever is purchased last will be issued first. Oh, so out of 1500, first we will issue 600 units at 56. Yes, sir. Remaining is how much? 1500 minus 600, 900. 900 we will issue from here at 55. Yes, sir. So cost of material consumed is 33,600 and 49,500. Total comes to 83,100, guys. Please be careful. They have asked what is consumed. If at all, if they ask what is the closing stock or the value of closing stock, then out of this 2,500, we have issued a 900. Remaining is 1,600 into 55 plus opening stock 100 into 50. This will be the value of closing stock. They are not asked. If at all, if they ask, this is the value. Got it? Yes, sir. So what is the answer? What is the answer? 83,100. 83,100. Yes, sir. Yeah. Okay. 15th one. The following information has been given regarding the two machines of a manufacturing department X Limited for the month of September 2025. Okay, two machines are there. Machine A, machine B. Spare part cost 40,000, 60,000, total is 1 lakh. Okay. Further estimates for the month of October 2025. There is an increase of 15% in the prices. Okay, of spare parts. Just a minute. Let me use this color. 15% increase in the price of spare parts of both the machines. Both the machine A, B, both. there is an increase of 25% in the consumption of spare parts for the machine B only. Machine B only. Okay. Guys, for machine A, only price increase. Whereas for machine B, price as well as consumption. That is the quantity. Both are increased. So let us take it here. What is the total spare parts cost for the month of October? Okay. So present cost is 40,000, 60,000. Take as it is. Multiply that with 1.15. That is 15% increase. No, you can just add 15% also, or else you can take into 1.15. Into 1.15. Okay, sir. So 46,000 and 69,000 is the increased cost after considering the increase in price. But for machine B, there is also increase in consumption. So I am multiplying 69,000 with 1.25. Hope you're understanding. How did we get that 1.25? 25% increase? No, that is why. Or else you can also do like this, 69,000 plus 25% straight away. Got it? And please be careful. Students might get a doubt here. Sir, should we consider the consumption after the increase in price? Yes, because when there is an increase in quantity, obviously increase in price will affect increase in quantity also. Yes, for example, assume I was consuming only 100 kg. Next year I will consume 125 kg. So next year price will be for 100 kg or 125 kg? 125 kg. 125 kg, guys. So increase in price, will it affect the increase in quantity also? Yes, obviously. For entire 125 kgs, we need to pay increased price as per my example. Okay, sir. So what is the total cost of spare parts here? 1,32,250, guys. 1,32,250, which is D. Which is D. Yes. And guys, please be very careful. Plan it really well before you go and execute it in the exam hall. I would always suggest the students to take multiple choice from 4 o'clock. 2 to 4, you answer descriptive type and take multiple choice questions from 4 o'clock. And even at 4 o'clock, sir, should I take the case scenario questions first or should I take independent questions first? Because there will be 20 marks for case scenario questions, 10 marks each for 2 case scenarios, whereas 5 independent questions of 2 marks each. So totally 10 marks. I would suggest you, if time is a concern, if you want to manage the time really well, first answer independent MCQs, which will consume less amount of time, guys. Because what I have seen is in case scenario, especially the last 1 or 2 calculation will be little lengthy or challenging. There it will eat up the time of the students. So better you start with at 4 o'clock. I am talking about. I repeat, from 2 to 4 you will answer descriptive type. Correct? Even in that 15 minutes reading time for the question paper, please read it descriptive type. Okay, 2 to 4 answer descriptive type. From 4 start answering MCQ. First try to take independent question if you really want to manage the time well. Then go and answer the case scenario. And please don't take full 1 hour to answer the multiple choice questions. You'll still be left with some time. And go back and complete whatever is still left out in descriptive type. Because you would have not completely done with descriptive type from 2 to 4 o'clock, guys. If you're already done, great, you're God. But if at all, if you're not done, please go back and complete the descriptive once you're done with MCQs. Got it, people? Yes, sir. Yeah, now we will discuss the descriptive question, which is part 2. Under descriptive type, guys, the question number 1 would be compulsory, whereas out of the remaining 5 questions, a student need to answer any 4 by taking one question as a choice. In simple, if I have to tell, under descriptive type, there will be totally 6 questions. Out of that, the first question would be a compulsory question. Student need to answer it. Out of the remaining 5 questions, they can answer any 4 questions by taking one question as a choice. But if in case if student answer all the 5 questions here, then only the first 4 questions will be evaluated and marks will be awarded accordingly. The last question, whichever the student has answered in the order, will not be considered. If at all, if student has answered all the questions including choice. But the question is, sir, will we have so much time in the exam to answer even including the choice? Guys, you will know the answer better. Yes, fine. And this line is very important. Working notes should form part of the answer. Guys, please take care of it. I know in the exam to write working notes or notes, it will consume little extra time, but your answer should include working notes and notes wherever required. Fine. Yes. With this, we will begin the questions discussion, guys. Question number one. A. ABC Limited manufacture four products A, B, C, and D in the same factory. The following information is given for a certain period. Okay. Input materials in units for A, B, C, D. For all four products, it is provided 600, 400, 400, and 200. And average yield 80%, 90%, 96%, and 72%. And if I multiply both of these guys, we will be able to get output in units. Output in units. For example, for A, if I multiply 600 with 80%, then I would be getting what is the output for product A. Yes, sir. The finished goods packaging cost is 4,600. So please be careful. This is for an output, guys. This is not for input. This is for output. Packaging cost is for output, finished goods. Okay. Other information. First one. All the products are packed in boxes where each box is having a capacity of 24 units. So can we calculate how many boxes are required? Yes, guys. So if I multiply both of this, we will be able to get output, right? Yes. And if I divide output by 24, we will be able to get number of boxes, guys. Number of boxes. Hope you understood. Yes, sir. Because each box will consist 24 units. Okay. Product A and product B are packed in a larger boxes, whereas product C and product D are packed in smaller boxes, which cost half of the price of bigger box. Okay. So to pack product A and B, we require larger box, whereas to pack C and D, we require smaller box. But each box will contain 24 units. Whether it is larger box or smaller box, it will contain 24 units, guys. Got it? Yes. And they have also told with respect to cost, smaller box will cost half of the price of bigger box itself. So if I tell for smaller box, if I take 1x, then for bigger box, it would be 2x. Correct? Yes, sir. Next, each box contains only one type of product. There is no product mix up in packaging. Means in one particular box, you can either pack any of this product. Sir, can I mix up A, B, C, D in one box? No, no, that's not possible. In one particular box, you can either keep 24 units of A or 24 units of B or 24 units of C or 24 units of D, guys. Is that clear? Yes, sir. Next, what is the requirement? You are required to find out how many large and small boxes are used, find out the cost of per large box and per small box. They have just given some pattern. The cost of small box is half of large box itself. Yes, using that as an equation, we can solve it. Then the last one, allocate the packaging cost among the four finished products. We have total packaging cost. We need to allocate it how much for each of the products, guys. Got it? Yes, sir. Easy question. Let us look into the solution. Yeah. Calculation of output units and boxes required. So input in units and yield in percentage is given. If you just multiply both, we will get output, guys. Better you give a notation. This is like A, we don't use A because already products are in the name of A and B, C, D. So let me use the word P, Q. So let me multiply this. P into Q. Okay, sir. This is Q, okay. Yes, sir. So we got the output unit in units. Then boxes required. How do we calculate the boxes? Just divide the output by 24. So what do I do is, I will just give a name here. Just a minute. Let me name this as R. R is equal to P into Q. So boxes required would be what? R by 24. R by 24. Because the capacity per box is 24 units, guys. Got it? So how many boxes are required? 20, 15, 16 and 6. Hope you guys got it. Once we derive the output, just divide it by 24. Because each box can store or pack 24 units, guys. Yes, sir. So how many large boxes we require? A and B is stored in or packed in large boxes. So 20 plus 15, 35. How many smaller box, guys? 16 plus 6, that is 22. Got it? Yes, sir. Then coming to the cost calculation, let the cost of small box be X and large box would be twice of it. Correct? Yes. That is 2X. Because small box cost is half of the larger box. So we are just considering X and 2X. Okay. So what is the equation? 35 into 2x, that is for larger box, plus 22, that is for smaller box, which we have got here, into x. Okay, so totally how much do we get, sir? 70x for larger box, 22x for smaller box. How 70x here? Hope you guys got it. 35 into 2, 70. Yes. So 70 plus 22, 92 is equal to 4600, guys. 92x is equal to 4600. Yes, sir. So just divide it. 4600 divided by 92. We will get the value of x. So x is the cost of small box, which is 50 rupees, into 2 would be the cost of larger box, that is 100 rupees. Hope you got it. Yes, sir. I have just shown the calculation here. Better you guys also show like this in the exam. Don't straight away write the answers. Then allocation of packing cost. We already know number of boxes and we know the cost per box. Just multiply both, guys. Just multiply both. So you need to just multiply both of this. Okay, so for a 20 large box we require, which we have calculated here. So 20 into cost is 100 rupees. So we will get 2000. Same way we need to do for B, 15 into 100, 1500, 16 into 50, 50. Please be careful for small box. For C and D products, we are packing it in small box. So we need to take 50 per box. So 16 number of boxes into 50 will give us 800. Number of boxes 6 into 50, 300. So the total packing cost has to match with 4600, which is already given in the question. Very simple question, guys. Yes, sir. Fine. We will go back. A is done. Now let us move to the B part. ECO Cotton Limited manufactured two joint products, cotton fiber, cotton seed, and a byproduct, cotton linters, by processing a raw cotton. Okay. From the same raw material, three products have been produced, guys, out of which two are joint product, one is byproduct. One is byproduct. Yes, sir. The joint processing cost are 1,46,100. That is joint cost, up with the cost incurred up to the split off point. Joint products can be further processed and sold at a higher market price with same sales promotion efforts, whereas byproduct cotton linters can be sold only after further processing. Okay. What we can understand here is, guys, joint products can be sold either at split off point or it can be further processed and sold. That is after further processing. Whereas byproduct has to be sold only after further processing. Do we have a ready market available for byproduct at split off point? No, we don't have it. Oh. The relevant details of these three products are as follows. So first two are joint products, guys. The last one is byproduct. I have just written BP, means byproduct. Okay. Output in kgs is given. Selling price at split off point is given only for joint products, whereas as we cannot sell byproduct at split off point, it is not given here. Okay. Further processing cost per kg 962. Further marketing cost 521. Both are further processing cost, guys. That is cost incurred after the split off point. Okay, sir. Including marketing. Last one. Selling price after further processing per kg is 110, 67 and 10. So for a joint products, we have a selling price at split off point also, as well as after further processing. Okay, sir. What is the requirement? You are required to show how joint cost would be apportioned between cotton fiber and cotton seed, which are joint products, using the sale value at split off. Very important. Sale value at what point? Split off point. After crediting net realizable value of byproduct cotton linters. Okay, guys, here we need to follow certain steps. First, find out net realizable value of the byproduct. What is it, sir? Sale value after further processing minus further processing cost. Both 2 as well as 1 we need to deduct. We get net realizable value of the byproduct. Yes, sir. Deduct that from the total joint cost. Now we will get the remaining joint cost, which has to be apportioned for the joint products. Hope you understood. That we need to split between the joint products in what ratio? Selling price at split off point. Selling price or sales value? Sales value. Please be careful. Sales value means we need to multiply the quantity with the selling price. We need to take that as a ratio to split the joint cost between joint products. Hope you got it. I repeat the steps. First, calculate the net realizable value of the byproduct. How is it? Sale value after further processing minus the further processing cost including marketing. You will get net realizable value. That is the joint cost to be apportioned to whom? Byproduct. So deduct it from the total joint cost. Okay. We get the remaining joint cost that has to be shared between the joint products in the ratio of sale value at split off point. So find out the sale value at split off point by multiplying the output with selling price at split off point. Take that as a ratio. Got it? Yes, sir. Next, determine the total profit or loss if the joint products are sold without further processing. Means if it is sold at this point without considering the further processing cost, what is the profit or loss of the company we need to calculate. Then the last one, which of the joint products can be processed further for maximizing profits using incremental analysis profit. So we need to do incremental analysis. That is, sir, what is the increase in selling price if I further process? Minus what is the incremental cost? We need to consider both of this. Do we get incremental profit or loss? We need to check it, guys. Is that clear? Yes, we will see. Okay, 3 requirements are there totally for 5 marks. Each sub question would be for 5 marks, guys. Here. Yes. Chalo. Yes, first one, calculation of net realizable value of a byproduct. Selling price after further processing per unit is taken here 10. Further marketing cost is 1 rupees and further processing cost is 2 rupees. So we will get net realizable value per unit is 7. Multiply that with the quantity of byproduct, that is 300. So you will get 2100. This is the share of joint cost for which product? Byproduct. So now deduct 2100 from the total joint cost. So total joint cost minus what is the share of byproduct, which is nothing but net realizable value of byproduct. So we will get what is the remaining joint cost, which has to be apportioned between joint products. So 1,44,000 has to be shared between joint products in particular ratio. What ratio, sir? Quantity into selling price at the split off point. Okay, so you will get sale value at split off point. Take that as a ratio. That is, let me just simplify it. I will just remove the 0 and I will write 252 is to 108. So 252 is to 108 is the ratio to split 1,44,000, guys. Is that clear? You can also take as it is, but it is better you avoid zeros. Okay, simplify it. Sir, even 252 and 108 also, can I further simplify it? Yes, but don't spend too much time on further simplifying it, guys. If you can do it easily, do it. If not, you can at least take 252 is to 108. Got it? Yes. So what is the share of joint cost for the joint products? For cotton fiber, it is 1,08,000, whereas for cotton seeds, it is 43,200. Guys, here you have to be careful. By mistake, students might take this itself as a ratio. That is 9:6. Please don't do it because they are not told selling price at split off point is a ratio. They have clearly told sales value. Sales value means it is quantity into selling price. Got it? Yes, sir. Next, second requirement. Statement showing profit or loss if the joint products are sold without further processing. Guys, actually here itself you can continue if you want to save time. So here you have anyway reduced joint cost. Then you deduct further processing cost. You will get profit or loss straight away. Here by doing that you can save time. Whereas here they have done it separately. You can do this way also, nothing wrong. But that will take little extra time. Yeah, sale value at split off point, just copy paste whatever we already got here. Then joint cost also just copy paste, deduct it. Okay. And further processing cost will not come here. Sorry. Further processing cost will not come here because they have told statement showing profit or loss if joint products are sold without further processing. So here further processing cost will not come. Actually, that is easy. If you just deduct here itself, you will get what is the profit or loss. Or else what you do, here just give a notation. For example, this A, this is B. So profit, straight away you calculate A minus B. Correct. Instead of copying the same content again, you guys can do like that. Give a notation and use the equation A minus B. Got it? Here further processing cost should not be considered because we are not further processing the joint products, guys. We are selling it at split off point. Yes, sir. Then incremental calculation. Incremental revenue. How do we get it? Guys, if I further process and sell cotton fiber, it is 110. If I sell it at split off point, it is 90. So what is the incremental revenue? 20 rupees. So 20 into 2800 you do, you get incremental revenue. Same way for cotton seeds. If I further process and sell it, we get 67 rupees. If I sell it at split off point, we get 60. So what is the incremental revenue per unit? 7 rupees. Multiply that with number of units, 1800. Okay, we get incremental revenue. Same way, further processing cost you deduct it. This we will incur only if I further process the products. So can I call it as incremental cost also? Yes. So 9 plus 5 is per unit into 2800. Same way here, 6 plus 2 into 1800. Yes, sir. Let me put this in bracket. Anything which you deduct, put it in bracket, guys. Yes, sir. So what is the incremental profit you will get if you further process cotton fiber? 16,800. Whereas if you further process cotton seeds, you suffer a loss. That will give a loss of how much? 1,800. This will bring down the total profit of the company by 1,800. So what is the ultimate conclusion? It is better to further process only cotton fiber, as it will increase the profit of the company, guys. So it is given here. It is advisable to further process only product cotton fiber and to sell the product cotton seeds, that is this product, at point of separation. So sell this at split off point, whereas cotton fiber you further process and sell it, guys. Is that clear? Yes. And here the incremental calculation is done in total value. Sir, can we do it unit wise also? Yes, I will just show you. Yeah, you can see here. I will just show you. So what is the incremental revenue we will get per unit if I further process cotton fiber is 20 rupees, sir. Okay. Whereas cotton seed, if I further process and sell it, what is the incremental revenue I will get? 7 rupees per unit. Okay. And for this, what is the incremental cost we have to incur? 9 plus 14. Sorry, 9 plus 5, 14. Yes, sir. So that will give us the incremental profit of how much? 6 rupees. Okay. Whereas here we have to incur an incremental cost or further processing cost of how much? 6 plus 2, 8, sir. So that will give a loss of 1 rupees per unit. Loss of 1 rupees per unit. So whatever calculations they have done, can we prove it or can we show it even in unit? Yes, guys. The decision will remain same. Okay. Let us move to C part. Worker X of ABC Manufacturing Limited was assigned a job number 101. He began the job on 1st June at 9 a.m. and completed on 4th June at 12 p.m. Okay, started on 1st June at 9 a.m. and completed on 4th June at 12 p.m. Okay, there are 9 working hours in a day from 9 a.m. onwards. Work done and approved was 1800 units. Actual output is 1800, guys. Other information, standard quantity per hour is 42 units per hour. So you are supposed to produce 45 units per hour. Okay, this is like standard quantity. Wage rate 150 per hour. Bonus as per ALSE plan 50% of the time saved. You're required to calculate the remuneration of worker X on the basis of ALSE as well as Rowan plan. So we are supposed to calculate time allowed. What is the time taken? So time allowed minus time taken would be time saved. Once we derive that, we need to just apply the formulas and calculate it, guys. And please be careful. They have asked calculate the amount of remuneration. They didn't ask only bonus. So what are we supposed to do? We need to calculate both the basic part plus bonus, total remuneration or total wages. If they ask only bonus, then do only bonus calculation. Here they have asked remuneration, so it is understood that they are asking total wages, guys, which includes the basic wages plus bonus element. Basic wages can also be called as guaranteed wages. Okay, yes, 4 marks question. See, yeah. Time allowed. Time allowed is how much? Guys, we have produced 1800 units. So to produce 1800 units, how much time I was supposed to take? How much time I was supposed to take? See, for each and every hour, I am supposed to produce 45 units. I have totally produced 1800. So just divide each other. You will get to produce 1800. A worker was supposed to take 40 hours. 40 hours. What is the actual time taken? On 1st June 9 a.m. work was started and it is completed on 4th June at 12 p.m. So on 1st, 2nd and 3rd, full 9 hours are worked. 9 hours is the working time per day. So 1st, 2nd and 3rd, full 9 hours. Plus on the 4th June from 9 to 12 p.m. 3 hours, guys. So 1st 9, 2nd 9, 3rd 9, whereas 4th June 3 hours from 9 to 12. So actual hours worked is 30 hours. Time taken. Okay. So what is the time saved? 10 hours. How did we get it? 40 minus 30. 40 minus 30. Yes, sir. Once we get this, rate per hour is already given. Just apply the formula and convert the values. That's all. Total remuneration of the worker into, what is that? Into under 50% of ALSA scheme. Okay, fine. We'll apply the formula. So under ALSA scheme, what is the formula, guys? Hours worked or time taken into rate per hour. This is basic part plus bonus. Half of time saved into rate per hour. Half of time saved into rate per hour. So first part, 30 hours into 150, then come into the bonus element, half into 10 hours into 150. Instead of half, can we take 50% also? Yes, guys. So the total remuneration would be 5,250 under ALSA scheme. Okay, coming to row 1 scheme, what is the formula? Hours worked or time taken into rate per hour. This is basic part. Then coming to the bonus part. This is bonus. Time taken divided by time allowed into time saved into time rate. They have given. Sir, can we interchange these positions? Yes. Normally, that is how I will explain in class. So that this would be time saved divided by time allowed into time taken into time rate. Even if you interchange, it will give same answer, guys. You need not worry. Okay. So 30 hours into 150. Okay. Coming to the bonus part, 30 divided by 40 into 10 hours into 150 rupees. Yes. So we are getting 5,625. This is the easiest part, guys. Once a student get this part, now this is important. Once you get this, all other things are very easy. Just applying the formula and calculating it. Yes, sir. We are done with first question, guys. Question number 2, A. Dole Makers Limited sold 6,000 units of musical instrument Dolak. Okay. The cost data for the year ended 31st March 2025 is as follows. Okay. Question is on cost sheet. When question is so lengthy, you can just see the requirement also once before reading the data. You are required to prepare a cost sheet showing raw material consumed, prime cost, works or factory cost, cost of goods sold, cost of sales, and net profit and sales. Okay, we are supposed to prepare cost sheet showing all this, guys. That's all. Question is for 9 marks. Okay. Let me read what all data is given. Expenses paid for pollution control and maintenance 93,400. Sir, where it will come? Guys, pollution control and maintenance, where it will happen? In office or factory? Guys, pollution normally will happen where production is happening. And production will happen where? In factory. So it is a part of what? Factory overheads. This is a part of factory overheads. Hope you got it. Yes. Expenses paid for quality control check activities. So this will come after factory cost, but before cost of production. But before cost of production. I will just show you. If you have my book, you can open. Yes. So this is the cost sheet format, guys. Yeah, you can just observe. Quality control cost will come after factory cost, but before cost of production. Yes, sir. Next, lease rent of production assets, 1,20,000. Guys, they have told we are paying rent for production assets, but first identify, is it a fixed, is it a variable or is it in fixed, or is it direct or indirect? Okay, first let us identify whether it is direct or indirect. Guys, is it directly attributable to the product? No, sir. Why? Because if it is directly attributable to the product, they would have given per unit or per hour, something like that. So can I consider it as indirect? Yes, sir. We can consider it as indirect and also fixed in nature, because they have given 1,20,000 fixed amount. Yes, sir. So we can consider this as factory overheads, guys. See, if it was like given per unit or per hour, then I would have taken it as other direct expenses. Other direct expenses. But here they are not given per unit or per hour, so we don't consider it as direct. So it is indirect part of factory overheads. Okay, sir. Next, hire charges paid for hiring specific equipment, 315 per hour. Okay. Can I consider this as direct in nature? Yes, guys. Why I will tell you. Number of hours depend on number of units. And here the hire charges or the rent depends on what? Number of hours. So can I consider it as direct? That is, it is directly attributable to the output or product, production or activity level? Yes. So we can consider this as other direct expenses, guys. Other direct expenses. That is in the cost sheet. We can fit in that items here. Got it here. That is before prime cost. Okay. Primary packing cost, even this will come after the factory cost. You can just see in the format. I will just show you. Yes, primary. Before cost of production, but after factory cost. Okay. Direct labor wages, part of prime cost. Fee paid for technical assistance. Okay, so there is no clarity here with respect to what technical assistance. So let us consider that it is for specific equipment. Higher charges paid for hiring specific equipment is there. No? For that, we are taking technical assistance. So in that case, can we consider this also as direct expenses? Yes. When this is direct, we can also consider this also as direct, guys. Oh, opening stock of finished goods as on 1st April 2024, 2000 units are there, which is cost is 10 lakh 10,000. Closing stock of finished goods as on 31st March 2025, 1000 units are there. Cost is not given. That means we need to find out. Question mark. Cost of production 27 lakh 50,000. It is further ascertained that labor is paid at 1000 rupees per labor hour. Direct wages is already given now. Yes. So 6 lakh divided by 1000 if I do, we will get labor hours, guys. Labor hours. Okay. Which is required to calculate what? The higher charges paid for hiring specific equipment. Once we get labor hours, we'll just multiply that with 315, guys. Okay. Specific equipment is hired for the number of labor hours worked. Okay. So once we get labor hours, we need to just multiply 315 with that. Yes. And please be careful. We need to treat the higher charges as direct because, sir, the hiring charges depends on the labor hours. Whereas labor hours, direct labor hours, it depends on what? Number of units produced or the activity level. Yes. Chalo. The company follows the first in, first out, that is FIFO method for closing stock valuation. Okay. That means one thing we need to notice here. Opening stock is there, closing stock is there. Then also they have given how many units are sold. Can we calculate how many units are produced? Yes. We can consider or we can calculate how many units are produced. And to calculate the value of closing stock, please observe here. Is it from opening stock or is it from the units produced during the current period? Closing stock will be from the units produced during the current period. Why so? Because when we start selling in the current year, first we will sell opening stock. Remaining units will be from the current year production. So we understand that as companies following FIFO, whatever closing stock 1000 units are there, it is from the current period production. Current period production, guys, as per FIFO. Yes. Selling and distribution overhead is 25 rupees per dolak. That is number of units sold is 6000 into 25 people. Yes. Profit is 20% on sales. Actually, sales we will not know. But can we convert this profit percentage on cost? Yes, we can convert it. And calculate profit. Once we add the profit for the cost, we will get sales, guys. Okay. So we are supposed to prepare cost sheet. Fine. We will look into the answer. Easy itself. But the twist is direct material is not given in the question directly. We need to calculate it as a balancing figure. As a balancing figure. So what I would suggest is, student, see, you already know what all information is given in the question. So try to present it. Try to arrange it in the cost sheet order. That is in the cost sheet format. Okay. Just arrange it. Then write the amounts for whichever items they have given in the question. And then you can do reverse calculations. Then you can do reverse calculation. I repeat, you already know. See, you need not write the entire cost sheet format because all these items are not given in the question. Correct? Yes. So we already know what all items is given in the question. Yes, sir. I will just show you once. Okay. What all items is given in the question? Yes. Just present them all in the cost sheet format. Okay. First write only the particulars part. Then we can take care of amounts part. Got it? Yes, sir. Okay, fine. We'll move forward for the answer. First, there are few workings to be done. We will see that. Labor hours, guys. I already explained how to calculate it. Total direct labor is 6 lakh and the wage rate is 1000 rupees per hour. So how many direct labor hours worked? 600. Okay. And we need to calculate the number of units produced also. Sir, how do we calculate the number of units produced? Units sold 6000 is given in the first line of the question, guys. 6000. Then in the data they have given closing stock 1000 units and opening stock 2000. So add closing stock and deduct opening stock because we are doing reverse. So the number of units produced would be 5000. And if I ask you the closing stock 1000 units is from where? 5000. 5000. Hope you got it. Yes, sir. Third working note we will see later. Oh. So first try to present the information in the cost sheet format. Direct material consumed we don't know, so we'll keep it as it is. Means in the amount column you can leave it blank. Okay, write the direct material consumed and in the amount column just leave it blank. Okay. Direct labor wages, or else we have another alternative where in this answer, in the suggested answer, they have done a working note 3. You can also follow that way, but that will be little time consuming. So what I would suggest is write material consumed and leave the amount blank. Okay, yes, we will try to figure out later. Direct labor wages is given 6 lakh. Then direct expenses, as I already explained this. So higher charges paid for hiring specific equipment. 600 labor hours is there, which we have done in working into 315 rupees per hour. We will get 1,89,000. Okay, sir. Then fee paid for technical assistance, considering it for the specific equipment, we are taking it here, 126. And just give a note also, guys, for this especially. Telling fee paid for technical assistance is considered to be a direct expenses. Just give a note for it. Okay, sir. So total direct expenses is 3 lakh 15,000. And prime cost also we don't know. Keep it blank. Keep it blank. Here it is given. So should I write? No, no, no. We don't know the direct material consumed, right? Yes. So keep it on word. Okay, you can just write here prime cost and leave it blank. Next, coming to factory overheads. Okay, lease rent for production assets as it is used in factory. We need to consider it under the factory overheads. And please be careful, guys. This is not paid per unit or per hour. That is why we have not taken it under direct expenses. Sir, what if in case if this was paid per unit or per hour, then even that we would have considered it under direct expenses. Got it? Yes, sir. Expenses paid for pollution control and maintenance 93,400. So total factory overhead will be 2,13,400. Take it. And factory cost we will not know it because we don't know the prime cost. Leave it blank. Right and leave it blank. Okay, sir. Next, expenses paid for quality control check activities 70,000. Then primary packing cost 51,600. Take it both. Then cost of production I think is given in the question. Just a minute. It is given in the question. Yes, it is given. You can see the last line item in this table. Yes, sir. Take it. 27 lakh 50,000. 27 lakh 50,000 is the cost, guys. 27 lakh 50,000. Now, what you can do is you can stop here and do the reverse calculation to derive factory cost, prime cost, and direct material consumed. Or else you can complete first the remaining part here. You can complete this, then go back and do that calculation. Okay, anyway is better. Anyway you can do it. Okay. What I will do is, as of now, I will just pause here, 27 lakh 50,000, find out this value. How do we calculate it, sir? 27 lakh 50,000 minus 51,600 minus 70,000. As we are going reverse, we need to deduct this too. How much do we get? 26 lakh 28,400. That is our factory cost. From that, deduct factory overheads, 2 lakh 13,400. We will get prime cost as a balancing figure. I have written here balancing figure 1, balancing figure 2. Okay, sir. And from 24 lakh 15,000, deduct direct expenses, deduct direct wages. You will straight away get material consumed. You will straight away get material consumed, guys. Is that clear? Yes, sir. 15 lakh. So whenever you are doing like this, better mention like this balancing figure, balancing figure. Hope you can see how I have written here. Is that clear? If not, in this suggested answers, what they have done is they have taken this as a base and they have done a reverse calculation. And for that, they have given a separate working note. Whatever I just now explained, same thing they have given here as a working note 3, guys. You can observe. Just have a look into it. So if you want to save time and if you're running short of time, maybe you can straight away do the calculation in the cost sheet format itself in a reverse way, guys. Okay, because this will actually take time to do this working note 3. Okay, fine. So we are done till cost of production. So we need to add opening stock and closing stock of finished goods here. Opening stock of finished goods is 2,000 units. They have already given the value 10 lakh 10,000. And closing stock of finished goods. As companies following FIFO basis, closing stock is from where? Current cost of production. So how many units are produced, guys? 5,000 units are produced. What is the cost of it? 27 lakh 50,000. So can I calculate what is the cost per unit? Yes. 27 lakh 50,000 divided by 5,000. Divided by 5,000. You will get per unit. You will get per unit. Multiply that with 1,000 units. You will get closing stock. Clear? Under FIFO method, closing stock will always be from the current period of production, guys. Because as soon as the year begins, first we will sell the opening stock, then only we will start selling from the current year productions. Okay, sir. Fine. So we will get cost of goods sold 32 lakh 10,000. Then selling and distribution overhead 25 rupees per unit. And obviously this is not for 5,000 units, guys. This is for 6,000 units. Clear? Even if I ask you this cost is for how many units? It is 6,000. Got it? No, because cost of production is for 5,000 units plus 2,000 minus 1,000 will give you how much? 5,000 units cost of goods sold. Sorry, 6,000 units. Yes. So 25 rupees into 6,000 will give you 1,50,000. So cost of sales is 33,60,000. So they have given profit percentage on sales, but we don't know the sales figure yet. So convert that into cost, which we will get 25% profit percentage. I've just shown the rough working here. Cost plus profit is equal to sales, guys. So as profit percentage is given on sales, let us assume sales as 100. So profit would be how much? 20. So cost would be the balancing figure. 100 minus 20, cost 80. So the profit percentage on cost would be 20 by 80, which will give us 25%. So 33,60,000 into 25% will give us 8,40,000. So the total sale value is 42 lakhs. 42 lakh. Is that clear? Yes. Very well framed question. But only one thing you need to decide whether you will prepare a separate working note for this, or can we calculate it directly here itself by doing a reverse working. And if at all, if you are doing reverse working, please mention like this as balancing figures, guys. That is a must. Got it? Yes, sir. Fine. Done with cost sheet thing. Next. B. This is really a tricky question, guys. For 5 marks, what they have asked here or what they have given here is too much. Okay. Chalo. A producer of oils purchases 400 liters of oil at 75 rupees per liter in a containers of 40 liters each. Okay. 400 liters of oil is purchased at 75 rupees per liter and it is packed in a container, and each container will contain how many liters of oil? 40 liters. So 400 liters divided by 40 liters. So how many containers, guys? 10 containers. Okay. Other expenses at the process were 37,350, including an abnormal loss of 12,500 due to an accident. So while recording the expenses on the debit side of process account, should we consider full 37,350 or should we exclude 12,500? We need to deduct 12,500, guys, because abnormal loss or a cost of abnormal loss will be separately recorded in costing P&L account on the debit side. Oh. So on the debit side of process account, we need to debit only 37,350 minus 12,500. Okay, next, let us continue. Normal waste at the process is 10%. So 400 liters is the input into 10%, that is 40 liters is a normal loss. Waste is sold at 10 rupees per liter. Okay, that is 440. So 400 into 10% will get 40, 40 into 10, 400 rupees is the scrap value for normal loss. Okay. And each empty container is sold for 50 rupees. Okay. Guys, we are purchasing the oil in a container. Totally, how many containers are there? 400 divided by 40. That is 10 containers. And each container we can sell it. This is not my main product. My main product is oil. But when I'm purchasing oil, we are also getting a container. And that container is not waste. I can put it for some scrap and we get how much, sir? 50 rupees. We are getting 50 rupees for each container. Okay. And are we paying anything extra to purchase container? No, no. Each liter of oil we are paying 75 rupees and that oil will come in a container. Each container will store 40 liters, guys. Got it? So please be careful. We are not paying anything extra to purchase the container. Container is coming along with the oils. Okay, sir. Generally, 10% of the containers get damaged so badly that they become unsaleable. So totally we have 10 containers. In that 10% we cannot sell. That means we can sell only 9. Correct? 10% of 10 is 1. So remaining is how much? 9. However, in the given situation, more containers were damaged and only 5 containers were in a saleable condition. So 10% was like loss, like normal loss. So how much is actually in a saleable condition? 9. But here they are telling we could sell only 5. That means remaining 4 is a abnormal loss. Actual output was 7,500, sorry, 375 liters, which is sold at a profit of 20% on cost. Okay, so total input was 400, whereas output is 375. And please be careful, they have given a normal loss also. So 400 minus normal loss 40, it was supposed to be 360, but we are getting 375. That means there is an abnormal gain of 15 liters. 15 liters. Is that clear? Guys, please be careful. In the process, we are processing the oil, not the container. But in this process, we are also getting some realizable value or scrap value for the containers. Should we consider that also? Yes, that will reduce our total cost or overall cost of the process. Yes. You are required to prepare a process account and income statement. Yes, sir. For 5 marks. Guys, whenever you see this kind of question, what I would suggest is try to keep this for the last. Okay, because in the beginning itself, if you try to answer this, then you will end up consuming too much time, especially for this kind of questions. Sir, what if I have already answered A? It's okay. For B, you can leave necessary space and go for next questions, guys. Got it? Because without even your knowledge, you will start consuming too much time for this kind of questions. Yes, chalo, fine. We will see. I've just done some calculation here for oil and containers separately. First, let me explain for oil. What is the total input, guys? 400 liters. In that, what is the normal loss? 10%. So 10% of 400 comes to how much? 40. So what is the expected normal output? 360. But actual output is how much? 375. That means there is an abnormal gain of 15. We expected that 40 units will be normal loss or we will be losing it. But actually out of that, 15 units turned out to be a good units. So if you ask me what is the actual loss, it is only 25 liters. 25 liters, guys. Okay, this is with respect to oil. Coming to the container. So totally we have purchased 400 liters and each container has a capacity of 40 liters. So how many containers, people? 10 containers. Hope you are able to get it. 400 divided by 40. Yes. In that 10% is normal loss, which is 1. So how many units I was expecting to sell it at 50 rupees per container? 9 containers. But actually we could sell only 5. That means remaining 4 is what? Abnormal loss. Abnormal loss. Yes. For this, I was already prepared, whereas this is like unexpected. If there was no abnormal loss, then I would have sold 9 containers at 50 rupees each, guys. Fine. Come to the solution. Yes. So process account. So they have given a separate columns for container and oil liter. Even I would suggest you to prepare like that itself because even containers will affect the cost, guys. It will affect the cost. We have a scrap value for that. So please present a separate column for that. Okay. But please be careful. You should be knowing that container is not our output. We are processing what? Oil in our process. That is our product. Got it? Yes. Chalo. Material 400 liters into 10 per liter. Sorry, 400 liters, I guess, into 75 per liter. So it is 30,000. Yes, sir. And for this, we are getting how many containers? 10 containers totally. How did we calculate it? 400 liters divided by 40 guys. 10. Okay, sir. Then other expenses 37,350, but in that 12,500 is abnormal part. So deduct it. Remaining you record here. Debit side. Okay, sir. So debit side done. This we don't know still. Keep it on hold. Then coming to the credit side. Normal loss of oil 400 into 10%, which comes to 40. And each liter we can sell it at 10 rupees. So scrap value is 400. Scrap value is 400. That is 40 into 10. Okay, sir. Now coming to the container part. Guys, container, let us close first units part. We are taking units part here. Okay. Yes. Normal loss is 1. Okay. Expected sales was 9. But in that we could sell only 5 at 50 rupees per container. So 250. Remaining 4 is like an abnormal loss. So abnormal loss of how much? 4 into 50, 200. Got it. We can call this, instead of writing this as abnormal loss, both put together. Can we write it as a realizable value? Yes. Because abnormal loss, we will also separately record it in costing P&L account, guys, or in the income statement. Yes. So instead of showing this separately, as we have shown normal loss here, and for normal loss units, we will not get any sale value. We cannot sell it. Got it? Yes. Only the remaining containers, that is 9 containers, I would have sold it at 50. but I could sell only 5. That means remaining 4 is a loss. For this 4 containers, how much is the total loss? 200 rupees. That is 50 rupees each. Okay. So instead of writing it separately like this, you can also present it together. Realizable value for 9, it is 450. You can write like this also. But out of this, for 4 units, we need to also consider it in costing P&L account, debit side, as a loss. Okay, sir. So containers matching at 10, then 10 matching. Yes, sir. Now coming to the oil part. Oil part, actual output is how much, guys? 375. 375. So first let us close the units column. So here it is 400. Okay. Don't do the total here. Please be careful. Just do the calculation like that itself. 400. Whereas here it is 415. So credit side is more. When credit side is more, on the debit side, what is the balancing figure, guys? In the units column, the balancing figure would be abnormal gain. Abnormal gain. Got it? Yes. Let me just write it. This is like balancing figure. I've shown this calculation already also before we started with this process account. Yes, so this is like balancing figure, guys. Let me write the B part again. Okay, fine. Now let us come to the cost calculation. Total cost is how much? Total cost 30,000 plus 24,850. So we will get 54,850 minus the scrap value. The scrap value for oil you take, that is for normal loss units you take 400. Then for container you have to take fully, guys. That is for all 9 containers. Sir, why, sir? We should take only 250, no, sir? No, guys. This is not main product. See, if it is a main product, that is for oil, will we take any scrap value of abnormal loss units? No, no, we will not take it. If it is a main product, we don't consider the scrap value of abnormal loss units while calculating the cost. We just deduct only the scrap value of normal loss units. But here, container is like a byproduct for us. So anything which we are supposed to get from that will reduce our cost. So our expectation was that we will get 50 rupees for each container. For how many containers? 9 containers after considering a loss of 1 container. So we were expecting to receive a scrap value or the realizable value for how many containers, guys? 9 containers. So should we deduct full 450 here? Yes, please be very careful. I repeat it, guys. If it was assumed abnormal loss of oil, and if we are getting any scrap value for abnormal loss, will we deduct it while calculating the cost? No, we will not deduct it. But here we are taking what can be the realizable value for the containers, and container is not our main product. It is like a byproduct. Anything which we can realize from the container, should we deduct it from the cost? Yes, guys. Is that clear? Yes. So we are expecting 50 rupees for each container. For how many containers? 9 containers after 10% of loss out of 10. So for this, we are not expecting anything because this was anticipated at the beginning itself. So obviously, we will not get any scrap value for this. Clear? This we are not selling, guys. Please be careful. Yes, sir. Whereas for the remaining 9, we were expecting that we will get 50 rupees, which we call it as realizable value. Yes. Sure. So 450 you deduct. Then this 400 is the scrap value of the normal loss of oil, guys, of oil. That is our main product. Okay. So you will get a total cost of 54,000 divided by total input minus normal loss. Total input is 400 minus normal loss of oil 40. So 360 you will get. What is the cost per liter? 150. So multiply 375 into 150. You will get 56,250. Same way abnormal gain. 150 into 15. You will get 2,250. 2,250. Is that clear? Yes. Now close the amounts column. It has to match. Got it? Yes, guys. Sure. Then they have also asked income statement. First, we will record the sales. They told we are selling it at what value, people? We are selling it at 56,250. Have they calculated the sales? Okay, no. Fine. 56,250. We will take it here as a cost. 56,250. Then sales, they are just given on pattern. I guess certain percentage is given. Just a minute. I will just have a look into it. Profit percentage is how much? 20% on cost. 20% on cost. Yes. So whatever is the 56,250 is there, no, plus 20%. Plus 20%. I will just check it. 56,250 plus 20. 56,250 plus 20%. Yes, 67,500. Better is to show it here. 56,250 plus 20%. And 20% is on cost, guys. Yeah. Then abnormal loss container is there. So that is this part. 200, I told you. We need to show it on the debit side of costing P&L account or income statement. Okay. Then there is an abnormal loss, accidental loss given 12,500, which we deducted here now on the debit side. That we will record it. 12,500. Yes. Okay, sir. Then coming to abnormal gain. Abnormal gain value is actually 2,250. But is this the net gain? No, guys. Because for this 15 units, I would have already recorded a scrap value here. But will I get it now? No. As these units are converted into a good units, we will not get scrap value for 15 units. So what should I do now? From 2,250, deduct the scrap value. That is 15 into rupees 10. Deduct it because that is like a loss for this abnormal gain accounts. Remaining will be the net gain, guys. So 2,250 minus scrap value. So how much is that scrap value? It is 15 liters into 10 rupees. 15 liters into 10 rupees. Yes, that is the scrap value. Deduct it from 2,250. So you will get what is the net abnormal gain. Hope you guys remember. We used to do the abnormal gain account and normal loss account. We used to adjust it here, but here they have not asked abnormal gain account, normal loss account and all. It is not required. And here actually they have done net calculation. That is 150 is the cost minus the scrap value is 10 rupees. So what is the net cost? Sorry, net gain 140. 140 into 15 liters. Is that clear? Or else from 2,250 we have 2,250 as a value of abnormal gain. From that reduce scrap value. How much is the scrap value? 15 into 10 rupees. 150. So we'll get net abnormal gain. Got it, people? Yes. Sure. Fine. So we will get a net profit, which is a balancing figure 650. First total of credit side is more 600. Deduct all the debit items. You will get the balancing figure as net profit, which is 650. Which is 650, guys. Yes. Okay. Let us move to question number 3. Gold Drive Bank is having a branch which is engaged in processing of gold loan and car loan application in addition to their other services to customers. The bank has hired 3 direct professional workers for processing gold loan applications. Okay, 3 for gold loan and 4 direct professional workers for processing car loan applications. So these professionals will be working only for the respective services, guys. So 3 is for gold loan application and 4 is for car loan applications. As they are mentioned clearly direct, they will be working only for those services. In addition to the above, following expenses are incurred by the branch. Branch will be providing various services. Out of the 2 services is gold loan application and car loan applications. Okay, now? Yes. Branch manager who supervises all the activities of a branch is paid at 1,10,000 per month. Okay, per month. Legal charges, printing and stationery and advertising expenses are incurred at 28,000, 15,000 and 20,000 respectively for a month. Okay. Other expenses per quarter. Please be careful. Few are given per month and here it is given per quarter. 51,000. Depreciation on building. 4,20,000 per annum. Okay. Overhead cost. Overhead cost of the branch allocable to the processing of gold loan application and car loan application is 20% and 15% respectively of total overhead cost of the branch. Okay, guys, whatever they have given here is the cost of the branch. In this, how much is allocable for the gold loan application? 20%. How much is allocable for car loan application? 15%. Got it? Yes, sir. Next, number of applications processed. Gold loan 400 applications per month and car loan 500 applications per month. Okay. So even cost calculation you can do better per month, guys. First 2 is given per month itself, whereas this is given per quarter. So in a quarter, how many months? 3 months. So divide it by 3. This divided by 12. you will get what is the cost per month. Then allocate it to both gold loan application and car loan application in 20% and 15% ratio. Okay. So what is the requirement? 8 marks question. You are required to compute the total salary of direct professionals for processing of gold loan and car loan applications respectively by assuming that cost of processing car loan application is same, means equal as gold loan application. Okay. For this, they are not given what is the cost. So we need to calculate that. So first we need to form an equation, guys. Overhead costs are given. We can find out how much is allocable for gold loan and car loan application. But this will be like X for us. How much ever is paid to the direct professionals. And we need to find out that. We need to form an equation. They have also given one clue that the cost of processing car loan application and gold loan application will be equal. Okay, that is like a clue given for you. Find out the total cost of processing a car loan application. So once we do this, this will be easy, guys. Yes, first part is challenging. Yeah. Let the salary of one direct professional be X. So how many professionals are there for gold loan application? 3. So it will be 3X. Whereas for car loan, we have 4 professionals. So it will be 4X. For one professional, let us assume the payment or salary would be X, guys. Okay, sir. So 3X and 4X here. Okay. 3 is nothing but number of professionals. Here also 4 is number of professionals, guys. Okay. Then coming to the other overheads cost of the branch is given, no? So we will do that. Branch manager salary is 1,10,000. So 20% is for gold loan and 15% is for car loan. Yes, this percentage also is given in the question itself. Then legal charges, printing and stationery and advertising is given per month 63,000. 20% is per year and 15% year. Okay, sir. Then other expenses is given per quarter divided by 3 because now there will be 3 months in a quarter, guys. Okay. So we'll get 70,000 per month. So share it between both the applications in 20 and 15% ratio. Then depreciation per annum is given 4,20,000 divided by 12 months. You'll get 35,000 per month. Again, share that in 20 and 15%. Okay. So what is the total cost per month? Add up all this, you will get 45,000 plus that is the professional salary, that is 3X. Then if you add up all this, 33,750 you will get plus 4X, that is professional salary. Yes. Number of applications per month, here it is 400 and 500 given in the question. Yes. Sir, instead of doing this individually, in order to save time, can I add up all this and then divide it in 20% and 15% ratio between both of this? You can do that. But guys, here it is for 8 marks. I would suggest you to present it individually. But if at all in the exam, if you are running short of time and you are supposed to complete this question as early as possible, then you can do that. Okay, you can add up all this cost. Okay, so you will get total cost here. Then 20% of that you take here, that is 45,000, and 15% of that, which is 33,750, you take it for this guys. Plus 3x here and 4x here. Okay. So let us form an equation here. 45,000 plus 3x divided by 400 will be equal to 33,750 plus 4x by 500. Why so? Because they clearly told in the question requirement itself, they told cost per car loan application will be equal to the gold loan application, guys. So I'm just writing it equal to here. Okay. So do cross multiplication. Let us take 400 this side. So 400 into 4x will be 1600x. Then 400 into 33,750 will give us 1 crore 35 lakh. Okay. So if I take 500 also at the other side, it will become a multiplier. 500 into 3x, 1500. Then 500 into 45,000, 2 crore 25 lakh. Okay, sir. Fine. So now let us take 1500x to the other side. You will get 100x and bring this to the other side. 2 crore 25 lakh minus 1 lakh, 1 crore 35 lakh will give us 90 lakh. So this will be like 90 lakh is equal to 100x. So x is equal to 90 lakh divided by 100. 90 lakh divided by 100. We will get 90,000. We will get 90,000 guys per professionals, per professional. So for gold loan, we have 3 professionals. So it is 3 into 90,000, 2 lakh 70. Whereas for car loan application, we have 4 professionals. So 4 into 90,000, we will get 3 lakh 60. 3,60,000. Yes, sir. Next, computation of cost of processing car loan application. Okay, the total cost they're asking. So we already got here. Just take the same 33,750 plus 4x. Now we already got x, no, 90,000. Just replace it. So 33,750 plus 4 into 90,000. We will get 3,60,000. Or else you can also take it from here directly. Okay. So we'll get 3,93,750. This is total cost divided by number of applications, which is 500. So we will get 787.50 per application, guys. That is car loan application. Got it? Yes, sir. Done with A part. Now let us go to B part. Sub question B. Wings Institute of Air Hostess training has reserved a spacious training hall for 25,000 on a weekly basis. Okay, so 25,000 is a rent per week with a seating capacity of 320 trainees. The institute has designed an intensive training schedule comprising 3 training sessions per day. Per day, there will be 3 sessions. Okay. 5 days a week for 25 weeks on aviation and hospitality. Okay. So if I ask you how many sessions, guys? So 3 per day. How many days per week? 5 days and into 25 weeks. So it is 3 into 5 into 25. So total number of sessions. Got it? Yes, sir. So if I ask you total number of days, it is 5 days into 25. Each week will have 5 days, guys, in which during which training will be provided. That means 2 days will be holiday. Okay, sir. Training delivered by the lead trainer to whom an honorarium of 3,600 per training session. Per training session is paid. How many training, guys? 3 into 5 into 25. Please be careful. So training cost would be training cost to the lead trainer would be 3,600 into 3 into 5 into 25. In addition, she receives a travel reimbursement of 500 per day, not per session, per day. Okay, so 500 into 5 into 25. And refreshment costing 1,200 per week to maintain comfort and focus during sessions. So how much is the total cost? 1,200 into 25 weeks. Okay, please be careful. This is per session, whereas this is per day, whereas this is per week. Okay, please be careful when you are multiplying. Okay, yes, sir. For focus and comfort, they are giving refreshment. See how it is. Next one. She also takes 2 lectures per week on safety and customer service during weekends. Okay, this is a separate story. Whatever they gave here, it is a separate story. This is on aviation and hospitality training, guys. Okay, yes. So on weekends, she is taking 2 lectures per week on safety and customer services during weekends only at 5,000 per lecture, inclusive of traveling and refreshment, nothing extra. Ensuring complete coverage of aviation education. Okay, please be careful, guys. This training is provided during 5 days, so let us consider it like from Monday to Friday, whereas this training is given when during weekends, that is Saturday and Sunday. So 2 lectures per week, and for each lecture she is charging how much? 5,000 per lecture. So 2, how many lectures totally? 2 into 25. 25. Yes, sir. Cost would be how much? 5,000 into 2 into 25. Got it? Yes, sir. Trainee support services covering utilities and essential training aids amount to 2,020 per week. So multiply this with 25. You are required to 6 marks question. Calculate the total cost per training batch. Okay. Per training batch means there is only one batch, guys. They didn't mention anything about multiple batches. But in one batch, how many trainees are there? 320. Okay. So there will be only one batch. Second one, determine the minimum training fee per trainee in a batch to cover cost if the batch is fully occupied. Means if batch is fully occupied, how many trainees? 320. So what is the fees to be charged? So total cost divided by 320, guys. That's all. Total cost divided by 320. That is nothing but the break-even fees. Break-even fees. So as per this, they don't intend to make any profit. Whatever is their cost, if they want to recover that fully, how much fees they have to charge for each training. They're asking it. Oh, last one. If the institute targets 20% profit margin on the training fee and decides to charge 14,800 per training, then calculate the minimum percentage of batch size to be filled. Okay. They want to make 20% profit on fees and they want to charge 14,800 per training. They're asking, in order to make 20% profit and to charge 4,800 rupees per training, how much batch should be filled? How much batch has to be? Maximum size is 320. Okay, but in order to achieve this, how much students or trainees has to be achieved? They are asking. Yes, sir. Yeah, sure. Calculation of total cost per batch, guys. So all charges is per week. So multiply that with number of weeks, 25. So 25,000 into 25, 6,25,000. Honorarium to the instructor or lead trainer, 3,600 is per session. So into 3, because 3 sessions per day, into how many days per week? 5 days into 25. That is 25 weeks. So this training will happen for 25 weeks, guys. So 13,50,000 is the cost for the trainer. Reimbursement of travel expenses, 500 rupees per day. So 500 into number of days per week into number of weeks, 60 to 500. Refreshment is per week, so 1,200 per week into number of weeks, guys, 30,000. So please be careful with this calculations. Okay, especially when you are multiplying. Lectures on weekends. Okay, this is for weekdays, that is 5 days in a week. Coming to the weekend part, 5,000 per lecture. So 2 lectures are there for each week into number of weeks, 25. So 2,50,000. Yes, sir. Administrative and miscellaneous expenses is given per week 2020. So multiply with number of weeks, you will get 50,500. So the total cost of the batch is 23,68,000, guys. As number of batches is only one, divide, you will get cost per batch is 23,68,000. If by chance, if they ask, if we need to calculate cost per training, then divide it by 320. But they have not asked, I'm just telling you. Just divide it by 320. They have asked this in the next requirement. Minimum fee per student in a batch to cover full cost. So how much is that? Total cost divided by 320 students, guys. So you'll get 7,400. We can also call this as break-even fees to recover full cost. If all the students are there or trainees, how much should we charge per student? Okay. Next, total fee to be recovered to achieve 20% profit margin on the fee. Guys, if profit margin is 20% on fees, so let us assume fees as 100. So profit would be 20, cost would be 80, balancing figure. So profit percentage on cost would be 20 by 80. Yes, sir. 20 by 80. So 23,000, 23,68,000 is the total cost plus profit would be how much? 23,68,000 into 20 by 80. That is the profit element. So we'll get total fee to be collected is how much? 29,60,000 including profit. Including profit. Yes, sir. So we need to charge per student or per trainee how much? 14,800. So just divide, guys. 29,60,000 divided by 14,800. We will get to know. To achieve this, we should have how many students? 200 students per batch. And what is the batch size to be filled, guys? Total capacity is 320. So we need to fill at least 200 students. So percentage wise, how much it would be? 200 divided by 320 into 100. It will give you 62.5%. So in order to achieve this, whatever company's target is there, in order to achieve this by charging 14,800 rupees per training, they should have at least 200 students, which is 62.5% of the total batch size, guys. Is that clear? Yes. Done with this. Let us move to question number 4. The following data pertaining to a company engaged in manufacturing and sale of single product during the year. Okay, budget data is given, actual data is given. Sales in units, sales in rupees, direct materials in rupees, direct labor in rupees, variable overhead in rupees, guys. But please be careful, guys. Here, first, we'll see what is supposed to be calculated. Okay, first, we'll read that. Additional information is given below. Standard and actual. Direct material per kg, 10 rupees, 8 rupees. Direct labor rate per hour, 10 rupees, 12 rupees. Okay. You are required to calculate direct material usage variance material price variance, labor efficiency variance, labor rate variance, and variable overhead cost variance. So totally it is for 7 marks, guys. Okay, sir. But one thing to take care, guys, please be careful. Budgeted data will always be given to for budgeted output. All this data, numbers that is in rupees, whatever is given is for budgeted output of what? 60,000. Anyway, sales is not required because we are not supposed to calculate sales variance. But with respect to cost, all this cost is given for the budgeted output. If I want to convert that into standard, because standard should always be for actual. How do we calculate standard? Simple. The respective cost divided by 60,000 into 66,000. That will give us the standard data for actual output. Got it, guys? Please be careful. Budgeted data will always be for budgeted output, which is 60,000 in this case. Whereas standard data should always be for actual output. Because when we are comparing standard with actual, the base should be same, guys. All these figures will be for actual output. Yes. So we need to convert even the budgeted data for actual output, which we actually call it as standard data. Like standard cost, standard labor hours, or standard quantity like that. Is that clear? Yes, please ensure that because that would be the key thing here. Oh, fine. We'll move to the solution. Yes. First, materials calculation. Budget is given for 60,000 units. So cost is 28 lakh 80,000 and price is given 10. So if you just divide it, you will get quantity. Budgeted quantity, not standard quantity. Yes. So if I want to calculate standard, then it should always be for actual output. So budgeted output was 60,000 units, whereas actual output is 66,000 units. So can we convert? Yes. Hope you understood this calculation. Budgeted material cost is given, guys, 28 lakh 80,000 divided by budgeted standard price 10 rupees, which is given in the next table. Got it? I will just show you here 10 rupees. Got it? So 28 lakh 80,000 divided by 10 we have done. Yes. So we got budgeted quantity. This is for an output of 60,000 units, but our actual output is 66. Let us convert it. So 2,88,000 divided by 60,000 into 66,000. We will get 3,16,800 into 10. We will get standard cost 31,68,000. Coming to the actual will always be for actual output. 36,30,000 is the cost, whereas actual price is 8 rupees. Divide, guys. Just divide this two. You will get actual quantity. Actual quantity. Yes, sir. Sir, you might ask me now, is this mandatory to show in the exam? Guys, you can straight away do this calculation also. For example, they have given this in the question, right? Yes. So this is for 60,000 units. So calculate how much for 66. How is it, sir? 28 lakh 80,000 divided by 60,000 into 66. You will get this figure. Correct. Once you get this figure, divide it by 10, you will get the standard quantity. So in that case, you can avoid this presentation, guys. You can do that. Clear? But whatever calculation I told you, this calculation, please show that. Below this, clearly show it. 28 lakh 80,000 is for 60,000 units. How much for 66? Okay. Yes, you will get this much. Fine. Now coming to the variance calculation. Material usage variance. Guys, come on, tell me along with me. What is the formula to calculate usage variance? Standard quantity for actual output minus actual quantity into standard price. Yes, sir. So standard quantity minus actual quantity into standard price will give us 13,69,500 adverse negative. Okay, sir. Next, price variance. What is the formula to calculate the price variance? Standard price minus actual price into actual quantity. Yes, sir. So standard price minus actual price into actual quantity will give us 9,07,500 favorable. Favorable. Yes, sir. Next, coming to labor data. Labor also they have got given budget, then they have converted that to standard. So, sir, can I do this or can I straight away do the standard calculation also? However, you are comfortable, guys. I will just explain how they have done. Budgeted labor cost they have given as 43,20,000 divided by standard rate, guys. You will get budgeted hours. This is called budgeted hours. Got it? Yes, sir. Now convert it for actual output. 4,32,000 is for 60,000. How much for 66,000? So 4,32,000 divided by 60 into 66. Or you can multiply with the respective thousands only. That is 4,32,000 divided by 60,000 into 66,000. You will get 4,75,200. We call this as standard hours for actual output. Multiply that with 10, you will get standard labor cost. Then actual data is given in the question. Actual labor cost 58,80,000 divided by actual rate. You will get actual labor hours, guys. Got it? Yes, sir. Or else you can straight away do this calculation. How to calculate this, sir? Instead of presenting this column separately, we can straight away start with this and do only this too. How is it? To derive this, you need to do 43,20,000 divided by 60,000 into 66,000. You will get this. Then divide that by 10, you will get standard hours. Got it, people? Yes. Chalo. First, labor efficiency variance. What is the formula, guys? Standard hours for actual output minus actual hours worked into standard rate. So, standard hours 4,75,200 minus 4,40,000 into standard rate. You will get 3,52,000 favorable. Then coming to rate variance, standard rate minus actual rate into actual hours worked, 4,40,000. Yes, sir. So you are getting 8,80,000 afterwards. Okay, and please be careful. They have not asked all the variances. Whatever they have just asked, please do that. Then coming to variable overhead cost variance, the formula is standard variable overhead for actual output minus actual variable overheads, guys. So in this suggested answer, standard is missing. Better write that also. Standard variable overhead for actual output minus actual variable overhead. And whatever overheads they have given is budgeted, guys. Please be careful. So 72 lakh is given in the question for 60,000 units, but actual output is 66. So convert that. We get standard variable overhead minus actual variable overhead. We will get 2,64,000 adverse, guys. Is that clear? So please be careful. Don't take 72 lakhs directly, guys. This is for budgeted output. Standard should always be for actual output. Budgeted will be for budgeted output, whereas standard has to be for actual output. Guys, we are taking in other place the actual data. When we are comparing actual, for actual cost will always be for actual output. When we are comparing that with something, obviously that also should be for same level of output. Yes. So please ensure that the standard data will always be for the actual output. That is very important in variance calculations, guys. Yes, sir. Okay. Let us move forward. This is done. Yeah. B. Sub question B. The following financial information is available for company with a normal production capacity of 40,000 units for the year ended 31st March 2025. Okay, so the capacity is 40,000, guys. Sales amounted to 8 lakh, units sold is 35,000 units. Okay. There was no opening and closing stock of finished goods. That means units produced is 35,000, units sold is 35,000 units. But capacity is 40. Okay. Direct material and direct wages cost were 3,50,000 and 2 lakh respectively. Actual factory expenses, that is factory overhead, were 1 lakh, of which 55% is fixed. That means 55,000 is fixed, the remaining 45,000 is variable, guys. Okay. Administrative expenses related to production activities incurred during the year but not paid were 50,000, which were entirely fixed. Okay, not paid and all doesn't matter. Should we consider it as administrative overhead? Yes, 50,000 fully fixed. Okay, even if it is not paid, still we need to take it, guys. Actual selling and distribution expenses amounted to 20,000, of which 35% were fixed. So 35% of 20 lakh means 7,000. Yes, so 7,000 is fixed. Remaining 30,000, 13,000 is variable, guys. The company earned interest and dividend income totaling to 10,000. Pure financial item. Financial income. Pure financial income. Not recorded in costing books. Yes. Remaining, guys, see, this data will be recorded in both the books. Whereas only 10,000 will be recorded in financial books. Okay. But one thing we need to take care here is, see, factory, actual selling and distribution as and also administrative overhead as a fixed elements. Guys, fixed overheads will always be observed based on what? The normal capacity. Clear? We will fix a overhead absorption rate. Overhead absorption rate based on what? The capacity. And for each and every unit we produce and sell, we will be observing so much, which will lead to either under absorption or over absorption. In this case, it will lead to under absorption because actual production is only 35,000. So it will lead to under absorption, guys. Got it? Yes, sir. I will explain while solving, while going through the answers. I will explain, don't worry. You are required to prepare the cost sheet and ascertain the profit as per the cost accounts for the year ended 31st March 2025. One more question on cost sheet. But this question is actually on cost accounting system. But they're asking you to prepare cost sheet. Then maybe later you will reconcile the profits. Assuming that the indirect expenses are observed on the basis of normal production capacity, they are clearly given. And not the entire indirect expenses, only the fixed portion. Fixed portion we will observe on what basis? Normal production capacity, guys. Okay. And a statement reconciling the profit shown by the financial and cost accounts. Okay, reconciliation also they're asking. So this question is for 7 marks. Yes. Yeah, we'll start with first cost sheet. Direct material, direct wages is already given. So you add up both, you will get prime cost. Then factory expenses. Yeah, just give a breakup for this, guys. So total actually expenses 1 lakh. In that 45% is variable. So take as it is 45,000. Whereas remaining 55% is fixed cost 55,000. First, can I take it fully? No. So 55,000 divided by 40,000, guys. Normal capacity. Normal capacity. Yes. So fixed overhead absorption rate is how much? 1.375 per unit. So this is called fixed factory overhead absorption rate. So for each and every unit produced, how much it will be charged, guys? 1.375. So how many units we have produced and sold? 35,000. So multiply this with 35,000. So how much fixed overhead is absorbed, people? 48,125. Hope you guys are able to get it. In absorption costing, guys, listen here. They have clearly given the clue also in the question. It is based on the normal capacity. And please be careful, variable will always vary with the production. So whatever is the thing, we will assume that is for actual production and we will straight away take it. 45,000. Got it? Whereas fixed, while observing the fixed overheads, we will always follow fixed overhead absorption rate, which is predetermined. And to predetermine that, do we have the actual output at the beginning of the year? No, sir, we don't know. Actual output we will get to know only at the end of the period. Yes. So we will have the capacity. So divide the total fixed overheads by capacity. You will get fixed overhead absorption rate per unit. Okay. So here it is 1.375. So as and when we produce each and every unit, how much we would be charging? 1.375. So totally how many units we have produced? 35,000 units. So that means how much fixed factory overheads is observed? 48,125. Hope you got it. Hope you got it. Yes, sir. So total comes to 93,125. So there is an under absorption. There is an under absorption here. Yes, sir. So works cost is 6,43,125. For that, add administrative overhead, fully fixed. So 50,000, same way you follow. 50,000 divided by 40,000. So what is the overhead absorption rate? 1.25 rupees per unit. Multiply that with the actual output, 35,000. So we will get 43,750. Here also there is an under absorption. Okay. Yes, sir. Then we get cost of production. Then take selling and distribution overhead. And please be careful, this administrative overhead they are clearly given related to production activities. That is why we have taken it before cost of production. Got it? Yes, sir. Next, selling and distribution overhead. Total is 20,000. In that 65% is variable, 13,000. Take as it is. Then remaining 7,000 is fixed, guys. So 7,000 divided by 40,000, which is a normal capacity. We will get overhead absorption rate 0.175. So for each and every units we produce and sell, we charge 0.175. So how many units we have sold? Actually 35,000 units. So multiply. we will get 6,125. So total comes to 19,125. Here also there is an under absorption. Yes, sir. So we get cost of sales 7 lakh 6,000 and sales is given in the question 8 lakh. Profit would be the balancing figure. Profit would be the balancing figure. 1 second. Sales, yeah, sales is given in the question. Yes. So this would be the balancing figure. Yes, sir. So this is the profit as per cost books. So we'll try to reconcile this with the financial profit. So we are taking cost profit as we have done cost sheet. So we will take the profit as per cost accounts as a base 94,000. There is one pure financial income. So pure financial income, assume guys this is financial records. So financial income would have been recorded here. Yes. Because of that financial profit has gone up. Yes. But have we recorded this in the cost books? No, we have not recorded in cost records. So because of this, my cost profit has not changed. But now if I have to match it with financial profit, what should I do? I need to add it to my cost profit. So add 10,000. Add 10,000. We will get 1,04,000. Okay. And totally there are three under absorption of overheads, guys. 1, 2, and 3. Find out. Find out that. And whenever there is an under absorption in cost records, guys, so profit would have gone up in cost books. Profit would have gone up. Correct. Huh? So instead of charging 1 lakh, we have charged, assume, only 93,125. So that means profit has gone up. Yes. So what should we do now? Deduct all this. All the under absorption has to be deducted, guys. So factory expenses undercharged in cost books is 6,875. That is 1 lakh minus 93,125. Same way administrative overhead under absorbed 50 minus 43,750, 6,250. Then selling and distribution overhead under absorbed also 20,000 minus 19,125. You will get 875. Add up all three and deduct it. So profit as per financial accounts, you will get 90,000, guys. 90,000. And if you want to cross check this, you can quickly do one calculation. Just a minute, I will show you. Yes. Yes. Observe sales is 8 lakh, right? Yes. So let us do the total of the cost quickly. 3 lakh 50 plus 2 lakh, 5 lakh 50 plus 1 lakh, 6 lakh 50, 7 lakh, 720. Okay. So 8 lakh minus 720, all the expenses put together, we will get 80,000 plus one more financial income. So 90,000. How much is the financial profit, guys? 90,000. Hope you understood. I repeat, 8 lakh minus all the expenses plus this pure financial income. This will give us a financial profit of 90,000. Did we get at the end financial profit 90,000? Yes, that means we are right. Yes, we can just cross check like this. Yes, done with this. Question number 5, guys. A, sub question A. A machine shop has 6 identical drilling machines manned, okay, by 4 operators. The machine cannot be worked without an operator only engaged on it. Means, even though there are 6 machines, can we operate all the machines simultaneously? No. Why, sir? Because we have only 4 operators. So machine will operate only with the operators. Without operator, machine will not operate, guys. Yes. Okay. So the original cost of all these machines, not per machine, all this machine is 3 lakh, all 6 put together. This particulars are furnished pertaining to a period of 4 months. So the data given here is for 4 months. Normal available hours per month. Okay. The heading they told 4 months, but here they are telling per month. Okay. 156 hours. Whereas absenteeism without pay hours 9 hours, leave with pay hours 10 hours, normal idle time unavoidable hours 5 hours. For even for this it will be paid. But here there is no clarity with respect to, sir, whether this is per month or for 4 months. This three information. Guys, see, heading they gave the given data or the following particulars is for 4 months. Okay. If nothing is mentioned, it is understood that it will be for 4 months. Yes. But only this one, they clearly mentioned per month. So you need to consider this as per month, whereas this three, you need to take it for 4 months. Hope you understood. Because here and all, they didn't mention per month. So it is understood that for the following three, it is 4 months. So this hours are for 4 months, whereas this alone is per month. Got it? Yes. Okay. Average rate of wages per worker for a 6 hours day. Okay. This is like 450 per day. So if I want to calculate per hour, 450 divided by 6, you will get per hour. Next, production bonus estimated 20% on wages. Value of power consumed 20,500. Supervision and indirect labor 8,500. Lighting and electricity 4,500. Okay, sir. This particulars are furnished for a year. Okay. So following data is for a year. Okay. Sir, what about this? This data. Is it per month, per year, or 4 months? Guys, please consider them as for 4 months because heading is mentioned as 4 months. But here they told per day, per month, and all. For this alone, you go with that numbers or period for whichever they have given here. Whereas others are considered to be for 4 months. Please be careful with this. If not, you will go wrong in your calculations. Yeah. So the following particulars is for a year, guys. Repairs and maintenance, including consumables, 2% per annum of the value of the machine. So 3 lakh into 2%. Depreciation 15% per annum of original cost. That is 3 lakh into 15%. Other sundry work expenses 12 lakh per annum. General management expenses allocated 24,000 per annum. The machine shop has taken an annual insurance for all the 6 machines also. Okay. Given that the comprehensive machine hour rate for 4 months period is 125 rupees per machine hour. Okay, answer is already given. Sir, then what are we supposed to calculate? Guys, how do we get machine hour rate? Total cost divided by machine hours or productive machine hours. So we will get machine hour rate, which is already given in the question. What are we supposed to calculate then? You are required to find out the total amount of annual insurance premium. Okay, they are asking annual. Please be careful. Annual insurance premium. Fine, sir. Chalo, we'll go to the solution. Interesting question. Operator wages, we need to do the working for it. We need to calculate the hours and all. Yeah. Normal available hours, guys, is 156 per month. Per month. So we need to multiply that with 4 months and that is per operator. So multiply. Totally how many operators are there? 4 operators. Oh. So total available hours for 4 operators in 4 months period is 2429. 2496. 2496. Hope you understood. Please be careful. Total available hours in a month is 156. So this is available for each operator? Yes, sir. So multiply with 4 operators. Then it is per month. We are doing the calculation for 4 months. So 2496 we will get. Whereas remaining 3 information is given for straight away 4 months, guys. So 9 absenteeism hours. 9 is per operator for 4 months. Multiply that with 4 operators. 36. Then leave hours 10 into 4. 40 and idle time hours 5 into 4 20 you will get. Sir, for this hours will the payment be made? Yes, but only for absenteeism there is no payment. So if I have to calculate paid hours, we need to take total available hours minus 36. So this is the hours for which payment is made, 2460 hours. Whereas for 40 and 20 payment is made, but there is no productivity. So if I have to calculate what is the productive hours, it is 2400, guys. 2400. Actually, this is labor hours calculation, but it will be the same as machine hours. Why, sir? Because machine cannot operate without labor. That is without operator. So whatever is the labor hours is equal to machine hours. Because the machine cannot operate without operator, guys. Okay. As machines cannot be worked without an operator wholly engaged on them, therefore, hours for which 4 operators are available for 4 months are the hours for which machines can be used. Hence, 2400 hours represent effective machine hours, guys, or productive machine hours. Got it? Yes, sir. Now, 450 rupees is the pay per day for the workers who will work for 6 hours. So, per hour, how much? 75 rupees. So, can we calculate total wages now? Yes. So we have got paid hours 2460 into hourly pay 75 rupees. Multiply both. You will get 1,84,500. 1,84,500, guys. Got it? Yes. I will just go back and explain this part once again because I feel somewhere that students might get doubt only in this part. Guys, please be careful. Normal available hours per month. This is 156 hours per month. This is per operator or all four operators put together. Guys, this is available hours per month. That means each operator can work for this many hours in a month. Yes, sir. Whereas whatever they have given here also is per operator, but for 4 months. Because if they had mentioned per month here, we would have taken per month. But did they mention? No. So when they are not given the period year, it is understood that whatever is mentioned in the top is applicable, guys. 4 months. So hope you understood. This is for 4 months per operator, whereas this is per month per operator. Got it? Yes. Okay, we'll continue. So whatever we just now calculated, 1,84,500, take it here. Production bonus is 20% of this, which comes to 36,900. Then power consumed is given straight away for 4 months. Supervision and indirect labor, lighting and electricity. Guys, this three information is already given for 4 months. Take it straight away. Okay, sir. Repairs and maintenance. Repairs and maintenance, I guess it is given for a year. Okay, but we are doing the calculation for 4 months. So check 12 by 4. How much you will get? 3. Okay, so divide all this cost by 3, guys. 1 by 3 they have taken, which is nothing but totally 12 months in a year. But we are doing the calculation for 4 months. So we will get 3. You can do 1 by 3. Yes. Repairs and maintenance is 2% of the cost of the machine. That is 3 lakh into 2% per annum you will get divided by 3, 2000. Same way depreciation is 15% of the cost per annum divided by 3, you will get 15,000. Or else instead of doing this, you can also do like this. 4 by 12. 4 by 12. Year also 4 by 12. Year also 4 by 12. Because per annum is totally 12 months, but we are doing the calculation for 4 months, guys. Okay. Other sundry works expenses 12,000 into 1 by 3. Okay, 4,000. Yes. General management expenses also is given per annum. So 24,000 into 1 by 3, 8,000. Okay, sir. This we are supposed to calculate. So we are calculating total overhead other than insurance premium. That is excluding that. 2,83,900 we will get it. Okay, sir. Insurance premium we don't know, but even that is a part of cost. But let us try to calculate what is the total cost. So we know how to calculate machine hour rate. Total cost divided by total productive machine hours. So we already have machine hours, productive machine hours, 2,400. And 125 is the machine hour rate given in the question itself. So multiply both. You will get what is the total cost. You will get what is the total overhead cost. Yes, sir. 3 lakh. So this is the cost excluding insurance premium, but total cost is 3 lakh. So the difference between this is what, guys? Insurance. But insurance for 4 months. Please be careful. All these calculations, all these numbers are for 4 months. 4 months. Better write it in the heading. 4 months. Okay, now? Yes, sir. So this was the total overhead excluding annual premium. Sorry, excluding insurance premium. Yes. This is the total overhead cost including everything. So the difference between this would be the insurance premium for 4 months. For 4 months. But don't stop here, guys. I know if student has attended January exam, few of them would have stopped the calculation year itself. But what they have asked is annual insurance premium. Please be very careful, guys. So do into 3. Or else you can do like this. Divided by 4 into 12. 16,000 divided by 4 into 12. You will get 48,300. Hope you got it. Yes, guys. So this is like interesting question. But if you know how to calculate machine hour rate and all, it will be easy. Fine, guys. Done with this. So please be careful. One thing you have to take care is here these are given for 4 months, whereas the following are given per year. I will just show you that also. So you can see here the heading is 4 months. So all these are for 4 months period. Whereas here the heading is for a year. So whatever is given here is per annum, guys. But convert all that for 4 months. That is per equivalent period. Yeah. Let us move to sub question B. Following data is available for XYZ Limited for the month of March 2025. Standard working hours 7 hours per day of 5 days per week. Okay. So per week how much? 7 into 5. Number of weeks in a month, 4 weeks. So 7 into 5 into 4, we will get the number of hours in a month. Maximum capacity number of employees is 60. Okay. So if I have to calculate what is the maximum number of hours for which the workers can work or the factory can operate is 7 into 5 into 4 into maximum number of employees, guys. That is 60. Okay, this is the maximum possible hours. Okay. But actual number of workers are 42 employees. Actual working. Okay. Actual capacity usage ratio 65%. Activity ratio 125%. Okay. What are they asking? Calculate the following: actual hours worked, standard hours per actual output, standard capacity usage ratio, actual usage of budgeted capacity ratio. Okay, sir. Fine. So hope you guys remember all these ratios calculations. Yeah, be easier. I will just show you in my concept book. So in the budget chapter, we have discussed all this ratio calculation. The last part, budget ratio. Okay, so the question is with respect to this. Yes, chalo, we'll see. First, we are supposed to calculate actual hours worked. So they have given actual capacity usage ratio, guys. What is the formula for it? Actual hours worked divided by maximum possible hours into 100. Maximum possible hours can we calculate? Yes, with the given information we can calculate. So maximum number of workers is 60 into 7 hours into 5 days, 4 weeks. So 8,400. Okay, sir. So 8,400 we have got denominator. Then we have got actual capacity usage ratio which is given in the question 65%. Multiply both, guys. 8,400 into 65%. So you'll get 5,460 which is actual hours worked. And see, in the formula you would have written into 100 here. But if you have taken percentage here, straight away multiply 8,400 into 65%. Don't again multiply with 100. Don't take it into 100 or don't do it again. Or don't divide it by 100. Okay, na? Yes. So if you are multiplying with percentage, straight away stop there, guys. Is that clear? But to show the formula, can I show into 100, sir? Yeah. Yes. You can show it. Okay, fine. So actual hours worked is 5,460. Then standard hours per actual output is asked. So just see in which formula do you use it? In activity ratio formula. What is the formula to calculate activity ratio? Standard hours divided by budgeted hours into 100. Into 100. Yes, sir. It is given as 125%. Standard hours we need to calculate divided by budgeted hours into 100. So budgeted hours, we can do it. How is it, sir? Actual workers you calculate. 42 workers. They can work for maximum how many hours? 7 hours into 5 days into 4 weeks. Clear? Please be careful, guys. To calculate maximum possible hours, we will take the maximum workers. 1 second. I will just show you. Yes, sir. So you need to consider what year C. This is C. One more sub question is there, which we'll see later. Yeah. Maximum number of employees, 60. So we're calculating maximum number of hours. We need to take this many number of employees. Whereas to calculate budgeted hours, we need to take actual workers, guys. That is 42 employees. Got it? Yes, sir. Just a minute. Yeah. So we'll get budgeted hours 5,880. Okay, sir. So we know this, we know this. Multiply both. 5,880 into 125% will give us 7,350 hours, guys. So that is standard hours. Next, standard capacity usage ratio. So maximum possible hours is 8,400. But we have set a budget for how many hours? 5,880, guys. So budgeted divided by maximum. So we have set a budget for how much of maximum capacity? 70%. 70%. Got it? Yes, sir. Means this is the maximum capacity we have. But can we plan and work as per that? May not be. That much is not required also sometimes. Yes, sir. So budget plan is prepared for how many hours? It is for 5,880 hours. Got it? Yes. So we have planned or budgeted for 70% of our capacity. But how much of that we are actually using? Actual working hours divided by budgeted hours into 100 will give us actual usage of budgeted capacity ratio. So here the name of the ratio itself will help you to derive the formula. Actual divided by budgeted, guys. Got it? Yes, sir. So 5,460 divided by 5,500 sorry 5,880 hours into 100 will give us 892.86 percentage. Okay, that means whatever we have planned for, we have achieved 92.86% of that. Actually, we have worked for 92.86 percentage of what we have planned. Planned is nothing but budgeted. Got it? Yes, sir. Fine, guys. So all these calculations were as per this ratios, guys. And please try to remember all these formulas, guys. If not, you will not be able to do the calculations. Yeah. Sub question C for 3 marks. A company can make any one of the two products M or S during the year. It can exercise its option only at the beginning of the each year. Relevant information about the products for the next year is given below. Selling price per unit is given. Variable cost per unit is given. So if I deduct, we will get contribution per unit. Market demand in units. Production capacity in units. Fixed cost is 1,25,000. 1,20,000. Whether you go with M or S, fixed cost would be 1,20,000. You are required to compute the opportunity cost for each of the product. Very easy question, guys. Yes, obvious. That is why it is asked only for 3 marks. Yes. So, what is the number of units we can produce? 3,000 or 4,000, whichever is lower, guys. Correct. Now we cannot produce whichever is higher. Demand or production capacity, whichever is lower. So here it is 3,000 and here it is 7,000. So multiply that with contribution per unit. How do we get contribution per unit? Selling price minus variable cost. Yes, sir. Sure. We will see the calculation. Yes, contribution per unit is nothing but selling price minus variable cost per unit. You will get 30 and 15 rupees. Then units. How many units can we actually produce and sell is lower of production or production capacity or market demand. So 3,000, 7,000 we need to do. So multiply both 30 into 3,000, 90,000, 15 into 7,000, 1,05,000. So if I go with product M, what is the opportunity cost, guys? So the total contribution of S, which is 1,05,000. If I go with product S, I will get 1,05,000. But what will I lose? What is the opportunity cost? Contribution of product M, which is 90,000. Clear? It is also mentioned here. What is opportunity cost? Opportunity cost is the maximum possible contribution foregone by not producing alternate product. That is, if product M is produced, we will get 90,000. But what do we lose? Contribution from product S, which is 1,05,000. Same way, if I go with product S, I will get 1,05,000 contribution. But what do I lose? Is 90,000. So we need to write here. I cannot produce both any one. So if I go with M, I will lose 1,05,000. If I go with S, I will lose 90. Is that clear? Yes, guys. Okay, done with question number 5. Next, question number 6 is completely theoretical. Classify the following items of expenses by functions and variability. Okay. We'll just straight away go to the question solution. I will explain there itself. Consumable stores, guys. So by function, where it will come under factory overheads. Factory overhead is also called as production or manufacturing overhead. Any one you can write. You need not write all three in the exam. And it will be variable in nature because it will vary with number of units produced. Got it? Yes, sir. Then general management salary, normally it will be fixed and it will come under administrative overhead. Yes, sir. General administrative overhead. Yes. Next, you can also use the word general administrative overhead. Next, delivery van expenses. Guys, delivery of what? Output, finished goods. So it will come under selling and distribution overhead. So delivery van expenses, guys, see, it can be variable or semi-variable. Variable means, sir, if it depends on each and every unit delivered, then it will be variable. Or else, sir, in a van, we can fit in, assume 1,000 kgs. Over and above 1,000 kgs, we need one more van. So in that case, can I call it as semi-variable? Yes. Got it? It can be either variable or semi-variable. If I am delivering each and every unit separately, then we can call it as variable. If not, Sir, in a van, we can fit in 1000 kgs or 500 kgs. So up to 1000 or 500, cost is fixed. Over and above that, we need to take another van. Yes. So that will increase our cost. It is like that. Next. Compensation, fixed salary plus commission on sales. Okay, here itself they have given the clue. So it is semi-variable. And commission on sales, there only you should understand that it is a part of selling and distribution overhead. Got it? Yes, sir. Because if they just give salary, we don't know salary is paid for whom. But later they told plus commission on sales. Okay, chalo. Next, rent of finished goods warehouse. So it is a part of selling and distribution overhead because once the product is produced, to make it available to the customer, any cost we incur is selling and distribution. So even for storage of finished goods, if I incur any cost or rent or warehouse charges, that will be a part of selling and distribution overhead, guys. Okay. And it will be fixed because rent what we pay is based on per month, guys. Okay. Chalo. A is done. B is interesting question, guys. Actually theory, but you cannot answer it as theory. You need to do some analysis through an example. I will explain. Understand. Understand. Focus here. Suggest a suitable incentive scheme to a factory for its workers, keeping in view the following. Oh, the entire gains of improved production should not go to the workers. So you can either use ALSA or Rowan because under both, for whatever time saved, will we give it full pay to the time saved as bonus? No. Under ALSA, it is only 50% of the time saved will be given as bonus. Whereas under Rowan, we need to use the formula. What is it, sir? Time saved divided by time allowed into time taken into time rate. So for the entire time saved, bonus will not be paid fully. It will be shared between the workers and the company, guys. Got it? Yes. In the name of speed, quality should not suffer. Okay. Because now, if the workers want to get more bonus, they will speed up and they will try to complete the work as early as possible by compromising with the quality. Okay. That should not happen, it seems. Okay. The last one. The rate setting department being newly established are liable to commit mistake. And here rate in the sense, not the amount, guys, that is time allowed. Whoever is setting the time, no, if there is any mistake from their side, it should not affect the company in a large extent or significantly. Got it? They can commit mistake is what they're telling. So even if they commit mistake, that should not impact the company in a bigger way. Okay, sir. Fine. So what is the solution, sir? Rowan scheme. So what is the formula to calculate bonus under Rowan scheme, guys? Time saved divided by time allowed into time taken into time rate. Correct? Yes. Let me assume, I will explain with an example. Time rate, we will assume it as 1. Rowan scheme of premium bonus variable sharing plan is suitable incentive scheme for the workers of the factory. If this scheme is adopted, the entire gain due to the time saved by the worker will not pass to him. It will be shared between the employer and employee. Yes, but this is not the only reason. We have two more. What is it, sir? What if the workers speed up the work in order to save the time and earn more bonus? What if quality is compromised? So we need to check it. So if I am following Rowan scheme, let us see. Assume time allowed is 10 hours. Time taken, I am just taking three possibilities, 3, 5 and 7. So time saved will be 7, 5 and 3. Hope you're understanding. This I have taken three different possibilities. Okay. So what would be the bonus under each of this? Use the following formula. And time rate, I'm just taking 1 rupees to keep it very simple. Okay. So in this case, I will tell you. In this case, how to calculate bonus. Time saved, that is 7 divided by 10 into time taken, which is 3 into time rate 1, guys, which will give us 2.1. And if time taken is 5, the bonus would be 2.5. You can just calculate. If you want, you can just pause the video and try to calculate it. Okay. Then the bonus here would be 2.1. So you can see, even if the savings is 7 hours, we get 2.1 rupees as bonus. But even if I save only 3 hours also, I get same. So actually under Rowan scheme, when the bonus will be maximum is when time taken is 50% of time allowed, guys. 50% of time allowed. Or else I can tell like this. The bonus under Rowan scheme will be maximum when time saved is equal to time taken. Got it? And if you try to complete that job still faster by compromising with the quality, even if you save more, will you get bonus more? No, you will get only 2.1. Got it? Yes. So will this encourage the workers to complete the work as early as possible, crossing the time limits and all? No, guys. Because if they save too much of time, then they will not get the highest bonus. Is that clear? So the explanation is here. Another feature of this scheme is that worker cannot increase his earnings or bonus by merely increasing its work speed. The reason for this is that the bonus under Rowan scheme is maximum when the time taken by the worker on a job is half of the time allowed, or time taken is equal to time saved. As this fact is known to the workers, therefore they work at such a speed which helps them to maintain the quality of the output too. Okay, so as they know that when we take the 50% of the time allowed, we will get maximum bonus. Will they increase their speed beyond that? No. If they try to increase the speed beyond that, definitely they will not get more bonus, but the quality of the product might come down. Got it? Yes, sir. So they will try to manage maybe at this level, guys, under Rowan scheme. Okay. Last part was what? Sir, what if there is any mistake in rate fixation? Lastly, Rowan system provides a safeguard in case of any loose fixation of standards by the rate setting department, that is time allowed. Okay. Workers cannot take undue advantage of such a situation. How is it? I will just try to explain with an example, guys. Because this theory and all, you cannot answer straight away. You need to do some analysis. Yes. Okay. Guys, assume time allowed was supposed to be 10 hours, but by mistake, the rate setting department has set it as 15 hours. 15 hours. Okay. Let us assume the time taken is 5 hours. So time saved is how much? 10 hours. So we are following Rowan scheme and Alsay scheme. So under Rowan scheme, if time saved is 10 hours, what is the bonus? What is the bonus? So we need to calculate 10 divided by 15 into 5 into time rate 1 rupees. We will get 3.33. 3.33. So just check it here. If time taken here is 5 hours, but if time allowed was 10, the bonus would have been 2.5. But here it is 3.33. That means it has increased. It has increased. Yes. Will it cause a loss to the company? Yes. Because of a mistake in setting the standard, the company will suffer a loss because they will end up paying more bonus. Okay. This is under Rowan scheme. Now let us come to Alsay's plan. Alsay plan also time saved is 10. Yes. 50% of the time saved will be paid as bonus. Yes, sir. So 10 into 1 into 50%. 1 is the hourly rate. Okay. Yes. How much is that? 5 rupees. So compare now, guys. If there is any mistake in setting the time allowed, under which scheme the company will end up paying more bonus? Under Alsay. Here it is 3.33. Definitely it is more than 2.5. But here you observe 5 rupees. So when compared to this, where the company is actually saving under Rowan scheme. If the company follow Alsay plan, because of the mistake in setting the time allowed, they will end up paying more bonus. It is loss for a company. It is loss for a company. Got it? But even under Rowan scheme also there will be a loss. Because if they had set 10 hours, they would have paid only 2.5 rupees as a bonus. But here they are paying 3.33. But when compared to Alsay, the loss under Rowan scheme will be less, guys. Is that clear? Because there is a gap between both of this. No, that is. So because of these reasons, what is the ultimate conclusion, guys? Which scheme is better for a company? Rowan scheme, considering all those three factors. Got it? Yes, sir. Okay. Next one. Discuss the usefulness or suitability of activity-based costing for 4 marks. There is an internal choice here, C and D. Okay, C, that is C, not this. Let us not name it as D. So you can either answer this or this. Discuss the usefulness or suitability of activity-based costing. Okay, let me just show you in my concept book. What are you supposed to write? So you can just come to activity-based costing chapter. I will show you what you are supposed to write. Yeah, this part, guys. So in page number 61, you're supposed to write this 1, 2, 3, 4, 5. I would have already explained all this in the class, so I'm not explaining it again here. Then the last one, that is the internal choice. Discuss the four components of budgetary control system. Okay, four components of budgetary control system. That is the last chapter. Last chapter, budgetary control system. Yes. Yeah. This one, guys. You are supposed to write this. You're supposed to write these 4 points. That's all. So this is what they would have suggested in the answer. Yeah. High amount of, when there is high amount of overhead, then activity based costing is better than traditional system. Wide range of product, that is when there is a multiple products. Then presence of non-value adding activities. If there is any non-value adding activities on which we are incurring any cost, we can try to eliminate that by following the activity based costing. Then stiff competition. When there is a stiff competition, it is very important for us to calculate the accurate cost, and activity based costing will help us to calculate the accurate cost when compared to the traditional overhead system, guys. Then the last one, functional budgets. You need to just explain. This is very simple. Yes. And I would suggest, guys, students, please don't take last question as a choice. I know some of the students will feel costing means only numerical paper. I don't like to write theory and all. But in the last question, the advantage is you have an internal choice. You have an internal choice, guys. So please don't lose out on that. So I will suggest the students to take any other questions. This is the sixth question, right? Sixth question would be completely theory. So try to take between 2 to 5, any one question as choice. This is just my suggestion. But in the exam, if you felt that, no, sir, theory questions I'm not able to answer, I don't know the answer for it, maybe that you will take it as a choice. If not, try to answer the theory question and take any other question as a choice, especially the question where you feel that you will consume more time, guys. Better take that kind of questions as a choice. Yes, guys. So this is all about Jan 2026 question paper. Yes, students, in this video, we will discuss the costing question paper for September 2025 exams. I would be discussing both the multiple choice as well as descriptive. But first, we will focus on the multiple choice part, guys. That is part 1, which covers only the multiple choice questions. Yes. So the first two questions would be the case scenario based. So under each case scenario, there would be 5 multiple choice questions, guys, of 2 marks each. Yes. But for case scenario question, what I would suggest is first go read the requirements and then we will read the case. Yes. Yes, we'll understand what is the requirement. First one, what is the direct employee or labor cost? Okay. Then what is prime cost? Then the third requirement is what is factory cost? Okay. Then coming to fourth question, what is the cost of goods sold? And the last one is what is the amount of profit? Yes. So we can tell that this question is on cost sheet, guys. Yes, sir. Fine. Please don't read the options. Just read the requirement. Then come back to the case. Let us read the case now. The following information pertains to ABC Limited for the period 1st April 2024 to 31st March 2025. So the data is given for a year, guys. That is financial year 24-25. Okay. First one. Royalty paid for production 7,76,400. Guys, this comes under what? Direct expenses before prime cost. Then amount paid for power and fuel. Considering it as direct expenses incurred in the manufacturing process, that will also come under direct expenses. Sir, what if I don't consider it as incurred for production process? It is incurred in factory indirectly to support my manufacturing. In that case, you can consider it as factory overheads. But here, the power and fuel, we can assume or we can consider that, sir, it depends on how many units are produced. More and more number of units we produce, obviously more and more power and fuel we have to consume. Yes. So can we consider it as direct expenses? Yes. Comes before prime cost. Then packing cost paid for redistribution of finished goods. So redistribution of finished goods, guys. So it will come under what? Selling and distribution overhead. Selling and distribution overhead. Please be careful. This is not primary packing. This is secondary packing because this is for finished goods. At the time of dispatch, this has been done. So we call this as secondary packing, people. Okay. And sir, what is the difference between primary packing and secondary packing? Guys, primary packing is done for each and every unit or each and every product produced. Assume I am manufacturing this pen. I will pack this pen in a box. So That is called primary packing. Now at the time of dispatch this to the customers or the wholesalers, I'm packing this pens in a box, in a carton box. In that case, whatever I'm doing at the time of dispatch, that is called the secondary packing, which comes under selling and distribution, guys. Or else sometimes customer may request, sir, please do a safety packing and send it. So at the time of dispatch to the customers, if I'm doing any additional packing, that comes under secondary, guys. Okay, fine. Next, repairs and maintenance paid for plant and machinery. So this comes under factory overheads. Whereas sales office building, this comes under selling and distribution overhead, guys. Then insurance premium paid for plant and machinery, where plant and machinery is used in the factory. So this comes under factory overhead. Okay. Next, research and development cost paid for improvement in production process. So this is R&D related to production. So in that case, where should we consider it? Before cost of production. That is after factory cost, but before cost of production, guys. Okay. Depreciation on office building. This comes under general administration overhead or office overheads. Yes. Then salary paid to general manager. Even this comes under the office overhead or general administrative overhead. Okay. Next, salary and bonus paid to sales and marketing staff. This comes under selling and distribution overhead. Then 10th one, received from sale of scrap and waste generated during production. So this we need to deduct, guys. Please be careful. This is not a cost. This is like revenue, miscellaneous income. This will reduce our cost. So before cost of production, we need to deduct it. Before cost of production. Yes, sir. Next, value of stock as on 1st April 2024. That means all these are opening stocks, people. Opening stock. Opening stock of raw material 5 lakh. Opening stock of work in progress 8 lakh 40. Finished goods is not given, so we need to calculate it. Okay. Then value of stock as on 31st March 2025. That means this is closing stock, people. Yeah. Closing stock of raw material is 1 lakh 10,000. Work in progress is 6 lakh 50,000 and finished goods not given. We need to determine it. Okay, let us do it. Other information are as follows. Raw material purchased were 15,000 kgs at 300 per kg. So if I multiply, I will get cost of material purchased. Freight inward paid at 4% of cost of raw material purchase. Guys, freight inward, please be careful. This is a part of cost raw material consumed. Raw material consumed. So raw material purchase is 15,000 into 300. On that, we need to take 4% of freight inward. We need to add it to purchase cost. Okay. Wages paid to the factory workers was 30% of raw material consumed. Okay. Fine. Once we derive raw material consumed, then we can calculate direct wages. Then closing stock of finished goods was 9,90,000 more than opening stock. Okay. The average stock of finished goods was 11,55,000. Okay. Guys, if I assume opening stock as X, then what would be the closing stock? Closing stock would be X plus 9,90,000. Correct? Because closing stock is 9,90,000 more than opening stock. So if I assume opening stock as X, closing stock would be X plus 9,90,000. And average stock, they have given it as 11,55,000. Easy to calculate opening and closing now, guys. Because what is the formula to calculate average stock? Opening stock plus closing stock whole divided by 2. And they have given that as 11,55,000. 11,55,000. Okay. So we can easily calculate opening stock and closing stock of finished goods, which is given as question mark here. They have not given those values, but we can find out. Okay, sir. Sales during the period 1st April to 31st March, that is 1 crore 10 lakh throughout the year. Okay, easy question, guys. Yes, let us do it. So we are supposed to present this information in the cost sheet format. Guys, I don't want you to do the exact cost sheet, but you need to present the data in the format of cost sheet. Got it? Yes. So what are we supposed to calculate? Direct labor cost, prime cost, factory cost, cost of goods sold, and amount of profit. Okay, sir. We will do one by one. So I have done a working. For a case scenario MCQs. Yes. So here I have presented all the data in the cost sheet format. See guys, in the exam, you might not have so much time to write like this. So should I write it? No. Because for multiple choice question, you guys need not prove your answer. But at least this part, amount part. Okay, even if you're using short forms, maybe the last sheet of the answer booklet you can use to work out this. Okay, so you need not write this data completely, but here I have presented it so that you guys can understand it better. And if you want, you can also make a note of this. Okay, give the heading September 2025 costing question paper, case scenario 1, and you can just make a note of it. And if you want to make a note of it, please pause the video and take down. Yes, once I finish explaining, once I finish the explanation. Yes, sir. Okay, but for your better understanding, I have given completely here the words, sentence, everything. But I know some of you might feel, so should I write so much in the exam? Will I have so much time? Definitely not, guys, because it is a multiple choice question. Whatever they have asked, you need to just get that figures. Clear? But here, just by adding and deducting, you will not be able to get. So it's better to present it in the sequence of cost sheet. But I'm suggesting you, sir, whatever you have written in the particular, should I write all that? No. For example, for example, opening stock of work in progress, I have written fully. You simply write opening stock O bar S WIP. That's all. Okay, then C bar S WIP. Or even without writing all this, sir, I can manage calculating only in the amounts also. Just by writing it, you guys can do it. But somewhere you might get confused later. So at least for namesake, some short forms you can use. For example, here raw material, opening stock of raw material, like that, raw material consumed. Some short forms you at least use it, so that if by chance if you want to cross verify, it would be easy for you. Whatever amounts you have written. Yes, sure, fine. We'll start with opening stock of raw material is given 5 lakh. Then purchase of raw material is given in the adjustments, guys, 15,000 into 300, 45 lakh, and 4% of that is a freight inward. So means freight, 4% of raw material purchased is the freight inward. Okay, means 45 lakh into 4%. Yes, sir. So we'll get 1 lakh 80,000. Then closing stock of raw material will be 1 lakh 10,000, which is already given in the question. This too was given in the adjustments, guys. Accordingly, we have taken. Okay. So what is the raw material consumed? 50 lakh 70,000. And 30% on this will be my direct wages. They have given in the adjustments. So 50 lakh 70,000 into 30% is my direct wages. And this is our first requirement. 15 lakh 21,000. 15 lakh 21,000. Yes, sir. You can see. What is the direct employee cost? 15 lakh 21,000. Yes, sir. We got it. Next, we'll continue. Then direct expenses, royalty paid for production and amount paid for power and fuel is coming under direct expenses. The total is 9,91,600. So we'll get a prime cost of 75,82,600, guys. 75,82,600. So this is the second requirement, right? Yes. 75,82,600. Am I right? Yes, sir. Fine. We'll move forward. Next, factory overhead or work overheads, or we also call it as manufacturing overhead. Repairs and maintenance paid for plant and machinery, take it here. Insurance premium paid for plant and machinery, take it here. Both part of factory overheads. We will get total factory overheads 1,82,520. Then gross works cost we get, add opening WAP and deduct closing WAP. We get works factory cost, or we also call it as net factory cost. Okay. Then research and development cost for improvement in production process. Please be careful. This is R&D related to production process. So take it here. And credit for scrap and waste. That is the sale value or miscellaneous income. Deduct it here. Please be careful. Don't add this. Deduct it. Yes, sir. So we get cost of production 79,52,920. Then opening stock of finished goods and closing stock of finished goods is not given in the question directly. They have given some pattern. Let us calculate it. I have done some working for it. Average stock is equal to opening stock plus closing stock all divided by 2. Yes. So let us assume opening stock is X. So closing stock would be X plus 9,90,000. Okay, sir. All divided by 2. That is equal to average stock how much? Given in the adjustments. 11,55,000. Yes. So multiply this. Take it to the other side. 11,55,000 into 2 will give us 23,10,000 is equal to 2x. X plus x 2x plus 9,90,000. So bring 9,90,000 to the other side and divide it by 2, because that is 2x on the other side, right? Yes. So it will be like this: 23,10,000 minus 9,90,000 whole divided by 2. That will give us x value. So how much is x, guys? 6,60,000, which is nothing but opening stock. Then closing stock would be 6,60,000 plus 9,90,000, which will give us 16,50,000, which is a closing stock. Yes, sir. Both of this is for finished goods, guys. Please be careful. So bring it here. Opening stock of finished goods and closing stock of finished goods. Except this, all other figures are already given in the question, guys. All other figures are already given in the question. For this, they have given some clue or hint. We need to calculate it. Yes, sir. And if you guys remember, we have done all this calculation in the class also. When average stock is given, they would have given some pattern that closing stock and opening stock, how much it is, and or what is the difference between opening stock or closing stock. So we would have calculated it. Okay, fine. Next, cost of goods sold 69,62,920. Okay, sir. And factory cost, I guess they had asked. We will just mark that 79,55,120. The third requirement. I have also given in brackets, guys. It is a requirement like number what? 1, 2, 3, 4, 5, like that. Yeah, we'll just mark this 75, 55, 120. 75, 55, 120. Option B. Yes. Next, we have calculated cost of goods sold. How much is that? 69 lakh 62,920. So 69 lakh 62,920. Option C, guys. Option C. Are you seeing? Hello. See here. Look here. Sit straight. Sit straight. Yes, sir. Yeah. What is the amount of profit? Okay, let us do that. Administrative overhead, or else you can give a heading together, that is marketing overhead, both put together. I have given separately here administrative overhead and selling and distribution overhead. Both of this comes under marketing overheads, guys. Yeah. Depreciation on office building and salary paid to general manager both comes under this. So the total is 6 lakh 16 lakh 25,500. Then we will calculate selling and distribution overhead. You can show the total here, but not mandatory. Okay, selling and distribution overheads, repairs and maintenance paid for sales of his building, salary and bonus paid to sales and marketing staff, then packing cost paid for redistribution of finished goods. That is nothing but secondary packing. Okay, if I add up all these three, 12 lakh 91,000 we will get. Add up. Cost of goods sold plus administrative overhead plus selling and distribution overhead. We will get cost of sales 98 lakh 79,420. I'm talking about amount. Yeah. 98 lakh 79,420. Yes. And they have given the sales in the question, which is 1 lakh, 1 crore 10 lakh. Find out the difference between those. That will give us profit. Balancing figure. 11 lakh 20,580, guys. This is the fifth requirement. 11 lakh 20,580. 11 lakh 20,580. Option D. Option D. Done with all 5 questions. 10 marks in the pocket. Yes, sir. Fine. I will just show you. If you want to make a note of it, you can just pause the video and take down. Yeah, we'll move forward. Case scenario 2. Here also, we'll first read the requirement, people. What is the cost of production and total cost as per absorption costing? Okay. What is the amount of total variable cost? Okay, variable only they're asking. What is the amount of contribution per unit earned at the estimated level of sales? Okay, contribution per unit they're asking. Then what is the break-even sales in rupees? Please be careful, break-even sales can be calculated both in rupees and units, but here they have asked in rupees. What will be the profit if the actual sales are? Okay, they're asking profit if the actual sales are 10% less than the estimated sales. Okay, so some changes are there with respect to the sales 10% if there is any change in sales of 10%. Okay, fine. We'll read the case. JMS Limited, a soft drink company, is intending to introduce a new product, that is herbs infused mineral water, to the market. Annual sales of this new product is estimated at 36,000 units annual. Please be careful, per annum, with a selling price of 75 rupees per unit. So can we calculate sales? Yes, 36,000 into 75. The cost estimates for this new product are as follows. Direct material consumed 9,50,000. Direct labor cost 5,93,750. Manufacturing overhead variable 2,85,000. Manufacturing overheads fixed 1,90,000. General and administrative overhead variable 1,42,500. General and administrative overhead fixed 2,13,750. Selling and distribution overhead variable 80,750. Selling and distribution overhead fixed, which is 64,250. There will be no closing stock of herbs infused mineral water. Okay. On the basis of the above case scenario, you are required to calculate the following. Okay, fine, guys. So here one thing we have to notice, for overheads they have given which is variable, which is fixed and all, because overheads can be either fixed or variable. Whereas for direct material and direct labor, they have not mentioned anything, sir. So what should we consider? Obviously, guys, it will always be variable in nature. Whatever comes below prime cost will always be variable in nature, people. So direct material consumed and direct labor cost, they have not given direct expenses. So these two are variable. Whereas the overheads, partly it is variable, partly it is fixed. Or fine, we will see what are the requirements. First one is, what is the cost of production and total cost as per absorption costing? Important, guys. See, as per absorption costing system, we are supposed to take total manufacturing cost as the cost of production. Whether it is variable or fixed, we don't care. Because under absorption costing, we don't give the breakup of variable and fixed. Manufacturing cost is a manufacturing cost, take it as cost of production. So what all should we take? Direct material consumed, you just calculate in the calculator itself. So this plus this plus this plus this, that's all, guys. First four items, you need to just add it. This will give you cost of production. This will give you cost of production. Okay, sir. Then what is the total cost? Just add up everything. Add all the item. Or else you would have already calculated cost of production. No. If you add up all this four, please be careful. Manufacturing overhead, both variable as well as fixed, both will come under cost of production. Okay, sir. So this is COP. For COP, add the remaining four items. You will get total cost. That's all. Game over. Yeah, I will just show you. I have done a calculation for this. Okay, working even for case scenario 2. This question is actually on marginal and absorption costing, guys. Yeah, first I have taken direct material consumed, direct labor cost, manufacturing overhead, both variable and fixed. We will get 20 lakh 18,750. Then for that we have added all other overheads. That is general and administrative overhead, selling and distribution overhead, both fixed as well as variable. Under absorption costing, we never give a breakup between fixed and variable, guys. That's all. Okay, sir. So these are not like non-manufacturing expenses. So what is the total cost? 25 lakh 20,000. Okay. Let us just choose the option. 20 lakh 18,750, 20 lakh 18,750 and 25 lakh 20,000. Just a minute. Let me mark it in blue. 25 lakh 20, right? Yes. Please be careful. Sometimes there will be two options with the same numbers, especially the first one. Okay, here it is not there, but 20 lakh 18,750, assume it is there in the two options. Then please cross check this part also. Okay, yes. Actually, yo, as soon as you decide this, you can choose the answer because there is no other option with the same amount. Without even calculating this, can we calculate or can we choose the answer, sir? Yes, for this question. But please don't do that because in the exam, I feel somewhere that they might give two options with the same numbers, especially for the beginning one, so that students should get confused on that. Yes, fine. Next, what is the amount of total variable cost? So total variable cost, what should we do? Just add up everything. 1, 2, 3, 4, 5. That's all. All add up all the variable cost. Oh, just a minute. What are the next requirements? We already seen contribution per unit, break-even sales, and profit. Oh, so what do I do is I will prepare under marginal costing this format as income statement. Sales we will take 36,000 into 75, 27 lakh. Then I will add up all the variable cost, all the variable components only. Okay, so which we will get 20 lakh 52,000. This is one of the requirement. Seventh question. Okay, yes, we'll just mark it better. 20 lakh, how much was that? 20 lakh 52,000. Yes, sir. 20 lakh 52,000. Sir, is it mandatory to present like this? See, as they have asked contribution per unit and all. So I have done like this. Even break-even sales and all they have asked. Nothing mandatory. Especially this particulars. Guys, you need not write this and waste your time. If you can do the calculations only, that would be great. Clear. But when you're calculating at the beginning itself, you should know next what you're calculating because you're supposed to calculate contribution per unit. And you know what? How do you calculate contribution? Sir, it is the sales minus variable cost. So I am already ready with contribution. Just divide it by number of units. Got it? Yes. So we have got sales minus variable cost is my contribution 6 lakh 48. That is total. But what is asked in the question is contribution per unit. So what do I do? What is the number of units sold, guys? 36,000. Correct? Huh? Yes. So 6 lakh 48,000 divided by 36,000. We will get 18 rupees. So choose it. 18 is the next one. Okay, so Next, total fixed cost also you just reduce it, 4,68,000 you will get. So profit, actually this profit is not asked in the question. I am just showing it, 1,80,000. Okay. So they have asked break even sales. But for break even sales, we need PV ratio first. Yes. How do we calculate it? Contribution by sales into 100. We are getting 24%. Then fixed cost divided by PV ratio. So we have total fixed cost 4,68,000 divided by PV ratio, which we have got 24%. So 4,68,000 divided by 24%, we will get 19,50,000. So this is one of the requirement. 19,50,000. Yes, sir. Then the last one is profit. But please be careful, guys. They didn't ask this profit. They didn't ask this profit. Please don't choose it. Have they given that in the option 1,80,000? Ah, thank God they are not given. Because if by chance if they have given, students might choose that only. Yeah, but what they're asking is, what will be the profit if the actual sales are 10% less than the estimated sales? Okay, that means our estimated sales is 27 lakh. If that goes 10% low, then what is the amount of profit they're asking? Guys, see, you can do in two ways. One is you do 27 lakh minus 10%, you will get some amount here. And even variable cost will decrease, because when there is a decrease in sales, you are producing less number of units. Obviously, variable cost also will go down, because direct variable cost is directly proportional to production or sales. Got it now, people? Because when sales comes down by 10%, that means we are producing 10% less. So automatically even variable cost will go down. So you need to take minus 10% here, minus 10% here. Or else directly, sir, contribution is already known, no sir, minus 10% you do. That would be better. 6,48,000 minus 10% will give us 5,83,200. 5,83,200. Yes, sir. From that, reduce fixed cost. Sir, will there be any change in fixed cost? No. Increase or decrease in sales will not affect our fixed cost, guys. So I'm taking the same fixed cost. So how much profit do we get? 1,15,200. This is the last requirement. 1,15,200. Hope you understood. Yes, sir. 1,15,200. A. Option A. Option A. Yes, guys. So this is what the working I have done. Actually, especially this one, you need not even present all this data. You can just calculate in the calculator itself. From the numbers given in the question, you can just keep on adding it, guys. You can just calculate this in the calculator. But this, I feel somewhere that you need to take care of presentation and all, because we need contribution, we need to calculate PV ratio, break-even sales and all. Okay, but this data, you need not present it. Roughly calculate the figures and accordingly calculate whatever is the requirement, guys. Hope you got it. Yes. So if by chance, if you guys want to take down this, you can just pause and make a note of it. Yeah, I will move forward. 10 done. Next, 11th one. The cost accountant of AQ Limited has provided the following information for investigation of variances. Material cost variance 4,220 favorable, positive. Material usage variance 18,540 adverse, negative. Material yield variance 8,390 favorable, positive. The management accountant is not able to comment on the reason of the variances as information is not sufficient, and seeks your help to find out the correct amount of material price variance and mix variance. What is the correct amount of material price variance and mix variance? They're asking. Guys, see, if you try to calculate here the price variance and mix variance through the formula, you will not be able to get it. It is just like a balancing figure. Hope you guys remember, after solving or after calculating the variances, whether it is material or labor or even overhead, we used to do reconciliation. We used to do reconciliation for all the questions. Yes, I will just show you. In the concept book, I had given chart like this, no? Yes, we used to do the reconciliation. Yes. So material cost variance is equal to usage and price. Whereas usage is subdivided into mix and yield. Yes, we need to do just a reconciliation like this, guys. Got it? Yes. Simplest question on actually standard costing. Okay. I have done it here. I am showing it here. Material cost variance 4,220 favorable is given. Divide that into material price variance and usage variance. So usage is given 18,540 adverse. Please be careful, guys. One is favorable, one is adverse. So if I want to find out balancing figure, what should I do? Add up both. Add up both. So you will get 22,760 material price variance, which is a balancing figure. Got it? Yes. And if you want to again cross check it, you do like this. 22,760 minus 18,540 you do. This is positive, this is negative. No, that is why. 22,760 minus 18,540, you will get 4,220. Hope you understood. Yes, sir. So now usage variance is subdivided into mix and yield variance. Yield variance is given as 8,390 favorable. Yes, sir. Now, one is adverse, one is favorable. So what should I do? Add up both, guys. Add up both. You will get the balancing figure. 26,930. 26,930. Just pause for a moment. Cross check. 26,930 is an adverse. This is favorable. So what do you do? 26,930 minus 8,390. You will get adverse 18,540. Got it? Please be careful with the signs, guys. Adverse means negative, favorable means positive. So what is the answer we have got? 22,760 and 26,930. Yes, sir. We'll mark it. 22,760. Yes, price and material mix variance. 26,930 adverse. Yes, sir. D is the answer. D is the answer. Hope you guys got it. It is just about reconciliation, guys, not calculating. Because some students might think, sir, data is not given. Price variance means I want standard price, actual price. We don't have that data. Even, sir, actual quantity is not given. Where same way, material mix variance. Sir, we don't have revised standard quantity and all. How do we calculate it, sir? Guys, don't worry. The question is not by applying the formulas. It is just about reconciliation. Yeah, chal, fine. We'll move forward. Question number 12. A company produces two joint products X and Y using the same type of material. The cost data to produce 200 units of product X and 400 units of product Y are as under. So cost data they have given. Material 80,000, labor 40,000 and fixed overheads 20,000. So that means, can I call this both as variable? Yes. 1,20,000 is a variable cost and 20,000 is a fixed cost, guys. Material and labor, assuming it is direct, okay? This will always be direct. They are variable, okay? Yes. Sales of product X was 200 units at 350 rupees per unit, and product Y was 400 units at 250 per unit. Okay, this is the sales value of joint products. Using the contribution margin method, in what ratio of fixed overheads will be apportioned between product X and product Y? Guys, all these are part of joint cost. We totally have a joint cost of how much? 80,000, 40,000 and 20,000. So it is coming to 1,40,000. But in that, variable is 120 and fixed is 20, sir. So under contribution margin method, guys, we will apportion the variable cost in what ratio? In the ratio of output. That is 200 is to 400. Whereas fixed overheads or fixed cost, we will apportion in the ratio of contribution ratio. That is in the ratio of contribution. How do we get contribution? Sir, sale value minus variable cost. We get contribution. We will use that as the ratio to apportion the fixed cost between joint products. Got it? Yes. First, we will take this 1,20,000. We will split it between product X and Y in 200 and 400 ratio, guys. I have done it here. You can see variable cost for X, how much we will apportion? 1,20,000 into 200 by 600. We will get 40,000. And for Y, balancing figure you can keep, or else you can show the calculation. 1,20,000 into 400 by 600, which is 80,000. 120. 1,20,000. Now let us calculate the contribution for X and Y. Okay, how do we calculate sales first? How do we calculate sales, sir? 200 units into 350 for X and for Y, 400 units into 250. Okay, so we'll get 70,000 and 1 lakh sale value for X and Y. Then variable cost, whatever we have got here, 40,000 and 80,000, reduce it. We will get contribution 30,000 and 20,000. So we'll simplify it to 3:2. So fixed overhead will be apportioned between the joint products in the ratio of contribution, which is 3:2 people, which is 3:2. Yes. So the answer is option B. For 12th question, the answer is option B. Yes. Yeah, I have done all these calculations already here so that we can save time when I'm explaining, or else the length of the video will become too much. Yes. The management of Y Limited has provided the following information. Opening stock of raw material is 25,000. Closing stock of raw material is 75,000. Can we calculate average stock? Yes. Add up both, divided by 2. 25,000 plus 75,000, we will get 1 lakh divided by 2. Average stock is 50,000. Okay, so raw material consumed during the year 7 lakh 50,000. What will be the number of days for which average inventory of raw material is to be held by Y Limited? Assume 360 days in a year. Guys, they are asking inventory turnover ratio in days. In days. But we need to calculate first inventory turnover ratio. Yes. So material consumed is already given. You need not calculate it separately. So material consumed is given divided by average stock, guys. Cost of raw material consumed divided by average stock. We will get inventory turnover ratio, which is 15 times. Then inventory turnover ratio in days, which is 360 days in a year they have given, divided by 15. Whatever 15 we have got here now, use it as a denominator. We'll get 24 days. So what will be the number of days for which average inventory of raw material is to be held by Y Limited is 24 days, guys. So C is our answer. C is our answer. Yes, sir. Fine. We'll move to question number 14 on process costing. A product passes through process 1 and process 2. Materials issued to process 1 amounted to 1,60,000, wages 70,000 and manufacturing overhead 58,000 were charged to process 1. So all this should be debited in the process account, guys. Cost. Anticipated normal loss was 6% of the input, but they have still not given the inputs. 9,200 units of output were produced and transferred to process 2. There was no opening stock. Okay, the input of raw material issued to process 1 was 10,000 units. Input. Scrap as a realizable value of 10 rupees per unit. What is the value of units transferred to process 2? That is output. So we need not do anything with respect to process 2, guys, only process 1. But whatever is the cost of output for a process 1, right, we need to calculate that. Yes, we can do this calculation by preparing the process account, guys, but that will be time consuming. We can also do it directly. I am showing it here. First, find out what is the normal loss. So total input is 10,000 units. On that 6%, we'll get 600 units. 600 units, normal loss units. Okay. So what is the total cost, guys? 1,60,000 plus 70 plus 58. This is our total cost. Minus scrap value of normal loss units. 600 into 10. 600 into 10. Okay. Then whole divided by total input minus normal loss units. Total inputs minus normal loss units. We will get 9,400. So 2,82,000 is the cost divided by 9,400. If I do this, we will get cost per unit. Got it? Into what is our output? 9,200. So multiply that. We will get cost of output 2,76,000, guys. 2,76,000. See, I have done it in a better way where you can save time. If you want to do it by preparing the process account also, you can do it. But please be careful. There will be an abnormal loss. How much abnormal loss? 10,000 minus 600. So 9,400. But out of that output is only 9,200. That means abnormal loss would be 200. 200 units. But they have not asked anything with respect to abnormal loss. Yeah, but if at all, if you want to tally the units column, there will be abnormal loss of 200 units, guys. And if in case, in this question, they have asked what is the value of output. Let me just mark it once, 2,76,000, right? Option A. Sir, what in this question if they had asked value of abnormal loss? Then instead of multiplying with 9,200, we will just multiply with 200. We'll get value of abnormal loss. That's all, guys. Similar calculation. Last question under MCQ. PMP Limited manufacture a single product and observes the production overhead at a predetermined rate of 20 rupees per machine hour, not per unit, per machine hour. Means for each and every hour a machine works, we observe 20 rupees. We observe 20 rupees. So it is a predetermined rate, guys. So whenever a company or a company, here it is company only, yeah. Whenever a company is following a predetermined overhead rate to observe the overheads, at the end of the year, they will have either under absorption or over absorption, guys. Because definitely there will be a difference between overhead observed and overhead incurred. Correct? Yes. So at the end of the financial year 24-25, it has been found that actual production overheads incurred was 12 lakh. Okay, actual overhead incurred. It included 80,000 on account of return of obsolete store and 30,000 being wages paid for strike period under an award. Guys, see. So this is like extraordinary item, or we can also consider this as a loss. Okay, that is 80,000 plus 30,000. We get 1,10,000. So was it expected in the ordinary course of business? No, sir. So while setting the predetermined overhead rate, will we consider all these people? No, sir. How will we know that? While we are because predetermined overhead rate will be fixed even before the period start. So we will not have any idea about this at the beginning. Yes, sir. So from the actual overhead incurred, should we deduct both of this? Yes, because these are similar to like extraordinary item or it is a loss which was not anticipated. So what should we do? Deduct it. So actual fixed overhead is 12 lakh. From that we are reducing the extraordinary item or overhead or loss due to abnormal reason. We can consider it as overhead or even loss due to abnormal reasons. 1 lakh 10,000. Okay, sir. So we'll get 10 lakh 90,000. Oh, yeah. Next, the actual machine hours worked during the period was 50,000 hours. So for each and every hour machine work, we will observe how much people? 20 rupees. So if I ask you how much overhead is observed, 50,000 into 20. So 50,000 into 20 is overhead observed 10 lakh. So overhead incurred is 10 lakh 90, observed is 10 lakh. That means there is an under absorption of overhead of how much? 90,000. But we will see what they have asked. The production and sales was 20,000 and 18,000 units respectively. What will be the amount of under absorbed production overhead to be charged to cost of sales? Cost of sales means how many units we have sold people? Only 18,000. So we need to see how much of under absorption overhead is charged for 18,000 units. Sir, what about the remaining 2,000 units? It is closing stock. That will be charged to the cost of closing stock, but they have not asked that in the question, guys. Okay, fine. I will explain the working here. I have done the calculation. Actual factory overhead 12 lakh. From that, the losses due to abnormal reason or extraordinary items, just remove it. You will get 10 lakh 90,000. From that, you reduce what is the actual overhead absorbed. 50,000 hours the machine has worked into for each hour how much we absorb people predetermined overhead rate 20 rupees. So we'll get 10 lakh. So under absorption of overhead is 90,000. Okay. Now, assuming entire thing is due to normal reason because question is silent, we'll assume it is due to normal reason. Under absorption overhead is due to normal reasons. So we'll calculate supplementary rate. SR stands for supplementary rate. So 90,000 divided by total production, guys, 20,000 units. So we get supplementary rate 4.5. How much are we charging to cost of sales? It is 4.5 into units sold, 18,000, 81,000. Sir, what about the remaining 9,000? Remaining 9,000 is for the 2,000 units, which is a closing stock, guys. So 9,000, that is 90,000 minus 91. Remaining 9,000, we have to charge it to the cost of closing stock. Cost of closing stock. Why so? Because out of 20,000 units produced, only 18,000 units are sold, guys. That means remaining 2,000 will be lying as a closing stock. Hope you guys got it. Clear? But anyway, that is not asked in the question. But I just explained for your better understanding. So 81,000 is our answer. Please be careful. Students in a hurry, they may give 90,000 as an answer. 90,000 is there in the option. Please be careful with it, people. So answer is 81,000. Yes, similar question we have done in the class. Yes, guys. So this is all about the multiple choice question from September 2025 question paper. Guys, easiest question paper. Student, whoever has written the exams in September, they are the luckiest I can consider. Now you guys tell me, if you are answering this question paper, how much marks will you get in MCQs? 30 out of 30? Come on, tell me, 30 out of 30, ah? Yes, sir. Even if by chance here and there, one or two, if you go wrong, guys, easily you can get 26 or 28 marks, guys. You should get 30, but assuming here and there small mistake you have committed in one or two, still you will be able to get 26 or 28 marks. Yes, guys. So this is all about the multiple choice part. Yes, now we will discuss part 2, which are descriptive questions. As usual, guys, question number 1 is compulsory, and out of the remaining 5 questions, you need to answer any 4. And working note should form part of the answer. Yes. Question number 1 has 3 sub questions A, B, and C. A and B is for 5 marks each, and C is for 4 marks, guys. Total is 14 marks. Yeah. First question is compulsory, so please be careful. Yeah, we will start with A. Sub question A. RST Limited manufacture a standard line of office desks. The company operates with a monthly manufacturing capacity of 5,000 units. That is the maximum capacity per month. The following data relates to the output and cost of 2 consecutive months of production. Okay, they have given the data for 2 consecutive months, that is April and May. Unit manufactured is 3000 for April and for May it is 3800. Direct material is 15 lakh and 19 lakh. Direct wages 6 lakh, 7 lakh 60. Then factory overheads 3 lakh 50 and 4 lakh 30. Okay, fine. So try to identify whether they are variable or fixed or semi-variable, guys. See, direct material and direct wages, which is a part of prime cost, will always be variable. But you can cross-confirm once. How is that, sir? Variable cost per unit will always remain constant, guys. Whereas the total variable cost will vary with the production. Correct? Yes. So you divide 15 lakh by 3000. You will get 500 per unit. Same thing you do for May also. 19 lakh divided by 3800. You will get same 500 per unit. That means variable cost per unit is same. Yes, sir. So direct material, we can consider it as variable. Coming to wages, direct wages. So for April, 6 lakh divided by 3000 you do. You will get 200 per month. Same thing you check for May, 7 lakh 60,000 divided by 3800. You will get same 200 per unit, guys. So can we consider it as variable cost? Yes, sir. Then coming to factory overheads, guys, overheads can be either variable or fixed or combination of both. So here it is not fixed because the total is varying, because total fixed cost will always remain constant, guys. Yes. So here we can consider it is not a fixed cost. Sir, is it variable? Check it. 3,50,000 divided by 3,000. Then 4,30,000 divided by 3,800 you do. Are you getting per unit cost same? No, it is not same. So it is not variable also. It is not fixed also. Then what, sir? It is semi-variable cost, guys, or semi-fixed cost. So it has both the portions. So when it is a semi-variable cost, can we find out how much is variable portion, how much is fixed portion? Yes. So what is the formula to calculate variable cost per unit? Change in total cost divided by change in output, guys. So change in total cost we will get 4 lakh 30 minus 3 lakh 50, 80,000 divided by 3,800 minus 3,000. So it is simply like this. Variable cost per unit is 80,000 divided by 800, guys. You will get 100 rupees per unit. This is variable portion. So take any particular month. Let us take April. From April, take total factory overheads. Remove the variable portion. How much will be the variable portion, sir? 3,000 into 100 rupees per unit. We will get 3 lakh. So remaining is how much? 3 lakh 50 minus 3 lakh variable. We will get 50,000. That is nothing but fixed factory overheads. So fixed factory overheads is 50,000, guys. Yes, sir. Fine. We will see the solution also. I have just explained the steps here. In the month of June, the number of units manufactured will be 4,000 units. However, the prices of direct material will increase by 10%. Okay, whatever is there, 500, it will increase by 10%. So it becomes 550. And direct wages will increase by 15%. So 200 will increase by 15%, guys. So it becomes 230. 230. Okay, per unit. I am talking about per unit. The fixed factory overheads will reduce by 20%. Okay, fixed factory overheads we got 50,000, right? Yes, that will reduce by 20%, it seems. The company desires to earn a profit of 11% on selling price. Please be careful. Calculate the selling price per desk, that is per unit. So totally how many desks are manufactured in a month? 4,000. In the month of June, when the monthly output is 4,000 units, so this becomes the denominator. Once we calculate total sales, divide it by 4,000, guys. That's all. Fine. We will look into the solution. Yes. So direct material, they are shown here per unit calculation. 15 lakh divided by 3,000. I have already explained that. So then into 4,000, that is the current month production for June, into 110. Into 110 is nothing but the increase, guys, because there is a 10% increase. Yes, sir. Then direct labor, 6 lakh divided by 3,000. First, they have calculated per unit how much. Into how many units, how many desks are manufactured in June? 4,000. And it has increased by 15%. So they have done into 115. Sir, instead of doing into 115, can we do in plus 15% also? Yes, here also you can do plus 10%. You will get same. Or else alternatively, what you can do is, we have found out here per unit, right? Using April month data or May month data. It will give same per unit data, per unit cost. Okay. So we have got 500 per unit, right? For that you add 10%, you will get 550. Multiply that with units. 550 into 4,000. You will get same amount. Same way. Variable direct wages per unit is how much? In the April or May month, 200. Now it will increase by 15%. That means increased cost is 230 per unit. Multiply that with 4,000 units. You will get same amounts, guys. Alternatively, you can do like this also. Got it? Yes. Fine. So here they have taken 3,000, 3,000, and these figures are actually for April. April data they have taken. Yes, fine. Next, coming to factory overheads, we need to find out what is variable portion, what is fixed portion. So they have given the working here. Variable factory overhead per unit is change in total cost divided by change in output, guys. So that is nothing but 80,000 divided by 800. We will get 100 rupees per unit. This is variable portion. So let us take any particular month, that is April only they have taken. 3,50,000 is the total factory overhead. From that reduce variable portion. This is variable portion, guys. Variable cost. Okay, that is 3,000 units are produced. For each unit, how much? 100 rupees, which we have got here. Okay, yes. So 3,000 into 100, we will get 3 lakh. So 3 lakh minus 3 lakh 50. How much is our fixed factory overheads? 50,000. Sir, why they have taken April only? Can I take May? Even if you take May, it will be same, guys. So here instead of 3,000, it will be 3,800. Okay, but here also the figures will be different. So if you take May, I will tell you, you need to do 4,30,000 minus 3,800 into 100. You will get same 50,000. Same 50,000, guys. Is that clear? Yes, we have done all this in the class already. Yes, so fine. Chalo. Okay. So variable. Now for June month, 4,000 into 100. Please be careful. There is no change in the variable portion of the factory overheads, guys. Yes, please be careful. Take into 100 itself. That's all. We will get 4 lakh. Whereas fixed will decrease by 20%. So you can take 50,000 minus 20% or else into 80%. One and the same. 50,000 into 80%, where we are considering 20% decrease, or else you can also do 50,000 minus 20%, which will give us 40,000. So the total cost is 35 lakh 60,000. Yes, sir. Then profit is not given, but it is told 11% of sales. So can we convert the profit percentage? Yes. So profit percentage on cost would be how much, guys? 11 by 89. You can see here. We can calculate profit like this. So the total cost is 35 lakh 60,000 into 11 by 89. 11 by 89, how do we get it? Guys, we are assuming sales as 100. So profit is 11% of that. So 11 rupees. Whereas the cost would be balancing figure. That is 100 minus 11, 89. Got it? Yes. So the profit percentage on cost would be 11 by 89. So the total cost is 35 lakh 60,000 into 11 by 89 will give us 4 lakh 40,000. So add up both, you will get total sales. Or else how they have done here like this is total cost we have got, and we know that sales is how much? Sorry, total cost is 89% of sales because profit is 11%, right? Yes. So total cost divided by 89% they have done. We got sales, and profit now is a balancing figure. That is sales minus total cost. They have done like that. We can also calculate like this. How I have shown in green color, guys. Is that clear? Both will give you same answer. And I repeat, how did they get that 89%? Simple, guys. Profit percentage on sales is 11%. So how much is cost? Remaining 89%. So they have divided total cost in rupees divided by total cost in percentage. That is 89%. Okay. So number of units or desk in June is 4,000. So divide each other now. That is selling price, that is sales divided by number of units to derive selling price per unit. You can also give a notations. Just a minute. This is like P, this is Q. So this would be P by Q. That's all. Selling price per unit. This is what is asked in the question, guys. Yes. Simple question. Next, B. The following information relates to two workers, Ajoy and Bijoy, not Ajay, it is Ajoy, J-O. Okay. Who are engaged in producing the same product by using the same material. Okay. So they are producing same output using same raw material, guys. Okay. Time allowed to make the product is 40 hours. Actual time taken to complete the product is 32 hours and for 30 hours. So can I write time saved here? Time saved by Ajoy is 8 hours. By Bijoy, it is 10 hours. Time saved. Okay. Normal wage rate, same for both, but how much they are not given. Bonus payment plan, also 50% plan for Ajoy, whereas Rowan plan for Bijoy. Okay. That is only for bonus. Whereas basic wages is same for both. Factory overhead recovered 360 rupees per hour for actual time taken by each worker. Okay, that means 360 into 32, 360 into 30, guys. The actual time taken is given here, no? Yes. That is factory overhead. Next, factory cost for the product for each worker 1,24,800 and 1,24,800. Same. Factory cost is same for both. Okay, sir. Required. Compute the normal hourly wage rate. Okay, it is same for both, but how much we need to calculate? Compute the cost of material used. Even that is same for both, but how much is the question mark? Yes, 5 marks question. Yes, guys. So similar question actually we already done, including administrative overhead. Our question was little lengthy, including administrative overhead. It was there. We used to form an equation and solve it. Yes, sir. But here administrative overhead is not there. Only. So we need to form an equation, guys. Direct material, direct wages plus factory overhead is equal to what? Factory cost. And this is given in the question. We are supposed to calculate this and this. Got it? Yes, sir. So they have assumed let X be the cost of material and Y be the normal rate of wages per hour. Okay. Material is X and Y is the normal rate of wages per hour. Okay. So factory cost of worker Ajoy. I have just written the equation here. Direct material plus direct wages plus factory overhead is equal to factory cost, guys. We need to form an equation for it. So material cost we have assumed to be X. Wages, that is basic wages, would be time taken into hourly rate. Time taken we know for Ajoy is 32 hours. Into hourly rate we don't know. We have assumed it to be Y. Okay, sir. Then coming to bonus. So they are following all say plan. 50% bonus will be given for time saved. So time saved is standard hours or time allowed minus actual time taken, guys. So it is 40 time allowed minus time taken is 32. So time saved is 8 hours into rate we don't know. Into rate we don't know. That is Y. We are considering it as Y. So 8 into 50% means 4 we will get. So 4Y, yeah? Yes, sir. It is 4Y. Please be careful. R we have assumed to be Y. Okay? Yes. So bonus is 4Y. Basic wages is 32Y. Okay, sir. So total if I calculate, it would be 36Y, guys. 36Y. Okay. And overhead they have told 360 rupees per each hour worked. So the worker has worked for 32 hours into 360. So we'll get 11,520, guys. 11,520. Yes, sir. Next. So let us form an equation. Okay, now factory cost. Add up all. X plus 36Y plus 11,520 is equal to 1,24,800, guys. Okay, sir. So can we take 11,520 to the other side? Yes. So if 11,520 goes to the other side, it becomes minus. You can see. So equation will be, I repeat the equation. X plus 36Y plus 11,520 is equal to 1,24,800. This is the equation. So this, if I take to the other side, it becomes minus. So it would be X plus 36Y is equal to 1,24,800 minus 11,520. Yes, we get 1,13,280, which we call it as equation 1. Equation 1. And please be careful, guys. This is already given in the question. Factory cost. Okay. Now let us do for Bijoy. But Bijoy, guys, everything remains same, but the scheme is different. For bonus, please be careful. Material cost is X. Wages is, we are assuming Y for each hour pay. So how much time he has taken? 30. So 30 into Y, 30Y. Okay, coming to bonus, we need to calculate, we need to apply the formula. Okay, so this is time taken divided by time allowed into time saved into time rate, which is Y. Instead of this, sir, can we take time saved here and time taken here? Yeah, you can interchange. We'll get same thing. Okay, sir. This is only the bonus part. Please be careful. Bonus is done separately here. So we are getting 7.5Y. That is bonus element. If I add up both, we will get total wages 37.5Y, guys. Yes, sir. Next, overheads is 360 rupees per hour for each hour worked. So how many hours is worked, guys? 30 hours. So 30 into 360 rupees will give us 10,800. Now add up all this, we will get factory cost. So that is x plus 37y plus the 10,800 is equal to 1,24,800, which is already given in the question. So can we take this to the other side? It becomes minus. So the equation, the final equation would be x plus 37.5y is equal to 124,800 minus 10,800. This will give us 1,14,000. That is equation 2. Now let us solve it. I have just written here. They have done directly, but I will write it here. So you can see this is the second equation. I am taking it first. X plus 37y is equal to 1,14,000. Okay, then first equation is here, this part. Okay, this one. Yes, I'm taking it. So x plus 36y is equal to 1,13,280. Yes, sir. So subtract equation 1 from equation 2, guys. So what do we get? Okay, we are minusing. So x get cancelled, plus x minus x. Okay, then 37.5 minus 36, we will get 1.5y is equal to 720, guys. So now take 1.5 to the other side. It becomes denominator. So y is equal to 720 divided by 1.5, which is 480 per hour. The labor rate is 480 rupees, guys. 480. Yeah, they have given, but here they have done directly. That is why I just explain the steps here. Okay. Yes. Chalo. So once we get 480, take any one equation and replace the value of y. Okay, so x plus 36, that is, I guess, equation number 1. Yeah, x plus 36 y it was. So y now replace with 480 will give us 1,13,280. So that will help us to get the y x value. X value. Yes, sir. How is it? 36 into 480 you do. You take it to the other side, it becomes minus. So 1,13,280 minus 17,280 will give us x is equal to 36,000. X is nothing but material cost, guys. Material cost. Actually, you can stop it here itself because this is the requirement of the question. Just a minute. They have asked what in the question? Compute the normal hourly rate. We have got it already. Compute the cost of material use. That's all. They have not asked to present any statement, but here they have actually presented a statement. This will consume time, guys, but specifically is it asked in the question? No, they are not asked it. Whatever we already used, we used x, y and all. Now they are presenting with numbers. That's all. Okay, material cost 96,000 each. Direct wages 32,000. Sorry, 32 hours into 480, and here 30 hours into 480. In simple, hours taken or hours worked into hourly rate. Okay, sir. Then bonus, we had already got 6, I guess, 1 second, 6, 4y, and here it is 7.5y. So just multiply 4 into what is the y we have got? 480. So 4 into 480 and 7.5 into 480. That's all. We'll get bonus. And can we show total wages also? Yes, you can show. Yeah, next factory overhead, which we already got number. Factory cost is given in the question. That's all, guys. Is that clear? So this you can do it only for cross verification, but you can just check it in the calculator, guys, because in the question they have not asked you to show the statement of factory cost. Clear? Yes. Once you calculate the hourly rate and material cost, you can stop there only. But to cross confirm your answer, you can just check it in your calculator itself. That's all. Yeah. So sub question C, guys. MD Limited has furnished the following information for the month of August 2025. Standard variable overhead rate is 3 rupees per hour. Standard hours per unit of production is 5 hours. Actual output is 15,560 units. Okay, here itself we can calculate. Standard hours for actual output 5 into 15,560. 5 into 15,560. We get 77,800. I will just write it here. 1 second. 77,800. What is this? Standard hours for actual output, guys. Standard hours for actual output. Yes, sir. Fine. Next, standard data should always be for actual output, guys. Yeah. Next, variable overhead efficiency variance, 11,400 favorable. What is the formula to calculate this, guys? You will be knowing it. Okay, I will quickly go it. I will just tell efficiency, standard hours minus actual hours into standard rate. Correct? Yes, sir. Variable overhead expenditure variance. So what is the formula, guys? Standard rate minus actual rate into actual hours. Yes, sir. Standard fixed overhead rate. Okay, this is 37,000 adverse. Please be careful. Standard fixed overhead rate 2 rupees per hour. Actual fixed overheads 1,85,000 is given. Okay. You are required to calculate actual hours, actual variable overhead rate per hour, variable overhead cost variance, fixed overhead cost variance. Okay. First three data we can calculate by using whatever information is given with respect to variable variances. The last one is fixed part. Fixed overhead cost variance is asked. Okay, chalo, easy itself. Yeah. First, we need to calculate actual hours. So try to collect from the given information. In which formula do we use actual hours? Efficiency variance is given in the question, guys. If you check, yes, sir. So in the efficiency variance, do we use actual hours? Yes. What is the formula? Standard hours per actual output minus actual hours worked into standard variable rate per hour. Yes, sir. So standard hours we can calculate. It is given. I already shown you 77,800 we will get. Okay, actual hours we don't know. Keep it as it is. Into standard rate is given in the question, guys. It is 3 rupees. It is 3 rupees. Yes. Now divide. Take this to the other side. It would be 11,400. That is this figure divided by 3. It is 3,800. Please be careful. It is favorable means positive. Yeah, we will get 3,800. So now take 3,800 to the other side. It becomes minus. Okay, and this if you take to the other side, it becomes plus. Yes, sir. So 77,800 minus 3,800, you will get 74,000. That is the actual ask worth. Hope you understood. I repeat the steps. Okay, here directly they are done. Guys, see, standard hours we will get 77,800 minus actual hours into 3. So into 3 is there. We will take it to the other side. So it becomes denominator. So 11,400 divided by 3 will give us 3,800 positive figure because it is favorable. Then take it to the other side, it becomes minus. Actual hours you take to the other side, it becomes plus. So actual hours is equal to 77,800 minus 3,800. It will give us 74,000. Yes. Next, we are supposed to calculate actual variable overhead rate per hour. Okay. How they have done? Variable overhead expenditure variance, which is nothing but standard overhead for actual hours minus actual variable overhead. So standard overhead for actual hours means how much, guys? So take actual overhead, sorry, actual hours into standard rate is 3. Okay. 74,000 is actual hours. So standard overhead for actual hours. Yes. So actual hours is 74,000 into 3. Then actual overhead incurred, we need to calculate it. Yes. That is equal to, they have already given the actual overhead expenditure variance. How much? 37,000 adverse. Adverse means negative, people. Okay, sir. Fine. So 74,000 into 3, you will get 2,22,000. So if this goes to the other side, it becomes plus, and take this also to the other side, it also becomes plus. So actual variable overhead is equal to 2,59,000. How did we get 2,59,000? Sir, 74,000 into 3, we get 2,22,000 plus 37,000 you will get 2,59,000. That is actual variable overhead. But they have asked per hour. Per hour. So 2,59,000 divided by actual hours you do. So they have done it here. 2,59,000 divided by 74,000 hours. You will get 3.5 rupees per hour. If you are comfortable doing like this, you can do. If not, as usual, apply our formula also. You will get same. I have shown it here. You can see. Sir, what is the formula for expenditure variance? Very similar to labor rate variance. Standard rate minus actual rate into actual hours. Correct? Yes, sir. That is equal to 37,000 adverse. They have given in the question. Okay. Standard rate we know 3 rupees. Actual rate we don't know. We will keep it as it is. Into actual hours 74,000 is equal to 37,000 adverse. Okay, sir. So take this to the other side. 74,000 will become a denominator. So 37,000 divided by 74,000, guys. So it is 0.5 negative. 0.5 negative. Okay. As it is negative, let us take it to the other side. It becomes plus. So actual rate also let it come to the opposite side. It becomes plus. So actual rate is equal to 3 plus 0.5. That will give us actual rate 3.5. Hope you understood. You can do like this also. However, you guys are comfortable. You can either follow like this or like this. Okay, now here what they have done is instead of taking like this separately, they have straight away done standard overhead for actual hours. So they have straight away multiplied this. That's all. Then they have also taken actual rate into actual hours, which is nothing but actual variable overhead. Actual variable overhead. It is nothing but actual rate into actual hours, guys. That's all. Yeah, whichever first strike to your mind, you can go with that way. Next, variable overhead cost variance they have asked. It is simply add up both efficiency variance and expenditure variance. Add up both. We already know both of this, no? Yes. 11,400 favorable plus 37,000 adverse. Please be careful. You need to do net. So that will give us 25,600 adverse people. Please be careful when one is favorable, one is adverse. You need to do net, guys. Or else for this also. This is the simplest way to get the answer, best way. But sir, can I use the formula also? Yes. This will be little lengthy, but I'm just showing you. Variable overhead cost variance is nothing but standard hours into standard rate minus actual hours into actual rate. In simple, standard overhead minus actual, guys. Yes, sir. So standard hours is 77,800 into 3 minus actual hours 74,000 into actual rate, which we already got 3.5. Take it. Got it? Yes. So 2,33,400 minus 2,59,000. You will get 25,600 adverse people. Got it? Yes. So this is, we also call it as observed overhead minus actual overhead. Observed minus actual. Yes. But this will be little lengthy. When you already know both, you can just add up both. You can just try to reconcile it. Yeah, fine. Next, fixed overhead cost variance. It is nothing but observed fixed overhead minus actual fixed overheads, guys. So observed is nothing but standard hours into standard rate. Standard hour we already know 77,800 and it remains same for variable as well as fixed. Standard hours will remain same. It will not change. Yes. Into standard rate is 2 rupees per hour minus actual fixed overhead. They only given the question, guys, 1,85,000. Okay, now yes, sir. So you'll get 29,400 adverse fixed overhead cost variance, which is nothing but observed fixed overhead minus actual fixed overhead. Yes, sir. Done with question number 1, guys. Let us move to question number 2. Compulsory question done. Yeah, sub question A. XYZ Highway Toll Plaza Limited operates a toll plaza on a 100-kilometer highway and collects tolls from vehicles passing through the plaza. The company has estimated that every year, okay, please be careful, a total of 60 lakh vehicles, I guess rupees should not come here. Yeah. A total of 60 lakh vehicles, 60% passenger vehicles, 15% heavy commercial vehicles, and rest are buses. Rest are buses means 60 plus 15. You will get 75. Rest is 25% bus cars. We'll be using the highway during 15 years toll collection tenure. Okay, this is the total tenure of the toll. Toll operating and maintenance cost for the month, 30 days in a month are as follows. Okay, which are those? Personal cost, salaries, collection personnel, number of shift 3, number of toll collection personnel per shift 10, salary per day per person 800. Just a minute, we will see what is the requirement, because once we understand, as question is lengthy, better to read requirement first. Calculate the total cost per month, per month for toll plaza. And the other one is, the company aims to achieve a 20% profit margin over total takings. Total takings is nothing but the freight charges, guys. Okay, here it will be not freight, toll charges. Yeah. Calculate the toll rate to be charged for each type of vehicle. Assume a 360 days a year. Okay, fine. Okay, fine. Sure. So we are supposed to calculate cost per month, people. So accordingly, in a month, how many days are there? 30 days are there. Okay. So collection personnel, number of shift is 3, number of toll collection personnel per shift is 10, salary per day per person is 800. Okay, so what are we supposed to do? 3 into 10 into 800 into 30, because this is per day per person. Please be careful. Yes, because in a month there are 30 days. Then coming to supervisor, number of shift 2, number of supervisors per shift is 3, salary per day per supervisor is 1200. So in order to calculate per month, how much? What should we do? 2 into 3 into 1200 into 30. Yes, please be careful, guys. This is not given per month. It is given per day. Yes. Security personnel. Shift is 3. Number of security personnel is 10 per shift. Salary per day per security person 500. So same story. 3 into 10 into 500 into 30, guys. Toll plaza manager, number of shift 2, number of managers per shift is 1, salary per day per manager 2000. Okay, again same story, per day per manager. Please be careful with this. Here everywhere it is given per day, per day, per day. But sometimes for one person or for one category of person they may give per month also. Okay, to confuse students. Yeah. So what are we supposed to do now? 2 into 1 into 2000 into 30, guys. Okay, easy calculation, just multiplication. Other annual cost. Please be careful, guys. They have given annual, but we are supposed to do calculation for month. Okay. Electricity 14 lakh 40,000, telephone and communication cost 2 lakh 40, maintenance cost 60 lakh, depreciation and amortization 12 crore. Okay. Insurance and safety cost 15 lakh, interest expense incurred for servicing term loans is 7 crore 83 lakh 48,000. Okay. What should we do for all this? Divide it by 12, guys. That's all. Divide it by 12. Got it? Yes. The toll rate per vehicle is to be fixed as under heavy commercial vehicles, 500% of toll rate for passenger vehicle. Okay. So if passenger vehicle is equal to 1, then commercial vehicle will be 5. Okay, let us assume this as X. So this will be 5X. Okay, then bus would be 4X. You can see 400 of toll rate for passenger vehicle. So using this, we can do that equivalent calculations and all, guys. Okay. Required. Calculate the total cost per month for toll plaza. Okay, this is easy, guys. Everything they already given. We need to take care of it. Here we need to multiply to calculate what is the cost per month. That is salary part. Whereas here we need to divide it by 12. Just add up everything. That's all. Game over. First part is done. Next, second part is interesting because we need to do equivalent calculation and all. The company aims to achieve a 20% profit margin over total takings. Total takings is nothing but toll charges here. Calculate the toll rate to be charged for each type of vehicle, guys. Each type of vehicle they are asking. Please be careful. There are 3 categories of vehicle. Yes, sir. Fine, guys. So we will do it. So here they are told totally 60 lakh vehicles will pass the toll in a year. So per month, how much people? 5 lakh. Yes, I have just done divided by 12. That's all. 5 lakh. Got it? Yeah. Sure. We'll see the answer. Cost statement of cost, that is per month. We are done. Personal cost, that is all the salaries, guys. Collection personnel 3 into 10 into 800 into 30. I already explained all this. One thing you have to take care is 30 part. That's all. Rest all is given in the question itself. Yes. As it is given per day, we need to multiply everywhere into 30, guys. Okay, sir. Fine. We got it per month salary. Then other cost. Guys, they have straight away shown here. But better what I would suggest is you show in the bracket. Annual cost divided by 12. Annual cost divided by 12. Everything divided by 12. Got it? Yes. Sir, anyway they have given the cost, no sir. Can I do like this? Just a minute. Guys, it is a 8 marks question. I know what you, sorry, not 8 marks, 10 marks question. I know what you would have got by now. Sir, why simply to present individually? I will add up all this, sir. I will get total annual cost. Can I divide it by 12 and take it there, sir? Yes, this will help you to save time. But guys, it is a 10 marks question. So I would suggest you to present each thing individually. If it was a MCQ and all, we would have done like that itself. Just add the total annual cost, divide it by 12, we will get monthly. But here, please don't do like that. Yeah, present each cost individually. Please be careful, this is per month, guys. But what is given is in the question is annual. So divide each thing by 12. So we got total cost. This is the first requirement. Next. Total cost is 1 crore 88 lakh. Profit is, they told, they have given some profit pattern which is 20% on toll fee, that is total takings. So the formula would be like this, guys. Cost plus profit is equal to takings, which is nothing but toll charges. So they are told profit is 20% of toll charges. So let us assume toll as 100 or takings as 100. So 100 into 20 will be 20% will be profit 20 rupees. And cost would be how much? 100 minus 20, 80. So what is the profit percentage on cost, people? 20 by 8. Oh. So can we calculate profit like that? Yes, 1 crore 88 lakh into 20 by 80. You'll get profit. Then add up both, you'll get takings. Or else, you can calculate first takings. How is it, sir? Cost is 80% of the takings, right? Yes. So divide the total cost in rupees by cost in percentage. So 1 crore 88 lakh divided by 80%, you will get takings. Then from takings, you deduct cost, you will get profit as balancing figure. That is what actually they have done. Profit, they have calculated as balancing figure. Either way, you can do it, guys. Either way, you can do it. Okay. So this is the total charge, toll charges to be collected in a month. Okay. Number of vehicles. Guys, this number of vehicles calculations is there now. Similar to our room calculation, equivalent rooms calculation we used to do. Correct now? Same way. Okay. Standard, deluxe rooms and all is to be there. Similar calculation. Okay. So total number of vehicles in a month is 5 lakh. Yes. 60 lakh in a year divided by 12. So 5 lakh. In that passenger is 60%. So we are getting 3 lakh. Then heavy commercial is 15%. So 5 lakh into 15%, 75,000. Then bus is remaining 25%. So 60 plus 15 will give us 75. Remaining is 25% bus. Okay. So we'll get 1 lakh 25. You can check the total should be equal to 5 lakh. Okay, sir. And they have told how is the toll charge framed? For passenger vehicle, let us take it as X. So for heavy commercial vehicles, it is 500% of that. So 5X. Whereas for buses, it is 400% of the passenger vehicle, which is 4X. So let us convert everything equivalent to passenger vehicles, guys. Equivalent passenger vehicles. Yes. So how is it, sir? 3 lakh plus 75,000 into 5 plus 1,25,000 into 4. That will give us equivalent passenger vehicles. That is what they have done here. 3 lakh plus 75,000 into 5 plus 1,25,000 into 4. Yes, sir. This will give us what? 11,75,000 equivalent passenger vehicles. Yes, sir. Now divide. What is the total takings? 2 crore 35 lakh divided by 11,75,000. We will get 20 rupees. That 20 rupees is per passenger vehicle, guys. Please be careful. Per passenger vehicle. Okay. So toll rates per passenger vehicle is 20 rupees, whereas heavy commercial vehicles into 5 we need to do. Please be careful. This is per passenger vehicle. That is equivalent passenger vehicle. Yes, sir. They have not mentioned, better to write that clearly, guys. Okay. This is nothing but equivalent passenger vehicles, guys. Okay. Fine, sir. Even in process costing, we used to do that equivalent calculation as very similar to that, guys. Yeah, for valuing WAPs. Oh, heavy commercial vehicles 20 into 5 because it is 500% of passenger vehicles. So it is 100. Whereas for bus, it is 400% of 400% more, I guess. Correct? Yes, sir. So into 4 I will do. 20 into 4, we will get 80. This what is the second requirement. Hope you understood. Yes, sir. So whatever rate format we have put it here, now same thing we are using here to calculate what is the toll rate per each category of vehicles, guys. Yes, sir. Just a minute. Yeah. So you can see 500% of toll rate for passenger vehicle. That is for heavy commercial vehicle. So if I just assume for passenger vehicles, it is like X. So for commercial vehicles, it will be 5X, and for bus, it would be 4X, guys. That's all. Similar calculations is done. And similar question we have done in the class. Almost same to same, but only extra requirement here is different types of vehicles are given. I will just show you. You can see this question. Question number 10. What I have solved in the class, you can see even all this salary and all is very similar. Per day it is given. There are number of shift, number of persons and all. Yes. And this is given. Okay. Like this. But only difference here was, sir, here only one category of vehicle was there. Whereas in the question given in the exam for 10 marks, there are 3 different types of vehicles. Okay. So for that, we need to do equivalent calculations, guys. Yes. So good to go. Next, B. A factory has 3 production departments, P1, P2, P3, and 2 service department, S1 and S2. Both the service departments are independent and provide services to each other. Following is the detail of expenses of service department. Guys, service departments are giving service to each other means, can we call it as reciprocal services? Reciprocal services? Yes. So we need to use any reciprocal service method. Yes, sir. Okay, so they have given department 1 S1's cost 1,60,000, S2 cost 240, but this will not be the final cost as they are rendering services to each other. A part of their cost will be reapportioned to each other. Yeah. Further, the expenses of department S1 and S2 are apportioned on the following basis. Okay, P1, P2, P3, S1 and S2. Yes, sir. Fine. S1 is giving service. So production departments. Okay, fine. Let me read it. Service department 1 is giving 25% service to P1, 35 to P2, 20 to P3, and 20% to S2. Okay. Then S2 is giving 35, 30, 25, and 10% to S1, guys. Okay. And production department cost, they are not at all given. As per primary distribution, they are not at all given. Yes, sir. You are required to apportion the expenses of department S1 and S2 to production departments P1, P2, and P3 using simultaneous equation method. Okay. Guys, here they have told apportionment, but actually it is reapportionment. From service department, we need to do it for service as well as production department. So it is reapportionment of using simultaneous equation method, which is one of the reciprocal method, guys. Okay. But please be careful, guys. They are not given production department cost. We need to just reapportion service department cost. That's all to the production departments by forming an equation. Yes, sir. Yeah. The total expenses of two service department will be determined as follows. So let us assume service department S1's cost is total cost is S1, S1 itself. Okay. So that will give us how much? 1,60,000. Just a minute, I will show you. S1 cost would be 1,60,000 plus they are receiving 10% service from S2, right? Yes. Whatever is the total cost of S2, we will assume it as S2 itself. Yes. So 10% of S2 will be taken here. Just a minute. Yes, sir. Then coming to S2 cost would be how much? 2,40,000 plus they are receiving 20% service from S1. So whatever is the total cost of S1, 20% of that will be apportioned to whom? Service department 2. Hope you are getting it. Please be careful. I repeat. S1 is receiving 10% service from S2. So whatever is the total cost of S2, 10% of that will be reapportioned to S1. Yes, sir. Same way. S2 is receiving 20% service from S1. S2 is receiving 20% service from S1. So whatever is the total cost of S1, 20% of that will go to S2. Got it? And here they have assumed the total cost of service department 1 as S1 itself and total cost of service department 2 as S2 itself. Okay. The name of the departments itself is the total cost they have assumed. Okay. If you feel that you will get confused, better you can use X, Y, P, Q, something like that, guys. Okay. Instead of S1, S2, because even service department name also is same to same. Okay. But if you're comfortable doing like this, you can do it. No problem. Yes, sir. So S1 total cost would be 1,60,000 plus 0.10. That is 10% of S2. S2 is nothing but the total cost of service department 2, guys. So S2 is equal to 2,40,000 plus 20% of S1. So we have formed an equation. Let us substitute the value. Substitute the value of S1 in S2, guys. Okay. So S2 is equal to 2,40,000 plus 20% of S1. So S1 is we are getting it from here. We are getting it from here. So 1,60,000 plus 10% of S2, guys. Okay, sir. So solve it. 2,40,000 plus 20% into 1,60,000, you will get 32,000. Then 0.20 into 0.1, you will get 0.02 S2. 0.02 S2. Okay, then add up both of this 2,72,000. Now take 0.02 S2 to the other side. So S2 minus 0.0 S2, sorry, 0.02 S2 will give us 0.98 S2. That is equal to 2,72,000. So S2 is equal to 2,72,000 divided by 0.98, guys. Is that clear? Yes, sir. And when S2 is given, it is assumed that it is 1 S2, guys. Yeah. So we'll get the total cost of service department 2 as 2,77,551. Using this, we can calculate S1, guys. You can calculate S1. So S2 we are using in which equation? Here. Okay, substitute the value. 1,60,000 plus 10% of 2,77,551, guys. we will get 1,87,755. That is the total cost of service department 1. Okay, sir. Now the expenses will be allocated to the production department as under. Better use the word reapportioned. Okay, yeah. So S1's cost will be apportioned in this ratio as 25, 35, 20 to production department. They have asked only for production department. Actually, S1 cost will also go to S2 also, but they didn't ask that here. Okay, once we calculated the total cost, just show the reapportionment only to production department. That is what is asked. Okay, I will just show you. Just a minute. Just a minute. You can see you're required to apportion expenses of department S1 and S2 production departments P1, P2, P3 using simultaneous equation method. Okay. So whatever is the total S1 cost we have got, you just apportion in this ratio. And for S2, just leave it. You need not do anything. Whereas S2 also, you apportion in this ratio, leave for S1. That we need not present it. But will S1 and S2 also get the amounts equally? So equal in the sense in this percentage? Yes, they will get it. But in this question, it is not asked, guys. Okay, sir. Yeah. So total cost of S1 is 1,87,755 into 25% for P1, 35% for P2, and 20% for P3, guys. Okay. Same way, S2 total cost is 2,77,551 into 35% for P1 into 30% for P2, then into 25% for P3. Okay. And please be careful. If you add up this 3 here, if you add up, sir, will it be equal to this? No, because we have not shown the service department cost, guys. Please be careful. Even here, if you add up all these three, this will not be equal to 2,77,551 because we have left the service departments. You can also see here, even if you just add up the percentage also, you will not get 100%. Yes, fine. Okay. So total we will get P1, P2, P3 is this much, guys. So total cost apportioned to production department is 4 lakh. The total of expenses apportioned to P1, P2 and P3 is 4 lakh. Actually, they have not asked the proper requirement. They have just asked part of the requirement, guys. I will just show you because we have done similar calculations in the class already. Right now, hello, tell yes or no? Yes, sir. You can see here. First, we will form an equation and we will solve. Correct. Similar question. Similar question. Yes, sir. So we first formed an equation and we have calculated what is the total cost. Here actually it is department Q and P. We have given the name as X and Y. Okay. Yes. If you want to refer, I will also tell the question number. Question number 4 in overheads chapter, guys. Yeah. So what we did, once we calculated the total cost of service department, guys, we prepared a table for distribution of overheads. First, we took overhead as per the primary distribution. Yes. For service as well as production department. But in the question, they have given only this for us, whereas this is not given. So obviously we cannot write this for the given question. Have they given this in the question, guys? No, they have not given. Only for service department they have given. Okay. So whatever they had given 4,000 and 2,600, this is nothing but the cost as per primary distribution. Here, as per this question, they had given, just a minute, I will show you. Because I want you to explain the difference so that you will not get confused, because in the upcoming exams it can come in any way, guys. Yeah, this is nothing but as per primary distribution, people. Got it? Using this and this percentages, we calculated what is the total cost of service departments after considering the service given by one service department to another service department. We got it. S1 and S2, we got some total cost. Yes, sir. We got it here. Yes. Fine. Yes. So once we get this, what normally we do is this calculation, guys. So we'll take service department cost, that is the total cost what we have got using the equation, and apportion it to service department as well as production department. Correct? So this is the cost of department P. Same way, this is the cost of department Q. We apportioned it to A, B, C production department as well as service department. And at the end of secondary distribution, we call this as secondary distribution. Yes, we'll get the total cost of service department nil nil. Yes, sir, because we have apportioned it fully. Whereas for production department, we get this. And whatever we have calculated in this question, sir, this figure, is it equal to what we have done here? No, people, please be careful. This is missing in the question. So I cannot write this as total overheads. Whatever we have got here, can we write it as total overheads? No, that would be it will be a mistake. Clear? Yes, sir. This only the cost which is reapportioned from service department to production department, that is amounting to 4 lakh. That's all. We don't know what is the overhead cost of production department as per primary distribution. If they had given it and if they had asked us to calculate total overheads, then whatever we have got here, we would have added it to the overhead cost of the production department as per primary distribution. Then we would have got total overheads. Hope you got it. Hope you got it. Yes, sir. And after that, if by chance, if they ask you to calculate any recovery rate or cost per unit and all, we'll just divide this by the number of units or number of hours, guys. Got it? Yes. Anyway, in this question, it was not asked to calculate all this, but I'm just trying to connect and explain because in the upcoming exams, anything can come, guys. Got it? Yes, sir. Fine. We'll move forward. Question number 3. Okay. 1 second. We'll read the requirement. Then we'll go and read the data. Prepare a statement showing the total cost and per project cost of project management service for each service sectors, that is technology, healthcare and education, using activity based costing approach. So the question is on the activity based costing approach. Previous question was on overheads, that is traditional absorption costing method, whereas this is modern technique. Second one, identify the most profitable sector based on the profitability percentage on the fee charged. Okay, 8 marks question, guys. Okay, fine. A consultancy firm provides project management service in 3 sectors, that is technology, healthcare and education. The project management service covers development and implementation of software for various MIS requirements of its clients. The fees charged per project is as follows. Okay, what are those? Technology 90,000, healthcare 1,20,000 and education 1,10,000. Guys, these are nothing but cost object. That is the product or service which is provided by the consultancy firm. Okay, sir. So we can call this as cost object in simple. Next, the company uses activity-based costing, that is ABC, to allocate its overhead cost for the month of August 2025. The following informations are provided. What are those? So service sectors they are given, number of projects, software development hours, consulting hours, number of client meetings. Guys, you can see none of this information is about cost. So that means these are what? Drivers, what driver? Cost driver. Okay, yes. So this would be a cost driver data, guys. Okay. As soon as you read the information, you should be able to decode it. Overhead cost and activities. Okay. So there are totally 4 types of activities. Activity management of projects. Total cost is 8,10,000. Number of projects is the cost driver. Number of projects means in what ratio? 20 is to 10 is to 10 people. 20 is to 10 is to 10 is the ratio. Okay, sir. Next, consulting service delivery. 4,20,000 is the activity cost. Consulting hours is the cost driver. So ratio, please. 10 is to 7 is to 5. You can simplify. Sorry, consulting hours, right? 1 second. So 64 is to 56 is to 20 people. I have just removed zeros. You can further simplify it also. But I have just taken 64 is to 56 is to 20. Okay, consulting hours. Next, client interaction and meetings. Activity cost is 6,30,000. Number of client meetings is the cost driver. Client meetings. Yeah, this one. 3 is to 2 is to 4. 3 is to 2 is to 4. Yes, sir. Last one. Administration and support 15,40,000. So the cost driver is software development hours. Software development hours. This one. 10 is to 7 is to 5 people. I just removed zeros. Okay. So 10 is to 5, 7 is to 5. Got it, sir. Okay, done with the very easy question, guys. Very easy question. Similar calculations we already done number of times, number of questions. Yeah, you're required to prepare a statement showing the total cost and per project cost of project management service for each service sector, technology, healthcare, and education using activity-based costing approach. Identify the most profitable sector based on profitability percentage on fees charged. Guys, see, requirement we would have read it twice. One is before reading the data. Whenever the question is lengthy, I would suggest the student to read the requirement first, then go and read the data. And after reading data, once again you read requirement. Because sometimes students might misinterpret this, guys. They would have asked something and student would have done something. So it's okay. I know you will spend little more time reading it again. But please, it's okay. Once you read the data, again you read it once. Got it? Yes. And whereas if question is small and all, I would suggest straight away go with the straight approach. If it is a small question, you can start reading the data, then you can read the requirement. But when it is lengthy, it is always good to know what is the requirement. That is, what are you supposed to calculate? And then you read the data. Got it? Yes, sir. Fine. Very easy question, guys. First, we have to calculate cost driver rate, which they have done through working note. Yeah. So activity and activity cost, then cost driver basis, the cost driver they have given, and total of cost driver you take. Total of cost drivers. Okay. Cost driver is already given in the question individually. We need to just add it up. You just need to add it up. Sir, how to, sir? Guys, come on. Come on. Don't ask me that. How to add it up? Ah. So 20 plus 10 plus 10, 40, like this. Okay. 17 plus 5, 22,000 hours. Yeah, like this, you need to just add it up. Okay, because we need to take total of cost driver, guys, to calculate cost driver rate. Yeah. Yes. So total activity cost divided by total cost driver. If you do, we will get cost driver rate. So here 8,10,000 divided by 40, we will get 20,250 per project. Same way for others, guys. Same way for others. 4,20,000 is the total activity cost here, divided by total consulting hours is 14,000. So divide each other. You will get 30 rupees per hour. Then 6,30,000 here, the activity cost divided by number of client meetings 90. So you will get 6,30,000 divided by 90, 7,000 per meeting. Okay. Next, 15,40,000 is the activity cost divided by total software development hours 22,000 hours. So you will get 70 rupees per hour. Okay. So using this, we can calculate what is the cost of each cost object. So what is our cost objects? Technology, healthcare, and education, guys. We are supposed to calculate cost for it. Okay. Management of project, first activity. What is the cost per project? 20,250. Multiply that with the cost driver for each individual product. Okay, product is nothing but cost object here. Okay, I will just write it on the top. This is nothing but CO, cost object. Okay, so 20,250 into 20 for technology, into 10 for healthcare, and into 10 for education, guys. Clear? Yes, sir. Same way. Consulting service delivery, we have got activity cost driver rate as 30 rupees per hour. Multiply that with individual cost drivers for each cost object. So for technology, it would be 30 rupees into 6,400. For healthcare, 30 into 5,600. For education, 30 into 2,000, 60,000. Then coming to client interaction and meetings. So cost driver rate is 7,000 per meeting. So multiply it with cost driver for each product, guys. So 7,000 into 30 year. Then year 7,000 into 20. Then the last part 7,000 into 40 people. Then administration and support services, 70 rupees is per hour. Multiply with the number of hours for each cost object. 70 into 10,000 is for technology. Then 70 into 7,000 is year. And 70 into 5,000 is year, guys. So we'll get total cost. Add up all four. Just add it up. Okay, sir. So number of projects is given in the question 20, 10, 10. So you will get cost per project. Divide. Divide total cost by number of projects. You will get cost per project. Okay. Then fees charge is given in the question itself, guys. 90,000, 1,20,000 and 1,10,000. Here they have considered percentage of fees charge, which is nothing but they have done what? No. Fee by cost they have done into 100. Fee by cost into 100. Fee by cost into 100. But I don't think that is required. This they have not asked. I don't know why they have done it. But anyway, they have asked us to decide based on profitability, guys. So let us calculate profit. How to calculate profit, sir? Fees charged minus cost. So fee per project minus cost will give us profit. So I have written T is equal to S minus R. S is nothing but fees and R is nothing but cost. Okay, sir. Then calculate profitability in percentage, guys. So profit divided by fees into 100. That's all. Okay, so that is nothing but I will explain here. 14,650 is the profit divided by fees 90,000 into 100. You will get 16.28. Do the same thing for the remaining two. Okay, so profitability percentage. That's all. Have they asked anything else? Okay, they have asked education is okay. Which is the most profitable? So percentage where the profit percentage is more, it is for education. So education is the most profitable sector. Got it, people? Yes. That's all. Done with the A requirement. Next, let us move to B. Sub question B. Easy. It was easy question. SM Limited is the manufacturer of two products A and B. The following particulars are extracted from the records of the company. Maximum capacity is 5,000 and 3,500. Okay. Selling price per unit 1,000 and 1,500. Cost per unit. Raw material 20 rupees per kg, 200 and 400 they have given. Wages at 10 rupees per hour, 150 and 100. Direct expenses 200 and 300. Variable overhead 80 and 120. Guys, everything, whatever is given here is variable only. Okay, sir. The total fixed overhead for a product A is 2,50,000 and for product B is 3,50,000. So this is total fixed cost. The company manufacture both the products using the same grade of raw material. The company is facing a constant of raw material, key factor, which is available in the limited quantity of 1,10,000 kgs only. Okay, you are required to determine the optimum product mix, considering material as the limiting factor to generate maximum profit and calculate the maximum profit. Guys, simplest question for 6 marks. We have done it for 2 products, 3 products and all. We have done it in the class. Yes, sir. Here it is only for 2 products. Very simple question, guys. Yes. Whenever there is a key factor, we need to make a ranking based on what? Contribution per key factor. We need to make a ranking based on what? Contribution per key factor. And what is the key factor here? Raw material in kgs requirement. How do we calculate raw material? Simple, people. Here they have given rupees 20 per kg and cost they have given. So can we calculate what is the raw material requirement for each unit of A and B? A and B is the output. Please be careful. So 200 divided by 20. We will get 10. Yes. So for producing each and every unit of A, we require 10 kg of raw material. Yes, sir. Then B, raw material cost is per unit 400 and per kg raw material is cost is 20 rupees. So if you divide 400 by 20, we will get how much raw material is required to produce each unit of B. So 400 by 20, we will get 20 kgs. Correct, people? 400 divided by 20, we will get 20. Yes, sir, that is 20 kg. So to produce each unit of A, we require 10 kg of raw material and each unit of B, we require 20 kgs of raw material, people. Hope you got it. Yes, sir. And please be careful, whatever is given here is per unit cost. Okay. So what are we supposed to do? First calculate contribution per unit, then divide it by the raw material requirement. We will get contribution per key factor. I repeat, contribution per unit we need to calculate. How is it, sir? Selling price minus variable cost. We get contribution per unit. Yes, sir. Then divide this by raw material requirement, which is 10 kg and 20 kg. We get the key factor, that is contribution per key factor. Do the ranking as per that. Do the ranking as per that and then decide the sales mix or product mix. Got it? Yes, sir. I tell you, the students who have written in September 2025 is the luckiest students. And most of the students, I have received the messages from most of the students that they have got exemptions. 70, 80, 85, 88, different numbers. But it was the easy, guys. Yes, chalo. And most of these questions we already solved in the class. Okay, similar. May not be same to same, but similar questions. Yeah, chalo. Selling price 1,000 and 1,500, then less the wrong variable cost, guys. Better give the heading variable cost and then reduce whatever was given in the table. Everything was variable. Just deduct all this, put it in the bracket. So you'll get contribution per unit. Okay. Then raw material required per unit, I'm naming it as Y. 10 kg and 20 kg. I already shown you how to calculate it. Better you guys also show how to calculate it. Okay, that is 200 by 20 and 400 by 20. Oh. Then we will get contribution per kg of raw material, which is nothing but contribution per key factor. So 370 divided by 10, 37. 580 divided by 20, 29. Okay, ranking. 37 is the highest. So first rank, second rank. First rank, second rank. Yes, sir. For A, what is the maximum demand, people? For A, what is the maximum demand? Sorry, capacity 5,000. Produce full. For 5,000, how much raw material we require? Into 10. 50,000 we require here only. Okay, total is 1,10,000 kgs. Out of that, how much is required for A? 5,000 units. into for each unit 10 kg. So that means 50,000 kgs. Remaining 60,000 we can use it for B. Remaining 60,000 we can use it for B. But for B, capacity is 3,500 into for each unit we require 20 kgs of raw material. So 3,500 into 20. We require totally 70,000 to produce 3,500 units of raw material output. I repeat. To produce 3,500 units of B, we require totally 70,000 kgs of raw material. How did we get it, sir? 3,500 into 20 kg. But do we have 70,000? No. After using 50,000 kgs for A, we are left with only 60,000. How did we get 60,000? 1,10,000 is the total raw material available minus 50,000, guys. So balancing figure is 60,000. Yeah, sure, we'll see. I will explain it here. So total raw material available is 1,10,000 kgs. First, we will use it to produce product A. Maximum capacity is 5,000. So into 10, that is raw material requirement per unit. We require 50,000. So remaining is how much, people? 60,000. 60,000 kgs. Yes, sir. So even though the capacity of product B is 3,500, we cannot produce it fully. So what do? I have only 60,000 kgs of raw material left for product B. And for each unit of product B, how much raw material is required? 20 kg. So how many units of product B we can manufacture? 3,000. This is output, people. I have given the 18 output. Got it? I repeat. See guys, out of 1,10,000 kgs, we are using 50,000 kgs to produce product A. Remaining is how much? 60,000. So out of this 60,000, can we produce full units of product B? Not possible. So how many units of product B we need to produce? Check it. So we have 60,000 kgs of raw material available for product B. And for each unit of product B, we require 20 kgs. So how many units of product B we can produce? 3,000. Is that clear? Yes, please. So this is the product mix. What is the product mix, sir? 5,000 is to 3,000. 5,000 is to 3,000. Yes. So they have asked us to calculate profit also now. Yes. So A and B. What is the maximum profit? 5,000 and 3,000 is the product mix. Total contribution. Please take this contribution per unit. You go with this one. So multiply 370 with 5,000 and 580 with 3,000. You will get total contribution. Then deduct fixed cost from it. This is minus fixed cost. They have given it in the question, guys. After the table, fixed cost for product A is 2,50,000, for product B is 3,50,000. So total is 6,00,000. We'll get profit. We'll get profit. Is that clear? Yes, sir. This is what is asked in the question. First, find out the product mix, and then what is the profit at this product mix. Yes, fine, guys. Let us move to next question. Question number 4. Let us read the requirement once. Required, prepare quarter-wise production budget in units and raw material consumption budget in quantity for the next year. So the question is on budget. Last chapter. Calculate the total machine hours including maintenance time required during the year for machine A and machine B to manufacture the product. Yes, sir. Product A1. Okay, A1 is the output. 9 marks question. Yeah. SVS Limited manufactures a single product. Here it looks like AL, but actually it is A1, guys. The company has estimated its quarter-wise sales for the next year as follows. Okay, sales figures they have given for each quarter: 72,000 first quarter, second quarter 90,000, third quarter 99, and fourth quarter 1,08,000. In the beginning of the year, the opening stock of finished goods is 14,400 units, and the company expects to maintain the closing stock of finished goods at 29,400 units at the end of the year. Opening and closing stocks. And please be careful. Opening stock would be for first quarter, whereas closing stock would be for last quarter. The production pattern in each quarter is based on 80% of the sales of the current quarter and 20% of the sales of next quarter. Okay. So that means how much will I produce in first quarter is 72,000 into 80% plus 90,000 into 20%, guys. 80% of current quarter plus 20% of next quarter. This is the production pattern. Okay. Do you feel that same to same thing we have seen somewhere? Yes. The company maintains this 20% of sales of next quarter as closing stock of current quarter. Okay. So what is the closing stock of quarter one is 20% of 90,000. Same way, sir, what is the closing stock of second quarter is 99,000 into 20%. Sir, what is the closing stock for Q3? That is quarter 3, 1,08,000 into 20%. Okay, very easy. So all this information was with respect to finished goods, guys. Please be careful. Don't get confused. Okay. Now coming to raw material information. The opening stock of raw material in the beginning of the year is 24,000 kgs and closing stock at the end of the year is required to be maintained at 12,000 kgs. Okay, this is with respect to raw material. Each unit of finished output requires 2 kgs of raw material. Okay. The production time required to produce 1 unit of product A1 is 5 hours. Production time. Okay, this is with respect to hours. During the production, the product uses 2 machines as under. Machine A 2 hours, machine B 3 hours, total is 5 hours. Okay, that is given here. The production time. Okay. But the product is produced using 2 machines, guys. Machine A and machine B. Machine A requires 100 hours of maintenance after a use of 5,000 hours and machine B requires 100 hours of maintenance after use of 3,000 hours. Okay. Guys, see, the working hours is 5 hours for each unit of product A1. Product A1. Okay, sir. But once machine A work for 5,000 hours, it requires a maintenance for 100 hours. Same way, once machine B work for 3,000 hours, it requires a maintenance for 100 hours. Okay, yes. So for every 5,000 for machine A and for every 3,000 for machine B, we need to do a maintenance for 100 hours each, guys. Got it? Yes. So this part is little interesting. Yeah. Required, we already read it. Once again, I will read it. Prepare quarter-wise production budget in the units and raw materials consumption budget in quantity for the next year. Okay. Calculate the total machine hours including maintenance time required during the year for machine A and machine B to manufacture the product A1. Okay, sir. Fine. Sure, people. We'll see the solution. Yes. So take sales for each quarter, which is already given in the question. Okay. Production is simple, guys. 80% of current quarter and 20% of next quarter. So for quarter one, it would be 72,000 into 80% plus 90,000 into 20%. That's all. Okay, so they have taken 90%, 80% and 20% separately. So the total production in Q1 is 75,600. Same way you do for Q2. 80% of 90,000 and 20% of 99,000. So add up both. 91,800. For Q3, it is 80% of 99,000 and 20% of 1,08,000. Okay, sir. Then add up both. 1,08,000. Sorry, 1,08,800. For Q4, we don't have next quarter. We don't have next quarter, but closing stock is given up, people. Yes. So see, here you have to use the concept. Closing stock of the year is given 29,400. Yes. And they've also given the pattern clearly. Closing stock for each quarter is 20% of sales of next quarter. So this is nothing but the closing stock of Q4. Yes, sir. Correct, no, people. Closing stock of the year means the year will end with what quarter? Fourth quarter. Is that clear? So please be careful. This will be the opening stock of first quarter, whereas this is the closing stock of last quarter. That is nothing but for the year. Okay. So they have given the closing stock of Q4, which is nothing but for a year, which is nothing but 20% of next quarter sales. So this is already given. We will straight away take it because next month, next quarter sales is not given in the question, but closing stock is given. We will straight away take it. We will straight away take it, people. Okay. So 29,400 is given in the question, whereas take 80% of 1,08,000. So 80% of 1,08,000 will comes to 86,400 plus closing stock of the year. Add up both 1,15,800. So the total production during the year would be 3,84,000, guys. 3,84,000. If you want, you can cross check also. Sales is given. For sales, add closing stock of finished goods and add closing stock of finished goods and deduct opening stock of finished goods. So for example, 3,69,000. Just a minute. Plus closing stock is how much, people? You need to add closing stock. Please be careful. So just a minute. How much was the closing sales for a year? 3,69,000 is the sales for a year. Okay. For that, add closing stock. So 3,69,000 plus 29,400 minus opening stock. Minus opening stock. We will get 3,84,000, guys. 3,84,000. Is it matching? Yes. So you can cross check like this. So simple. I repeat. Sales plus closing stock minus opening stock. That will give us production. Okay, we would have formed an equation, no? Sir, opening stock plus production minus closing stock is equal to sales. But in this question, sales is given. So let us reframe this. Sales minus opening stock plus closing stock will give us production. Got it, people? Yes. And this data can also be alternatively calculated in a different way. I will just show you. We would have done this in the class. Similar guys, similar data. Okay, here also same to same pattern. You can see 80% of current quarter, 20% of next quarter, same to same pattern. Yeah, question number 2 in budget chapter. Yeah, what did we do there? Sales add closing stock minus opening stock. We got production. And opening stock for the year is given, which is nothing but opening stock for first quarter. Yes, sir. Then how do we calculate closing stock, sir? Simple. I have shown here. Closing stock for Q1 is nothing but 20% of 37,500. That is next quarter sales. Q2, what is the closing stock, people? 9,000. How did we get it, sir? Sorry, Q2's closing stock is 8,250. How did we get it? 41,250. That is next quarter sales into 20%. Same way for Q3, next quarter sales into 20%. We will get 9,000. Yes, so you can see here. So closing stock pattern is given 20% of next quarter sales. Yes, so we have calculated the closing stock for first 3 quarters, whereas for last quarter it is given in the question itself. Yeah, and you should know one thing. Opening stock is given in the question, guys. Opening stock will be given in the question. Okay, closing stock we have calculated here. Just form an equation and solve. Sales plus closing stock minus opening stock will give us production. So production will be like a balancing figure. Got it? Yes. And closing stock of Q1 will become opening stock of next quarter. Same way, closing stock of Q2 will become the opening stock of Q3. Same way, closing stock of Q3 will become opening stock for Q4. And for Q4, they have already given the closing stock, that is closing stock for a year. Take that. Okay. And numbers are different here, guys. Please be careful. As per this question, I would have taken the numbers. Okay. Yes. If you guys also want, you can just refer to that question number in your notebook. You will have an understanding. Yes. Fine. Yes. Sure. So this will give the production. This is the alternate way to calculate. This is the alternate way to calculate. So whichever you guys are comfortable, you can follow this. Follow that way. Yes. I feel if they have just asked only the production, this will be the better way. Because this might save your time. Yes. Sure. Next, raw material consumption. Very easy. Guys, in the class, we already solved the question on raw material purchase budget, consumption and all. But here, they have asked only consumption. They don't even ask the purchase budget and all. Even the purchase price also is not given. So it is comparatively easy. So units to be produced for each quarter, we already calculated. Yes. And what is the raw material requirement for each unit of output? 2. Just multiply. That's all. That is the raw material consumption. Just multiply this 2. That's all. Raw material consumption. Raw material requirement for each unit of output is given in the question, 2 kgs. Just multiply that with production, you will get consumption. And sir, they have given the opening stock of raw material, closing stock of raw material. Should we use it here? No, guys, because they have not asked how much raw materials to be purchased. If they had asked how much raw material has to be purchased, then we would have calculated, or I would have used opening stock of raw material and closing stock of raw material. But in this question, it is of no use. Okay, sir. Then, okay, with respect to machines, guys, we are supposed to do the calculation. Units to be produced. Units to be produced. How much, sir? 3,84,000. 3,84,000 in a year, total production. Yes, 3,84,000. And for each unit of output, we require 2 hours of machine A and 3 hours of machine B. Correct? Totally 5 hours. Multiply both people. So how many hours of machine is required for production? 7,68,000 of machine A and 11,52,000 of machine B. Please be careful with this. Okay, sir. And this is for production. And each and every, guys, please listen here. Once machine A work for 5,000 hours, we need to do a maintenance for 100 hours. Correct? I repeat, once machine A work for 5000 hours, we need to do a maintenance for 100 hours. Okay. But please be careful, this is working hours. This is working hours, excluding my maintenance time. Okay, now I repeat, how did we get it purple? Simple. How many units to be produced? For each unit, how many hours of machine A and machine B is required? So this is like productive hours. Okay. Maintenance time we will calculate now. 7,68,000 divided by 5,000 you do. 5,000. Okay. So that many times maintenance we need to do. For how many hours? Into hundreds. So I repeat, 7,68,000 divided by, so repeat, sorry, I will show you again. 7,68,000 total productive hours divided by, for every 5,000 hours we need to do maintenance. So divided by 5,000 into 100, because 100 hours of maintenance. Okay, we get 15,360. There is something to be explained here. I will take care of that later. Okay, then coming to machine B, 11 lakh 52,000 divided by 3,000. 3,000 for machine B, because for every 3,000 we need to do 100 hours of maintenance, guys. Okay, into 100 euros, into 100 we will get 38,400. Now add up both. Now add up both. So this is the total machine hours including maintenance, guys. This is what is asked in the question. Including maintenance. 7,83,360 and 11,90,400, guys. Hope you understood. Please be careful. As and when machine A worked for 5,000 hours, we need to do a maintenance of 100 hours. Same way, as and when machine B operates for 3,000 hours, we need to do a maintenance of 100 hours. So we need to just divide this hours by 5,000 and 3,000. We will get how many times the maintenance has to be done. Multiply that with 100 hours, guys. Multiply that with 100 hours. But one thing which I would like to highlight here is, guys, see, 7,68,000 is the working hours of machine A. If I divide it by 5,000, we get 153.6. 153.6. So what ICI has done in the suggested answer is they have considered decimal only. So 153.6 into, straight away they have done into 100, which in my opinion is not correct. Which in my opinion is not correct. I will explain that. Okay. Why so? Guys, see, as and when machine A works for 5,000 hours, we will do a maintenance of 100 hours. Correct? Yes. Will we do it proportionately? For example, sir, once machine work for 2,500 hours, will we do 50 hours of maintenance like that? Anything? No, no. Only when machine A complete 5,000 hours, we do the maintenance of 100 hours. Correct? Yes. So when machine A has worked for, please observe carefully. When machine A has worked for 7,65,000 hours, we did a maintenance for 100 hours. Okay. Next maintenance will be when machine completes 7,70,000 hours. Next maintenance will be when machine completes 7,70,000 hours. Correct, people? I repeat. See, machine A, as and when it works for 5,000 hours, we do the maintenance for 100 hours. Right? Yes. So when machine completes 7,65,000 hours, we would have done the maintenance for 153rd time. 153rd time we would have done a maintenance. Okay. And when will we do the 154th time maintenance? When machine completes 7,70,000 hours. Correct? Yes, sir. In between, will we do any maintenance? No. In between 5,000, we will not do any maintenance. Then why to consider this decimal? They should have ignored this decimal, in my opinion. Correct? Yes. So when you do 7,68,000 by 5,000, you will get 153.6. But for decimal, we will not do any maintenance. We will do maintenance only when machine completes 5,000 hours. So that means for 7,68,000 hours, we would have done maintenance only for 153 times, guys. 153 times. Correct? Yes, sir. So they should have taken 153 into 100, which is 15,300. 15,300. But anyway, they have taken 0.6 also, considering proportionate maintenance. But do they do the proportionate maintenance, guys? No, it is clearly given in the question. Once machine A completes 5000 hours, they require a maintenance of 100 hours. Got it? Yes. So every now and then the maintenance will not be done. Only after completing 5000 hours, maintenance will be done for machine A, guys. Okay. This is the only thing which I observed, where we need to be considering that we are supposed to take 15,300 here and not 15,360. Okay. Sir, if this kind of things comes in the exam, what are we supposed to follow? See, if by chance, if similar question, same question comes in the upcoming exam, you can follow whatever ICA has given. Whatever ICA has given. But logically, if we think, guys, here it should have been 153. 153 into 100, which comes to 15,300. You also just think it once. You will also feel that, yes, what I am thinking is in a right way. Okay, fine. Sir, what about machine B? Machine B, we will get exactly the whole number, guys. So 11,52,000 divided by 3,000, right? Yes, you will get 384. So there is no problem. So 384 into 100, if you do 38,400. There is no problem, guys. Okay, fine. Done with this. Done with this. Yeah. B. 5 marks question. Sundar Limited maintains its cost accounting system on the basis of non-integral system of accounting. The following transactions arose during the month of August 2025. Okay. Material purchased on credit. Okay. What is the requirement? I will just see that. Journalize the above mentioned transaction in cost books maintained on non-integrated system of accounting, guys. Okay. So they have given 5 transactions, 5 marks. Okay. Very easy. Very easy. Material purchased on credit. Guys, under non-integrated accounting system in cost books, whether it is on credit or cash, the entry is same. Stores ledger to cost ledger. Stores ledger to cost ledger. Okay. Material issue. Okay. First, as and when we see, we will just pass the journal entry also. So that, yeah. Sir, is narration required? Better to give it, guys. Whether they have asked it or not. See, sometimes they will tell ignore narration. You can ignore it. But if question is silent, please write the narration. Why? To give a chance to the evaluator. Okay. So the first transaction is stores ledger to cost ledger. Okay, that is stores ledger to cost ledger when the material is purchased. Guys, please be careful whether it is purchased on cash or credit, that entry is same, because cost ledger account replaces both the cash, bank as well as creditors. Got it? Yes, 10,25,000 being material purchased. Yes. Next, material issued to production, which is direct material. So what is the entry, guys? Material is going from stores ledger to, where is the production happening? Factory. Factory account is represented by what? The WAP control account. Manufacturing is happening in WAP control account. Do you remember? Hello? Do you remember where the manufacturing happens? WAP control account. Yes. So material is issued to the production. So it is going from stores to WAP. Debit the receiver, WAP control account. And credit the giver. Who is the giver? Stores ledger. Yes. So material control to, sorry, yeah, they have given some alternate also here. First one, material control to cost ledger, then stores ledger to material control. This is not required, guys. Okay, material control and stores ledger is one and the same itself. This is not required anyway. Okay. So next, material issued for production, WIP control, that is the receiver, to stores ledger. Got it? Yes, sir. Fine. Material issued to production. Next, direct wages allocated to production. Guys, when wages is incurred, the entry is wages control to cost ledger. But here it is allocated to production. Again, production. So who is receiving it? WIP control. Who is giving it? The wages control. So WIP control to wages control, guys. Very simple. Very simple. WIP control to wages control account. Yes, being direct wages charged to production. Yes, sir. Got it, sir. Yes. Factory overhead over observed. Factory overhead over observed. 2,20,000. Guys, overhead observed means. See, just imagine the overhead control account. On the debit side, incurred will be there, and on the credit side, observed would be there. Credit side is more. That is observed. So that means on the debit side, we need to pass the entry to what? To costing P&L account. Whenever there is an under absorption or over absorption, where do we transfer it, people? To costing P&L account. To costing P&L account. So I repeat, incurred and observed. Incurred is on debit side and observed is on credit side. Observed is more, sir. So on the debit side, we need to pass to costing P&L account. To costing P&L account. So what is the entry? Factory overhead control account debit to costing P&L account, guys. Just I will also show it to you. Okay, you can see you. This is like factory overhead control account. I've just used short forms, guys. Don't mind. But you don't write short forms in the exams. Incurred will be debited and observed would be credited. Yes, some. Let me write DR and CR also for you guys. Okay. So observed is more. That means credit side is more. So to balance it, what do? We will transfer it to costing P&L account because it is over absorption. Yes, sir. So credit side is more means over absorption. Yes. So where do we transfer the over absorbed amount of overheads? To costing P&L account. What is the entry, guys? Factory overhead control account to costing P&L account. So factory overhead to costing P&L account. 2 lakh 20, 2 lakh 20. Got it? Yes. Next. Last one. Administrative overhead under absorbed. Reverse the entry. That's all. Under absorbed 1,40,000. Yeah. But I will just explain also. Guys, see, if you have understood conceptually, very easy. Very easy. So administrative overhead control account. Debit side would be incurred and credit side would be observed. So they told under absorbed. That means incurred is more of people. Yes. So observed is less. So debit side is more, sir. When debit side is more, on the credit side, the balance figure we need to transfer it to costing P&L account. So what is the entry? Costing P&L account debit to administrative overhead control account, guys. So this is for under absorption because debit side is more, incurred is more than observed, guys. Okay. So costing profit and loss account to administrative overhead control account 1,40,000, 1,40,000 being administrative overhead under absorbed. Got it? Yes. I will just show you. We have learned even the journal entries whenever there is an under absorption, over absorption. We have seen the accounting of it as well as the journal entry. I will just show you. You guys also, if you have the book with you, please quickly open it. And wherever you guys require like little detail understanding, or if you want to refer to any books and all, that is concept book or even ICI material or whatever, whichever books you are referring to, please pause the video and go through it, guys. Just a minute. I will show you the journal entries. Yeah, you can see in page number 54 it is there. Yeah, yes. Or else see, even if I show you, just a minute, in cost accounting system, I am showing here in overheads chapter. If you want me to show the journal entries, just a minute. Yeah, see what they had asked, stores ledger to general ledger, or this is also called as cost ledger. Okay, next, issued to production, WIP. Where is that? Issued to production, right? Yeah, WIP to stores ledger. Okay, straight I will go to under absorption or over absorption. Just a minute. Here, the journal entries. You can see for under absorption and over absorption. I would have explained even in the class along with the ledger formats. Yes, guys, fine. We'll move forward. And whatever first I showed with respect to overheads chapter, there we calculate the amount of overheads and adjust it against the goods sold or closing stock and all. Fine. But later what I showed, this is with respect to journal entries in cost accounting system chapter, guys. Yeah, fine. We'll move forward. Question number 5. Sub question A. What is the requirement? Rank the materials and draw a plan of ABC selective control by using the following basis of selective control. 50,000 and above A category, and 15,000 to 50,000 B category. Below 15,000 it is C category. Okay, ABC plan, guys. Okay, what is the given information? We will see. TS Limited is suffering from material deterioration, that is like wastage or loss, and finds that their valuable stock are not properly stored. The company furnishes the following information. Okay. So there are totally 8 materials. Material name is given here, units are given here, and cost, guys. Cost. Okay, and the costliest materials are here. Please be careful with that. Okay. Storekeeper of the company argues that he has taken proper care in storing 3 types of material named MA, MB, and MC. MA, MB, and MC. This is like cheapest raw material. He has taken extreme care of it. Oh, very good, sir. Very good storekeeper. As they are in bulk in quantity. Okay. So they are bulk in quantity. Guys, you know, C is the cheapest raw material. It costs us only 10%. But how much we use it? 70%. Correct. Yes. So as cost is lower, we will use it more. So that is what is ABC, right? A means costliest raw material. So we will use it only 10%, whereas for that we need to invest 70% of our inventory value. B is 2020, whereas C is, sir, it is the cheapest. So we will use maximum 70% of our inventory, whereas the cost of that is 10% of our investment in inventory. Clear? Yes. This is the percentage categorization. Okay, sure. He further argues that only a few units of material Mg and Mh has been deteriorated due to bad weather. Okay, few units of Mg and Mh, but that are the costliest. Actually, the costliest is Mf. Okay, but when it comes to Mg and Mh also, they are also costly. The management of TS Limited wants to get him aware about value of different items. So rank the materials and draw a plan of ABC, guys. Okay, that is what they're asking. Same to same question. Same to same question we have done in the class from ICI material illustration. Okay, but first we will solve it. Then I will show you that also for your reference. Yeah. Statement of total cost and ranking. Okay. So what are we supposed to do? Take whatever is there given, guys, units. Okay. So item, material name and units. Whatever is there given in the question, copy paste it. And units, just do the total. 1,65,000. Now find out the percentage. Percentage of total units. So 54,105 into, sorry, divided by 1,65,000 into 100. You'll get 32.80. Same way for MB. 32,300 divided by total 1,65,000 into 100. You'll get percentage. So that is how we need to calculate percentage of total units. Just divide individual units by total units into 100, guys. Okay, sir. And total cost is given in the question. Straight away take it and do the total of that 4,25,000 we are getting. Then percentage of total cost. So individually you calculate 14,855 divided by total cost 4,25,000 into 100. We get 3.49. 3 point, actually it should be, 1 second, I will just check. 25 divided by 4,25,000 into 100. It should have been 3.50. Okay, but anyway they have written 3.49 because it comes to 3.495. If third decimal is 5 or more, we need to round off this. So it should have been 3.50, but still you can also accordingly take it. But better would be to write 3.50, guys, because I would have already always told you guys, when you're writing two decimal, if third decimal is 5 or more, always round off the second decimal to next number. Okay, do that even if it is not asked in the question or even if it is not specifically mentioned, guys. Okay, chalo. Same way for MB, we need to do 12,823 divided by 4,25,000 into 100. We will get 3.02. Same way we need to do for each of the product, guys. This will be definitely time consuming because, sir, this and this we need to do for each of the products. This will be time consuming for sure, guys. Yes, but try to do it quickly because once you are get used to this calculations, no, tuck, 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 tuck calculations you have to do. Yes, and when you're doing, see, first do this completely, then go for this because some students might do first MA, then MB, then MC like that. No, first finish this, guys. First calculate units like this, column by column you go. Item, material name you write, units you write it fully, then you take the total, and then you calculate the percentage of total units. How do you do it? Individual units divided by total into 100. That's all. Then come to the cost. Same way, write cost for all the products, divide all the raw materials, divide it. So calculate the total cost, then divide each individual cost by total into 100. Okay. Now do the ranking. Now do the ranking. The costliest being the one highest, from highest to lowest you have to do the ranking. So 1, 2. So you can observe the percentage. Highest should be the first rank, guys. 1, 2, 3, 4, 5, 6, 7, and 8, guys. So please be careful while you are ranking it. Cross check all the percentages and do it, guys. Yes. Chalo, we are done with ranking. Now, basis for selective control, 50,000 and above A items, 15,000 to 50,000 that would be B category, and below 15,000 it is C category. Yes. On the basis of a plan of ABC selective control is given below. Okay. Ranking 1, 2, 3 we are taking. So simple, guys. Ranking 1, 2, 3 you can see the cost would be more than 50,000 for sure. Yes. So that comes under A category. Cost is more than 50,000. Yes, so you can see item numbers would be 6, 8 and 7. For that ranking 1, 2, 3. Percentage of total units and cost, percentage of total cost is given. So especially this one you have to be careful, more than 50,000. And even ranking wise 1, 2, 3. The top 3 costliest raw material we have taken under A category. Okay, sir. So all these are A. If I do the total, percentage of total units of A category is 9.89 and cost wise it is 69.80 guys. So hope you guys remember. Hope you remember the category. Okay, I will just show you. ABC costing guys. Part of material costing. Second chapter. You can just come there. Yeah. A. Quantity would be 10%, whereas investment value would be 70%. Yes. So almost matching. May not be exactly, but almost matching you can see. Yeah. So percentage, that is quantity wise we are using 10%, whereas cost wise almost 70%. Yes, sir. Now coming to B category. B category 4 and 5 we are taking, that is in between 15,000 to 50,000. So the product is item number 4 and 5. You can also write the product name here instead of product item. Okay. Yes. 4 and 5 we are taking. The cost you can see is 47,685 and 39,015, which is more than 15,000 but up to 50,000. Okay, sir. So percentages also are mentioned. So you can see 20% is the quantity, 20% is the cost, people. If I just add up both. So this is the B category items. So here you can see 20% quantity, 20% investment value. Yes, sir. C category ranking is 6, 7, 8. The item numbers are 1, 3 and 2. So quantity is this much. The cost is this much. Amount cost in rupees we have taken here. Okay, so you can see everything is less than 15,000. Yes, matching, sir. So total quantity 69.71%, almost 70, and cost you see 9.80, almost 10%. So is it matching? Yes, sir. Near to it. Near to it. Quantity 70% and cost is 10%. Got it, people? Yes, sir. Yeah. See, very simple question, people. Very simple question, but definitely time taking. Definitely time taking because you have to do lot of calculations and place them in the order. And if you guys know, see, same to same question we have solved in the class from ICM material, illustration 8. You can just observe. Same to same. Obviously, the numbers might be different, but even this was same to same, you guys observe. And for those students who has already followed this, now this becomes easy because they will not spend too much time in planning. They already know how it has to be presented. Tuck, 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 they will do it. So to some extent, it will save their time. Yes, you can just observe here. Same to same question, guys. Yeah, fine. Let us move to B. A company manufactures electronic gadgets and uses a specialized component. The company incurs an ordering cost of 1,250 per order. The carrying cost for storing the specialized components is 25 rupees per unit per annum. Per annum is given. Sometimes it will be given per month and all. Please be careful. The company's annual production is 90,000 gadgets. This is the output, guys. Annual production, they have given output. And each gadget requires one component for its assembly. Now, what is the annual requirement of the raw material? It is same, 90,000. Because each unit of output require each 1 unit of raw material. So the raw material consumption per year or annual demand for a raw material is 90,000 guys. Okay. You are required to calculate economic order quantity, that is EOQ, number of orders to be placed in a year. Guys, laddu for 3 marks. Simplest question. Yes. So they have given annual demand, which is 90,000. Ordering cost per order 1,250. Carrying cost per unit per annum 25,000. 25 rupees. Everything is readily given. You need to just apply the formula and calculate. What is the formula to calculate EOQ? Come on. Repeat along with me. What is the formula? EOQ is equal to square root of 2 into annual demand of raw material into ordering cost per order whole divided by carrying cost per unit per annum. Yes, sir. Simplest question, guys. This will not consume time. Yes. So, yes, this is the formula. EOQ is equal to 2 into 90,000 into 1250. Yeah, 2 is there. 2 is standard. Please be careful. What is the formula to calculate EOQ? Square root of 2 into annual demand into ordering cost per order whole divided by carrying cost per unit per annum. Yes, sir. Chalo. So 2 into 90,000 into 1000 to 2 is always standard, okay? Divided by 25. So that will give us 3000 components. So annual demand is 90,000 and EOQ is 3000, which is nothing but lot size. So divide each other, guys. You will get number of orders. Number of orders in a year. Got it? Yes, sir. Fine. Next, sub question. One more sub question is there. C. 3 marks again. Complete the table regarding accounting entries pertaining to over or under absorption. Over or under 3 absorption of overheads. Okay, fine. Under absorption, stock of finished goods they have given. Finished goods account. Okay, should it be debited or credited? Under absorption. Fine. Over absorption, stock of semi-finished goods, WIP control account. Under absorption, cost of sales account. Okay, fine. Guys, simple. So for all this, consider it is due to normal reasons. So we need to calculate supplementary rate. Okay. Under absorption means, sir, what is observed is already less. Is already less. So now we need to charge something more. Yes. So the under absorption part we need to charge more. So that means stock of finished goods will be debited or credited? Debited. Because it is already debited, but debited less. So what should I do now? Add it. So debit it. Okay. Over absorption means we need to credit it because it is already charged more. More debit is given, excess debit is given. So how will I cancel it now? Giving by giving credit. So I need to give a credit for it. Then under absorption, again same story. We need to debit it because less debit is given. So now we need to adjust it by giving some more debit. Yes. Okay. If it is a finished goods, calculation formula would be what, guys? Supplementary rate. How do we calculate supplementary rate? You know, na? Amount of under absorption or over absorption divided by number of units. Okay. And if there is any WIP units and all, we need to calculate equivalent units. Clear? That is nothing but number of units into percentage of work done. Yes. Okay. Fine. We'll see. I will explain in the answer itself. Yes. For under absorption, we need to debit stock of finished goods account, guys. Yes. How do we calculate the value? Units of finished goods, finished stock, that is nothing but closing stock, into supplementary rate per unit. Okay. Then our over absorption, stock of semi-finished goods, that is WIP, we need to credit it as it is already over absorbed. So excess debit has been given. Equivalent completed units. Equivalent completed units into supplementary rate. If you want how to calculate this also, you can show. Equivalent completed units is equal to number of units into degree of completion or the percentage of work completed, guys. Means if 100% work is done, how much is the number of units? We will calculate. Yes. Under absorption, cost of sales account will again be debited. So units sold into supplementary rate per unit, guys. Yes, sir. And for this, so what to debit, what to credit and all, I hope you guys remember it. I already showed it. Just a minute. I will show it again. In overhead chapter, it will come, guys. Yes. So you can see when there is under absorption, we need to debit this accounts. Stock of finished goods is for closing stock of finished goods. This is for WIP, closing stock of WIP, and this is for units sold. This is for under absorption. For over absorption, we need to credit them. Got it? Yes, sir. Fine, guys. So done with this. See, actually, if you observe, for question number 5, we had 3 sub questions, right? Yes. Sub question A will consume more time, whereas B and C will save your time. So loss in one question will be a gain in another question, guys. Yeah. So actually, you can save time in B and C. Fine. Sure. We'll move forward. Last question, theory question. Define responsibility center and discuss the type of responsibility centers. So 5 marks question, guys. Last question would be theory, as you know. You need to just explain. This is the question on first chapter. In this question paper, actually material costing, especially ABC also they have asked, EOQ also they have asked. Very good. So more number of questions are there on the material especially. Yeah, just a minute, I will show you. You can come to first chapter. Yeah. So responsibility center, you need to just explain this, guys. Cost center, revenue center, profit center, and investment center. Yes. Sure. Fine. We'll move forward. 5 marks question. Then list the advantages of job costing. Yes. Guys, see, once we know what is job costing, where we'll calculate the cost of each job by preparing job cost sheet. So we'll be able to explain the advantages of job costing. That, sir, we will be calculating material cost, labor cost, overhead cost for each and every job. So it will be easy for us to identify what is the cost incurred for each and every job. And we will maintain the cost data separately for each and every job. And this method is followed when when we are working or when we are starting manufacturing as per the customer specifications. So all this you can list out as the advantages of job costing. Oh, next, list the important factor which need consideration for controlling employee cost. So this question is on labor costing, guys. Yeah, you can just come to labor cost, that is chapter 3. I will just show you what you are supposed to write there. Yeah, this one. You're supposed to just write these points. Sir, should we explain it? Not required, guys, because that will take too much time. I don't think they have also explained it here. Just a minute. See, right? Yeah. See, for this, you need to just explain at least 2 to 3 lines, the responsibility centers. Yeah, this one they've just given. Okay, this is job costing. Yeah. This one they've just given the points. You can also just mention the points. Okay. Then C has one more alternative. Discuss the uses of bill of material in the following departments. Yeah, what is first of all bill of material, guys? See, even this is the question on material costing. So too much weightage in this exam, in September 2025 exams, there is too much weightage on material costing, guys. Yeah, anyway, good. Just a minute. So I will just show you what is bill of material. That will give you the standard quantity of and quality of raw material to be used. Standard quantity and quality of raw material to be used, guys. Yes, sir. Just a minute. Yes, you can see here. In page number 18, I have given some important documents with respect to the purchase procedure or the materials. Yeah, bill of material. It is a detailed list of specifying the standard quantity and quality of material which has to be used in the production process. Means what are you supposed to use? How much are you supposed to use? So this will give you like a standard target to be maintained in the production process, guys. Got it? Yes, sir. Fine. So the material specification list is prepared by the product development. Who prepare this? Product development team, commonly known as engineering or planning department. Okay. So how it will be used by each of this department they have asked. Marketing or purchase department. Marketing is actually for sales. It comes to sales. They have given it for purchase. So let us consider it for raw material. And anything which we discussed in material chapter is with respect to raw material, guys, not output. Okay. So for purchase department, why do we require it? We'll straight away go to the solution and there itself I will explain. For purchase department, in order, they should know no, what quantity of raw material they have to use in the production and how much, what quality and what quantity of raw material they have to use. Clear? Yes. So in the production process, what quantity and quality of raw material has to be used, we know. Accordingly, the purchase department has to purchase. Yes. So the purchase department has to purchase according to the quantity and quality mentioned in the bill of material, guys. So that is why the purchase department requires bill of material. Same way as I already explained, production department. So they are engaged in production. They should know, sir, which raw material has to be used in which product manufacturing and in what quantity and all. They should ensure that yes, they are used in the right quantity. If not, then it will lead to a loss, guys. Loss or wastage or scrap. Then stores department, they are the one who will store the raw material. They are the one who will store the raw materials, so they should know when they are issuing it to the production department what quantity has to be issued and what kind of raw material, because they might be handling different kind of raw material, and even the company might be producing different types of products, and there might be different types of production department, P1, P2, P3. So for whom what quantity has to be issued, what quality of raw material has to be issued, and all, they should know it. Then the last one is cost accounting department. In order to anticipate or to estimate the cost and profit, guys. Because based on bill of material, they would have prepared the estimated cost or estimated profit or estimated sales. especially when they want to calculate estimated cost. One of the important element of cost is the material cost. So how do they calculate the estimated material cost? Using the bill of material. Because once they have planned for production, now for production, assume they have planned for producing 1 lakh units. To produce 1 lakh units, how much raw material I am supposed to use? Assume 2 kg for each unit of output. And for each kg, what is the cost? Everything they would have mentioned in bill of material as a standard, guys. Yes, sir. Fine, guys. So this is all about September 2025 question paper. Guys, the easiest paper. See, this is the actual advantage when students solve maximum number of questions in the class. And even I will ask students, even after solving the questions in the class, please you guys also do it independently. Because see, most of the questions are repeated. May not be the same number, but similar questions. Yes, guys, this is the advantage of solving maximum questions in the class, and that is what we do in the class, solving the questions from ICI material, past exams, everything, so that student will be the master of all different kinds of questions before going to the examination all. Yes, students, now we will discuss May 2025 question paper. In this part, we will just focus on multiple choice questions. Yes. First question is case scenario. There are two case scenario questions under which there will be 5 multiple choice questions each. So that means 5 into 10, 2 marks each. Clear? I repeat. The question paper format is like this, guys. For costing multiple choice part, I am telling you. Totally multiple choice question would be for asked for 30 marks. 15 questions of 2 marks will be asked. In that 15 questions, 10 question is on case scenario. They would have given 2 case scenarios. Under that, 5 question each. Under that, 5 question each. Another 5 questions are independent questions. Yes, let me read case scenario 1. I already told you how do you solve it. See, one type is first go read the requirements and then come back to the case. Yeah, let me follow that only. Requirements. I will not read the options, only requirement. Tuck, 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 tuck. At what quantity of purchase of batteries, the ordering cost will be equal to inventory carrying cost. Means they're asking you to calculate EOQ, guys. Because at EOQ, total ordering cost would be equal to total carrying cost. Next, what will be the total annual cost of purchases as per the quantity calculated in Q1 above? That is, if EOQ is the lot size, what would be the total cost? Okay, sir. Next, assuming that the company is willing to take a 15% risk of being out of stock, what would be the safety stock and reorder point? Okay, reorder point is nothing but reorder level. Okay, the question is on safety stock and reorder level. Assuming that the company is willing to take 5% risk of being out of stock, what would be the safety stock and reorder point? Again, on safety stock and reorder point. Last one, assuming 5% risk of out of stock, what would be the total cost of ordering and carrying inventory for 1 year? Okay, sir. Now let me read the case. Skylark Electronics Company assembles and sells laptop in India. An important component of laptop is its rechargeable battery. Okay, battery is like raw material, guys. The company buys its monthly requirement of 4,500 batteries and it would buy its annual requirement in 10 equal installments. Guys, the calculation is like this. Please be careful. They are purchasing monthly how much? 4,500. Means monthly requirement is actually 4,500. What is the annual requirement? 54,000. That is 4,500 into 12. Annual requirement is 54. And they are purchasing this in 10 equal installments. So what is there? ROQ for 5,400, which is nothing but 54,000 by 10. Clear? They are purchasing it in 10 installments. Okay. The purchase cost of one battery is 800 rupees, purchase price. The batteries are used evenly throughout the year in the assembling process on 360 days per year. The ordering cost is 9,000 per order and the inventory carrying cost is 37.5% per annum. So when carrying cost is given as a percentage, we need to apply it on what? Purchase price. So 800 rupees into 37.5%, which comes to 300 rupees per unit per annum. The high carrying cost results from the need to keep the batteries in carefully controlled temperature under humid conditions along with high cost of insurance. Sir, why there is a high carrying cost also they are telling the story. Okay. Delivery of the batteries from the vendor generally takes 6 days, but it may go up to as much as 10 days. That is lead time or reorder period. Minimum 6, maximum 10. Okay. The days of delivery time and percentage of their occurrence are shown in the table below. Guys, the delivery time will vary from, delivery is nothing but lead time or reorder period, will vary from 6 to 10. What is the chances that we will receive the materials by 6th day only? 70%. What is the chances that I will receive by 7th day? 15%. 8th day 5%, 9th day 5%, 10th day 5%. This is the occurrence, percentage of occurrence. On the basis of above case scenario, you are required to answer the following MCQ 1 to 5. Guys, there is a blunder here with respect to questions. Okay. First, second, okay. Whereas third, fourth, fifth, you can see suggested answers only is telling no answer. Third, fourth, fifth, they're telling no answer. No answer means none of the option is correct. See, I always respect ICA for whatever work they're doing, but I cannot accept this happening in the exam hall. It is an all India level exams and you are setting the questions where none of the options is correct. And without even cross checking that you are already distributed it in the examination hall. Because what I feel is there should be 2 or 3 rounds of cross checking of question paper before it is sent to the examination halls. Clear? Because what it happens now, guys? See, now they will tell we will give grace marks and all. Okay. What about the students who have spent lot of time on these 3 questions? They are getting the answer, but there is no option. They feel that what I am doing is correct. And now they will again and again calculate, again and again see where we have gone wrong. They would have spent too much time on it, which is unacceptable, guys. This should never happen, especially at CA level, because it is an all India exams where you set one question paper for entire India. You should be extra cautious when you're doing this. Sure. Yes, let us see one by one. And again, this is an external factor, sir. Can you or we do anything for this? Maybe not. Yeah, until unless maybe I go to the member like the council, I cannot change anything. Clear. You guys also until you qualify and go to the council, you cannot change anything. The only thing is, sir, whatever was right, at least we will attend that and pass them exams. Yeah, yes. Sure. Even in actually taxation paper also they have done the same. Okay, both direct tax, indirect tax, both. Most of the questions they don't have MCQ options correct, correct options, both in DT as well as IDT. Sure. First question: at what quantity of purchase of batteries the ordering cost will be equal to the inventory carrying cost? Guys, they would have asked simply calculate EOQ. They're not doing it. They're asking you calculate the quantity where the total carrying cost would be equal to total ordering cost. See, this you can do only if you know the concept. Clear? You should understand that what they are trying to ask is you. What is the formula, sir? Square root of 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. 2 into annual demand I showed you 54,000 into ordering cost is 9,000 divided by carrying cost per unit per annum is 300, which I showed you here. Ordering cost is given here. Okay, sir. So calculate, you will get 1,800. So the answer is 1,800. What will be the total annual cost of purchases as per the quantity calculated in Q1 above? Total cost they're asking, not only carrying or ordering, total cost includes purchase cost also. So purchase cost is how much, sir? 54,000 into purchase price per battery is 800. So 4 crore 32 lakh. Then total ordering cost 54,000. That is annual demand divided by lot size. Lot size I am taking same 1,800 into ordering cost per order 2 lakh 70. Then same thing you can take carrying cost immediately. Again no need to do it. What once you get one into two you do. That is the total of both ordering and carrying. Yeah. Or else if you want to calculate also half into lot size into carrying cost per unit per annum. So you'll get totally 4 crore 37 lakh 40,000. 4 crore 37 lakh 40,000. Okay. Third, fourth, and fifth, as I told you, there is no correct option at all. But still, I will try to show you how do we derive the correct answers. Assuming the company is willing to take 15% risk of being out of stock, what would be the safety stock and reorder point? Guys, listen. They are ready to take 15% risk itself. 15% risk means add up this thing. 15. That means maximum they have to receive the material by how much? 7. Correct, huh? 7. So maximum reorder period, can I consider it as 7? Maximum reorder period, can I consider it as 7? Yes. Got it? Yes, sir. So I am considering it as 7. Okay. Because as they are ready to take 15% risk out of stock, so they are expecting that maximum it should reach by 7. 7 days is the maximum reorder period as per this question. Okay. Now maximum consumption they have not given, guys. None of them is given. Minimum is not given, maximum is not given, average is not given. What should we do? Find out. So 54,000 is the annual demand. Clear. Divide it by, or else per month only is there, no? 4,500 divided by 30 days. Divided by 30 days. Considering number of days in a month is 30. 4,500 divided by 30. How much do you get? How much do you get? 150. Clear. Or else you can also do per annum we know, na? 54,000 divided by 360. Clear. So most of the students might miss out year only because they will not know how to calculate the consumption. It is not given, no sir. It is 150 per day. Per day. Sir, we need to calculate consumption per day now. Yes, because reorder period is given in what? Days. So you need to calculate consumption also per day. Actually, for this question, 150 per day is minimum consumption, maximum consumption, average consumption. All three 100. Because they are not given anything else. That is what we can assume. Correct? Yes. So reorder level formula is what? Maximum consumption into maximum reorder period. Sir, maximum is, they told it is 10 days. No, sir. No. They're ready to take 15% risk. In that case, what is the maximum reorder period? 7. They can wait maximum for how many days? 7 days. Clear? Yes, sir. So we will take it as 7. So how much is that? 1050. 1050 reorder level. Okay, reorder level we have what? What is safety stock? Guys, now I should maintain the safety stock for 3 days. Okay, now maximum I'm ready to wait for 7 days. But what if worst case? If it comes in 8th day, 9th day or 10th day. Now I need to maintain safety stock for how many days? 3 days. For safety. Clear? Yes, sir. So, consumption per day is how much? 150. I need to maintain safety stock for how many days? 3 days. So, 450. So, answer is 450 and 1350, guys. Which is not there. Don't look for it. It is not there. Oh, hope you understood. Next, fourth one. Sorry, 15% risk. No? One second. One second, listen here. 15% risk they are ready to take. Listen, 15% risk they are ready to take. When they are 15% maximum, they can wait for 7 days. Minimum lead time is what, guys? 6. So, even if it comes on 7th day, what is the waiting time? Only 1. Clear? So, they have to maintain safety stock only for 1 day. Only for 1 day. That is the gap between 6th and 7th. Hope you are understanding. Not the 3 days. Actually, that is actually next one. So, we need to wait for what? Minimum is 6. I'm ready to wait till 7. If by chance, if I receive it on 7th day, safety stock has to be maintained for 1 day. Clear? So how much is that, sir? 150 into 1. 150 into 1. Okay. Then coming to the fourth question. Assuming that the company is willing to take 5% risk of being out of stock, what would be the safety stock on reorder point? Okay, 5% risk they're ready to take. That means maximum they will wait till what day? 9. 9th day. Correct? Maximum 5% risk they're ready to take. Okay, that means they will wait maximum till 9th day. So what is the maximum reorder period, guys? 9 days. Maximum reorder period is 9 days. So calculate. So reorder level is maximum consumption per day, which we take it as 150 only into 9, which is 1350. Guys, this is what the best calculation we can do. The question is actually incomplete with respect to minimum consumption, maximum consumption. They are not given. So 150, whatever I get, I have to consider that only as minimum, maximum, average, everything. Clear? Yes, sir. So reorder level we got 1350. They're ready to take 5% risk. 5% risk is up to what date, guys? 9. Minimum is what? 6. So if by chance if I receive it by latest 9th day, what is the waiting period? 1, 2, 3. Correct. Minimum is 6, guys. I am expecting maximum it will reach by this stage. Clear? Because I am ready to take 5% risk. Okay. So what is the difference between minimum and maximum? 3 days. Clear? So maximum if I receive by 9th day, I need to maintain a safety stock for 3 days. 3 days. So 150 into 3, which is 450. Which is 450. Hope you understood. Last again, it is actually not, there is no clarity there, but let me read it. Assuming 5% risk of out of stock, what would be the total cost of ordering and carrying inventory for 1 year? So they are telling 5% risk. So that means safety stock we need to maintain 450. Guys, but please listen carefully. 450 is a safety stock, which I will maintain throughout the year if I am ready to take 5% risk. Whenever I place the order, will I be placing the order for 450 again and again? No, no. This is one time I will purchase and keep it forever. Forever in the sense throughout the year. Whereas every time I place the order, I will place the order for how much? If question is silent, it is understood that they are following you. So what is the order size? 1800. Clear? I repeat once again, some students might get confused with safety stock. Sir, safety stock, I will not place the order every time. You cannot add safety stock for this and calculate the lot size. Clear? Because safety stock is like I am maintaining it throughout the year. Once I will purchase and keep it with me. And that I will maintain it separately also. This is my regular purchase, which I will keep it as a regular inventory. I will be keep on using from this. Whenever there is a late delivery, maybe only then I will use it from safety stock. Okay, sir. So I can consider that as question is silent, this is the lot size. If this is the lot size, guys, what are they asking? They're asking the total cost of ordering and carrying. So if EOQ is a lot size, total cost of ordering and carrying is 270 plus 270. It should be 540. And actually there is an option, but still they are told no correct option. Clear? I'm not sure in what way they would have done the calculation. At least they would have given suggested answer. What is the right calculation at least? Okay, but they have not mentioned it. But in my opinion, this should be the answer. This should be the answer. We are assuming that EOQ is the losses. EOQ is the losses. Okay, sir. Fine. Sure. Case scenario 2. Alur Metallurgy Limited is a stainless steel manufacturing company which manufactures two grades of stainless steel products, namely SS304, silence, SS304 and SS316. Both are their output. Made of common raw material, iron, procured at 52 rupees per kg from the market. So this is the raw material, guys. Cost of raw material is 52 rupees per kg. The usage of the raw material is expected to be at a constant rate over the entire period. The raw material supplier to the company charges 24,000 per order, but its delivery is limited to 1,200 tons per annum. 1,200 tons per annum. This is the maximum raw material available. There is no alternate source to procure the raw material. In consideration of the above limitations, the company decided to review its inventory management policies for the forthcoming year. That's beautiful question. This is actually nice question. Please observe because some percentage calculations and all is there. The following forecasted information has been extracted from the departmental estimates for the budget year ending 31st March 2025. Now, these are my outputs. They have given sales. Please observe. Sales in units 56,000, 86,000. Finished goods stock increased by the year end. Means closing stock will increase. Correct. Guys, they have not given the opening stock. But they have told closing stock will increase by 1,614 and 1,215. So increase in closing stock. Obviously, I need to produce it now. So what is my total production? Is this much. If you have to add up both. You have to add up both. Hope you're understanding. Clear? Guys, how do we calculate production? Simple. Sales minus opening stock plus closing stock. Clear? If I consider the net of this, then you need to see how much is my closing stock more than opening stock. That's the only net add. Correct? And they have given that figure directly. We need not worry about what is the actual opening stock, what is the actual closing stock. Okay. Post-production rejection rate is 3%, 7%. Means once the production is completed, 3% of the product is rejected here. 7% of the project is rejected here. Maybe defectives. Listen. Guys. If SS304, 100 units are produced, 3% is rejected. How much is good units? 97. 97. Now, if you add up both of this, you will get to know what is the production to be made. Correct? Is that before rejection or after rejection? After rejection. Correct? Because obviously, guys, what you sell is after rejection or before rejection? What you sell is after rejection or before rejection? after rejection. Correct. Yes. Even closing stock, assuming it is approved already and we have kept it ready to sell. Okay, sir. If you add up both of this, you will get production after rejection. Now, if you divide it by 97% and here 93%, what do you get? Total production. Total production. Hope you're understanding. Listen, yeah. For SS304, let me take. Assume, guys, I have produced 100%, 100 units. 3% is rejection. What is the good units? 97. Now I have 97. Can I find out 100? Yes. Divided by 97%. Divided by 97%. Why, sir? Because out of the total production, 97% is the good units. Clear? So can I consider this as only good units? Yes. Once you add up both of this, if you divide it by here 97% and here 93%, you will get what is the total production. You will get what is the total production. Next, iron usage in kg per completed unit net of wastage means how much raw material you are using for each unit of output 5.5 and 8. And there is an iron wastage 8% and 11%. That means, guys, listen now. If you want to use 100 kgs of raw material in production, here there will be a 8% loss. So you will be using how much only? 92%. Got it? Hope you are understanding. Alright, let me consider vice versa. Sir, I am using 92 kgs of raw material in the production process. But totally in the production process at the beginning, how much kg I should have installed? 100 kg. Because 8% I will lose in the process. I will lose in the process. Observe these two lines. I will read it again. Iron usage in kg per completed unit net of wastage is 5.5 and 8. This is before wastage or after wastage? After wastage. So how much is wastage? 8%, 11%. Hope you are understanding. That means if you are using 92 kgs of raw material in the production process after wastage, how much you should have introduced into the production process? Hundreds. Same way here, 11 is the wastage. So if you want to use 89 kgs of raw material in the production process after wastage, how much you have to introduce in the production process? 100. If you put 100 kg, you would have used 89 kg. That means 11 kg is loss. That is for SS316. Hope you understand. Yes, sir. You are required to calculate the following. MCQ 6 to 10. See, previous question, I read the requirement first and then went to case. But this question, I am reading the case first and then reading the requirements. Both ways we can solve. However, it is convenient for you, you follow it. As I already mentioned you guys, try to solve the question in different ways. See where it is more convenient to you and where you are consuming less time. Accordingly, adopt the best strategy. Oh, first one. The minimum number of units of SS304 and SS316 the company shall produce to justify the sales. Okay. How much they should produce? Okay. Let me read everything once. Why? Because see guys, it is always good to read all the sub questions. Okay, because they are asked totally 5, Okay, read all 5 because sometimes what we do in 1 will help you in 2. What we do in 2 will help you in 3. So that already you know that what you are supposed to calculate next. You can easily follow the process. Okay, in calculation. Okay, the year production quantity they are asking. Next one. The ratio in which the raw material utilized for SS304 and SS316 from the total quantity of raw material procured to produce the number of units desired in Q6 above. That means to produce whatever we will get here, how much raw material is required. In percentage they are asking. In percentage. Next, assuming that all available 1200 tons of raw material is procured per annum and would be utilized for production, what would be the raw material needed for production of SS304 in order to maintain the same production mix arrived in question 7 above. Now they are asking quantity. Previously it was percentage, now they are asking quantity. Ninth one. Assuming that all available 1200 tons of raw material is procured per annum and would be utilized for production, what would be the raw material needed for production of SS316 in order to maintain the same production mix arrived in Q7 above? Okay. Last one. Keeping the management purchase policy and production quantity mix in consideration for SS304 and SS316, the maximum number of units of each product that the company would produce in units respectively by utilizing 1200 tons of raw material. Okay. Last parts are little lengthy, but still okay. Story only they have asked so much, sir. Require. First one is the minimum number of units of SS304 and SS316 the company shall produce to justify the sales forecast would be. Guys, see, if you add up both of this, you will get production after rejection. Sales, guys, actually it is like sales plus closing stock minus opening stock. But they have not given the actual figures of opening stock and closing stock, but they have just mentioned increase in closing stock. What should we do? Add. If I add increase in closing stock to sales, what do you get? Production. Is it before rejection or after rejection? After rejection. How much are we getting? If I add up both, we are getting 57,614 and 87,215. And this is after rejection. So what is the rejection rate? 3%. So can I tell you, whatever we have produced after rejection is 97% of what is actually produced? Yes. Before rejection. Same way here, 7% is the rejection rate. So after rejection, what is left is 93%. So now can I calculate before rejection, how many units was actually produced? 59,396. If you do minus 3%, you will get this only. And for the other product, it is 93,070. If you do minus 7%, you will get this number. You can cross. You can cross. Oh. So this is the production before rejection. Production before rejection. Oh, nice. Next, the ratio in which the raw material utilized for SS304 and SS316 from the total quantity of raw material procured to produce the number of units desired in Q6 above. How many units we are producing? 59,396 and 93,780. Guys, you tell me, will raw material be consumed for this or for this? For this, because this is what we have produced. Clear? In this 3% and 7% is rejected. Even for rejected units, I would have used raw material, right? Yes. So raw material consumed will be for this many units. So let us see. For each unit, how much we require? 5.5 and 8. So multiply that number of units produced with the respective raw material required for each unit. But this is after the wastage. Even raw material wastage is there, sir. Clear? So whatever I am using is 92% after wastage. So how did we get 92%? 100 minus 8% loss. That is wastage. Same way here 89%. How did we get it, sir? 100 minus 11%. Because wastage is 11%. Hope you understood. This is actually whatever we get here, 3,26,678 and 7,52,40 is what is used after wastage. But I would have paid for whatever I have purchased. Now, what is purchased, sir? Divided by 92%. And here divided by 89%. Hope you understood. So, you will get a quantity of raw material which is totally used before wastage. So, this was after wastage. Now, whatever we have got here is before wastage. Before wastage. Obviously, I would have paid for this much. Okay, sir. Now let us calculate the percentage. Total of both is 11,98,050. 11,98,050. Now divide 3,55,085 by 11,98,50 into 100. You will get 29.64. Same way, 8,42,866 divided by 11,98,050 into 100. You will get 70.36 guys. 70.36. Okay, sir. Where is that, sir? Yeah. And sixth one was 59.36. Okay, this one. C. Okay. Yeah. Hope you got it. So for sixth one, the answer was C, and for seventh one, the answer is B, guys. Hope you understood how we derived it. Okay, the respective raw material divided by total into 100. Divided by total into 100. First, I repeat this because this is bit tricky calculation. Once you calculate the production before rejection, for this, how much raw material is required? Multiply. This is the raw material used in production process after wastage. But even for wastage, I would have incurred the expenditure. Yes. Calculate what is the raw material used before wastage. Divide it by 92% and 89%. How did you get it? 100 minus 8 and 100 minus 11. That's all. So this is the total raw material. Procured. Procured is nothing but purchased. So this is the total raw material purchased. Now calculate percentage because they have asked percentage. So do up the total first, add up both and do the total. Then 3,55,085 by 11 lakh 98,050 into 100. You will get 29.64. Same way here. 8 lakh 42,966 divided by 11 lakh 9850 into 100. You will get 70.36. Okay, let me proceed further. Assuming that all the available 1,200 tons of raw material is procured per annum and would be utilized for production, what would be the raw material needed for production of SS304 in order to maintain SS304 guys? SS304 means this information. Silence. SS304 in order to maintain the same production mix arrived in Q7 above. Guys, listen. Maximum raw material available is how much? 1,200 tons. 1 ton is equal to 1,000 kg. Yeah? Yes. So total how many kgs? 12 lakh kgs. 12 lakh kgs into what is the percentage? They have asked you to take same which is asked in Q7 above. What is the percentage of SS304? 29.64. So out of the raw material total to be purchased, how much is SS304? 29.64. How much do we purchase for SS304? 29.64, which comes to 3,55,680 kg. 680, right? Okay, the nearest one is this one. Nearest one is 3,55,663. Eighth one, no? Let me just cross check once. Eighth one is D. Yes, eighth one is D. Nearest we are taking. Okay, maybe that percentage round off. That is why some small differences is there. Oh, ninth one. Ninth one. Assuming that all available 1,200 tons of raw material is procured per annum and would be utilized for production, what would be the raw material needed for the production of SS316? SS316 means second product. This point percentage we need to take. Okay. In order to maintain the same production mix in question 7 above. So it should be 70.36. So 12 lakh kgs into 70.36. You will get 8 lakh 44,320. 320. So nearest is D. 844, 320, 37. 17 rupees difference is there. Again, I am telling you that is maybe because of this percentage round of price. Yeah, yes. That's fine. No problem. 10th one. Keeping the management purchase policy and production quantity mix in consideration for SS304 and SS316, the maximum number of units of each product that the company would produce in units, production in units, respectively by utilizing 1,200 tons of raw material, guys. Listen, sir, this is what total raw material we will use for each of the products. Yes. But in the production, how much would be used? Guys, this is the total raw material procured, but 8% will be waste. So actually used in the production after wastage is how much? 92% and 89%. So I can tell this is the raw material used after wastage. And for each unit, how much is that? 5.5, 8, divide. You will get how many units are produced before rejection. You will get to know how many units are produced before rejection. Hope you understood. So this is the total raw material we will purchase into 92 and 89. That is after wastage. So this is what is effectively used. Divided by per unit what is the raw material required after wastage. It is 5.5 and 8. You will get this is the units to be produced before rejection. Before rejection. Sir, what if they ask you after rejection? Then you need to again multiply with 97% here and 93% here. Because here 3% and here 7% loss. Na? So whatever production we have got, you need to multiply for SS304, you need to multiply with 97%, and for SS316, you need to multiply with 93%. If they ask you production after rejection. After rejection. Hope you understand. Yeah, so your percentages plays a major role, guys. So what is the quantity we have got? And when they are just asked production in units, you consider it before rejection. So 59, 93 and 93, 993, 933. It is B. It is B. Both the case scenario done. 11th one. Healthy and Fit Limited manufactures and sells a single product captioned as exercise bikes. The estimated units to be sold in the last quarter of the year, that is the last quarter sales budget is given. Exercise bikes in units, Jan 1500, February 1800, March 1000. The company's policy is to hold closing stock of finished goods at 20% of expected sales volume of the succeeding month. So that means in Jan, how much closing stock we will maintain? 1800 into 20%. In Feb, how much closing stock we will maintain? 1000 into 20%. Each unit of exercise bike requires 1 unit of main body with resistance system and 2 units of pedals. This is raw material cost. One for right, one for left. Correct, not 2 pedals. Calculate the number of pedals required to be purchased for Jan 2025 production. Guys, simple. We know the equation to calculate production. What is it, sir? Sales plus closing stock minus opening stock. They are asking for Jan. For Jan, what is the sale? 1500 plus closing stock, which is 1800 into 20%. Opening stock would be how much, guys? Guys, listen here. For Jan, what would be the opening stock? December closing. December closing stock would be 20% of Jan's sales. Correct? Huh? Yes. So December's closing stock is 1500 into 20%, which will become opening stock for January. Yes, sir. So take it 300. So production is 1560. How many units has to be produced in January? 1560. And for each you need 2 pedals. So into 2 into 2, 3120. Pedals to be purchased is 3120. Next. A company which operates a batch costing system is fully integrated with financial accounts, integrated accounting system. During a particular period, materials worth 30,000 and 20,000 were issued to production and factory maintenance. Guys, this is direct, this is indirect. The following control accounts are being maintained. Stores ledger, work in progress, production overhead control, finished goods control account. From the above information, identify which account or accounts will be debited to effectuate the issuance of material. Guys, for issue of materials, what is the entry we will pass? WAP, that is for direct material, account debit 30,000. Production overhead control account, that is for repairs and maintenance, that is indirect material. How much, sir? 20,000. That is factory maintenance. To stores ledger, 50,000. They're asking you which account will be debited. The answer is stores ledger, WIP control and production overhead. This is for direct material. This is for indirect material. So which is it? 2 and 3. 2 and 3 means B, sir. 2 and 3 means B. Now this is on service costing. Interesting question. A lorry starts with a load of 15 tons of goods from station X. So that is the starting point. It unloads 5 tons in station Y and balance goods in station Z. Guys, it is like this. Listen. We will start the journey from X with 15 tons. We will unload 5 here. Remaining 10 we will carry to Z, right? Remaining 10 we will carry to Z. We will not throw it on the road. Okay? Yes, sir. On the return trip, it reaches station X directly with a load of 8 tons loaded at station Z. Guys, while going back, they will straight away go from Z to X. Are they unloading anything in Y? No. With how many tons, sir? 8 tons. 8 tons. Hope you understood. I repeat. While going, there is an intermediate point. They will start with 15 tons from X. They will unload 5 here. Remaining 10 they will carry to Z. Whereas in return journey, straight away they will carry 8 tons to X. Okay, sir. They are not unloading anything in Y. The distance between X to Y, Y to Z, and Z to X are 50, 60, and 80 kilometers respectively. Listen. From X to Y, how much? 50 kilometers. From Y to Z, how much? 60 kilometers. Totally, it should come to 110. But while going only 80, sir, maybe there is some shortcut. Clear? Or else, while going from X to Y and Y to Z, maybe Y will be somewhere here. They have to go ಸ್ವಲ್ಪ ಜಾಸ್ತಿ round trip. Then coming back here. Clear? While going straight away Z to X. Correct. Now, whenever you go to trip, Rohit, what happens? Okay, you will go for a trip to one particular temple. Mother will tell, hey, nearby one more temple is there. We will cover up. Okay. In the meanwhile, you will cover all the temple in that city or in that place, all the famous temple. Correct? Huh? It is like that. Okay. So if you straight away go from X to Z, actually it is 80. But if you go to Y and Z, it is becoming 110. 110. This is actually what happens in family tree. Okay, they will tell another 20 kilometer will go and come. Another 30 kilometer will go and come. ಇಲ್ಲಿ ತನಕ ಬಂದ್ಬಿಡ್ತೀವಲ್ಲ. We have come till here. Chalo. So actually I have drawn a diagram here also you can see. If you go from X to Y, it will be like this. Little round trip. Whereas straight away if you go, that trip will be short. While returning, actually they have come like that. From Z to X straight without going to Y. Compute absolute 10 kilometer and commercial 10 kilometer. Okay, sir. Absolute 10 kilometers means what, guys? Each journey you have to treat separate. You have carried 15 tons for how many kilometers? 50 kilometers. Plus 10 tons for 60 kilometers. Plus while coming back, 8 tons for 80 kilometers. So how much is that? 1990. 1990. So what do we do, guys? We will take the product of qualitative and quantitative. Qualitative and quantitative. Clear? And take the summation of it at the end. Add up everything. First multiply both, then add up everything. First take the product and then take the summation of everything. Then commercial 10 kilometers means first do the average of weight. Average of what's the qualitative factor? 15 plus 10 plus 8 all divided by 3. This is on an average weight carry. Clear? Please consider this as two different trips from year to year, year to year. Two separate trips because weight carried is different. Okay, sir. Multiply that with total kilometers traveled, guys. 50 plus 60 plus 80, 190. 190. So total kilometers traveled by the average weight carried. You will get 2090. So how did we calculate it? Simple. Simple average of the qualitative factor, which is weight. Then the total kilometers traveled, that is quantitative factor. Then multiply both. Multiply both. Okay, sir. 1990 and 2090. See, vice versa also they are given. First they asked absolute and then commercial. So 1990, 2090. If by chance if you do interchange also, next option is waiting for you to mislead. If you interchange the position, you should know exactly what is absolute, what is commercial. Sir, I know how to calculate, but I don't know the names exactly. Then you will get confused here. Yes, guys. Chalo. Question number 14. A company forecasts its labor cost and material cost to go up by 12%. Both will go up by, okay, labor cost will go up by 12% and material cost will go up by 8% respectively per unit in the next financial year. If the ratio between the material and labor is 5:3, determine the increase in selling price as a percentage that the company shall keep to maintain the PV ratio of 12%. They want to maintain the same PV ratio of 12%. Assuming variable overheads is nil. Okay. How much selling price should increase, guys? Because variable cost is increasing. If you want to maintain the same PV ratio, what should you do now? Increase the selling price. Increase the selling price. Simple calculation. Currently, let me assume the selling price as 100. Selling price as 100. PV ratio is how much? 12. They want to maintain same PV ratio next also. Yes, sir. So PV ratio means contribution 12. Listen, guys. Here steps is important. I have assumed sales as 100. So PV ratio is 12%. So how much it comes to? 12. So that means what is the total variable cost? 88. Now I don't know how much is material, how much is labor. They told some ratio. 5:3. Split this 88 in 5:3 ratio. So 88 into 5 by 8 is for material cost. 88 into sorry, 88 into 3 by 8 is labor cost. Is labor cost. Hope you understood. First you will get this. How did you get 88? 100 minus 12. 100 minus 12. Sir, how did I get 12? PV ratio. 100 into 12. Sir, how did you get 100? Assumed. It is assumed. Okay, sir. Now look. Sir, material cost will increase by 8%. So 55 plus 8% will be 59.4. Then labor cost will increase by 12%. So 33 plus 12% is 36.96. What is the total variable cost, guys? 96.36. How much is by variable cost compared to sales? Sir, I want to maintain PV ratio 12%. That means variable cost would be how much? 88%. Correct? Ah, yes. So 96.36 divided by 88%. You will get sales. You will get sales. So sales minus variable cost, PV ratio. You can check this will be 12%. You can check the percentage 13.14 divided by 109.50 into 100. You will get 12%. Hope you understood, guys. First calculate this by adding the increase to the respective variable cost. First calculate this. You will get variable cost per unit, which is nothing but 88% of sales. So can I calculate the sales now? Yes. Variable cost per unit divided by 88%. You will get sales. You will get sales. Okay. Sales minus variable cost would be contribution per unit. Okay. Now increase in selling price is how much? Selling price was 100. Now it is increased to 109.50. So there is an increase of how much? 9.5%. 9.5%. That is 109.5 minus the old rate 100 divided by what would be the base? 100 only. Yeah. So how much increase is there? 9.5. 9.5. 9.5 is not there exactly. So let me go with the nearest answer, 9.46. 9.46. Is that the answer? 14th one? No? Yes. Okay. Chalo, last one. A spice is passed through two processes and the output of process 1, grinding, transferred to process 2, packaging. The input units in process 1 are 7,500 kgs and output units are 7 to 75 kgs. Abnormal gain 150 kgs. You are required to calculate the normal loss percentage, not units, percentage, and value of abnormal gain if the total expenses incurred in process 1 are 1,50,750 and scrap as realizable value of 3 rupees per unit. Roughly, I have done a process account test. This is nothing but process 1 account. Okay, na? Process 1 account, sir. Okay, listen. What is the total input? 7,500. What is the cost of it? 1,50,750. Okay, sir. Next, credit side you come. Sir, output is how much? Transfer to next process. 7,275. 7,275. Then they have also given abnormal gain. Take it in the units column. As there is abnormal gain, we are doing debit side total. 7,650 minus 7,275. What is the normal loss units? Balancing figure. This minus this, guys. Clear? This is nothing but units column. Okay, units column. So how much is the normal loss? 375. What is the scrap value of normal loss units? 3 rupees. So 375 into 3, 1125. 1125. Now let us come for gain calculation. What is the cost per unit, guys? Total cost minus scrap value of normal loss units. So you take total cost minus scrap value of normal loss units divided by input minus normal loss units. 7,500 minus that is 375. 375. What do you get here? Cost per unit. Multiply that with the abnormal gain units. 150. You will get cost of abnormal gain or value of abnormal gain. They have also asked normal loss as a percentage. Normally they will give percentage in the question when it is descriptive type of questions and all. But here they have asked us to do it. Can we do it? Yes, sir. 375 divided by 7,500 into 100, which is 5%. So the answer is 5% and 3150, guys. 3150. Yes. So this is the MCQ part of May 2025 question paper, guys. That's all. Yes, students. Now we will discuss May 2025 question paper. Now we will focus on descriptive type. So part 2 is descriptive question, where question number 1 is compulsory. You need to attend it without a choice, but you need not attend it first only. Sir, can I take up this question later? Yes, but it is compulsory. You cannot take it as a choice. Out of the remaining 5 questions, you need to answer 4 questions, guys. And each of the question would be for 14 marks, which will have sub questions. Which will have sub questions. In case any candidate answers extra question or questions or sub questions over and above the required number, which will not happen in CA exam, but still disclosure. Then only the requisite number of questions first answered in the answer book shall be valued and subsequent extra questions will be ignored. Clear? That is one choice is there now. Even if you answer that, whichever whichever question you answered last will be ignored. Clear. Sir, to complete 100 marks only is challenging, sir. Why to answer extra and all? Disclosure given by the ICI. Working note should form part of the answer. Very important. Underline. Underline, double underline. Because students will miss out this one. Notes, so working notes and all. Chal, we'll start, guys. Question number 1. Compulsory question. Axion Industries is a heavy industrial gear manufacturing company with a manufacturing setup based in Pune. Mr. Andrew, the CFO of the company, furnished the following information to Mr. Joe, who heads the finance department. Total sales, everything is in crores. Total sales 1 lakh crores. Raw material cost 50,000 crores. Wages 15,000 crores. Fixed and variable overheads 25,000 crores. Profit is 10,000 crores. Total number of units sold is 40,000. The market being very competitive and with the raw materials rates rising, Mr. Andrew raises his concern with Mr. Joe, where he expects in the next financial year. Now, from now, whatever they are giving is for next financial year. Workers' wages to rise by 20%. Okay, worker wages will increase by 20%. Fixed cost component to decrease by 500 crores. Whatever is the fixed cost, it will decrease by 500 crores. The total fixed and variable overhead is, however, is to be 28,500 crores. Guys, in the upcoming year, total of variable and fixed will be how much? 28,500. But please be careful, they told fixed component will decrease by 500 crores. But in the question, there is no clarity about whether 28,500, whatever they are given is no. Is it before reduction or after reduction? They told fixed overhead will decrease by 500 crores, right? And they told in the upcoming year, variable as well as fixed would be 28,500. But they didn't mention, is this 28,500 before 500 reduction or after 500 reduction? Clear? So you can answer the question in both the ways. Both the ways in the sense, in the exam, don't answer both the ways. Clear? You will answer any one way, but both is considered to be right. Okay, even in suggested answers, they have given both the ways, guys. Clear? That is 28,500. Sir, is before reducing 500 or after reducing 500? Both the ways they have given the answers. Either way you answer, you get the marks. This is only when question is silent about anything, guys. Okay, again they have repeated this sentence. Total fixed and variable overhead, however, is to be 28,500. This is the repeated sentence. So I can just cancel it out. The total number of units expected to be sold would be 50,000. That is next year. Please be careful, guys. This data maybe is for current year, 24-25. Whatever they gave from year was for upcoming year. Okay. What are we supposed to calculate? Calculate the minimum number of units to be sold to sustain the same per unit profit in the financial year 25-26. Means whatever profit you were already making in the year 24-25, they want to maintain the same profit per unit. In which year, sir? 25-26. Ignore further effects on fixed cost. They have told it will reduce by 500 crores. Any other effect? Ignore it. Ignore it. Okay, sir. That's all. Yes, that's all. Let us come to the solution. Calculation of variable overhead per unit and fixed cost for financial year 24-25. That is the current year. Differential cost, guys. So we are calculating variable cost per unit. Difference in total cost divided by difference in units. For the upcoming year, they are told total of both is 28,500. For the current year, the total of both is 25,000 crores. Where is it given, sir? You can see fixed and variable overhead 25. That is for the current year. For the upcoming year, they told 28,500. Find out the difference between both and divide it by units difference. That is for the upcoming year 50,000, for the present year 40,000. You will get variable cost per unit. Variable cost per unit. Change in total cost divided by change in output cost. Variable cost per unit. Now, can we calculate the fixed component? Yes, sir. So presently total is 25,000 crores. Clear? In that I will deduct variable portion, which is 40,000 units into 0.35. Present. Clear? What do you get? Fixed 11,000 crores. And they told in the upcoming year it will reduce by 500 crore. So 11,000 minus 500 is my upcoming year fixed overhead. That is next year. They told it will reduce by 500, right? Yes. Then desired profit per unit would be how much, guys? 10,000 crores is the profit. They have already given in the question. Divided by how many units they are selling? 40,000. So what is the profit per unit they are making presently? 0.25 crores. Okay, so next would be calculation of contribution per unit. Selling price per unit 2.5. Sir, how did we get it? I will show you. Total sales divided by number of units. Total sales divided by number of units. Same way, you do material cost divided by number of units. You will get material cost per unit. Then direct wages divided by number of units. You will get wage cost per unit or direct wages per unit. Yeah. Selling price per unit 2.5 crores. Material 1.25. Labor 0.45. How did we get it? Guys, let's listen. First, calculate per unit how much. Per unit how much? How do we get it? Please pay attention here. 15,000 divided by 40,000. You will get per unit. And they told it will increase by 20% next year. So plus 20%. Plus 20%. First calculate per unit. That is for the current year. For next year, it will increase by 20%. So add 20%. They have taken into 120%, or else you can just add plus 20%. You will get C. So 0.45. Then variable overheads 0.35. Where did you get it? Here. Take it. So total variable cost is 2.05. Deduct it. You will get contribution per unit, which is 0.45 crores. Next, contribution is 0.45 per unit. Now let us take, guys, what they have asked in the question is, see, expected sales in the upcoming year 50,000. But now they are asking you, if we want to make same profit per unit, how many units should we sell? How many units should we sell? Now, contribution per unit is 0.45. Now let us assume we want to sell X number of units. So what should be the total contribution? 0.45 into X. Clear? Yes, sir. So what should be the profit? Per unit it is how much, guys? I want to maintain same profit for the next year. So what is the profit? 0.25 into X. Correct. Now per unit I need to maintain same one. Okay, sir. Now profit is equal to what? Contribution minus fixed cost. Agree? Yes. So profit is 0.25x, contribution is 0.45x, and fixed cost we know that 10,500. They have given in the question. Okay, question in the sense we need to find out here. They told that it will decrease by 500 crore. So we found out what is the current fixed cost minus 500 will give us 10,500. Got it? Yes, sir. Or cross calculate. Take this to the other side. It would become 0.2x is equal to 10,500. So divide now. X is equal to 10,500 by 0.2. You will get 52,500 units. So in order to maintain same profit per unit, how many units should you sell? 52,500 units. Any doubt? 52,500 units. Alternatively, I told you, whatever they have given, they have not mentioned is it before the reduction or after the reduction. If I take it in another way, how do we get variable cost per unit? Sir, 29,000. How did we get 29,000? 28,500, assuming it is after reduction, plus 500. Plus 500. Hope you are getting it. Clear? Yes, sir. So 29,000 crores, that is ignoring the decrease. If I ignore the decrease, that is we are just added 28,500 plus 500. That's all. 500 is nothing but the reduction. Clear? Yes. Minus present year, what was the fixed cost? Sorry, total cost 25,000. So what do you get? Divided by output, that is change in output. You'll get 0.40. Hope you understood this. Yeah, 28,500 what they had given fixed and variable overhead for the upcoming year. We have just added 500 and we have taken 29 here. Okay, sir. So what is the variable cost per unit? 0.40. Now, what would be the fixed cost element? At present, 25,000 crores is the total cost. From that, remove variable portion. 40,000 units into 0.40. This is the variable portion, variable cost. What do you get now, sir? Fixed cost, 9,000 crores. Next year, how much it would be? They told it will reduce by 500 crore. Now we are taking 8,500. 8,500. Clear up. When we took year, we considered it before decrease. Clear up. Later we are going and reducing it. Clear. So two different ways we are doing. Sir, both the ways, is it right in the exam? Yes, because they also told alternatively. And in the exam, you cannot do both the ways. You will not have so much time. You do any one way. Both the ways are right. Okay, sir. 9,000 crores would be the fixed cost for the current year, but next year it will reduce by 500 crore. So 9,000 minus 500, it would be 8,500. So what would be the profit per unit, guys? 10,000 crores divided by 40,000 units. Same 0.25. Do the calculation. Do the calculation. This will change. Please be careful. Rest all will remain same. This would be 0.40. What we have got here. Variable cost per unit or variable overhead per unit. So contribution per unit is 0.4. Let us assume number of units to be sold is X. So what would be the total contribution? This is nothing but total contribution, guys. Better you mention. 0.4 into X. So what would be the total profit? 0.25 into X. X is nothing but number of units. So now profit is equal to contribution minus fixed cost. So 0.25x is equal to 0.4x minus fixed cost 8,500 crores. That is for 25, 26. Okay, sir. Let us do it. Now let me take this to the opposite side. It would be 0.4x minus 0.25x. You will get 0.15. So 8,500 divided by 0.15, you will get 56,667 units. So in order to maintain same profit per unit, how many units should you sell? 56,667. Okay, sir. Done. Done with the first one. And please be careful, guys. They have given the data for 24, 25. Using that as a base, we need to calculate for 25, 26. It is like that. Second question. Aroma Park Limited produces two perfumes named Floral, Oriental, and one Cognac. All these are perfumes only. All created through a joint production process. Below are the data from the most recent month of production. Actually, there are three products. All three are joint products only. Sales price 80, 200, 300. Quantity in units 5,000, 3,000, 2,000. Joint cost 60, 60, 60 per unit, guys. They are mentioned. Okay, they are not given total, but per unit they are given. Cost after split off 40, 80, 100. Total cost 100, 140, 160. That is joint cost plus cost after split off. The management on reviewing the above cost data is of the opinion that either they are selling the largest volume product at a loss or the product cost data is flawed. That is, there is a mistake. Okay. What is the highest volume product, guys? This one. Means which product you are selling in highest volume. So they are feeling that we are selling floral at a loss, or else whatever cost we have calculated is somewhere wrong. There is a mistake. What are we supposed to do? Required. Prepare statement showing profit or loss for each product based on the given data. Whatever data you have given, they have given, you need to just calculate profit. Very easy. Just presentation. Plus minus game. That's all. Next, respond to the management perception by showing joint cost apportionment under net realizable value method. Or maybe they are following there is some mistake. They have already apportioned joint cost. Maybe there is some mistake. Now we need to help them with NRV method. Okay. Sure. Let us flip them out. Yes. Present, what they are following. Statement showing profit or loss by each product after further processing products. So sales price after further processing is given 80, 200, 300 guys. Reduce cost after split off and joint cost both. Already apportioned. They have given per unit already. We are not supposed to do anything. So you will get profit or loss per unit. Actually, there for floral, there is a 20 rupees loss for each unit. Whereas for Oriental, 60 rupees profit and Colagne, 140. Quantity they have given, multiply both guys. Multiply both. You will get profit or loss. So as company told, actually we are making huge loss from the highest volume product, floral. 1 lakh rupees loss. Even though I am selling it more, still we are making a loss. Now coming to that was the first requirement. Second requirement, apportionment of joint cost on the basis of net realizable value method. Sales price 80, 200, 300 they are given. Post separation cost you reduce, you will get net realizable value per unit. Multiply that with number of units, you will get total NRV. Total NRV. Now joint cost we need to apportion in this ratio. Guys, don't apportion it per unit basis. Please do it on total basis. Okay, yes. Joint cost is how much, sir? Totally 6 lakh. How do we get 6 lakh? Guys, they have told 60 per unit. Multiply that with number of units. 16 to 500 for first unit, 16 to 3 and 3000 for second unit, and the last product 16 to 2000. Joint cost per unit into number of units. You will get total joint cost. Now that is 6 lakh. Divide it in the NRV ratio. NRV ratio, which is nothing but 20 is to 36 is to 40. Or you further simplify it. They have further simplified and taken 5 is to 9 is to 10 guys. So we are dividing 6 lakh in this ratio. Okay, sir. Share of joint cost for each product. Once I reduce joint cost share, what do we get, sir? Profit. Actually, you can see from floral, if I follow NRV method, we are actually making profit. We are actually making profit. So whatever method they were actually following was wrong, guys. There was a mistake in the method. Because here, this product was giving us loss. Whereas here you can see all three products are giving us the profit. So note, profitability statement prepared after distributing joint cost based on NRV clearly shows that they are not selling its largest volume product floral at a loss. Previously, whatever they were calculating, you used to get loss there. But actually, there is no loss. Actually, it yields a profit of 75,000 times. Okay, sir. Done. Sub question B done. Let us, now we have one more. Let us go further. C. Following information is given of a newly set up organization for the year ended on 31st March 2025. Number of workers replaced during the period 78. Number of workers left and discharged, that is separated, guys, 28. Employee turnover rates using separation method 3.5. Okay. Simple chiller question. Required, compute the employee turnover rates using replacement method and flux method. Okay, replacement method and flux method. Two requirements. Yes. First of all, average number of employees are not given. Using the given data, we can find out that. Employee turnover rate, separation method. Number of separation divided by average workers into 100. Have they given number of separations? Yes. And have they given the rate? 3.5 they have given. So divide each other, guys. Simple. 28 divided by 0.035. Clear? How much do you get? Average number of employees? 800. Average number of employees is 800. Next, employee turnover rate using replacement method. Number of replacement have they given? Yes, 78. 78 divided by 800 into 100. You are getting 9.75. 9.75. Yes. Next, employee turnover rate, flux method. Flux method means I need to take both separation as well as replaced. When they have not mentioned anything about the question, don't take assertions. Just take separation plus replaced. So 28 plus 78 whole divided by average 800 into 100. you will get 13.25 under flux method. Okay. Question number 2. Question number 2. Kids company manufactures and sells two models of baby toys, namely Max and Pro. During the financial year 24-25, 1,500 units of Max and 3,600 units of Pro were manufactured. Okay, this is units produced. However, only 60% of Max and 80% of Pro were sold. So remaining 40 and 20% is what, sir? Closing stock. Closing stock. Labor cost per unit of Max is 2 times that of Pro. Important. Labor cost per unit of Max is 2 times of Pro. Assume Pro is 2 rupees. For Max it would be 4 rupees. Yeah, I just took the example. There was no opening stock of finished goods or work in progress. Okay. Opening stock is not there. But will we have closing stock? Yes. Because we have sold only 60% and 80% of whatever we have produced. So do we have closing stock? Yes. The cost particulars of two models. Pay attention here. The cost particulars of two models of baby toys are given below. What are those, sir? Material cost, Max 42, Pro 63,000. Total is 1,05,000. Labor cost, they are not given individually, but incurred. Obviously, we would have incurred individually, but they are not given it. Total, they have given 121. Can we calculate it individually, sir? Yes. Further, the cost controller of the factory informed that work overhead is 50% of labor cost. Office overhead is recovered at 20% of works cost. Selling and distribution overhead is 20 rupees and 30 rupees per unit sold for model Pro and model Max respectively. So for Pro it is 20, for Max it is 30, guys. Required. Prepare a cost sheet for the financial year 24-25 showing the various elements of cost for each model of baby toys, that is prime cost, works cost, cost of production, cost of goods sold and cost of sales, which is nothing but they are asking you to prepare cost sheet along with the format. Calculate the per unit selling price of each model of baby toys if profit is charged at 20% on sales. Clear? So can we convert this profit percentage on cost? Yes, sir. Sure. We will see that. Look, guys, one working we need to do, that is labor part. First, let us finish that. Working. Labor cost for Pro, let us assume it to be M. For Max, it would be 2M because it is 2 times, right? It is 2 times. So it is 2M. So total they have given, guys, 121. So for 3,600 units of Pro, it would be 3,600 into M. Whereas what is the units of Max? 1,500. So 1,500 into 2M because they are twice, no? Okay, sir. Now M wise if I calculate, this is 3,600 M and this would be 2M into 1,500. That is 3,000 M. 3,000 M. So that will give us totally 6,600 M. So divided. M is equal to 1,21,000 divided by 6,600. 6,600. We will get M as 18.333. Now calculate individually. For Max, it would be 2 times of M, correct? So, per unit how much, sir? 36.667. Whereas per Pro, it would be 18.3331. Now calculate individually by multiplying with the number of units. 18.333 into number of units of Pro is 3,600. So what is the labor cost for Pro? 66,000. Next, for Max, don't do into 2 straight away here. That is per unit double, not total. So we have already calculated here per unit 36.667 into number of units. You will get labor cost for Max. Labor cost for Max. Okay, sir. Let us come back. So direct material is already given in the question. Wages, we have done it in a working note. Take it. We'll get prime cost. And work overhead is 50% of direct labor. Whatever is the direct labor into 50%. So 55,000 into 50%, you will get 27,500. 66,000 into 50%, you will get 33,000. They have also shown the total column. You can also show it. Then we get factory cost. Next, administration or office overhead, 20% of works cost. Whatever is the works cost into 20%. Into 20%. And here they have considered administrative overhead as related to production. Sir, can I consider it as general? Yes, in that case, it will come later. It will come later, guys. In that case, if you consider administrative overhead later as general, then this will also be cost of production. Clear? Normally, if question is silent, I would suggest you to take it as general, which will come after cost of production. But here they have taken it as the related to production, guys. They have given a note also for that. You can see. You can see they have given a note for this, which is at the end. If a student assumes office overhead as general overhead, then it will be a part of cost of sales. Means it will come after the cost of production, guys. Yes, I would suggest when question is silent, better take it as general, guys. Oh. So we derived cost of production. Please be careful. Again, I am telling you, they have assumed the administrative overhead as related to production. Oh. Next, closing stock we need to deduct. Sir, how do we deduct closing stock? First, find out units of closing stock. Yes, here. Number of units produced 1500, 3600. We have sold only 60% of max and 80% of pro. So units sold is 900, 2088. Deduct this from units produced. You will get closing stock. 600 and 720. 720. And whatever cost of production is incurred is for how many units? Units produced. So whatever is the cost of production divided by units produced, what do you get? Cost per unit. Multiply that with closing stock units. What do you get? The cost of closing stock. Cost of closing stock. So you can see your closing stock working note. Okay, they have done that calculation also here. You can see this is cost of production divided by units produced. Will give you cost per unit. Multiply that with closing stock units. Closing stock units. You will get cost of closing stock. Cost of closing stock should always be valued at current period cost of production, guys. Yes. So we have deducted the closing stock. There is no opening stock, so no need to worry about it. You get cost of goods sold, then selling and distribution overhead is there, which is 30 and 20 rupees for each unit sold. Please be careful. Multiply that with units sold, not units produced. You will get cost of sales or total cost. They have told 20% profit is on sales. So if I cross calculate, it would be 25% on cost. So add 25% profit on cost. So whatever cost we have got plus 25%. Okay, or else first calculate profit individually. Into 25% you do, you will get profit. Add up both now. Cost of sales plus profit will give you sales. And if you have to calculate selling price per unit, divide the sale value by number of units sold. Number of units sold, not units produced. Number of units sold. You will get selling price per unit. Selling price per unit. Chalo, guys, we are done. Let us see, have they asked selling price per unit? Calculate the per unit selling price. Yeah, that is what they asked. Oh, chalo. B requirement. A plastic manufacturing company is operating with an employment of 128 skilled workers. The product is in great demand. The company desires to increase the production to meet market demand, but is short of skilled workers. The company finds extremely difficult to find new skilled workers to fulfill its demand. The company is considering the introduction of an incentive scheme, either on sale with 50% bonus or row-on scheme of wage payment for increasing the labor productivity to cope up the increasing demand. The company believes that if proposed incentive scheme could bring out about an average of 15% increase over the present earnings of the worker. Okay. Means they're telling whatever is your present earnings, if you introduce the new incentive schemes, your earnings will increase by 15%. Oh, they are promising. It is like a promise to the workers. It could act as a sufficient incentives for them to produce more with increased efficiency. So if you give incentives to the worker, that is 15% increase in the present earnings, they will work with better efficiency. The following data is worth consideration. in measuring the increase in the productivity for the month of April 2025. Hourly rate of wages guaranteed 30. Next, maximum time allowed to produce 1 unit by one worker, 2.5 hours, like standard hours. Standard hour per one unit is how much? 2.5. Number of working days in a month, 25. Number of workers hours. It is actually working hours. It should be working hours. Number of working hours per day of each worker is 8. Actual production during the month is 12,500. That is nothing but actual output. What are we supposed to calculate? Core requirement they have asked for 7 marks. Calculate the effective rate of earnings under Alce scheme and Rowan scheme. Okay. See, under the two, totally 4. Under that two, first one. Calculate the increased labor efficiency on introduction of incentive schemes. Calculate the savings to the plastic company in terms of direct labor cost per unit under both the schemes. Okay, again 2 requirements. Advise the company about the selection of scheme to fulfill their assurance. That is 15% increase in present earnings. Okay, sure. First they have done working only. Let us see. Actual output is 12,500 units. That is pieces. Okay. Now, sir, in a month, how many working hours are there? 25 days working days. Each hour they will work for how many hours? 8 hours. Totally how many workers are there? 128. So what is the total time, sir? 25,600 hours. It is like total available hours. Okay. This is the total time taken to produce how many units? 12,500 units. Total time wages of 125 workers. Guys, simple. 30 rupees is per hour. Simply multiply for this. Again, they have done full calculation. Just multiply. This is the actual hours taken into 30. Into 30. You will get 7,68,000. So if they are just paid based on time, what is the total payment to them? 7,68,000. We can consider this as present earnings. Present earnings. Next, time saved per month. Because for row 1 and Alce, we need what is the time saved? Clear? Yes. Guys, listen. Time allowed per piece is how much? 2.5 hours, standard hours. So you have totally produced 12,500 units. For that, how much time you are supposed to take? 12,500 into 2.5. You were supposed to take 31,250 hours. But you have actually taken how many hours? Only 25,600 hours. 25,600 hours. I hope you understood. Listen here. To produce 12,500 pieces, you are supposed to take how many hours? Into 2.5. That is 31,250. But how much hours you have actually taken? Only 25,600. So what is the time saved? 5,650 hours. Okay, sir. Now for this, do we give bonus? Yes. Bonus under Alce scheme. 50% for time saved. So whatever is the time saved into time rate, 50% of it. 50% of it. Only bonus we are calculating. Only bonus, which is 84,750. What is the total earnings? The guaranteed wages plus bonus. Guaranteed wages is nothing but hours taken. Hours taken into rupees 30. Hourly rate. Clear? If you apply total wages formula, you will get same. But here they have done only bonus because we have already calculated the guaranteed wages, which is actual hours work into hourly rate. So what would be the total payment under Alce scheme? 8,52,750. Now under bonus, sorry, under Rowan scheme, what would be the bonus? Only apply bonus part. Time saved actually. Time saved divided by time allowed into time taken into hourly rate. They just interchange this two. That's all. No problem. We'll get same answer. So you will get how much bonus, sir? 1,38,854. Total wages to be paid to 128 workers under row 1 scheme would be 768 guaranteed payment. That is for actual hours work plus the bonus. Plus the bonus. Guys, hope you are understanding how we got it. The first part of the formula, basic wages we call our guaranteed wages. Hours taken into hourly rate. Clear? Hours taken into hourly rate, which you already calculated. That is why they are doing only the bonus part. 25,700 and 25,600 is the time taken, guys. Actual time taken into hourly rate. Oh, sure. So what is the total earnings under the Rowan scheme? 9,06,854.4, sir. Okay. Next, actual requirements we will do it. Effective hourly rate of earnings under ALSE scheme. Whatever is the total earnings which we already calculated divided by actual time work. Actual time work. You will get 33.310. What is the effective hourly rate of earnings under Rowan scheme? Please take total wages. Don't take only a bonus because the total earnings is basic wages plus bonus. So 9,06,854 divided by 25,600. That will give you 35.424. Okay. Next, let us see efficiency increase. Sir, efficiency in percentage on introduction of incentive schemes. Now, the time which they were supposed to take to produce, the actual output was what? 31,250. But what is the actual time taken? Only 25,600. Only 25,600. That means, what is the efficiency? 122.07. So assuming previously efficiency was 100, now it has increased by how much? 22.07 percentage. Next, saving in terms of direct employee cost per piece under ALSE scheme. Employee cost per piece, guys, they are giving you 2.5 hours to produce each unit. For 1 hour, what is the payment? 30 rupees. So 75 rupees is the labor cost per unit. Piece rate we call it as. Correct? Huh? 75 rupees is the cost for each and every unit. Hope you're understanding. Per hour payment is 30. For each unit, how much hours they are giving you? 2.5 hours. So what is the cost per unit? 75. This was present. Okay, that is before introduction of incentive schemes. Under incentive scheme, what is the cost? Under ALSE, total cost divided by number of units. We'll get cost per unit 68.22. Before it was 75. Now if you introduce ALSE, it would be 68.22. That means for a company there is a savings of 6.78 rupees per piece. Per piece. Sir, what if they are following Rowan scheme? Total wages of the workers divided by number of units. 72.548. That means when compared to the present scenario, there is a savings of how much? 2.45. Correct? Yes, sir. Now, if you ask me from company's point of view, sir, which is better? I'll say because they will save more. They will save more. But can they fulfill their promise? We will see. Last one, can they fulfill the promise? Since the company has assured 15% increase over the present earnings. What is the present earnings, guys? 7,68,000. 7,68,000 without any incentive schemes. Correct? Now, if you add 15% for this, if you add 15% for it, whatever you are paying under ALSE as well as Rowan should be more than this. That is when you are fulfilling your promise. Okay. So if you add 15%, you will get how much, sir? 8,83,200. 8,83,200. What is the total payment under ALSE? 8,52,750, which is less than this. Are you fulfilling your promise? No, sir. It is less. Whereas under Rowan, what is the total payment? 9,06,854, which is more than 883. Clear? How did we get 883? You understood, na? Present earnings is 768. If you add 15%, you are promised increase 15%, right? You are getting 883 Now check under ALSE how much? Sir, it is less than 883. Whereas under Rowan, it is more than 883. So, in order to fulfill whatever assurance you have given, you need to follow which scheme? Rowan scheme. Obviously, the payment would be more, but you have given the promise to the workers. Now, you have to live up to it. You have to live up to it, guys. Yes. Done with question number 2. Yes. Now we will get into question number 3. Question number 3, 3A first. 3A. Mary Chai Teri Chai Limit. Name you see. Sometimes they will come out with these fancy names and all. Okay. You will not have time to enjoy this joke also in the exam. Mary Chai Teri Chai is engaged in manufacturing three products. What are those? Ginger chai, masala chai, saffron chai. Chai means tea. Okay. It has a separate fan base. It calculates activity cost rates based on the cost driver capacity. Okay. They have given activities, cost driver, capacity, and cost gas. Oh. Machine setup, number of setup is the cost driver, capacity is 64, cost is 768. Likewise, machine processing, the cost driver is machine hours, capacity is 1,40,000, cost is 7 lakh. Quality inspection is the next activity. The cost driver is number of inspection, total capacity is 544, cost is 6,80,000. Next activity is packaging, cost driver is number of packings, capacity is 600, cost is 7,20,000. For the year ended 31st March 2025, the following consumption of cost driver was reported. Ginger chai, number of setup, machine hours, number of inspection, number of packings, all they have given for all the three products, guys. Clear. See, here the cost driver rate you will calculate based on capacity. But here the utilized capacity might be less than available capacity. Clear. You can see here what we have used is 60, 135 and all. Is there a difference, sir? Yes. You can see the capacity is 64 and actual utilized is 60. That means 4 is underutilized or unused. Clear? Yes, sir. Fine. But when we are allocating the cost for each product, we need to allocate it based on what? This only, sir. Whatever they have given. This is the cost driver for each product, which is nothing but cost object. Required. Compute the cost allocated to each product from each activity on the basis of activity-based costing method. Okay. Calculate the cost of unused capacity. Unused capacity, how do we calculate it, sir? 64 minus 64. Whereas for machine hours, it is, where is it? 1,40,000 minus 135, 5,000. Whereas for quality inspection, 544, 544 matching, no unused. Whereas for packaging, 600 minus 590, 10. That is the unused. Calculate the cost of it. How do we calculate it? Multiply with cost driver rate. You will get it. Oh, sure. 8 marks question. First, calculate cost driver rate, guys. Cost driver rate calculation is very simple. Everything they have given, you need to just divide it, guys. Activity cost divided by cost drivers. And for cost drivers, you need to take the capacity. Okay, you will get cost driver rate. Oh. Once you get this, you multiply this with the respective cost driver of the respective products. Okay, so for example, 12,000, we need to multiply with for ginger chai into 21, for masala chai into 22, for saffron chai into 70. Clear? So whatever cost driver you have got into the cost driver of the respective products. Whereas coming to processing, it is 5 rupees per machine hour. 5 rupees you take and multiply with the cost drivers. 45,000 hours for first one, into 50,000 hours for second one, and for last into 40,000 hours. Sir, where is this given in the question itself? Yeah, this part. I will just show you this one. Yeah. So once you get cost driver rate, just multiply with the respective cost drivers for each product, guys. So here, 1,250, you have to multiply with 190 for ginger chai, 204 for masala chai, and 150 for saffron chai. Yes, sir. Packaging cost per cost driver, how much? 1,200. Multiply with the respective cost driver. 190, 250, and 150. Okay, sir. So we got what is the activity cost assigned to each product? 9,42,500, 10,69,000, and 7,71,500. This is the activity cost assigned to each product. But they also asked you to calculate the cost of unused capacity, guys. What is the unused capacity? I already told you. Multiply with the respective cost driver. You will get it. Okay, first calculate unused capacity. It's better to show it, guys. Better to show. Okay. Yes, sir. You already have total here. Okay, that is the capacity. From that, reduce whatever is the total of the cost drivers given here into the respective cost driver rate. Okay, sir. That is 4 into 12,000, 5 into 5,000. Here nothing is there because everything is utilized. Here 10 into 1200, 12,000. So what is the cost of unused capacity? Total is 85,000. Let us move to sub question B. Max Cinemas has three types of seats: classic, prime, and recliner, where the total capacity is 306 seats, which are divided in the ratio of 12 is to 4 is to 1. Okay, respectively. Means the seat is divided in this ratio, guys. Like, for example, for classic, 306 into 12 by 17. For prime, it is 306 into 4 by 17. For recliner, 306 into 1 by 17. Okay, sir. The ticket price of prime is twice of the classic ticket price, and that of recliner is thrice of prime ticket price. Guys, simple. Keep the classic as base. Keep the classic as base. Prime is how much? 2 times of classic. That is 2C. Whereas recliner is 3 times of prime. And prime is already 2 times of classic. So if I convert it for classic, how much is it? 6 times of classic. 6 times of classic. Hope you are understanding. Means, guys, it is simple. One recliner is equal to how much classic? 6 classic. How much prime? 3 primes. Clear? Now, one prime is equal to how much classic? 2. 2. Hope you are getting it. Yes. This is pricing, guys. We need to convert everything for equivalent base. Type of seats and occupancy. Classic 75%, prime 50%, and recliner 50%. This is occupancy. On daily basis, 4 movie shows are run throughout the year. The total cost per day is estimated to be 77,760. Please be careful, this is per day. Assume 25% profit on total revenue. Okay, we will not know the revenue. So you can consider it like, can we calculate it on cost also, sir? Yes. Calculate equivalent classic seats per day. Okay, we can do it. For hotels and all, we used to do same way. Calculate ticket prices of all the 3 types of seats, guys. Oh, 6 marks question. First, equivalent classic seats per day. First, calculate what is the classic and prime and recliner, guys. Simple. Just divide it in the ratio what they have given. 306 into 12 by 17, 216. Same way you do for prime and recliner, you will get 72 and 18. This is number of seats. Okay. Now, occupancy is how much, sir? 75%, 50%, 50%. Clear? Average, on an average. Then how many shows per day, sir? 444. So what is the occupied seats per day, guys? 648, 144, and 36. This is not equivalent. This is actual. Clear? So how many classic seats per day is filled? 648. Prime 144 and recliner 36. These are the seats occupied per day. Now equivalent classic seats per day, guys. 648 is equal to 648. Yes. Whereas prime, if I convert it for classic, it is 2 times. So into 2. Equivalent classic seats. Same way. Recliner is 6 times of classic. So into 6. Hope you understood. How did we get 6? 3 into 2. 3 into 2. Because recliner is 3 times of prime. Whereas prime is 2 times of classic. So it is 3 into 2. 6. So what is the equivalent classic seats per day, guys? 115. First requirement done. Now, what is the total cost per day? 77,760. Now add profit for it. Profit is given on revenue, guys. So 25% on revenue. We have assumed the revenue as 100. So 25 rupees would be the profit. Cost is 75. So what is the profit percentage on cost? 25 by 75 into 100. So calculate the profit, guys. 77,760 into 25 by 75. Clear? Or else they have straight away calculated the revenue. 77,760 divided by 75 into 100. Okay. You will get a sales of 1,03,680. Don't call it a sales, actually your revenue. Okay, sir. Calculation of ticket price for classic seats per day. Equivalent classic seats per day we have calculated 1152. Divide it. You will get what is the revenue per classic per seat? 90. Into 2 will be for prime seat 180. Into 6 will be for recliner. Or else you can do 180 into 3 also. You will get 540. Same. Clear? So this is the price charged for each seat category. If you go and buy classic, how much you have to pay per show, per seat? 890. If you go and take the ticket for prime seat, okay, maybe this is like Gandhi seat, this is like balcony, this is like recliner. Okay, Malkon Notebook. Movies na. Sadhya, there is no option to watch the classes or to attend the class by sleeping. I don't know whether that will also come or not. Okay, movies ella first we used to sit and watch. Now there is a time, there is an opportunity or facility to sleep and watch. For sleeping, you will consume more space, na, so more money you have to pay. Chal, 540. Recliner means full, you know, na, you can just relax and watch. Full sofa set. Done. Done with third. Next, fourth one. 4A. NT Limited show a net loss of 9,000 as per their cost accounts for the year ended 31st March 2025. However, the financial books disclosed a net profit of 7,000 for the same period. So costing is a loss, financial is a profit. The following information was revealed as a result of scrutiny of figures of both the sets of books. What are those? One by one. Factory overhead observed is 52,000. Where? Absorption will happen where? In cost books. Selling and distribution overhead over absorbed 6,000. Where, sir? Cost books. Then administrative overhead under absorbed. Where, sir? In cost books 7,500. Interest on loan, pure financial item 8,800. Dividend received, pure financial income 9,000. Factory overhead charged 45,000. Where? In financial books. Observed here in cost books, whereas charged is 45,000. So it is over absorbed in cost books, guys. Over absorbed in cost books, how much? 7,000. Wherever they give the word observed, it is from cost books point of view, guys. Clear? Whereas here they have used the word charged, so you can consider it in the financial books. Depreciation charged in financial accounts 42,000, whereas in cost books 45,000. That means 3,000 more. 3,000 more in cost books. Oh. There is a difference in value of closing stock of finished goods due to varying basis of valuation. 500 units of closing stock is valued at 41,000 in cost accounts. Closing stock is nothing but like income because we credit it. Whereas market price per unit of closing stock is 80 per unit. That means, guys, it is like this. In cost accounts, you have considered closing stock as 41,000. Whereas in financial books, you would have taken it as the market price. How much is that, sir? 80 into 500 units. So there will be a difference. There will be a difference. In cost books, actually, you have valued it at 82. You can check 41,000 divided by 500. If you do, you will get 82. Whereas in financial books, it is 80. That means in cost books, you are overvalued by 2 rupees. You are overvalued by 2 rupees per unit. It is found that there is still a difference in reconciliation statement after considering all the above. So whatever they have given here, even after considering all this, still there is a difference, which is due to excess of raw material consumption in cost accounts. Excess of raw material consumed in cost accounts. Okay, raw material consumed is like an expenses. You have consumed more in cost accounts. Because of that, the profit has gone down. Prepare a reconciliation statement taking net loss as per cost accounts as a base. Second one, find out the excess of material consumption during the period in cost accounts effectuated the difference in reconciliation. Okay, it's better to do this one first, guys, because this figure is required for the first calculation. Clear? Yes. So let us do it. Please pay attention. Let us focus on the second part first. Guys, this part you keep it pending. You can take care of it later. Okay. Net loss as per the cost records is 9,000. That should be your starting point. Okay. Factory overhead is over absorbed. When factory overhead is over absorbed in cost books, your costing profit, analyze from profit point of view. When it is a loss, just start with negative value. But when you're analyzing, analyze it as if it is a profit. Analyze it as if it is a profit. Listen here. Factory overhead is over absorbed in cost books. So my cost profit has come down by 7,000. Whereas my financial profit is this much. If I have to match my cost profit with financial profit, what should I do? So I added 7,000. Same way, selling and distribution overhead also is over absorbed. Add 6,000. Dividend received, guys, is credited only in financial book. So my financial profit has gone up, whereas I have not recorded this in my cost books. Now my starting point is cost profit. What should I do? Add it in order to match with financial profits. Then depreciation is overcharged in cost books. Overcharged means my cost profit has come down. Has come down. If I have to match it with my financial profit, what should I do? Add. Add 3,000. Add 3,000. Yes, guys. Now, let us come to the deduction items. Administration overhead under absorbed. In cost books, you are charged less. So that means your profit has gone up. What should you do now? Deduct it. Then interest on loan is an expenses, pure financial expenses, recorded only in financial books. So your financial profit has come down, whereas my costing profit is same. If I have to match my cost profit with financial profit, what should I do? Deduct. Then overvaluation of closing stock of finished goods, where we have overvalued in cost books. As closing stock, you would have credited. If you have overvalued means profit is overstated. So if I have to match my cost profit with financial profit, my cost profit is already overstated. Why, sir? Because you have overvalued the closing stock and you will credit it. So if you have to match, what should you do? Deduct it. That is 2 rupees per unit tax. 2 into 5n. 2 into 5n. Hope you got it. Yes, hope you understood that. Okay, I will show you. Listen, this part only. Sir, they are valued in cost books. Inventory at 41,000, which is for 500 units. If I divide, what do I get? 82. Whereas in financial books, they would have valued it at market price. Guys. When they have given that, it is understood that in financial books, they are valuing it at 80 rupees. So what is the difference? 2 rupees. So 2 rupees overvalued in cost books. Oh. Now what do you do is silence, listen here. Sir, this we have not yet got, sir. This we have not yet got. What should you do? Except that, what is the addition? 25,000. So 9 plus 25, you will get net 16,000. Got it. Then deduct all the deduction items. That is reduction. Okay, reduce all this. You will get negative 1,300. What is my financial profit, sir? My financial profit is 7,000. Find out the difference between minus 3,000, minus 1,300 and positive 7,000. What is the difference, guys? 8,300. That is my excess of material consumption. Clear? They have kept it here as X and they have found out. What I suggest is you better ignore this till you get. So 9,000 is minus plus 25 will give you plus 16. Then deduct 17,300. You will get minus 1,300. But my financial profit is 7,000. So what is the difference between this, sir? Plus 8,300. That is my excess of material consumption. Guys, they clearly give. Now you have a confusion. Should you add it or deduct it? You got it as positive or negative? Positive 8,300. Positive 8,300. That means you have to add. Or else let me explain it conceptually also. When excess raw material is consumed in cost books, that means you are charged more expenses in cost books. So your cost profit has come down. Now, if you have to match it with financial profit, what should you do? Add it, guys. Yeah. So as a presentation, actually they have done like that. Okay. They have taken excess of material consumption here, but as we don't know, they have mentioned it as X. So it would be X plus 25. If you add up all this, you will get 25. X plus 25. You will get X plus 25 minus 9. That is X plus 16,000. Then deduct all this. You will get X minus 1,300 because minus is more. Clear? X minus 1,300. Now we are supposed to get how much? 7,000. So X minus 1,300 should give you 7,000. Clear? So find out the X. Find out the X. So take minus 1,300 to the other side. You will get 8,300. Is that clear? Now, this is the excess of raw material consumed in cost books. Using this, we will prepare the reconciliation. You can see already I have explained all the things. You need to take this extra. That's all. 8,300 in the reconciliation. And please be careful. They have asked you to take cost profit only as a piece, which is a loss. And when it is a loss, starting point is a loss, just put it in bracket. But when you're analyzing whether to add the item or deduct the item, you will analyze from profit point of view. Because of this item, whether my profit has increased or decreased, guys. Hope you understood. Hope you understood. So what I suggest is for this kind of question, first do this and then do the first calculation. And for the first calculation, you can leave necessary space. You can leave necessary space and do the second. Yeah, yes. Chalo. Sub question B. A manufacturing unit using standard costing system and the following information was obtained from his records. Standard and actual. Guys, standard here is nothing but budgeted. Budgeted. Okay, sir. Production. Guys, what is the name we will use? Production is nothing but like budgeted production, actual production. Budgeted days, actual days. Next, budgeted fixed overhead, actual fixed overhead. Budgeted variable overhead, actual variable overhead. Clear? Now we need to calculate some rates, standard rates. How is it, sir? Standard fixed overhead rate per unit. Divide 48,000 by 4,800. Clear? Yes, sir. Hours information they have not given. Huh? Actually, hours they have not given. Fine. Next, variable also. Standard variable overhead rate per unit 14,400 divided by 4,800. You will get what is the per unit. Calculate the following overhead variances: variable overhead variance, fixed overhead variance, fixed overhead expenditure variance, volume variance, calendar variance. Okay, sir. One by one. Yes. First, variable overhead cost variance. Sir, what is the formula? Standard variable overhead for actual production minus actual variable overhead. Actual is already given, no problem. Standard is what? Guys, it is always like observed. First, calculate what is the standard variable overhead rate per unit. 14,400 divided by 4,800. It is nothing but budgeted variable overhead divided by budgeted output. And you will always observe it for actual units produced into actual output. Okay, this is nothing but variable overhead observed minus actual. You will get 720 at the worst. Next, fixed overhead variance. That is fixed overhead cost variance. Observed minus actual. Observed again, same story. First, calculate standard fixed overhead rate per unit. How is it, sir? Budgeted fixed overhead divided by budgeted output. And multiply that with actual output because absorption will always be for actual output. Minus, they have already given, guys, actual in the question. Take as it is. You will get 1,200 at the worst. Next, fixed overhead expenditure variance, budgeted minus actual. Both are given in the question. Deduct each other. Deduct each other. Guys, this is nothing but budgeted. Okay, they have mentioned it as standard. Okay, but actually it is budgeted. Budgeted minus actual. That's all. Both are given. Next, calendar variance. What is the formula, sir? Actual days minus budgeted days into standard fixed overhead rate per day. So 27 days minus 25 days into budgeted fixed overhead divided by budgeted days. You will get 3,840 favorable, guys. 3,840 favorable. See, actually in the question, they have not given any information about hours. But is it required for us? No. But when you see the question, you will feel confused. Sir, question is incomplete because hours data is not given. But for whatever they have asked, hours is not required. If they had asked efficiency variance and all, yes, hours was required. But here they have not asked, so not required. Oh, fine. Question number 5. Chinmay, question number 5. Furniture Wala Limited, a manufacturer of dining tables, procures wood as its direct material. The dining tables are initially processed in the molding department and subsequently transferred to the laminating department, where a plastic layer is applied. The molding department began manufacturing 35,000 initial dining tables during the month of March 2025 for the first time, and their cost is as follows. Okay, input is nothing but 35,000 cash. Direct material is 1,15,500. Molding cost is 59,500. So total is 175. A total of 29,000 dining tables were completed and transferred to laminating department, output transferred to next process. The rest 7,000 were still in the molding process at the end of the month. That is closing. All of the molding department direct materials were placed, but on an average, only 25% of conversion cost were applied to the ending work in progress. So, for this 7,000 units, material with respect to material, 100% work is done. Whereas with respect to conversion, only 25% work is done. You are required to calculate equivalent units of production for each cost, the molding cost per equivalent units, and the cost of closing work in progress and finished product. Both they are asked. Question is for 4 marks. Calculation of equivalent units of production, guys. See, first input and output you match. Input is 35,000, whereas output is 28, and closing WAP is 75. Sorry, 7,000. So, sir, is it matching, sir? Yes. Then you proceed. Guys, with respect to output, we have 100% done with the work. So, take 100%, 100%. So, equivalent units would be 28,000 each. Then coming to closing WAP, with respect to material, 100% done. With respect to the conversion cost, only 25%. So, equivalent units would be 1,750. Now, sir, in this method or in this question, which method are we following? T4 weighted average. Doesn't matter. There is no opening work in progress only. When there is no opening work in progress, don't care about the methods, guys. Okay. Calculation of molding cost per equivalent unit. Material cost they have given, conversion cost they have given, divided by equivalent units. For material, what is the equivalent units? 35,000. Divide each other. You will get 3.30. For conversion, what is the equivalent units? 29,750, which is nothing but like molding, guys. Okay? Yes. So divide each other. 2 rupees you will get. So closing work in progress. With respect to material, what is the equivalent units? 7,000 into 3.3. Whereas for conversion cost, what is the equivalent unit? 1,750 into 2. Sir, where did you get 1,750? Here. Equivalent units with respect to closing work in progress. Okay, sir. So we'll get cost of closing WAP 26,600. Same way, finished top. Equivalent units is same 28,000 into the respective equivalent cost per unit. You will get total cost of finished product transferred to next process is 1,48,400. Yeah. So instead of doing individually, can I do total? For example, 28,000 into 5.3. Yes, we'll get same. Clear? Because equivalent units is same for material as well as conversion, guys. Okay, sir. Then they have asked the difference between job costing and batch costing, guys. Theory question. Job costing is followed by an entity who is doing the work as per the customer specification, where each job is unique. Each job would be unique, guys. And here you will calculate the cost of each job separately. Whereas batch cost is followed by an entity who is doing the same work but on batch to batch basis. For example, 100 pens in a batch or 1,000 pens in a batch. Here, will each product be unique? No, it would be homogeneous, means same to same. Each unit produced in a batch will be same to same, guys. Here we will calculate the cost for each batch and then divide it by number of units in the batch. You will get cost per unit. Got it? Yes, sir. Okay. So, yes. Yes, be done, sir. Next, C. It was for 3 marks. Yeah. A reputed engineering college in Pune has 20 sections with 60 students per section. The college plans a one-day pleasure trip around the city for the students during the weekend to places such as zoo and the amusement park and technological museum. A private transport operator has agreed to provide the required number of buses at a higher charges of 6,500 per bus per trip. Okay. The bus hire charges is inclusive of special permit fees of 500 per bus per trip paid to the city municipal corporation. So 6,500, out of that 500 is like permit fee, remaining is for maybe transportation company. Okay, so please be careful. 6,500 already includes 500. Don't add 500 again. Oh, each bus has a maximum capacity of 54 persons, excluding the driver, excluding driver seat. Okay, you cannot sit there. Ah, 4 seats are reserved for teachers. Okay, maybe two at the starting and two at the end. That is how the teachers will give protection. ಆ ಟ್ರಿಪ್ಪಲ್ಲೂ ಬಿಡಲ್ಲ ಎಂಜಾಯ್ ಮಾಡಕ್ಕೆ ಚಲೋ okay, may not be in every school, but at least in few schools, teachers will be the moderators, okay, or controllers. Chalo, where were we? 4 seats are reserved for the teachers who occupy each bus. Guys, that means in each bus, what is the seat for children? 50. The college will employ 4 teachers for each bus and pay 500 rupees as daily allowance to each teacher for the trip. You see, students has to pay to go for a trip, whereas teachers will get paid for going for a trip. Okay, ಅವರೆಲ್ಲ ನಿಮ್ಮನ್ನೆಲ್ಲ ನೋಡ್ಕೊಬೇಕು. They have to take care of the students, no, or else they are held responsible. That is also huge risk. Okay, some of the trips I have seen. Actually, my mother is a school teacher. Okay, where every year they will plan a trip. Okay, one of the year, not my mother's school, but some other schools, children died when they had gone to the ocean to play samudra. Yeah, some of the students died. Who is held responsible now? Teachers, for their negligence. They were debarred actually. Now my mother was like, no trip, I don't want to come for trip only. Correct. Now why is extra tension? Tripu beda, yenu beda. Chalo. No other cost in respect of teachers are relevant to this trip. They will be paid salary and all. That is for teaching, not for this trip. So no other cost related to this trip. The following are the other cost estimates, guys. Breakfast 55 rupees per student. Lunch 120 per student. Evening tea with snacks 40. Don't ask me veg or non-veg and all. Entrance fee at amusement park. It is actually free entry, not fee. It is free entry. Entrance fee at a zoo 25 rupees. Sir, our school only is there, no sir. Didn't understand. Leave it. As regards the technological museum, the authorities charge block entrance fees for group of students depending upon the number of students in the group as enumerated below. Number of students in the group up to 300 means the entrance fees is 2000. If the number of students is 301 to 900, 3000. 901 and above 3500. So here the museum entry fee will depends on the number of students. Higher the number of students, maybe they are charging less. Means overall will be more, but per student will come less. Clear? Yes. And whatever they have given here as not per student. Assume 200 students went, they charge 2000. Assume 300 students went, they will charge 2000. Clear? Assume 600 students went, they will charge 3000. 900 students, 3000. More than 900, 3500. Okay. Cost of prizes that would be distributed to the winners in a different games being arranged in the amusement park depends upon the number of students in a trip. Oh, they are conducting some games and they are giving the prize also for the winners. Okay. The cost of prizes to be distributed is, Chetan, nim school alli madidra, nim college alli illa. Okay, fine. The cost of prizes to be distributed is up to 300 students, 2200. And here also total, guys, it is not per student and all. If the number of students is 301 to 600, 2400. 601 to 900, 2400. 901 and above, that is nothing but more than 900, 2500. Assuming, see, after reading all this story, you will feel that the question is on service costing. Okay, but actually it is on budget. Okay, assuming that the college hires the requisite number of buses depending upon the number of students in a trip, you are required to prepare a flexible budget, estimating the total cost for a trip for the levels of 300 students, 600 students, 900 students, 1200 students, showing each item of cost separately. Look at the beauty. When you read full story, you will understand that the question is on service costing. Actually, like flexible budget and all is what's up. Normally, with respect to outputs, clear at different level of output, they will ask you to present the cost and profit. But here they are asking you to prepare the flexible budget for different number of students. Clear? If number of students going for the trip is like 300, 600, 900 and 1200, what will be the cost? Compute the average cost per student at each of the above levels. Okay. If I do one, the second one is easy. Question is lengthy, guys, but actually very easy. Very easy question. Flexible budget showing the total cost for a trip. Okay, so number of students, guys, 300, 600, 900 and 1200. First, we will take all the variable. I have told you for flexible budget, you should always give a breakup between variable and fixed. First, variable. Breakfast to lunch to evening tea and entrance fee is free here and entrance fee at zoo. They have given per student. Just multiply with number of students. Clear? One thing I will show you. Breakfast, 55 rupees per student. So, 55 into 300, 16,500. Next 55 into 600, 33,000. 55 into 900, 49,500. 55 into 1,200, 66,000. Got it? Yes. Same way you have to do, guys. Whatever is per student is there, multiply with number of students. You will get the respective cost. Okay, sir. Total variable cost. Total variable cost. Now let us calculate number of buses also. Easy, guys. For one bus, how many students can be fit in? 50. So for 300 students, how many bus we require? 300 by 50, 6 bus. For 600 students, divided by 50, 12 bus. For 900 students, divided by 50, 18. For 1200 students, divided by 50, 24. Don't take divided by 50 for 4 seat, teacher seat, fixed. You cannot go and sit there. Okay? Yes, sir. Chalo. Remaining is students. ನೀವು ತೊಡೆ ಮೇಲೆ ಕುತ್ಕೊಂಡು she is telling, sir, I sat on the lap of the teacher. And why there was no space for you? Chalo, get back. So number of buses is 6, 12, 18 and 24, guys. Oh, let us calculate the bus cost now. Higher charges, 6,000 rupees per bus. So calculate it. Into 6, 36,000. Into 12, 72,000. Into 18, 1,08,000. Into 24 is 1,44,000. Got it? That is nothing but the cost per bus into number of buses. And here they have taken the special permit fee separately. Sir, can I take it together like how they have given? Yes. So 500 into number of buses. Teachers also, 4 teachers per bus. For them, what is the payment? 500 per teacher into 4. So per bus, 4 teachers, what is the cost? 2,000. Teacher cost. 4,000, 2,000 per bus. 4 teachers are there, no? Okay. Yes, sir. So now multiply 2,000 with number of buses. With number of buses, you will get the teacher cost. Next, block entrance fee at Technological Museum, guys. So they have given how much? 300, 600, 900 and 1,200, right? Yes. Yes. For 300, how much? 2,000. 2,000. Yes, sir. Next, for 600, how much? 3,000. For 900 also, 3,000. Whereas for 1,200, it is 3,500. Got it. Same way, prices. For 300 students, 2,200. For 600 students, 2,400. Then for 900 students, 2,400. For 1,200 students, it is 2,500. Yes, sir. As this will not vary with number of students, you are considering it here, guys. Sir, can I take it as semi-variable? Yes, it will actually kind of fixed, kind of variable. Clear? Because it is blockwise. Yes, sir. Sure. Prices to the students. Actually, there is nothing called fixed. Even, see, sir, how can you call this as semi-variable, sir? Number of buses will vary with number of students. Correct. Now, one bus, whether it is 20 students or 30 students, you have to pay that much. So, it is like kind of semi-variable. Correct. Number of buses will depend on the number of students. Correct. And now, if you have hired 6 bus, you have to pay for it. So, kind of fixed, kind of variable, guys. Yeah. So, all these are semi-variable. So we'll total up the semi-variable. Now add up variable with semi-variable, you will get total cost. You will get total cost. Total variable cost we have done here, right? Add up the total semi-variable. Okay. This is our first calculation. They have also asked cost per student. So once you have got total cost divided by number of students, guys. Number of students. It's better you continue here only. You will save time actually. Clear? Take number of students here, or else you would have already taken it on the top, divide each other. You will get cost per student. Cost per student. That's all. So numerical part done. Last question is theoretical, guys. Theoretical. So let me quickly go through. I will not explain in detail. because we would have already covered it. You guys also can manage, but let me just go through quickly. In the following independent situation, identify the type of cost and state whether it is relevant or non-relevant in the managerial decision making. That's simple. Relevant means, sir, which will affect my decisions. Clear? If something is already happened, sunk cost, will it affect my decision making? No, it is not relevant. Even like the opportunity cost or the notional cost, should we consider that in our decision making? Actually, we will consider. Clear? For example, assume I have my machine. I have my own machine using it in the production process. Now, if I let out, I will get 20,000 rent. Or if I take from someone else, I will pay a rent of 20,000. Is it relevant for my decision making? Yes. Same way. Got it. Chalo. Sir, I am using my own building for business. I am not taking any rent. But if I take someone else a building on rent, I have to pay it. Notional rent. Yes, sir. So the question is on that. 5 marks. You can see. Okay, let me quickly read it. Okay, for your satisfaction. A Limited owns a commercial space of 1,500 square feet and uses the same for its own office accommodation purposes. Similar office is available nearby on rent for 30,000 per month, guys. It is like notional cost or opportunity cost. Sir, is it relevant? Yes. Because I need to do the better calculation. Sir, am I using my building effectively or not? Or am I using the asset effectively or not? We have discussed in cost accounts for calculation of total cost and all. Do we consider notional cost? Yes. But in financial, we never do it. Oh, it is relevant. Next, MNC Limited has already paid 1 lakh as rent for factory shed, which is temporarily closed for last 2 months. Done and dusted. Can we change anything now? No, irrelevant. Next, Beta company has paid 3 lakh to the market research agency to find out the market demand of the innovative product developed by the company. So it is spent on innovation, guys. Sir, is it relevant again? No, because we already incurred. We already paid for it. Clear? Yes. See, if I think it in another way, it can also be relevant. When, sir? Because this research might give me some benefit in the future. Na? If I think from that angle, then it is relevant actually. But if I just think from cost point of view, already incurred, sunk cost, irrelevant. Next, Zen LLP has paid a incentives of 5 lakh at 1% on sales to the salesman for achieving a sales beyond the expected sales of 25 lakhs per month per salesman. There's a salesman commission paid based on the sales he has achieved, guys. So is it relevant, sir? Yes, sir. Why? They have mentioned out of pocket cost, we are paying it. But why is it relevant? Sir, I am pushing the sales through the salesman. So higher the sales he make, higher the commission I receive. So is it relevant for me? Yes. If required, I can fluctuate this also. Assume if I want to increase more sales, maybe the commission I will increase from 1% to 2% or 1.5%. Is it clear? And also it will affect my decisions. We need to see for whatever commission we are paying, is it actually contributing to increase in sales? Yes, only if sales increases, I will pay it as incentives or commission. Yes. Sure. A startup company has invested 50 lakh in project P. The company could have earned interest of 3 lakhs by investing the amount in bank FD at 6% per annum. Again, opportunity cost. Okay, if I had not invested, at least means in my business, I would have got somewhere FD interest. Sir, is it relevant? Yes, it is relevant. Guys, even in your FM, you will do these calculations. Okay, we will keep normally this as a base. Correct? If I am earning more than that, yes, good investment. If not, assume 6%, my earnings is only, return on investment is only 5%. Is it good to invest? No. Even if I had kept it in FD without any risk, I would have got 6%. Clear? Now assume the return on investment is 8%, 10%, 15%. Will I go for it? Yes. Okay. Next, first question done. Second question. Cosmos Limited uses activity-based costing and accumulates overhead cost in the following cost pools. What are we supposed to do? Classify each cost pool as per the cost hierarchy. Unit level, batch level, product level, or facility level. Guys, you remember, any activities performed for each and every unit produced, it is unit level activities. If there is any activity produced for a group of units or activity performed for a group of units, then we call it as batch level, like purchasing and all. Whereas product level, sir, we are introducing a new product, designing a new product or part specification, then we follow product level. Whereas facility level is more of the supporting activities. Supporting activities, guys. Chalo, one by one they have given. Let us straight away go to the answer only. Human resources is always facility level. Support, no. Maintenance of building, facility level. Parts management, it might be batch or product batch. Part specification and all normally product. Or, sir, for parts, for example, 100 parts, 200 parts, 300 parts, we are specifying or we are managing. Then you can also follow batch level activities. Plant securities is facility level, again support. Purchasing, guys, will we purchase each and every unit? No, number of units. Reorder quantity. Assume reorder quantity is 1000. That is a batch. So it is a batch level activities. Floor manager salary, again support activities. So facility level. Quality control. If you are doing the quality test for each and every unit produced, then unit level. No, sir, we are doing for a group of units on sample basis, then batch level. Designing the product level. Then receiving department. Guys, we have purchased, we have ordered for the raw material. Once we receive it, receiving department will be receiving it. Is it on for each and every unit or for group of units? Group of units. That is reorder quantity. Whatever units we have placed the order, we will be receiving that much. Okay. Then they have asked you to explain the two methods of valuing the work in progress. That is FIFO and weighted average, guys. Weighted average. Sir, explaining this theoretically is actually challenging, but still you can do it. Under FIFO method, guys, the output we need to give a breakup. How much is out of opening work in progress and how much is out of current period production. And for opening work in progress, we will take only the remaining work. Even while calculating the cost per equivalent unit, we will take only the current period cost. Do we consider the cost of opening work in progress? No, we ignore it. We ignore it. So we will take only the current period cost, divide it by current period work. You will get cost per equivalent unit. And while calculating the cost of output, we will consider the cost of opening WAP also. We will take cost of opening WAP. For that, we will add whatever cost we have incurred in the current period for the work done. Clear? Then we will also calculate the cost of the units which we have completely processed in the current period. Okay. When it comes to weighted average period, cost method, we don't care about what is opening WAP, how much work was completed and all. Sir, output 10,000 units, take percentage of completion, full 100%. 100%. We don't care about, sir, how much was done last period, how much is done now. It is 100% completed, we are transferring it to next process, take degree of completion, 100%. Even when it comes to cost, you need to add up both and take the average. Cost of opening WAP plus current period cost, take the total cost divided by equivalent units. You will get weighted average price. And whatever we have got here, weighted average price, just multiply with the equivalent units, you will get the respective cost. That is the cost of output, cost of closing WAP, cost of abnormal loss units, everything you get. Okay, sir. Or we have another option for it. Internal choice I had told while explaining the question paper format. One internal choice is there. What is it, sir? Contemplate the list of functions given below and identify each one of them with the most relevant scope of cost accounting. Okay. It involves a detailed examination of each cost. Guys, when we are, what is this first of all? Cost control. Why is that? While controlling the cost, I told you, if I want to control a cost of 100 rupees, first I need to say, what is material cost? What is labor cost? What is overhead cost? I can control it only element wise. That is what we learned in material, labor and overhead chapter. Correct. So we need to do the detailed examination of each cost so that we will look into where we can reduce the cost. So the answer is cost control, guys. Cost control. Next. Sir, should we give the explanation and all? Not required. Next. Helps in planning and control, performance appraisal and managerial decision making. This is like cost report. I need to prepare a report of what is the actual work done, what was supposed to be done, and I will compare both and accordingly appraise the work of the workers. Okay, and decide whether should we give incentives or any reward to them or should we penalize them. Next, cost involved in alternate course of action. I am comparing what is the cost of product A with product B. Comparison. Cost comparison. Or else, I am assuming I have two options to produce the product with machine A or machine B. I'm calculating the total cost of both the machines and comparing both. Cost comparison. Cost comparison. Correct. The third one is cost comparison. Last one. To find out factors responsible for variance in actual cost from budgeted cost. Budgeted cost is nothing but standard cost. So we'll compare standard cost with actual cost and find out the difference, which is nothing but variance. What do we call it as cost analysis? Cost analysis. That is, sir, I am comparing my actual cost and with standard cost and analyzing it. You guys remember we have discussed while calculating the variances and all. Sir, once I calculate actual cost, I will compare with standard cost and we will analyze the variance. What is the reason? Okay, and even variance we will classify into two, controllable, uncontrollable. If it is uncontrollable, we will leave it. If it is controllable, we will try to analyze what is the reason for it. And if anything which we can change, we will introduce that change in the organization. Got it? Yes, guys. So this is all about May 2025 descriptive questions and answers. Yes, students. Now we will discuss Jan 2025 question paper. Now I will be discussing multiple choice question. Then we will discuss the descriptive question separately. Yes. So let us focus only on MCQs now. Guys, as you are already aware, the question paper pattern MCQ would be for 30 marks. Okay, there would be 15 questions of 2 marks each. And in that 15 question, 10 question is actually case based. Means they have given 2 case, under each case 5 questions. Totally 10. Another 5 questions are independent questions, individual questions. Okay, sir. Sure. Part 1 MCQs, we will see. Case scenario 1. ABC company produces 3 products, X, Y, and Z. Similar type of material is used in the production of all the 3 products. The company has been using traditional absorption costing method, using direct labor hours to allocate overheads to its product. So under traditional, how do they absorb the overheads, guys? Using the labor hour. Using the labor hour rate. The cost accountant has suggested considering an activity-based costing system. The following information is available in the records of company. Yes. Production volume per annum in units 16,000, 17,000 and 15,000. Direct material per unit, that is 3 kg, 4 kg, 5 kg. That is for each unit of X, Y and Z, how much raw material you require. Then labor hours also per unit they have given 0.10, 0.15, 0.20. Then machine hours per unit is given, number of production runs per annum, number of purchase orders per annum, number of orders shipped per annum. All this might be your cost driver, guys, under activity based costing. Okay. Activities they have given, machine setup cost 49,000, production runs, that is the cost driver for this. Then machine running cost 64,128. The cost driver is machine hours. Then purchase cost 52,050. Purchase order is the cost driver. The delivery cost is 46,460. Order shipped is the cost rate. Okay. And all these cost driver numbers are given here. And guys, see, one thing you have to be careful. For machine running cost, they have given machine hours. So should I take machine hours per unit? No. You need to multiply that with production units. You will get machine hours. Because this is per unit. You cannot take that as a ratio. What should you do? Multiply machine hour per unit with number of units. You will get machine hours. Take that as a ratio to apportion what's a machine running cost. Hope you understood. The price of raw material is 2 rupees per kg. They have told you for each unit of output, how much raw material is required. Into 2 is the cost. Into 2 is the cost. Next, direct labor cost per hour is 20. They have told for each unit how much labor hours is required, which is actually given in like decimals. Into the 20 rupees. On the basis of above case scenario, you are required to answer the following MCQs 1 to 5. Guys, see, there are 2 ways to read the MCQ question and answer it. One way is like how I did it, top to bottom. You read the full case, then you read the requirement and answer it. There is another way which I will follow for second scenario. Clear? Yes. What is the overhead absorption rate per hour as per traditional absorption costing method? That is nothing but labor hour rate. They're asking you labor hour rate. Okay. What is the full cost per unit? I will read all the requirement, only then we will start answering. Guys, because what happens now, when they have asked assume the third or fourth or fifth requirement, you need to be preparing for it from beginning on. Clear? Because sometimes students will focus only on this. Later, something else also is required for next calculation. You can keep the things ready from now only. No? So first read all the requirements. What is the full cost per unit of product Y under traditional absorption costing method? Okay. Next, both are under traditional. Full cost means what is the cost per unit considering all guys? Material, labor and overhead. Then under an activity based costing system, what is the cost driver rate for machine setup cost? Machine setup they have asked only. One second. Machine setup only for this. Yeah, yes, for which the cost driver is production runs. Under an activity based costing system, the amount of allocated overhead attributable to machine running hours to product X. Clear? So much, how much of overhead cost is apportioned to product X? Sir, of which activity, sir? Machine running. Oh, last one. The total cost of product Z as per the activity based costing method. This would be the most challenging and time taking. Others and all we can do it easily. This would be more time taking, for which we need to do all the steps. Actually, the final answer. Guys, here totally 5 questions are there. Actually, this question is on a combination of 4th and 5th chapter. Correct traditional absorption costing as well as activity based costing. Totally 10 marks. Guys, this kind of question actually they will ask in descriptive type also to find out the cost under traditional as well as activity based, which is normally for 8 or 10 marks. Here also they have asked for 10 marks. Clear? Chal, we'll try to figure out the answers one by one. First let me again read. What is the first requirement? Quickly. Tuck, tuck, tuck. Overhead absorption rate per hour as per traditional absorption costing method. Okay, we need to calculate labor hour rate. Okay, sir. And they have not asked for a particular product. They have not asked for a particular product, guys. Please be careful. That means we need to do overall. We need to do overall. Okay, sir. First calculate what is the total labor hours required. Because labor hours should be the denominator. Sir, production volume they are given. Labor hours per unit is given. Multiply both. Multiply both, guys. What do you get? Labor hours for each of the product. What is the total labor hours? 7,150. 7,150. Okay. Now calculate all the cost. This all overhead cost they have given in the question. Where they have given, sir? This one. Just add up everything. This is nothing but the total of the overhead cost. Total of overhead cost, guys. How much do we get, sir? 2,11,638. Just divide it by labor hours. What do you get? Labor hour. Labor hour rate. How much it comes to? 29.60. You can check it out. You can check it out. Sir, where is this given in the question? Here it is. Production labor hours. You need to multiply both. You will get total labor hours divided by whatever total cost you have got divided by labor hours. That's all. Hope you got it. So what is the overhead absorption rate per hour? 29.60. Is it there in the option, sir? 29.60. Next question is, what is the full cost per unit of product Y under? And if at all, if you want to take down, please pause and take down, guys. That is whatever you want. I have given here. You can just pause and take down. Oh, then coming back. Second one. What is the full cost per unit of product Y? Okay, they have asked only for product Y under traditional absorption costing method of product Y. I am doing it here. Guys, come on. Direct material is how much? Sir, 4 kg we require for each unit. Into what is the cost? 2 rupees. So 8 rupees. Material cost. Labor. Sir, 20 rupees is per hour. For each unit we require 0.15. Multiply both. 3 rupees. Then overhead is how much, sir? Same. Labor hours we will take. Into. What is the cost per hour, sir? 29.60. What we have got here? Check it. So what is the cost per unit of Y? It is 15.44. 15.44. Hope you understand. And please be careful. Overhead is observed based on labor hours. Same hours we have taken. Not machine hours. Machine hours also is given in the question. Don't get confused with it. They clearly give under traditional. They are following labor hours to observe the overheads. Okay, we are getting 15.44. Do we have it? Yes, 15.44. From now it is activity-based costing. Activity-based costing. Under an activity-based costing system, what is the cost driver rate for machine setup? Cost driver for machine setup. Guys, easy. For machine setup, what is the cost driver? Production runs. So they have given here, just total of that. Just total of that. Divide 49,000 by that. 49,000 divided by the total. So you will get 125 plus 175, I guess. So 49,000 divided by 175. I have also done it here. I have done it here. Where is it? Yes. You can see I have done for all because for next calculation it is required. But for this question, you need to do only machine setup, right? Machine setup, right? Yes, machine setup. Okay. Machine setup. What is the cost there? 49,000. What is the cost driver? Production runs. What is the total of cost driver? Total of CD means cost driver 175. Divide one another. You'll get 280. 280. Yes, sir. 280 is there in the option. A. 280. Oh. Next. Under an activity-based costing system, the amount of allocated overheads attributable to machine running over hours to product X. Machine running, guys, to product X, they're asking. Machine running, listen now. Machine running we need to do now. What is the activity cost? 64,128. What is the cost driver? Machine hours. Guys, machine hours is not directly given in the question. How did you get it, sir? Simple. Simple. Machine hours per unit is given. Multiply that with production. You will get machine hours. That should be the cost driver. That should be the cost driver. For example, here 0.5 into 16,000 will give you 8,000. Same way you need to do for Y and Z. This into this. This into this. Sorry, machine hours now. This into this, guys. Yes, sir. Let us proceed further. So you will get, what is the cost driver rate, sir? 1.92. Now 1.92, we are apportioning it to which product, sir? I guess they asked for X, huh? Yes, product X. So for product X, how much we are doing, sir? 1.92 into, for product X, what is the cost driver? 8,000. So 1.92 into 8,000. 1.9, you got it, no? How do we assign or allocate the activity cost to the cost objects? We will take cost driver rate, multiply with the cost driver for each of the points. So for X, it would be 1.92 into 8,000 into 8,000. How much do you get? 15,360. 15,360. Yes, sir. 15,360. Till here, actually, everything was easy, guys. You used to get it in short, clear. But last one, you need to do full workout. Full workout. Sir, what is it? The total cost of product Z as per the activity-based costing method. They have asked only for product Z, but for your knowledge, I'm doing for all three products. Okay, as if it is a descriptive question. Okay. Sir, here, listen here. First, we calculated the cost driver rate for all the activities. Okay, using that, we will apportion it to the cost object. So machine setup cost, what is the cost driver? 280. Multiply it with the respective cost drivers. 280 into 50 will be for X. 280 into 65 will be for Y. Next, 280 into 60 will be for Z. Same way, for machine running, what is the cost driver rate, sir? 1.92. 1.92 into 8,000 will be for X. 1.92 into 11,900 will be for Y. Same way, 1.92 into 13,500 would be for Z. Next, for purchase cost, what is the cost driver rate, sir? 17.35. Multiply with the respective purchase orders. Into 5, into 10, into 15. You will get how much has to be assigned to each products. Same way. Now, for delivery cost, what is the cost driver rate, sir? 505. Multiply it with number of orders for each product. 505 into 25 into 35 Next into 32. Clear? Yes. You will get this cost, guys. Now we got the overhead cost for each product. Total it up. Total it up. Divide it by production volume. You will get overhead cost per unit. You will get overhead cost per unit. They didn't ask overhead cost per unit. They asked total cost per unit. Sir, what should I do now? I need to take this. Material cost, labor cost for each of the products. Yeah, actually they have asked only for one product. I am doing it for all products. So that even if they ask descriptive question, you should know how to present it. Yes, sir. So direct material, direct labor is what, sir? Direct material, quantity into rupees 2. Where is their quantity, sir? This one. Into rupees 2. You will get material cost per unit. Same way, labor cost, hours into rupees 20. Rupees 20. You will get direct labor cost. Then we derive prime cost. For this, we need to add overheads. Whatever we have discussed here. Whatever we have discussed here, you have to take it. Okay, sir. Once we get overhead, then we will get total cost per unit. Have they asked per unit or total, guys? Total cost of product Z. You can see here the figures given is not per unit, total. Correct. Sometimes they will ask total cost per unit. You stop it here. No, sir. Whatever they are given in the option only you can see. It is not per unit. Totals. Okay. Multiply with the production volume. You can multiply it with production volume. You will get the total cost of each product. Clear. This was per unit, whereas this is for all the units put together. So which product they did? They asked Z. So what was the cost of Z? It is 2,94,905. 294,905. Is it there? Yeah, exactly there. Exactly there, guys. Hope you understood how we derived it. Sir, see, I have repeat again. In the exam, sir, they have asked only Z. No, should I do for all products? Who cares about this? Clear. Now I have just done it for your better understanding. Clear? Yes. Chalo. Here also, sir, was it required to be done for X and Y? No. I have just done it for your knowledge because assume in the upcoming attempt they ask for X, Y, and Y. You should know how to calculate. I have presented everything. And guys, see, listen here. For this, sir, you have presented here really well. Should we also present like this in the exam? No. All this working is not required for a multiple choice question. You need to choose the answer. Do the rough working. Maybe in the last sheet of your answer booklet, you will do the rough working and get it. Yeah. And especially, guys, the last calculation will take time. The last question, fifth question will take time. Clear? Yes. Chalo. Try to get the answer as early as possible. Hope you understood all five questions. All five questions, it was on overhead and activity based costing. Now, listen, right? Silence. First question, how did we do it? Sir, I read the full case, then requirement, and I started solving one by one. Now I will read this case scenario in a different way. What do I do? First, I will read the requirement quickly. Only requirement, not the options. Tuck, 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 tuck. The total number of units to be produced of product P. Okay. Next, the total quantity of raw material R to be purchased during the year. Okay. The total cost of purchase of raw material Q during the year. Okay. The budgeted variable cost of production of 1 unit of product P is. Okay. What is the budgeted net income or profit for the year? Fine. So totally 5 requirements are there. Totally 5 requirements. Now, guys, see, I know what I am supposed to calculate. When I am reading the case, I will try to connect the given information to the requirements. Clear? This is one way of reading the case scenario question. XYZ Limited produces the product P. The cost accountant of the company has to prepare its budget for a particular year. The following information are made available for this purpose. The expected sales of product P is 1 lakh units during the year at a selling price of 50. So sales would be 1 lakh into 50. Each unit of product P requires 3 kgs of raw material Q and 4 kgs of raw material R. Raw material requirement. The expected stock levels are as follows. Opening and closing they have given. Finished product P. Opening stock of finished goods, closing stock of finished goods, guys. See, they have given sales here. Now, if I adjust that for opening stock and closing stock, what do I get? Production. production. Then even for raw material, both Q and R, they have given opening stock as well as closing stock. Okay, sir. Raw material Q cost 2 rupees per kg and R cost 3 rupees per kg. It requires 10 minutes of direct labor time to produce 1 unit of product P. Okay. Labor cost is 50 rupees per hour. Variable manufacturing overheads are 10 rupees per unit. Fixed manufacturing cost is 3 lakh rupees per year. Fixed administration and selling expenses are 25,000 per year. 25,000 per year. Okay, sir. Sure. Now again, we will read the requirement one by one and calculate. Clear? Yes. The total number of units to be produced of product P is production. So sales we have, if I adjust opening stock and closing stock, will I get production? Yes, sir. Even for this, I have done a working. You can see here. They are given sales as 1 lakh guys. Opening stock is 12,000 deducted and closing stock is 15,000 added. You will get units to be produced 1 lakh 3,000. Units to be produced is 1 lakh 3,000. We have followed this equation. Sir, opening stock plus production minus closing stock is equal to what, sir? Sales. I need to just reverse it now. Sales we know. Sales we know. Minus opening stock plus closing stock will give you what? Production. 1 lakh 3,000. Is it there in the option? Yes, sir. Next, the total quantity of raw material are to be purchased. Are to be purchased. Guys, before calculating purchase, we need to calculate how much is consumed. So, how many units we have produced, sir? 1 lakh 3,000. For that, how much raw material is required? This is nothing but raw material consumed. How much is required, sir? For each unit of output, 3 units of Q is required. So, 1 lakh 3 into 3. R, for each unit of output, how many kgs of R is required? 4. So 1 lakh 3,000 is the production into 4. 4 lakh 12,000. This is like raw material required for production. Opening stock is how much, sir? They have given in the question. Opening stock and closing stock is given in the question itself. Oh, adjust it. Adjust it. So add closing stock and deduct opening stock. You will get raw material to be purchased. Guys, here also we have followed this equation. Sir, what is it? Opening stock plus purchases minus closing stock is equal to what? Consume. Now we know what is consumed. This is nothing but consume. So interchange the position. Let me write here. Consumed minus opening stock plus closing stock will give you how much is to be purchased. How much has to be purchased? Okay. So raw material to be purchased is 3 lakh 3,000 and 4 lakh 18,000. What is the cost of each kg? 2 rupees, 3 rupees. Multiply. Multiply. So they have asked for which product, guys? Raw material R. So total quantity of raw material to be purchased. Okay. Only quantity, not the cost. Quantity is how much, sir? R 4 lakh 18,000. 4 lakh 18,000. 4 lakh 18. Only quantity they have asked, not the cost. Oh. Now they have asked total cost of purchase. So that is why I have done one step next. I had also. The total cost of purchase of raw material Q during the year is how much, sir? Q is 6 lakh 6,000. 6 lakh 6,000 tons. Yes. That is nothing but quantity into purchase price per kg. Next, budgeted variable cost of production. Sir, here in this case, was it required to be calculated? This is not required. Okay, I just done it as a steps. This part was not required because for R they have asked only quantity, whereas for Q they have asked cost. And obviously, while calculating cost, should I calculate quantity? Obviously. Okay, because quantity into price will be the cost. Okay, let us go back. Next requirement. The budgeted variable cost of production of 1 unit of product P. Product P. Okay. Material 3 kgs at 2 rupees. 6. That is Q. Okay. Next R is, this is R actually. 4 kgs at 3 rupees each. What is the cost, sir? 12 rupees. 12 rupees. So we will get 18 rupees material cost. Then labor. Sir, 50 rupees is the labor charges per hour. For each unit, how much minutes we will take? 10 minutes. So 10 by 60 you do. You will get it in hours. In decimals only, but in hours. Because 50 rupees is per hour, right? Okay, or else you can do it like this also. 50 by 60. You will get what is the payment per minute into 10. Into 10. What is the labor cost? 8.33. Next, variable manufacturing overhead. They only given 10 rupees per unit. So we'll get variable cost of production per unit 36.33 guys. 36.33. You can just observe 36.33. So have they given, sir? Yes. 36.33. Last one. What is the budgeted net income for the year? Guys, normally under case scenario, the last question if you observe will be the lengthiest calculation. Okay, rest all you can get it easily, but the last one maybe will take little extra time. Yes. Net income they're asking. Oh, budgeted profit or income, guys. Selling price is 50. I will reduce variable cost per unit, which I already got 36.33. You will get contribution per unit. Unit sold is how much? 1 lakh. Calculate total contribution. Just multiply both. That's all. You will get total contribution. And they have given fixed cost 3 lakh 25,000. You will get a profit. You will get a profit of 10 lakh 41,667. Do we have it, sir? Yes. We have it. So each of the question I have tried to work out guys. Instead of simply explaining, I have worked out so that if you want, you can also make a note of it. I will just show it once. Yeah. And here, while I'm solving, I have tried to solve it as it is like a descriptive questions and all. I have presented everything. In your exams, when you're doing some calculations, you can do it in calculator only. Sir, should we write these stories and all may not be required, guys. Maybe at least short forms you can use like DM, DL while calculating. If not, you will not understand later what is what. Yeah, yes. To the extent possible, try to consume less time for MCQ solutions, guys. Okay, sir. Sure, we'll move forward. So I have told you two ways of solving the MCQs. What are those? Especially the case based. How do you solve it, guys? One is read full story, then read the requirement and start answering. One way. Another way is, sir, I will read the first requirement, then I will go and read the case. And once I read the case, then again I will read each of the questions and start answering it. See, both the ways are better, but I suggest the second one you will save time actually. That is, first you read the requirement, and when you're reading the case, you already know that what you are supposed to calculate. Maybe this will be more helpful, but it depends on the students also, guys. So what I would suggest is you guys also take up some MCQs, case-based MCQs. Assume you will take up like 10 total. 5 you solve in one way, another 5 you solve in another way. You see where you are consuming less time, where you are feeling more comfortable. You can follow the same approach in the exam. Don't make your exam as trial and error. Okay, practice it well before, and in the exam straight away you can follow that up. Yeah, yes, sure. Now let us move to the independent MCQ questions. AB Limited has furnished the following data. Budget, the production in units, 40,000 units, and fixed overhead 78,000. Actual also they have given for the month 48,000 units and fixed overhead 84,000. Guys, it is nothing like this. Budgeted output, budgeted fixed overhead. Actual output, actual fixed overhead. Okay, sir. Calculate the fixed overhead volume variance. Volume variance. First calculate what is the standard fixed overhead rate per unit. Divide each other. 78,000 divided by 40,000. You will get 1.95. It is per unit. Okay. Sir, what is the formula to calculate fixed overhead volume variance? Observed minus budgeted. Observed minus budgeted. Yes, sir. What is observed? Sir, rate per unit into actual out. So 1.95 into 48,000. You'll get observed minus budgeted 78,000. you will get 15,600 favorable. 15,600 favorable. So the answer is favorable. Please be careful. Adverse option also is there. Choose the right option. 15,600 favorable. Next. Two products Y and Z are obtained in a crude form and require further processing at a cost of 6 for Y and 5 for Z per liter before the product can be sold in the market. Maybe like product Y and Z is joint products, guys. They would be further processed and sold in the market. The final prices of product Y and Z are 15 rupees and 8.7 rupees per liter respectively. That is sale price after further processing. The company earns a net margin of 25% on cost. The following data is available for the output of both the products for the year. What is it? Y 8,000 liters, Z 6,000 liters. A joint cost of 60,000 was incurred for the year and company apportioned the joint cost on the basis of NRV, that is net realizable value after further processing. After further processing, they have given the sale value after further processing 15 and 8.75. You need to take it. Calculate the joint cost per unit of product Y. Product Y. Let us do it. Guys, listen here. First, let us calculate NRV. When you are calculating NRV, you have to do for both the products because you need to get ratio. Don't do it only for Y. You need to do for both the products. Okay. Sale value is how much, sir? You need to calculate. 8,000 into 15 for Y. 120. 1,20,000. Then for Z, 6,000 into 8.75. 8.75, which will give you 52,500. From that, you reduce estimated profit. Estimated profit they have given on cost, guys. But now we know sale value, convert it. So cost, I am assuming it as 100. So profit would be 25, which is 100 into 25%. So selling price is 125. So convert profit percentage on selling price. It would be 25 by 125 into 100. It is 20%. So reduce estimated profit and also reduce further processing cost. Where they have given further processing cost? Here 6 and 5. Multiply with the quantity. 6 into 8,000. 48,000. Next 5 into 6,000. 30,000. Further processing cost. You will get NRV. NRV is 48,000 and 12,000. Total is 60, guys. Total is 60. You can see in our case, joint cost also total is 60. Same ratio. Correct? Same ratio. Actually, 60,000 I need to divide it between Y and Z in what ratio? 48 is to 12. You will get same number. You will get same number. So can I tell 48,000 is the joint cost apportioned to product Y? Yes. And this case, why it is 48,000 same is just because the total of this ratio will remain 60,000, which is equal to our joint cost. Or else we will take this as a ratio and apportion 60,000 price. Here, you take that also, you will get same thing. For example, 60,000 into 48 by 60. You will get 48,000. Oh. So 48,000 is the joint cost apportioned to product Y divided by quantity 8,000. You will get per unit. You will get per unit because they have asked per unit, guys. So the answer is 6, sir. The answer is 6. Hope you got it. Yes, sir. Next. The data pertaining to the worker C in a factory depicts that he is paid at a rate of 100 rupees per hour. And a week comprises 48 hours for 6 days work. So each day they will work. Totally in a week they will work for 48 hours. And week comprises of 6 days, guys. The allowed absence time is 15 minutes per day for maintenance, which is normal idle time, guys. It is normal idle time. Okay, sir. Next. The job card of C indicates is chargeable time is scattered for two different jobs, which is J1 21 hours and J2 24 hours. Any unaccounted time is attributable for power failure. Power failure is normal or abnormal? Abnormal idle time. Okay, power failure is abnormal idle time. Calculate the cost of normal idle time and abnormal idle time. They're asking both. Actually speaking, guys, we don't calculate the cost of normal idle time separately. Why is that? It will be observed always by good units. But here they're asking no. Let us calculate power. No. Guys, normal idle time first is how much? 15 minutes per day. How many days in a week? 6. So calculate. Calculate. How much you will get? 6 days into 15 minutes. 15 minutes. We'll get 1.5 hours. 1.5 hours. Correct? Yes. So what is the cost for each hour? 100 hours. So what is the cost of normal idle time? 150. Now coming to abnormal. First of all, abnormal idle time is not given in the question. Let us calculate it. Listen, guys. Total available hours is what? 45. In that, normal idle time is how much? 1.5. Sir, how did you get it? It is 15 by 60. That is 15 minutes now. So 15 minutes divided by how many minutes in an hour? 60 into 6 days in a week. Into 6 days in a week. So how much do you get? 1.5 hours. And on the job, how much hours he has spent? 21 plus 24, which comes to 45 hours. Remaining is abnormal idle time. Balance is there. Remaining is abnormal idle time. That is also 1.5. 1.5 into 100, even that you will get 150. So 150, 150 equal. Hope you understood. Abnormal idle time is worked out as balancing figure, guys. Next, 14th one. During a certain period, 4,000 labor hours were utilized and standard hours for actual production were 5,500 hours. The variable overhead efficiency variance amounted to 15,000 favorable. Yes. Calculate the standard variable overhead rate per hour. So guys, what they have given, use that formula. What they have given, variable overhead efficiency variance, use that formula. So variable overhead efficiency variance, what is the formula, sir? Standard hours minus actual hours worked into standard rate per hour. Okay. Sir, have they given this? Yes, positive 15,000. I am taking positive 15,000. If by chance if it is adverse, you need to mention negative, guys. Clear? That is negative. Minus. Okay. Standard hours is 5,500. Actual hours is 4,000. Into rate, I don't know. We will keep it as it is because we need to calculate. So now 15,000 divided by what is this? 1,500. Take it as denominator. 15,000 divided by 1,500, guys. You will get rupees 10. So what is the standard variable overhead rate per hour? 10 rupees. 10 rupees. Got it? Yes. Guys, in this kind of MCQs and all, very simple. What they have given, use that formula. Clear? What they have given? One variance, which is variable overhead efficiency variance. Use the same formula, you will get whatever is required. Okay, sir. Last question under MCQ. A company is analyzing its inventory management practices and has determined that an economic order quantity is 400 units. Okay, EOQ is already given. The cost incurred for placing a single order is 25. That is ordering cost per order. While the total demand for the year is 8,000 units, guys. Okay, that is annual demand. Calculate the carrying cost per unit per annum. Okay, per annum is not mentioned, but it is understood. They are asking for annum, guys. So what should you use? Guys, EOQ is already given. Use EOQ formula. Use EOQ formula. Now listen here. EOQ formula is what? Square root of 2 into annual demand into ordering cost per order divided by carrying cost per unit per annum. That is equal to what? 400. That is equal to 400. Now, do square root both the sides. Square both the sides. Square both the sides. So 400 square and here also. Square root ke square. Clear? Now, sir, here I can cancel both the squares. Clear? Square root and square, I am cancelling it out. So 400 square will be how much? 1,60,000. Bring CC. This square root is removed now. Bring CC to the other side. Into it will become. Is equal to, the numerator is 4 lakh. Now take the 1,60,000 to the other side. 4 lakh divided by 1,60,000, you will get carrying cost per unit per annum. Got it, which is 2.5. 2.5. Clear? So each of the multiple choice question I have worked and tell you this is how you will find out the answer. Clear? And you guys also please try it out, guys, by your side. Now you have understood each of them how to solve. Now you already have an idea. Please try to solve it yourself and try to get the answer as early as possible. And sometimes what mistakes students do it, they will try to get everything in the calculator itself. Maybe you will not be able to get it, guys. Clear? And now what you have calculated before, you will forget. Better put it in paper. Whatever you have done now, put it in paper. Okay, at least roughly, in short, you put it so that you will know what you have presented. And if by chance, if somewhere you have missed out also, you already have numbers in your paper. Sir, for this, where should I use the space, sir? They will not give a separate sheet. Better use the last sheet of your answer booklet. Last 1 or 2 pages. You can use it for the same, guys. Fine, guys. So this was the multiple choice discussion of Jan 2025 question paper. Yes, students. So in this video, we'll be discussing the Jan 2025 costing question paper. In this video, I will be focusing only on the descriptive type, guys. Yes, let us get into straight away. Start video. Question number 1 is compulsory. Guys, see, as I had already mentioned it in my classes and all, question 1 is compulsory, but you need not take it first only. So should I take it up first itself, or can I take it later also? Guys, you can answer it later also. So please be aware of it, because guys, most of the time students will get stuck in the first question. Compulsory question normally will be little lengthy, time taking. So can I write that question later, sir? Yes. But now for discussion, I will follow the same sequence. That is, I will start with question number 1 only. Attempt any 4 questions out of the remaining 5 questions, guys. In case any candidate answers extra question, sir, this and all won't be possible, sir. How much time we will have? But still, disclosure. In case any candidate answer extra question or questions, sub question or questions over and above the required number, then only the requisite number of questions first answered in the answer book shall be valued, and subsequent extra questions or question answered shall be ignored. Working note should form part of the answer. Okay, that is very important. Students, please read this properly, because many a times you will have a doubt, sir, should I write notes? Should I write working notes? Is it mandatory? And they are telling it openly. They are asking you to write it. Okay, fine, guys. We shall start with question number 1, sub question A. XYZ company has an option to buy any one of the 2 machines, N or M, to manufacture its unique industrial component P. Each of the machines have the capacity to produce same quality of component P and are almost identical, except for the fact that they are being manufactured by different manufacturers. The specification for each machines are: machine P, it has the capacity to produce 50,000 components of P per annum. P is our output, guys. The fixed cost being 1,50,000 and could generate a profit of 2,25,000 on the sale of all the components produced. Machine N, it is also having the equal capacity to produce same number of components as that of machine M per annum, and all the components thus produced could be sold in the open market without any difficulty. Okay. Fixed cost of this machine is 60,000. 60,000 less than the machine M, guys. Okay, how much? It was 150. That means this is 90. This is 90, guys. Fixed cost 60,000 less. Please be careful. And yield a profit of 1,60,000 by selling all the components that are produced. The selling price of each component of P is 100, which is output. Calculate break-even sales in value for each machine. Calculate sales level in units where both the machines are equally profitable. Means the profit at what level it will be equal. If you sell how many units, the profit would be same, guys. Yes, that is what they are asking. We'll see the solution. Sales, guys. Sales is how much units are? 50,000, 50,000. Same. Selling price also would be same. Whether you produce the product from machine M or machine N, it will remain same. Price is 100 each. Okay, so variable cost, guys. Variable cost. 1 second. Let me go back. Yeah. Silence. Guys, selling price is 100. Machine produces 50,000 components. Both the machines produce same thing. They have clearly told. That means 50,000 units. Okay, sir. Silence.
Machine piece selling price, that is sorry, component piece selling price is 100. Sir, what about variable cost, sir? Variable cost, they have told profit 2,25,000. Here also profit they have told 1,60,000. And they have told about fixed cost, guys. They have told about fixed cost and profit. Yes, sir. Let us come from there. Let us come from there. Okay. Guys, profit plus fixed cost will give us what? Contribution. Will give us contribution. So contribution, if I deduct it from sales, what do I get? Variable cost. So actually variable cost is a balancing figure here, guys. Balancing figure. I repeat, we know profit, we know fixed cost. 150 here, 60,000 less, so it will be 90 here. Please be careful. Profits at both the machines they have given 225 and 160. If you add up both of this, what do you get, guys? Contribution. Now you deduct contribution from sales, what do you get? Variable cost. Variable cost per unit, can I calculate, sir? Yes, 46 lakh 25,000 divided by 50,000, you will get 92.5. Same way, 47 lakh 50,000 divided by 50,000, you will get 95. 95. That is variable cost per unit, guys. If you deduct variable cost per unit from selling price, what do you get? Contribution per unit. Contribution per unit. What they have asked? What they have asked is break-even sales, I guess. Break-even sales. PV ratio, let us calculate. PV ratio, contribution. They have done total, better do per unit only. 7.5 divided by 100 into 100. It is 7.5%. Here coming to 5 by 100 into 100, or simply 5 by 100, you will get decimal also. How much is that, sir? 5%. This is our PV ratio, guys. PV ratio or contribution to sales ratio. Yes, sir. Then coming to break-even sales, fixed cost divided by PV ratio. Fixed cost is already given 150 and 90 divided by PV ratio. Divided by PV ratio, which gives you 20 lakh break-even sales. If you use machine M, if you use machine N, it will give you 18 lakh. It will give you 18 lakh. Let the units be X. Now they told clearly, you find out the indifference point. Means here indifference in the sense where you are indifferent, your point profit is equal. Guys, when the profit will be equal under both the machines, when total contributions, agree? Yes, one second. Contribution is, yeah, let us calculate. 7x, 7.5. Let the number of units be X, guys. Let the number of units be X. Yes, sir. So how much is the contribution for machine M? 7.5 into X. How much would be for N? 5 into X. Number of units we are keeping same. Same. Okay, sir. Minus the fixed cost. Minus the fixed cost. 150 for M, 90 for what? N. Okay, sir. Now profit would be equal under both the options. If you sell so many units, the profit under both the options would be equal, guys. That is when we are indifferent. Okay, sir. Now solve it. Now hope you guys are getting it. Guys, this is nothing but just a minute. This is nothing but the profit of M. This is nothing but profit of what? N. Contribution minus fixed cost. Contribution minus fixed cost. Now solve it. Take 5x to the other side. Minus 5x it will become. So 2.5x is equal to 150 minus 90, 60,000. So now x is equal to 60,000 by 2.5. You will get 24,000. 24,000. So if you sell 24,000 units, then the profit from machine M as well as machine N will remain same, guys. It will remain same. So that is your answer for second question. If you sell 24,000 number of units either from machine M or machine N, you will have same level of profit. Same amount of profit. If you want, you can cross check also. For example, 24,000 into 7.5. Do it quickly. 24,000 into 7.5 minus 1,50,000. How much you are getting? 30,000. Same way. Now let me do it for machine N. 5 into 24,000 minus 90,000. Is the profit same? Yes, sir. Profit is same. Okay, let us move forward. Second sub question. PQR Limited manufacture a product in batches of 2,000 units. Okay, batch size is 2,000 units, guys. The following costs are incurred for each batch. Direct material cost per batch 2,40,000. Direct labor cost per batch 1,65,000. Overheads absorption rate variable 120 per machine hour. They only told variable, guys. Expected rejection rate 3%. Scrap value per rejected unit 75. Other information, selling price per good unit 250. That is normal selling price. Scrap, please be careful. That is for loss. Total available machine hours per month 3,000. Fixed overheads per month 1,25,000. Batches manufactured per month, guys, 10 batches required. Calculate contribution per unit of good units after adjusting rejected units. Okay, calculate contribution per unit of good units after considering rejected units, guys. Second one, calculate the company's total monthly profit. Monthly profit. Yes, sir. Sub question B. Selling price, guys, 250 they have told. Into how many numbers? Okay. We'll do one thing. Working note. First will come from this. Number of units manufactured in a month, guys. Number of batches into number of units. How many batches we have produced? 10. In each batch, what is the size? 2,000. That means we have produced 20,000. But in that, how much good units? Into 97%. Sir, how 97%? 3% is the loss. So what is the good units? 97% of the input, guys. Okay, so consider it as 19,400. That means 600 is a loss. How did you get 600? 20,000 into 20,000 into 3%. Yes, sir. So now can I sell 19,400 or 20,000? How much can I tell? 19,400. Please be careful. 19,400 into 250 comes to 48 lakh 50,000. Direct material cost comes to 24 lakh. Have they given per unit or total? Let us see. Per unit if they are given, multiply. Per batch is given 2 lakh 40 into 10. Into 10. Labor cost per batch 165 into 10, guys. Into 10. Overhead absorption rate variable 120 per machine hours. Machine hours data is given here. Total available machine hours per month is how much? 3,000. Fixed overheads per month, okay. Batches manufactured, fine. Chalo, come back. Come back to the solution. Yes, sir. Variable overhead 3,000 into per hour how much? 120. Calculate. Then total variable cost you will get, guys. 44 lakh 10,000. Divided by number of units. How many units? 19,400. Don't take 20,000. 19,400 is the output. Okay, sir. 220.50. Then scrap value of rejected units. What should we do with this? Reduce, because it is a savings for me. It will reduce my cost. How much is that, sir? 75 rupees per unit. How much you will actually get? 600 units. How do you get 600 units? 20,000 into 3%. So that is a scrap value which you have to reduce. Now net variable cost is how much? Calculate. 44 lakh 10,000 minus 45,000. It would be 43 lakh 65,000. Divide that now by 19,400, guys. 225. And was this required, sir? Maybe this was not required actually. Because they have clearly asked you to calculate contribution per good unit. Yes, sir. Now 250 is the selling price. 225 is the variable cost. How much is the contribution per unit? 25. Contribution per unit is 25. Yes, sir. Working note. Okay, that is anyway I have discussed. Calculation of company's total monthly profit. They want you to calculate monthly profit. Contribution for 85,000. We already done here. Minus fixed cost. Fixed cost is 125. They are given in the question, guys. This one 1,25,000. Just deduct it. You will get profit. You will get profit. Just sum. Next, sub question C. And guys, always they will also give the marks breakup. You can see here for each sub question. Under that, what is the marks weightage? C. The cost accountant of a manufacturing concern has given the following details in respect of raw material X. Difference between minimum lead time and maximum lead time is 4. Guys, very similar question we have solved in the class. Numbers are different, but concept is same. Average lead time to procure the raw material is how much? 7 days. Material X is the raw material, guys. Reorder level is 1,80,000 units. Reorder quantity is 90,000 units. Minimum stock level is 1 lakh units. Maximum stock level is 1,90,000 units. Required to calculate maximum consumption per day, 2 marks. Minimum consumption per day, 2 marks. Easy. Sure. Let the minimum lead time be A and maximum lead time be what? B. Okay. So B minus A is equal to 4. That is maximum minus minimum. The difference between them is 4. Okay, sir. Average is how much? 7. So A plus B whole divided by 2 is 7. So A plus B is equal to 7 into 2, which is 14. 7 into 2, it is 14. Okay, sir. From equation 1 and 2, we get. Okay, they have got straight away. Okay, let me do it like this, guys. Listen. Sir, minimum, let me take it as X. Maximum would be how much, guys? 1 second. Yes. Minimum, let me assume it to be X. So maximum would be how much? X plus 4. Correct? Yes, sir. Average, we know the formula. What is it? Minimum, or else let me straight away apply the values. X plus X plus 4, that is minimum plus maximum, whole divided by 2, guys. That is equal to, they have already given, how much is that? 7. X plus X, 2X, let me take. 4 whole divided by 2. 2 into 7, 14. 14 minus 4, 10. 10 is equal to 2x. X is equal to now 10 by 2, which is equal to 5. Which is equal to 5. So minimum is 5, maximum is plus 4, 9. You can also cross check. 5 plus 9, 14 divided by 2, 7. Average is 7. Okay, sir. Matching. Fine. Now coming to reorder level. What they have asked is consumption, guys. Minimum consumption and maximum consumption, I guess. Let us do it. Guys, maximum consumption in which formula do you use? Reorder level. Apply that formula. Reorder level is equal to maximum reorder period into maximum lead time. Sorry, maximum reorder or lead time is one and the same into maximum consumption. Into maximum consumption. This is R, not pi. Then that is equal to reorder level is already given in the question. 1,80,000 is equal to maximum reorder period. Just now we have calculated 9 into maximum consumption. We don't know. Let us keep it. So this will go to the other side divided by. So 1,80,000 divided by 9, which gives us maximum consumption of how much? 20,000. 20,000. Yes, sir. Maximum stock of A, reorder level plus reorder quantity minus minimum consumption into minimum reorder period. Sir, why are you using this formula? Guys, what are we supposed to calculate? Minimum consumption. Check minimum consumption in which formula do you use? In which formula do you use it? That is in maximum stock level formula? Yes, sir. Now, the calculation would be maximum stock of A is given in the question is equal to reorder level is given, reorder quantity is given. The reorder level we have just now calculated now. So yes, actually it was given in the question itself. 180 plus reorder quantity is given 90 minus minimum consumption into minimum lead time. Minimum consumption we don't know. We will keep it as it is into 5. Okay, sir. So minimum consumption is equal to what, guys? 1,90,000. Okay, better minimum consumption only you bring it to the other side. Minimum consumption into 5 you can keep it on the other side. So it will become plus. So 190 you take it to the other side. 180 plus 90 plus 190, that is equal to 80,000. So minimum consumption into 5 is equal to 80,000. Now minimum consumption is equal to 80,000 by 5. You will get 16,000 units. We can also solve in an alternate way, guys. Minimum stock level is equal to what? Reorder level minus average consumption into average lead time. Average lead time. Can we apply this formula, sir? Yes. Minimum stock level is 1 lakh is equal to reorder level 180 minus average into 7. Average lead time is what? 7. So average consumption per day would be 11,428, guys. Now apply average consumption formula. Minimum consumption plus maximum consumption all divided by 2. So maximum we have already got. Sorry, maximum we already got. Minimum I am doing it alternate way. So keep minimum consumption as the balance equivalent. So 20,000 plus X whole divided by 2 is equal to average 11,428 guys. If you solve it, you'll get minimum consumption is 2,858 per units. Yes. So instead of solving in this way, they have shown the alternate way. Okay. So this, instead of applying maximum stock level formula, can we calculate average and then find out the maximum consumption, sir? Yes, this is an alternate. Yes. Sure. We'll move forward to question number 2. The following information relates to a manufacturing concern A Limited for the year ended 31st March 2024. Particulars as on 1st April, as on 31st March. Guys, this is opening stock, this is closing stock. Raw material and work in progress, both are given opening and closing. Raw material purchase 8 lakh, inclusive of GST at 18%, ineligible for ITC. That means, obviously, should it be included, sir? Yes, already 18 lakh includes it. You need not do anything. Already 8 lakh includes that, guys, you need not do anything. Sir, if by chance, if I have to remove, how will I remove, sir? How will I know? Simple, guys. 8 lakh is including GST. Into 100 you take, that's all. Into 100 you take, only that value we have to consider. That is when you are eligible for ITC. But now, not eligible for ITC, you need not do anything. Packaging cost primary 3 lakh, fee paid to independent directors 5 lakh, production bonus paid to factory workers. 10% of wages paid to factory workers. Factory workers means what? Direct, guys. Direct workers are direct wages. Job charges paid to job worker, that is direct expenses in nature. Salary paid to supervisor 6,17,900. Wages paid to factory workers 6,90,000. On this bonus is dependent. 10% of this. Okay, sir. It would be 63,000. Salary paid to production control manager 7,20,000. Sale of scrap generated during manufacturing 50,000. Selling overheads per unit 2 rupees. Salary paid to general manager 12,40,000. Freight inwards, guys, freight inward. Should we add it to the purchase cost? Yes, we should add it here. How much is that, sir? They have given it separately, but you have to add it. Please be careful. 2% on raw material purchased. Okay. Whatever 8 lakh is there into 2%. Expenses paid for quality control check activities 4 lakh 30,000. 4 lakh 30,000. Chetan, particular facts. Asset details is given. Factory building. Cost price is 25 lakh. WDV as on 1st April. That is opening. 21 lakh 87,000. Depreciation rate is 10%. Insurance cost is per annum 2% of cost price. Means you have to apply it on cost price, guys. Plant and machinery 15 lakh. WDV, opening WDV is 11 lakh 56,000. Depreciation rate is 15%. Insurance cost per annum is how much? 2% of cost price. Office building. Cost price is 40 lakh. WDV opening 36 lakh. Depreciation rate is 10%. Depreciation is charged on the written down value method. That means whatever depreciation rates are given, guys, we have to apply it on what? Opening WDV. Opening WDV and not cost. Sir, what if they had given it as SLM? What if they had given it as SLM? Then I need to apply it on cost price. Yes. I don't want anyone discussing there. Please make sure you guys are paying attention. All these are important. Additional information. Depreciation is okay, that is done. Next, stock of finished goods. As on 1st April 2023 was 80,000 units, having a total cost of 8 lakh. The entire stock of opening finished goods is sold during the year. Closing stock is 70,000 units during the period. 4,50,000 units were sold. Okay. Guys, whatever data they had given here, opening and closing was only raw material and WAP. They had not given it about finished goods. Now they are telling it in adjustment. Please be careful. Stock of opening stock of finished goods was 80,000 units. Value is how much? 8 lakh. Entire stock of opening finished goods is sold. Obviously, as soon as the year starts, first you will sell it as what? Opening stock. Closing stock, they are telling 70,000 units. Okay, rupees they have not told. We should value it at what, guys? Current period, cost of production. During the period, 4,50,000 units were sold. Can we calculate how many units are produced? Yes, sir. We know sold, we know opening stock, we know closing stock. That means we can derive production. A Limited wants a profit of 20% on total sales. Okay, fine. So 20% on total sales means we can calculate on cost also. Prepare a cost statement showing the various elements of cost and profit earned for the year ended 31st March 2024. Okay, chalo, fine. Chalo guys, cost sheet. Question is on cost sheet, 9 marks question. Laddu. Material consumed. Raw material purchased 8 lakh. Freight inward is 2% of this guys. 8 lakh into 2% comes to 16,000. Yes, sir. And 8 lakh includes already GST. As ITC is not available, it should be included. Then opening stock of raw material you will add, closing stock you will deduct. You will get raw material consumed. Direct employee labor cost. Wages paid is 6 lakh 30. That is nothing but direct wages, guys, who are engaged in factory on production. Production bonus is 10% of 6 lakh 30,000, which comes to 63,000. If you add up both, direct wages total is 6 lakh 93,000. Direct expenses, job charges paid to job worker. It is a direct in nature, guys. 41,000. You can straight away write it in the outer column only. So you will get a prime cost of 17 lakh 10,000. Works or factory overheads. Depreciation on factory building. Take opening WDV into 10%. Depreciation on plant and machinery. Take opening WDV into 15%, guys. Then insurance premium paid for plant and machinery. Take cost into 2%. Take cost into 2%. Yes, sir. So which comes to 30,000 and 50,000. Please be careful. Insurance is on the cost, whereas depreciation is on what? Opening WDV. Opening WDV, guys. Don't make mistake there. Salary paid to supervisor, guys. Obviously, supervisor will be working where in the factory. So it should come under factory overhead. And please be careful, guys. On plant and machinery, sir, where should we take depreciation or where should we take insurance? Where do you use plant and machinery? In factory. Clear up. So if nothing is mentioned, it is understood that you will use this in the factory, guys. So you will get gross factory cost. Then add opening WAP and deduct closing WAP. What do you get? Factory cost. 30 lakh rupees. Yes, sir. Then quality control cost. Expenses paid for quality control check activities. How much, sir? 4 lakh 30,000. I don't know why they have shown inner outer both. Straight away you can show it as outer guys. Yes. Then administrative cost related with production. Salary paid to production control manager. Key thing. They didn't tell directly related to production, but production control manager. Obviously related to production. Yes, sir. You have to take it here. Then realizable value of scrap. We have to deduct, guys. Okay. Because that will reduce your cost. Then primary packing cost. We have to add it here. Please be careful. Primary will come here. Whereas if it is secondary later. We got cost of production. Cost of production. Opening stock of finished goods 80,000 units. They only told it is 8 lakh. They only told it is 8 lakh. Then how many units we have produced? Here they have shown. Calculated. Units sold plus closing stock minus opening stock, guys. How many units we have produced? 4 lakh 40,000. 4 lakh 40,000 we have produced by incurring how much cost? 44 lakh. Per unit how much? 10 rupees. Per unit 10 rupees. So now my closing stock, guys. Closing stock value is not given. 70,000 they have told. What is the value of it? 70,000 into rupees 10. Because I had told you we need to value the closing stock at current period cost of production. So 70,000 into 10 comes to 7 lakh. Or else you can do like this also. 44 lakh is for how many units? 4 lakh 40,000, right? Yes. 4 lakh 40,000, sir. How much for 70,000 units? How much for 70,000 units, guys? Which comes to 7 lakh. Cost of goods sold is 45 lakh. Administrative overhead, depreciation on office building. Opening WDV into 10%. Salary paid to general manager, fee paid to independent director. Anything paid to director will come under administration, guys. Then selling overhead, 4,50,000 into rupees 2. They have given per unit 2 rupees. How many units we have sold? 4,50,000. Don't take it on 440. 440 is units produced. 450 is units sold. Yes, sir. So 450 into 2, which comes to 9 lakh. So cost of sales is, guys, 75 lakh. 75 lakh. They have given only administrative overhead here. Better you put it as administrative, selling and distribution overhead. Yeah, yes, sir. Chalo. Next, profit. Now profit is 20% on sales, I guess, right? Yes, sir. Now then we don't know sales. Can we convert it on cost, sir? Yes. So I will show it here. Cost plus profit is equal to sales. Sales I am assuming it to be 100. Profit is 20. Cost is 80. So profit percentage on cost, guys, 20 by 80, 25%. 25%. Okay, sir. So add it, you will get sales, guys. 9 marks question. Nothing. Just keep on adding and going. You should know the presentation part. That's all. Which should come where. The rest all is easy. Actually, only one working note. That too. Okay, and that is not complicated working note. Chiller working note. Look at this question. Look at this question. Very tough question. B. A skilled worker has assigned a work. The relevant data is given as follows. Time rate per hour 25. Time allowed 9. Time taken 6. Saved. Saved 3. The worker has given an option to choose either all say or row 1 plan. You are required to calculate earnings under both plans and which plan is more beneficial for the worker, not for the company, for the worker. So whichever is higher. Question in the exam, asked in the exam, not my question paper, exam question paper, ICIs. Yeah. Total wage under all say. Time taken into time rate plus bonus part. This is bonus part, guys. 50% of time saved into time rate, or else you can take time saved into time rate into 50%. Okay, please be careful. 50% has to come only on the bonus side. Don't do entire thing into 50%. Gone. So 6 into 25 basic wages. Then 9 minus 6, that is savings 3 hours into 25 into 50%. So you will get basic wages 150, bonus 37.5. Total is how much, guys? 187.5. Earnings under row 1 plan. Time taken into time rate. This is basic wages. Bonus part. Time saved by time allowed into time taken into time rate. So 6 into 25 plus 3 by 9 into 6 into 25, which comes to basic wages 150, bonus 50, total 200. Total is 200. Note, which is better, guys? Row 1. From worker's point of view, they are asking. Obviously, he will choose for whichever is higher, 200. Note, row 1 plan is more beneficial for a worker since he is more earning more under which span? Under row 1 plan. Guys, exam question. How much? 5 marks. Oh, wow. Actually, entire question, cost sheet and the wages calculation, both was very easy. Yeah. Coming to question number 3. A chemical compound manufactured through two processes, namely process X and process Y. Process Y is dependent on the output generated by process X, and the semi-finished chemical compound received from process X shall be mixed up with further materials in process Y. Means they are trying to tell they will also use materials in the who process Y. Okay. The details of cost and other particulars for each process are given as follows. Process X, process Y. Direct material gas, 1000 kgs into 50. Process Y, 700 into 90. Please be careful. Over and above this, process Y also will receive input from whom? Process X. Direct labor. I think this is by mistake even. 35,000, 25,000. Process plant time, 200 hours at 60 rupees per hour. Process Y, 120 hours at rupees 80 per hour. Expected output, 75% of input and 80% of input. Okay, that means 25% and 20% is a loss, guys. Process loss. Actual output in kgs, 700 and 1150. Guys, here itself you can tell 1000 is the input, 75% is the expected output. That is normal output. That means 25% is what? Normal loss, 250. But you are actually got an output of 700. That means remaining 50 is abnormal loss. Okay, same way you have to do it here. Same way you have to do it, but key thing you observe. 700 is input, but output 1150. They will also receive from whom? Process X. Please be careful. That is why. That is actually an int. or else student will miss out that part. Realizable value of normal loss is 8 rupees per kg and 5 rupees per kg. Notes. The departmental overhead for the period was 30,000 and is observed in each process on direct labor cost. Direct labor cost. Process plant time represents the attributable plant run time with respect to each process and is a part of direct process cost. Assume no finished stock and work in progress either at the beginning or at the end of the period. Required. Prepare process X account, process Y account, normal loss account, and abnormal gain account. So, for each of that, 2 marks. For each of that, 2 marks. So, total marks is 8 marks. Yes. Process X account. Process X account. 1000 units are introduced at a price of how much, guys? 50. 1000 units are introduced at a price of 50. They have given first line only 50. Okay. Direct labor for process X is 35. Process plant 200 into 60 you do. Then you will get 12,000. Departmental overhead, guys. This is important. They have not shown. Huh? Okay. Chalo. Let us calculate that. They have not shown. They told something here. Total is 30,000. Okay. Total is 30,000. It is taken in what ratio? Wages ratio. Correct? Huh? Direct wages. Guys, direct wages. Where is it? 35 and 25. 35 and 25. Take 35 is to 25 ratio. 35 is to 25 ratio. Okay, sir. Let me show it here. 30,000 into 35 by 60. 17,500. Same way here. Where is the? Yeah. 30,000 into 25 by 60. We are just taking it in wages ratio. Wages ratio. Okay. Coming to the credit side. Normal loss 25%. 25% of what? 1000, which comes to 250. Scrap value is 8 rupees per kg. So 2000. Then process by, guys, output they have told 700. So now first tally the units column. 1000 on the debit side. Credit side also you have to match with it. So you will get a balancing figure as what? Abnormal loss. Abnormal loss 50. Yes, sir. Coming to cost per kg. Total cost 1,14,500 minus scrap value 2000. Okay, sir. Then input minus normal loss units. You will get cost per kg 150. 150 into how much? Here you can calculate for 50 kg 7,500. For output 700 into 150 1,05,000. You can either calculate one and I'll keep the other one as balancing figure also. Clear? Yes, sir. Let us move to Y account. Let us receive first. 700 units at how much? 1,05,000. Receive the input. Plus, they are also putting some material. How much, guys? 700 for 63,000. How much per unit? 90? 90 rupees. 9 rupees per kg. So 700 into 9. 90. Yes. 90 rupees. Yes, sir. 63,000. Guys, please be careful. This part you might miss out. Clear. Students may not take again units. Normally, this kind of question might not come. But here, they are also adding some material. Okay, sir. Fine. Direct labor, 25,000. Process plant, 120 into 8. Then departmental overheads we have done. Now come to the credit side. Normal loss is how much, guys? They have told. What is the output? 80%. Huh? 80%. So 700 plus 700, 20 into 20%. 280. Scrap value is 5. So into 5, 1,400. 1,400. Yes, sir. Then coming to finished stock. Guys, finished stock they have given in the question how much? 1,150. 1,150. See, by seeing this itself, you should understand. We should also take 700 anta. Why you might get doubt is, sir, 700, you see, the problem is here, confusion. Here also 700, here also 700. Student think, same thing is repeated in the question. So I need not take it again anta. What they sent also 700, plus what they have added also is 700. See, by mistake, if you take only 700 also, you will realize your mistake because the output transferred is 1150. You cannot transfer more than what you have received. Clear? Yes, sir. Anyway, fine. Output is 1150. Let us close the unit column. Check which side is more. Credit side would be more, guys. Credit side would be more. How much, sir? 1430. Come and write the same thing on the debit side, and the balancing figure would be abnormal gain. Abnormal gain. Okay, sir. Now let us value it. Cost per kg, guys. Total cost, don't write it in here, total column, just calculate. Just calculate. 2,15,100, guys. Obviously, other than this, because we have yet to calculate that. Yet to calculate it. So you have to add 1,05,000 plus 63 plus 25 plus 9,600 plus 12,500. You need to add up all this. Minus scrap value, which comes to 1,400. 1,400 divided by input totally. Input totally how much, guys? 700 plus 700, 1,400 minus normal loss, 280. So you'll get 190.803 per kg. Now multiply that with abnormal gain units. You will get value of abnormal loss, guys. Same thing you multiply with the output. Finished stock account. 1150 into 190.803, guys. You'll get 2,19,424. Account will get tally. Account will get tally. If by chance, if there is any difference, please adjust it, guys. Okay, because of rounding off, you might get some difference. Please round it off. Because debit and credit amount column also has to tally. Then they have asked normal loss account, guys. From process X, how much we have brought? 250 into the respective scrap value. Where is it, sir? 250, 2000. Okay. Sir, am I receiving the scrap value now? Yes. 215 and amount is 2000. Here they have written by cash, guys. That is nothing but the receipt of the scrap value. You can also write cost ledger control account. Cost ledger control account, assuming they are following non-integrated. Oh. Then process Y. This is first part. Second part, process Y. How much we are receiving? 280 and 1,400 rupees. Okay, sir. Now, first this should come. Abnormal gain. Sir, out of 280, how much turned out to be good units? 30. So, 30, how much is the scrap value we are losing because of it? 30 into 5. 30 into 5, 150. Guys, this is the which I had expected to be lost, turned out to be good units. Am I losing the scrap value on this? Yes, sir. So, reduce that much. So, balancing figure would be the remaining. For the remaining units, we will receive it. Actual loss is only 250 units, but I had already booked the scrap value for how many units? 280. So remaining 30, we have to remove now. Abnormal gain. Abnormal gain account. We will receive it here first. 30 units at 5,724. That is from process Y, guys. Normal loss. This is whatever we have taken here. 30 units at 150. Yes, sir. Remaining net loss. Sorry, net gain this is. Net gain will go to where? Costing P&L accounts. Costing profit and loss account. Okay, sir. Process done. Yeah. Sub question P, guys. SW Limited manufactures linen bed covers. The present cost data are as below. Variable cost of manufacturing per unit 200. Variable cost of selling and distribution per unit 100. Fixed cost 16 lakh. Selling price per unit 800. Expected profit for the coming year 8 lakh. Okay, expected profit for the coming year is 8 lakh, guys. The management could sense a stage of stagnation, deterioration in future sales with the new entrant RK Enterprises. Means they are expecting the fall in sale, guys. The SW Limited has approached to one marketing consulting firm for the study of cost volume profit analysis. The firm suggested three alternatives to fuel the sales growth by tinkering with selling price. Tinkering means by changing. Alternate 1, 2, 3, guys. What is their suggestion? Alternative 1. Reduce selling price by 10%. Projected increase in sales units percentage from the sales level that would generate 8 lakh profit. Projected increase in sales units percentage from the sales level that would generate 8 lakh profit. Okay, now whatever profit is there, maybe is 8 lakh. Now how much expected increase you are seeing? 15% increase in the sales quantity, not selling price, sales quantity. Okay, sir. Next, second alternative. If you reduce your selling price by 12.5%, then you will expect to increase your sales by 20%. Then, third alternative, reduce your selling price by 15%, see the change in your increase in sales quantity by 25%. Required. Calculate the effect on the profits under each alternative and recommend which alternative is most likely to be adopted to get maximum profit. Guys. Maximum profit. Which is the best suggestion? Calculation of profit under each alternative. Selling price per unit. 800 is the present. If you, as per the alternative, reduction, they have told, na? Reduce it by so and so percentage, how much it would be? Just a minute. 10%, 12.5 and 15%. So whatever is the selling price, do the minus of. Do the minus of that. Nishant? Yes. So 720, 700 and 680. Yes. Variable cost per unit, guys. Okay, first let me do the present situation. Variable cost is how much? Manufacturing cost 200, selling and distribution cost 100. So contribution per unit 800 minus 300. Okay, just a minute. You can put this in brackets. Contribution per unit is 500. Number of units sold 4800. They have told it. Just a minute. Is it given? Silence. Guys, expected profit is how much? 8 lakh. Fixed cost is how much? 16 lakh. Expected contribution is how much? 24 lakh. 24 lakh. Silence. 24 lakh. From there they have calculated actually. They should have shown it. Okay. Contribution is 24 lakh. Okay. How did we get, sir? Profit plus fixed cost. Okay. 24 lakh. Divided by contribution per unit. Total contribution divided by contribution per unit. How many units are sold? 4,800. Key guys. This is important. Number of units sold is 4,800. Now, they have told some increase, decrease in this. How much? First alternative. How much? Huh? 10% increase. How much is that? I should know. 15, 20, 25. Thank you. 4,800 plus 15%. 5520. 4,800 plus 20%. 5760. 4,800 plus 25%. 6,000. Thank you so much. ಸುಮ್ಮನೆ ಫಿಲಂ ತೋರಿಸ್ತಾ ಇದ್ದೀರಾ ಸರ್? ನೋಡ್ತಾ ಇದೀವಿ, ಸಖತ್ತಾಗಿದೆ ಸರ್. ಚಲೋ. Once you log the number of units, now selling price we can calculate. Yes, reduction. What is the decrease? 800 minus so and so percentages, guys. So you will get 720, 700 and 680. Yes. Cost will remain same. They have not told any changes in cost. You will have same, guys. Silence. Contribution per unit is how much? 500. We already done that. 420, 400 and 380. Fine, guys. Now, silence. Now, fixed cost also will remain same, sir. 16 lakh. Yes. Now calculate the total contribution, guys. Multiply this two. You will get total contribution. Minus fixed cost will give us profit. Minus fixed cost will give us profit. Now decide based on that. Who is this expert? You only now. Marketing consulting. Okay. What suggestion they have given? See, all three suggestion is giving less profit than the present. You can observe our present profit was 8 lakh, whereas here how much you see? 718 400, 7 lakh 4,000, 6 lakh 18, and you would have paid to get this research report. Okay, if you want to choose among them, which is the better one? Present out of the three I am asking. 7,18,400. Change in profit also you can see guys, drop. 8 lakh minus 7,18,400. How much drop? 81,600. Same way. 8 lakh minus 7 lakh 4,000. 96,000. 8 lakh minus 6 lakh 80,000. 120. 120. Okay, sir. Percentage change in profit is how much? How do we calculate it? Simple. 81,600 divided by 8 lakh. 10.2%. 96,000 divided by 8 lakh. Minus 12% because it is decrease. 1,20,000 divided by 8 lakh. 15%. All minus, guys. All minus. Among the various alternatives, alternate 1 is giving maximum profit. However, in each of the alternative 1, 2, 3, maximum profit is reducing. Accordingly, SW Limited should continue to sell at current selling price to get a maximum profit. Tell marketing research team. Very good. Thank you. Question number 4. XYZ transport is silence. XYZ transport is running a bus between town A and town B, which are 25 kilometers apart. Who is talking there? A and B 25 kilometers apart, guys. So up and down how much? 50 kilometers. The bus will make 4 round trips every day, carrying on an average 30 passenger on each trip. The bus cost the company a sum of 5 lakh rupees. It has been insured at 2% per annum and the annual tax will amount to 2,000 and the garage rent is 500 per month. Annual repairs will be 8,000 and the bus is likely to last for 5 years. For calculating depreciation, it is required. The driver's salary will be 15,000 per month and conductor's salary will be 12,000 per month in addition to 10% of the takings as commission. ಏನಾದರೂ reflect ಆಯ್ತಾ? Similar question we have done in the class. Okay. Correct, Nishant. You are awake. To be shared by the driver and conductors equally. So variable plus fixed, both components are there. Cost of stationery, and you can observe that 10% is also same only. Sir, did you put that question after seeing this question paper? Definitely not. No, yes sir. Hey, definitely not. I am solving the same that question almost from last 4-5 years. That question. They have copied my question actually. Cost of stationery will be 800 rupees per month. Manager cum accountant salary is 35,000 per month. Petrol and oil will be 1,000 rupees per 100 kilometer. That means 10 rupees per kilometer. Variable. Assuming 15% profit on takings. What is takings? Fare to be charged. Depreciation will be charged at straight line method. You are required to calculate the bus fare. Bus fare is nothing but takings here. To be charged for per passenger kilometer. The bus will run on an average 25 days in a month. 25 days in a month, 4 round trips per day, up and down. Up and down will be how many kilometers? 50 kilometers. After going, we have to come back, now. Silence. No talking there. If I see anyone, I will stop and ask you to solve now on the board. Taxes 2,000. Insurance 5 lakh into 2% on the cost. Garage rent 500 per month into 12. Salary to driver fixed element we are taking here. 15,000 into 12. Conductor 12,000 into 12. Stationery 800 into 12. Salary of the manager come accountant 35,000 into 12. Total comes to 7,71,000. This is per annum. Per month now. Divided by 12. Divided by 12. They have added one extra column per month. Sir, instead of that, can I add it for per passenger kilometer? That is also okay. Running charges, guys. Depreciation is considered to be running here. Sir, can I take it as fixed also? Yes, because actually it is fixed. SLM method. Okay, fine. 5 lakh divided by useful life is 5 years. Per annum you will get. divided by 12 per month you will get 8,333. Diesel and oil guys, 10 rupees per kilometer. How did I get 10 rupees? 1000 rupees divided by 100 kilometer. Clear? Better show it. 1000 divided by 100. Okay, sir. Next, 4 into 2 into 25 into 25. Sir, what is this? Pay attention here. 4 round trip into 2. That is going and coming. Per side, how much kilometers? 25. How many days in a year? Sorry, month? 25 days. Clear? This is total kilometer travel per month. Hope you are understanding. This is a total kilometer traveled in a month into rupees 10. Into rupees 10, guys. Correct. See, I will just explain. Like this, it is better. 25 per side. Into per trip, how much? Into how many trips? 4 trips. This is per day. How many days in a month? 25. It's better to go like this. Clear? Sir, I want to calculate for a year. Into 12. Into 12. This is for a year. Sir, I want to calculate passenger kilometer. Into number of passengers. Into number of passengers, guys. Okay. Sure. Maintenance charges, repairs they have taken separately of 8,000 is per annum divided by 12 per month you will get. Total cost before commission. Total cost before commission. Guys, commission is actually under running, but we don't know the commission until we calculate fare. So I'm just keeping it pending. Or else you can do one thing like how we are done in the class. You can write and leave it blank. Do the total except that. Do the total except that. How much we are getting? 123, 300. Now come to this calculation. Total passenger kilometers they are told, that we will see later. Calculation of commission and profit. Let the takings be X. Commission is how much? 0.10X, 10%. Profit 15%. So 0.15X. Cost before commission and profit, guys. Okay, how much is that? We have got 123, 300 plus 0.10X and 0.15X. This is commission, this is profit. That is equal to X. Okay, silence. 0.25X. Take it to the other side. X is equal to 1X, guys. Okay, so 1 minus 0.25, you will get 0.75 is equal to 1,23,300. X is equal to 1,23,300 divided by 0.75. You will get total takings as how much? 1,64,400. Now into 10%, into 15%. Will give you commission and profit. And commission you can also split it between the driver and the conductor. Driver and conductor. Okay. So you can see here commission they have added, you will get total cost now. Then profit you will add, you will get total takings. Clear? Sir, they have done like this, no sir. Instead of that, like how I had done in the class, commission, can I show it under running? When I am doing total, accept that because I don't know. Till I calculate, I will not know. Except that, can I do the total and do the? Yes, because that is also running. No? It should be shown under running. Or else if you are showing like this, better mention in the bracket, running charges. Running charges, guys. Because whatever total you would have got here and all is actually not running charges. We should add commission also for that. Okay, sure. Then they have asked what fare per passenger kilometer. What is the total fare we have got? 1,64,400 divided by passenger kilometer. How much, guys? 4 trips into 2. Then into how many days? 25 days. Into what is the kilometer? 25 kilometers. Into 30 passengers. On an average, how many passengers we are carrying? 30 passengers. 30 is not days, so passenger. Okay. How many passenger kilometer per month? 1,50,000. Divide each other. 1.09. What is the fare per passenger kilometer? 1.09. Easy? Yes, sir. Done. Next. How much marks it was? 8 marks, and then it should go upstairs, no? Okay, fine. Oh, here it is to 6 marks. Actually, for B it is 6 marks. 8 should go here. LMN Foods is a manufacturer of organic snacks for the year ending. Snacks, snakes, Allah. Huh? For the year ending 2023. The company compiled the following financial data. What happened? Why, baby? What happened? Opening inventory of raw material 2 lakh. Closing inventory of raw material 2 lakh 50. Raw material purchases 12 lakh. Labor cost 5 lakh. Production overhead 2 lakh 50. Marketing and distribution expenses 1 lakh 52,000. Okay. This is 2023 data. Means actual maybe. Maybe actual. Now they are giving something for 2024. In 2024, Element Foods accepted a request for bulk supply of their best selling snacks. The estimated cost for fulfilling this order is as follows. Estimated raw material cost 3 lakh. Estimated labor cost 1 lakh 50. Packaging and transportation cost 49,400. LMN Foods allocates production overhead based on direct labor cost and marketing and distribution expenses as a percentage of total production cost based on the previous year's data. So percentage you will calculate using what? Previous year data. Already ready? Yes, sir. Calculate the overhead recovery rates for 2023 based on actual cost. We will do it. Prepare a comprehensive cost statement for the bulk order and determine the sales required for achieving a profit margin of 20% on final sales amount. 4 marks. Okay. ಎಲ್ಲ ಚಿಲ್ಲರ್ ಕ್ವಶನ್ ಸರ್ ಆರಾಮ್ಸೆ ವಿಲ್ ಗೆಟ್ ಫುಲ್ ಔಟ್ ಆಫ್ ಫುಲ್ ಔಟ್ ಆಫ್ ಔಟ್ ಕರೆಕ್ಟಾ ದಿವ್ಯಾ calculation of overhead recovery rate production overhead recovery rate based on direct labor cost. Take it guys, production overhead divided by direct labor cost, both is given in the question. Just divide each other. How much sir? 50%. How much is my production overhead when compared to wages guys? 50%. Marketing and distribution overhead recovery rate based on total production cost. Marketing and distribution overhead divided by production cost. Have they given straight away production cost? No, they have done here. Yeah, 2023 they have done here. Opening stock of raw material 2 lakh plus purchases 12 lakh. Closing stock of raw material 2 lakh 50. So raw material consumed is 1150. Labor cost is 5 lakh. So prime cost is 16 lakh 50,000. Plus production overhead 2 lakh 50. You will get production cost 19 lakhs. Plus marketing and distribution cost 152. Total is 20 lakh 52,000. 2023 data. So your production cost is how much, sir? 19 lakh. How much is marketing and distribution? 152. Take it from here. 152 divided by 19 lakh into 100. How much is that, sir? 8%. 8%. First part done. Second part. Have they given direct material cost? Yes, sir. Direct labor cost they have given. Calculate prime cost. Add up both. Production overhead is guys 50% of direct labor. So 1,50,000 into 50%, 75,000. Production cost 525. Then coming to market, only whatever is given you take. Okay. Sir, what about you? They had given opening stock of raw material, closing stock. They are not given. You don't worry anything about it. Okay, sir. So marketing and distribution, guys, 8% on production cost. 5 lakh 25 into 8%. 42,000. Packing and transportation, have they given separately? Yes, they have given it. Consider it. Something additional. Something additional here. 49,400. Total cost comes to 6,16,400. Profit they want to make 20% on sales, I guess. Correct? So convert it. 25% on cost, guys. Conversion and all we already discussed number of times. So it is 25% on cost. 20% on sales means 25% on cost. So you can also show it. 6,16,400 into 25%. 1,54,100. Sales value price to be quoted for the order is how much? 7,70,500. Hence, the price to be quoted is 7,70,500 because that is what they have asked. At the end, one liner is given for it. Yes, sir. Easy, sir. Fifth one. The following information has been provided by the company. Number of units produced and sold 7,000. Here itself, you should get an in. no opening, no closing stock. Standard labor rate per hour 9 rupees. Actual hours work 17,820. Labor efficiency, guys, how is efficiency calculated? Standard hours divided by actual hours into 100. Okay. Labor efficiency 106.8%. Good. Labor rate efficient variance. Somewhere key int rate variance is given 71,280 adverse. You are required to calculate actual labor rate per hour, standard hours required for 7,000 units, labor efficiency variance, standard labor cost per unit, actual labor cost per unit. Yes, sure. Actual hours worked, guys, 17,280. Standard rate per hour, everything given information, 9 rupees. 9 rupees this is. Labor rate variance 71,280 adverse. Labor rate variance. Using this, can we calculate labor rate variance? See, labor rate is already given. Using that, we can derive what's the actual rate. Please pay attention now. Labor rate variance formula is standard rate minus actual rate into actual hours. Now this is already given minus 71 280. Standard rate 9 given in the question. Actual rate not given into 17,820 guys. Okay sir. Now take this to the other side. 71 280 divided by 17,820. You will get minus 4 because minus is there. Okay sir. Now bring minus 4 to the other side. Actual rate you take it to the other side. 9 plus 4 is equal to actual rate. That is 13. 9 plus 4 is equal to 13 guys. Labor efficiency. Labor efficiency. Standard hours by actual hours into 100. How much is that? 106.8 guys. Actual hours we know. Can we calculate standard hours now? Yes sir. Multiply. Multiply. See, in the formula you can show into 100, but if you are taking percentage here, while calculating, straight away apply the percentage. That is 17,820 into 106.8%. You will get standard hours 19,031.76. Labor efficiency variance, can we calculate now? Standard hours minus actual hours into standard rate. We know all three. All three we know, multiply, guys. Deduct and then multiply. 10,905.84 favorable. Yes. Standard labor cost per unit, guys. We have got standard labor cost divided by per unit. Now 7,000 units. Have they given you? Question is given. Just a minute. I will show. Yeah, 7,000 divided by 7. Standard labor cost per unit. Yeah. Listen, first you calculate standard labor cost. That is 19,031 is a standard hours for actual output into standard rate. You will get standard cost divided by number of units. Same way, actual labor cost calculate 17,820 into actual rate 13. You will get actual that we used to do in the table, na? Same way. Actual hours into actual rate. You will get actual cost in the numerator. Divide it by 7,000 units. You will get 33.09 guys. 33.09. Okay, sir. Sure. B. Integrated, non-integrated. Only for transaction. Wow. 4 marks. Wow. Journalize the following transactions, assuming that cost and financial accounts are integrated. 4 marks. Integrated. Wages paid. What is the journal entry, guys? Hey, Nitin. What is the journal entry? Wages paid. Wages control to PAN. 2 lakh. Full direct as well as indirect. Selling and distribution overhead incurred. Selling and distribution overhead in control account 2. PAN. They have given it. No problem. First only paid. Only paid. See, I will just explain, then we will go. Don't worry. Control ಇರ್ಬೇಕು. Okay. Especially boys ಗೆ ಇರ್ಬೇಕು. ಚಲೋ ಚಲೋ ಅವನು ಎಕ್ಸಾಕ್ಟ್ ಆಗಿದೆ ಸೊಲ್ಯೂಷನ್ ನೋಡ್ಬಿಟ್ಟಿದ್ದಾನಲ್ಲ ಅದಕ್ಕೆ ಓಕೆ ಚಲೋ ಚಲೋ they guys they have given only 4 transactions. They have given only 4 transactions. But in suggested answers, what they have done is, sir, transfer also they have given. Transfer also they have given. For 4 marks, I don't suggest, but still, if they are given, sir, I also want to be safer, sir. I don't want to take risk against institute. You also right. Okay. So, silence. Actually, they have given only transaction. They didn't talk anything about transfer. Correct. So, in my opinion, this is the entry which has to be passed. Wages control to PAN. As they have given the int, how much is direct, indirect? Okay, sir. Can we transfer also, sir? Yes. But in this order, this should come first, this should go second. They have given first transfer, then incurred. Can it happen? No. So, direct is transferred to WAP control, indirect is transferred to factory overhead control account, to wages control account, 2 lakh. Sir, how did we get this 160 and 40 percentage is given? Na? 80, na? 80 is direct. Yeah. 80 is direct, 20 is indirect. Hope you understood. Next, selling silence. Who is talking there? Selling and distribution overhead incurred 50,000. What is the entry? To bank again. Selling and distribution overhead incurred to bank. Sir, can I observe also, sir? Yes, they have done it. Okay, first year. This should come first. Selling and distribution overhead control to bank incurred. Then you observe. Cost of sales to selling and distribution price. Clear up? Yes. First incur and then observe. They have done reverse. Next, deficiency found in stock of raw material, normal. Deficiency found in stock of raw material, guys. Normal loss. Normal loss means will be valued separately and send it to costing P&L account? No. It will be observed by good units. So will it be a part of cost of production? Yes, sir. 80,000. Factory overhead to stores ledger. Guys, where is raw material? Stores ledger. We are transferring the normal loss from stores ledger to where? Factory overhead. Sir, can I transfer it to cost of production? Actually, cost of production, you will get it in WAP account. If that is the case, then here WAP control will come. WAP control will come. Anyway, factory overhead observed also will go to WAP only. You can either transfer to factory overhead and there, from there to WAP, or else straight away transfer it to WAP, guys. Sir, can I leave it in stores only? No. If you leave it in stores only, that will be like closing balance. Clear? That will be like a closing balance. So if it is due to a normal loss, please transfer it to the respective account type, either factory or WAP directly. Okay, sir. Then, where defect is due to, so this one, factory overheads under absorbed 60,000. Guys, under absorbed is, come on. If I draw the overhead account, incurred will be on the debit side, absorbed will be on the credit side. Under absorbed means this side is lesser. Yes. That means there is a balance on the credit side. How do you transfer it? Costing P&L. What is the entry? By costing P&L to respective overhead. To respective overhead, guys. Which is that respective overhead? Factory overheads. Factory overheads, guys. Yes. Costing profit and loss account to factory overhead control account. How much, sir? 60,000. 60,000. Why I explained this? You might get confused with this. Sir, should I debit costing or should I credit costing? Guys, one more simple thing I will tell. In costing P&L account, will you debit loss or credit loss? Debit. Under absorbed. Sir, it is not actually loss, but under absorbed. I have charged less expenses. So remaining, should you charge now or gain? Charge. So you have to debit it. If you already over debited, that means over absorbed. Now, can I change it on the debit side? No. How will you do? For over absorption, you will give credit. So that the extra part will get nullified. Yes, 4 marks. 4 marks. See, what I can understand from this is 4 transactions are given for journal entry. 4 marks. Clear? For this, they have passed 2 entries. So, do you suggest us to do it? Yes, maybe, if you have time. If not, you may stick to only 4 entries, guys. Is that clear? See, especially here, they are given, okay, how much is indirect also, they are trying to give you in, you can transfer direct and indirect. Here also, they just told incurred. Did they tell anything about observed? No. So, observed entry was not required. Actually was not required. Now, sir, as a student, I want to play safe, sir. Can I write it? Yes. Yes, okay, but obviously, will take little extra time. If you are able to bear it, then fine, guys. Okay, next question. Define spoiled work and defective work and Discuss the treatment of defective work in the following circumstances. Defective work means what, guys? Can I rectify it? Yes. Spoilage means can I rectify? No. That's the only line. We have covered in material chapter. Divya, which chapter? Material chapter. Chalo. Where percentage of defective work is allowed in a particular batch as it cannot be avoided. Normal. So it will be observed by what? Good units. Where the defect is due to bad workmanship. Okay. Bad workmanship, so we have to treat accordingly. Where defect is due to inspection department wrongly accepting incoming material of poor quality. So we have to charge them. Your mistake, you take it. Cost of rectifying the defectives. Okay. First tell what is spoiled work, what is defective. Guys, only one small difference. Are they output or input? Hello, input, output, output. Defective and spoilage is at the end of the production process. So spoilage means are completely damaged. I cannot even rectify it. Throw it up. If it is a defective, not up to the mark, but can I rectify it? Yes, but for that I have to incur some additional cost again. Spoiled work is the quantity of production that has been totally rejected and cannot be rectified. Defective work refers to the production that is not as perfect as saleable product, but is capable of being rectified and brought to the required degree of perfection, provided some additional expenditure is incurred. So you obviously for defective rectification, you have to incur the additional cost. First one, guys. Situations they have given, 3 situations. So much explanation they have given for 1 marks. Okay, chalo, we'll see. Where a percentage of defective work is allowed in a particular batch as it cannot be avoided, then if the actual number of defective is within the normal limit or is near there to the cost of rectification will be charged to the what? Whole job, guys, and spread over the entire output of the batch, that is remaining units. If on the other hand, the number of defective units substantially exceeds the normal, the cost of rectification, that is nothing but abnormal. Clear? If it exceeds normal, the cost of rectification of number which exceeds the normal will be written off as loss in where? Costing, profit and loss account. They are talking about abnormal. If you want, you can just write there abnormal. Where the defect is due to bad workmanship. In this case, cost of rectification will be abnormal cost and shall be written off as a loss. Why? Guys, due to bad workmanship. Was it in my control? Yes. But still, because of bad workmanship, there is a loss. That means we have to transfer it to costing P&L account. Correct, Asma? However, if the management did provide for a certain proportion of defectives on account of bad workmanship as unavoidable, sir, this bad workmanship also we cannot avoid it, sir. Then, if that be the case, the cost of rectifying to the extent provided for by the management will be treated as normal cost and charged to the batch. Guys, some companies do that. Okay, because there is always a room for human error. So even though I am like worker who are supposed to work, sir, there should be some room for error, sir. 2%, 3%. I may commit mistakes, sir. So can I consider it as unavoidable? Maybe yes. More than that, avoidable. That is abnormal. Next one. Where defect is due to inspection department wrongly accepting the incoming material of poor quality, guys. In this case, the cost of rectification will be charged to the department and will not be considered as cost of manufacture of the patch. Being an abnormal cost, it will be written off to costing, profit and loss account. Here also it was a mistake. Clear? So where do we transfer it to? Costing, P&L account. And who will be held responsible for it? The receipt. Which department is that? Accepting. Inspection department. Inspection department. So they will be responsible for it. Yes, sir. Question number 6, guys. Explain the steps involved in procedure for reconciliation of cost and financial accounts. Also explain the circumstances where reconciliation statement can be avoided. 5 marks. For this you see 5 marks. There are 3 steps involved in procedure for reconciliation. What are those? Ascertainment of profit as per financial books, ascertainment of profit as per cost books, reconcile. We discussed, na? Correct, Divya? We have discussed. Yes. Circumstances where reconciliation statement can be avoided. When the cost and financial accounts are integrated, you will have how many profits? Pallavi, how many profits you will have when it is integrated? Only one profit. Should you reconcile that? No, not required. There is no need to have a separate reconciliation statement between the two sets of accounts. Integration means the same set of accounts fulfill the requirement of both costing as well as financial, guys. Yeah, and see, for 5 marks, sir, is it enough? Maybe not. At least this you explain for 2-3 lines, guys. Each of the steps. They're just given like this. But I don't think if you write the same thing, you will get 5 marks out of 5. State cost unit of the following industry sector. Cost unit. 5 marks. First chapter. Gagana Street. First chapter. I. If I again call Divya, she will scold. So I am targeting you so that she will get for whom he is targeting. Indirect. Direct ala. Indirect. Now how do we observe overheads? That strategy. Oil. Cost per barrel, cost per gallon or liter. Professional services. Per service, project or per. I told you guys. When you have a doubt about 2-3, write everything. Clear? Write whatever you feel like. Write everything andre nonsense alla barbadi. Whatever you feel like, sir. It can be this also, it can be that also, right? Both. Because there will be number of cost units for each industries, guys. Education, per course, per student, per batch, per lecture. Brick making, per brick, per thousand. Actually, 1,000 is standard. I don't know why they have given per brick. Write it. Anyway, 1,000 you are writing. That is safe. Okay. Engineering, per project, per hour, per job, per contract. Electricity, per kilowatt. Hotel or catering, guest days or room days, that is for staying. Whereas for catering, it is per item or per meal. Coal mining, per ton, per quintal. Brewing, per gallon or liter or per barrel, guys. First item was, that was oil. Okay. Hospital, patient per day, that is per patient per day or per room per day or per bed or per operation or per treatment, etc. Okay. See, here they are given number of things. What are they? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. How much? 1 second, I will count once again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. If they are given 10 at least, half marks each. 12, I don't know how they divide it. Okay. Sure. Explain the methods that can be used for controlling. Sometimes they give only 5 also. Sometimes they give only 5 also. 5 marks. Lucky. Lucky are those who write in that attempt. Explain them, not you, because your already exam is over. Chala. Explain the methods that can be used for controlling selling and distribution overhead. The problem of controlling selling and distribution overheads can be tackled by adopting the following steps. Comparison with past performance, budgetary control, then standard costing. All this you have to explain at least for 3-4 lines, guys. These are the points. You don't just write the points and come. Please explain them. We have discussed all of this in the class, guys. C done. D. See, listen here. Between C, there is an internal choice. Between C, that is either you will answer this or this, guys. Sir, I know both of this, sir. This also I know. This also I know. I don't know. Yes, sir. Can I take that as a choice? No. ಇದಾಗುತ್ತೆ ಈಗ ನಗು. Now laughing in exam, some people will do that also. Please be careful. It is an internal choice only for C, not for A and B. So A and B, you have to write it for sure. Only C, you have to either of them, you have to take, guys. Suggest any one basis of reapportionment of service department overheads over production department. I was just talking about apportionment. It came in the following context. Cost of service department, guys, this is for reapportionment. Maybe under direct method they're asking. Under direct method. Planning and progress, transport department, personal department, fire protection, powerhouse, computer section, canteen and welfare, hospital and dispensary. Easiest question paper I can tell. Planning and progress. Direct labor hours, machine hours, direct labor wages, asset value into hours work, any of this. Guys, whatever will reflect to you, you put down 2, 3. You need not write so much also. Transport department guys. Crane hours or truck hours or kilometers, truck mileage, truck tonnage. Tonnage means how much it can carry. Truck hours, tonnage handled, number of packages of standard size, or else you can simply write number of units. That is also fine. Personal department, number of, that is HR. Personal means HR. Number of direct workers or number of employees, because they directly handle with them. Fire protection, capital values. Okay, it is protected against which assets? Then power hours. Our Puneet Rajkumar. Electric, lighting cost. Floor area. You know, power star. Floor area. Cubic content. Number of electric points. Wattage. Computer section. Computer hours. Specific allocation to departments, or maybe number of instructors. That is the trainers. Canteen and welfare. Number of direct workers or number of employees, because who directly going to have their employees or workers. Then hospital and dispensary, guys, this some companies can have in-house to give some first aid and all. Don't assume it, sir, hospital and dispensary and all, how it comes. That is a separate industry, no? Yes. But some factory or company will have in-house also to give immediate treatment if any. Number of direct workers or number of employees. Guys, this was Jan 2025 question paper. Out of 70 marks, I feel you should score exemption here only. Forget about MCQ. You should score exemption here only. Okay. Everything is easy. Yes, you will take time sometimes for a few questions to start. But in this question paper, guys, I didn't find anything as tough question. Just here and there might be time consuming, but not tough. Fine. With this, we'll close the class, guys.